guys, welcome to the Wednesday version of Forex Focus version. Hey, it's us. I'm Pete Momat. I'm joined by Bridget Laszlo, one of our team of content and strategy, who has been driving a lot of our social engagement, which is great. And we continue to see that expand for TastyFX. So check us out on YouTube. Where else can they go?
They can go on our Instagram, they can go on our Facebook, our LinkedIn, and our X profile at TastyFX.
Wow. Okay, now if someone could show me how to get on each one of those, I do. I do have an Instagram account with one follower. So.
Well, there you go.
Yes, and it's my wife. And
you share one. That's sweet.
I know.
I love that.
Just one. Now, what is your preferred platform? Are you?
I don't know. I think I've been on X a lot lately because I've been using it for work. But otherwise, I think Instagram's really nice, or I've been kicking my blog back up again for cooking.
Oh,
so,
look at you.
Yeah, which I've been doing for a long time. It's just a fun hobby, but yeah, I don't know. I'm not super into social media, but once in a while it's fun to share stuff. So,
okay, cool.
Yeah.
And cooking. So what are your passions? Is it baking or?
I'm more of a cooking person
Okay.
because baking is really, really precise, and I
Right.
kind of like being able to try a bunch of different things. So, I don't know. The best thing that I make is meatballs. I make the best meatballs. Anytime I make them for people, they say it's one of the best things I've ever eaten.
Wow.
So
Beef, pork? What
Yeah,
do you-
I do beef, and then I do some Italian sausage.
Oh, nice.
And then I just two. I've seen recipes, which I can't really say anything because these are like professional chefs, so they know 50 times better than me. But they're like 5 different kinds of meat, and I think that's too much. I think there's such a thing as too much of a good thing, and I think we keep it to 2, and they're really good. So I cook them in the sauce. And everyone loves them. So maybe I'll bring them in.
I think you definitely need to bring them in. That sounds like a crowd pleaser. We will be fighting over meatballs. I like it.
And we've got the holidays coming up. So are there any Christmas traditions in the Momat house?
Oh, boy. Yeah, we've got a couple.
Mm-hmm.
And we do a thing. It's called the pickle prize. And it's
Okay.
There's a little pickle ornament. And this is since the kids were little. And we have them Christmas Eve. We'd send all they were all 8, 6, and 4.
Mm-hmm.
Send them out of the room, and we'd hang this pickle prize like deep within the tree.
Yeah.
And the first kid to find it would win the pickle prize.
Mm-hmm.
And it usually was like a Mario Party Kart 4 or something,
Right.
something they could all play. And I mean, it's since become like last year we did swimming with the whales at the Shed Aquarium, which
Oh
was
my
really,
gosh, that's
and you don't
amazing.
actually swim.
Okay, I was gonna
right, because
follow.
the water's like 40 degrees, so
Yeah.
you would die. But what you do is you get into these big waders, and you do get in the tank with the whales.
my
and
gosh.
there's the trainers there, and they'll have them come up, and you have them do tricks, and you gotta feed them.
wow.
So it was really cool. So it's usually experiencing. And what's funny is, so my oldest boy is 30 now. My daughter's 28, and my son is 25. And I'm sure I've got all those ages off by 1 year. I always do. But they're close enough. I would say for the last 20 years, my daughter has won this 19 out of 20 times.
Oh, wow.
And it drives my boys nuts because they all come in and she'll just go like this, like that, and just grab it. And they're like, whoa, what did just happen? So, but that's our tradition. So we always do the
I
pickle
love
prize.
that.
Yeah.
That's so fun.
How about you?
I always think about our Christmas dinner. We always go really crazy, and to the point where...
Are you turkey or do you do different?
No, so we usually do, we don't do a ton of food, but we just always make it special. And to the point where I tend to like it more than Thanksgiving. Not, maybe not, but
I do too.
yeah. So we'll always do like steaks or like a Chateaubriand, like that kind of
nice.
roast. And then we will do some type of seafood. So we'll do lobster tails maybe, or we did crab legs. That's been a big thing. One year, our dog, we went to church, and then we came back from church, and all the crab legs were on the floor. Because she had taken them off the table, and she was like trying to get into them. And one year, we tried to do oysters because we go out to dinner, we'll order oysters, so this will be fun. So we ordered a bunch of really nice oysters, and you get them shipped to your house, and they don't come shuck. You have to shuck them. And I remember, I don't know how long we spent trying to shuck these oysters. I think it took like over an hour. Maybe.
And I just did it a week ago, and I cut myself again.
And
I always cut myself doing these stupid oysters with that knife.
Yeah, so
And
it
you watch
was.
the guy in the restaurant, it's just like, and it's just like, no.
No.
I keep thinking I'm going to go down and get a chisel and a hammer. It's like, well, that's not going to work either.
And there's a ceiling on the amount of oysters I can eat and be like, this is a good amount. And after 4 or 5, I'm like, I don't need any more. And we had ordered around 50.
Yeah.
So we just have all these oysters sitting, and it's like, well, we got to finish them. And then it's just, where's the fun in that? You have to eat all these oysters, and I don't know. But
50 oysters is a lot of work. I would say
and they were small.
I did 10, and it took me 20 minutes.
Yeah.
So,
I mean, that was probably one of our funnier memories. But we always do like we do Bloody Marys Christmas morning.
Oh, nice.
Just make a day out of it with the cooking and the appetizers.
Very nice.
And, so that's probably one of my favorites.
So you light it up. Yeah, it's funny you talk about the dogs stealing food. My wife had made this thing called, it's a Bush Noel. It is a chocolate cake. It's like a log roll. It's chocolate, dark chocolate, espresso, and my wife is a chocolate. She is
Loves
tiny
it.
as she is.
Yeah.
She loves chocolate. So this Bush Noel log is sitting on the counter. We get home from church, and it's down on the ground, and the dog had eaten it. Now, the one thing you are not supposed to give a dog is chocolate and espresso.
Yeah.
So the dog was out in the backyard just running laps, and we were waiting for like his heart to explode, and him just. But yeah, he ate that entire. We had a lab, and they're like, they'll eat anything.
No, and we always hear the worst, and of course you're not supposed to give your dogs chocolate, but my dog would eat things like that too. Like she would eat pie crusts and fine. Like nothing, no issue, stomach of steel. I don't know what it was, but yeah, that's well, I'm glad. What was your dog's name?
A Sporty.
Sporty was okay.
Sporty was okay. We weren't sure about him because it was like it was a really cold Christmas too, and he was just out there just running. We're like, oh, this is going to end well.
Jeez.
So, but he made it through. He made it to 16. So he was a great dog. I mean, a perfect dog for the kids because they rode him like a horse. And I mean, labs are great dogs because they would. You just look back, really, where we have smaller dogs now, and they'll like. Little kids come over, the dogs get really nasty, and like, oh look, the dog's smiling, and it's like, no, the dog's
They'll
not
just be
smiling.
pulling its teeth back and grabbing its ears.
The dog's not smiling, honey. But, speaking of fun, we have a fun day coming up in terms of
Great
I don't know
transition.
how good. I could have done that a little smoother, but we've got an interesting day coming up. And let's bring up the platform, guys. So interesting moves overnight. Dollar stronger again. The Chinese came out like 1:30 at night, Chicago time, and their central bank guys said that they're looking at making a weaker yuan going into 2025. It's about as ambiguous a statement as you could say. Of course, if the tariffs go in place, how do you make the tariffs less impactful? You mark down your currency. The dollar reacted by getting stronger. So we saw Euro trade appreciably below 105. Aussie trade off almost 60 points at one point. And the yen kind of ping-ponged back and forth. It initially rallied and then fell. But we're seeing right now Euro back above 105. And we can see that trade. Here, let's get out of the daily. Let's go to 15 minutes. So we could see that here was the move down below 105, right at that about 3 o'clock, 2:30. It kicked off, and now we're seeing it recover a little bit, which I would expect on ambiguous news like that. We're at the low. Yeah, do they they shock test the mark below 105? They probably caught a couple of stops down there. When I say they, it's market participants will get news like that and tend to jump on it and see where it goes. But obviously buyers emerged a little bit here. We're trading up a little bit higher, but we have a lot of stuff coming out. We can see the Aussie trade, same thing here, traded lower on that announcement, and we've recovered a little bit in the Aussie recently. So we're back at that mid 63 level. Let's take a look at also here. We could.
And when we look at currencies, for each one, would you say there's a respective like ideal range that you want each one to be trading at? As an experienced trader, do you have a number, not like, for you to list them to me, but in your mind where you're like, I really, or these are certain ranges or whatever people look for like in amounts?
You know what? I think that range is dynamic. It's based on the volatility of the currency has, and that's why we use something like one standard deviation, 30-day daily ranges. That tells you 68% of the time the market stays within this range. It is a good marker. What that tells you, though, is 32% of the time, it's not a guarantee.
Of course.
32% of the time it trades outside that. But I love anything that takes a 50-50 proposition and adds a little statistical weighting to it. FX volatility is up, obviously, with the dollar so much stronger. And we saw, briefly let's get out of the daily here. Overnight in the end, we saw the initial reaction on the yuan statement weakened dollar yen a little bit, but then the Bank of Japan came out and made a statement shortly after saying there ain't no rush to raise rates. So these are, again, they're kind of just placeholder statements. They don't mean a lot. Right now, so we had a full handle move from 150, 150 to 152. That's every bit what I think that we're probably right around that one standard deviation range right now, which I think is about 80 pips in yen. Now it's smaller in euro. It's about the same in Aussie. I think we were in a low of 23 or 24 pips. We're out to 48 or 50 pips now. That is a trading range. I look around. You can't expect random announcements like this. But what you and I think the question is you're asking, which is a good one, is what, and let's just use euro as an example, what do I do about if this actually had happened during our session when we were awake? You get this ambiguous news. We know 105 has been kind of an inflection point. So chances are there's going to be a little bit of selling under it, which we saw. But buyers emerged. They tried it again. Buyers emerged. Now, for me, on news like that, which means nothing, they may weaken the yuan in 2025. Well, this is them all. This is a form of the Chinese negotiating with the new president as to, okay, you're going to put tariffs. We're going to neutralize those tariffs by marking down our currency so our goods get cheaper. This is the game of cat and mouse they're going to play. For us as the traders, if I take that 50-point range and I see on a relatively non-meaningful news statement, they were able to drive the market down 50 pips, which is about 105.40 to 104.90. That becomes an interesting point for me. The news was irrelevant. It moved the market, yes. Algo-driven news driving the market happens all the time. If this had happened during our session, that's an interesting place for me as a contrarian to possibly add some longs.
I also think it's an interesting wrinkle how quickly the market moves. So you have to make these decisions pretty quickly. So it must take a lot of time and experience to be able to use that discernment.
Right, and I think part of it is now we have known unknowns. And what I mean by that is we have one of those coming up that you're going to walk us through a little bit. The CPI numbers today. We know it's coming out at 7:30. So we know the market will move. Well, that's good because we know the time. Do we know what the number is? No, and don't guess. It's irrelevant. You're not going to guess. What you want to do is have a game plan to if it's higher than expectations or lower than expectations, what do I want to do? And do I want to carry a position into the fact that I don't know what the number is going to be? But this is one where I didn't know this was going to come out. And we have statements like this happen all the time. But when you get a random move like this on a statement that is, opaque at best, it creates an interesting opportunity for a scalper, for someone who wants to day trade events. And, it was worth about 30 pips to scalp around that. So I will use those scalping ranges. And again, sometimes the market, when we were into a one standard deviation daily move of 28 or 26 pips, that's not a lot. And I think that becomes very hard then to say, okay, I'm going to scalp 30 pips down or up. Now that's all the market is really giving you. But then what do? I find a market that has a little bit more elasticity to it. And with ADFX pairs, I'm not suggesting I go trade Turkish lira. We're not. But within Euro, Yen, Aussie, Canada, and some of the more popular crosses like Euro, Yen, Aussie, Canada, Aussie, Kiwi, I could find tradable opportunities when the majors maybe aren't offering them to me. So some interesting ways to start to take advantage. But let's go ahead and, guys, we're going to bring up the slides Bridget presented. Is that going to work for us?
All right.
There we go. So we've got an event coming out today at 7:30.
Yes.
You're going to walk us through a little bit of what this is and what the market's looking for. And guys, this is the interesting part. Again, the number itself doesn't mean anything. What will drive market activity is what the difference of the actual number is versus the estimated number.
Yeah.
So this is why you trying to look at that estimated number and say, oh, well, I think it's going to be higher than that, or I think it's going to be lower than that, isn't the goal here. The goal is to understand what the market's estimating. If it's higher, what the reaction probably is, and do I have an interest in that opportunity, either the market trading lower or higher off of it. So let's go through what's going on and walk us through that, Bridge. You put together a great presentation.
Yeah, so today I'll be talking to you all about U.S. inflation and the core consumer price index. If we want to go to the next slide, I'll get into understanding CPI and inflation.
Oh, that's me.
Thanks, Pete.
Should I run it? Yeah, can I just...
All right. Okay. So inflation as a whole is the rate that the price for goods and services goes up. And what this ultimately results in is a decrease in the purchasing power of a currency. So you can buy, less with whatever the dollar's worth. And it reflects how much more expensive that goods and services have become over a period of time. And I'll be talking to you guys today about month to month, but there's also year to year. And what also is a really top indicator of inflation in the U.S. and also comes out this morning is CPI. So why do we, and that's the price of, correct me if I'm wrong, just basket of goods and services in the U.S.
It's a basket of consumer goods.
Yes.
So tomorrow we'll have PPIs, which is a basket of industrial goods, basically pipeline byproducts that go into the production of goods. There's 4 or 5 measures of, there's a price-weighted GDP indicator, there's an employment cost index, which is wage costs. There's lots of different indicators of inflation. Any of them the holy grail of inflation? No, but they're all indicators. And again, we're not here to judge which one's better or which one's more predictive. We're traders. We're looking to, okay, where is the opportunity for me? Not in the macro aspect of it, but understanding context is good. Now, let's take a look at, why do we look at it?
Yeah, so I think people as a whole, economists and traders, view it as a stable view of inflation and help us figure out what the true cost of living is at the point where the data is released. Now, the bigger reason that, or at least that I would say, that people make, such a fuss about it is it can influence the Fed's decision, which is coming up on December 18th when it comes to interest rate cuts due to inflationary pressures. So if we want to go to the next one, I'm going to talk a little bit about recent inflation trends in the last several months.
And that one sentence is the key. So CPI can impact what the Fed does, that affects interest rates, and that affects our world. So that's really the takeaway. So that is what we want to worry about.
So as of today, they are forecasting month-to-month inflation at 3.3%, which is consistent with the last couple of months. And then by the end of the quarter, they are forecasting it to be trending at around 3%. Our yearly highs were not hit since last October, November, and that was 4%. So it's highly unlikely that those yearly highs will be really, an issue again for the remainder of the year since it's gone down a lot more. But yeah, that's just an overview of kind of what we've been looking at. It's seen definitely a downtrend over the last several months and gone up minimally since August.
Absolutely. And just as a scheme of reference here, if the print, they're looking for about 3.3%. The print's 3.5 or below 3, the market will have a bigger move. If it's right around here, the market won't have as big a move.
And what do you think about the general consensus of the target rate being at 2%? Because you see that number, 2%, this is 2%. What do you think about that?
I think it is, again, they're trying to set a target rate is aspirational. They're trying to set a rate that, again, an economy that doesn't have inflation, a level of inflation or deflation is problematic. The Japanese have gone through this for 25 years now, and it creates a lot of inefficiencies and non-productive economy. So you want a level of price inflation. It means there's demand for goods, but you don't want it at the point of demand destruction. So they're trying, is 2% better than 2.5? They're just picking a number as a goal to set. Will they live with 2.5% inflation? Absolutely. What they don't want is inflation to dip below 2%.
Yeah.
So I think that target rate is just a aspirational goal. It doesn't mean we have to get there for them to change things, as we're seeing, because we're not at 2% inflation and they're already cutting rates. So, but this is where all the inflation, again, whether it's 3% or 2.5%, isn't relevant to us as traders. It is, where does it impact interest rates and the trajectory rates, and that we can directly track back to our currency markets.
And that's great context too, just because it's easy to get stuck on those numbers and be like, well, why are people happy about this? It's not at that one number, or why are people upset about this? And it can sometimes not make sense, especially when you're newer. So to have that context of, hey, it's something, a number that's meant to kind of keep us in the game per se, and not so much we have to be at this number.
Absolutely. And, you know, I always go back to like non-farm payrolls. So a week ago Friday, and everybody roughly remembers the number and the reaction. A month before that, we had the same non-farm payrolls, and everybody reacted to it. Does anyone remember what that number is? Absolutely not. And that's why these numbers themselves are meaningless. Don't be an you know what? Don't be an economist to the extent of worrying about what the numbers are. Be a trader. Worry about how they affect your markets and where you can find opportunity.
Yep, that's a great point. So I got the FedWatch chart up here predicting, like forecasting what the potential rate cut could be for the December 18th meeting. So right now, I believe it stands at 4.75%, right? The current interest rate.
It's 4.5 to 4.75.
Yeah.
They always have a target range of 25 basis points.
Yeah. So we're looking at an 85% chance of it being a 4.25 to 4.5 range.
Right.
And we'll see that if inflation is in line with forecast, the Fed's interest rate decision, there's a decent chance that it won't be very shocking because they want to maintain that stability, and it probably won't be a very eventful situation. But if it's below expectations, there's a chance central banks may lower the rates to stimulate economic activity because it's believe that lower rates can encourage consumers to spend a little bit more.
Absolutely. So in this probabilities, you can go to CME Fed Watch and look at these anytime. Probabilities of the rate cut are applied by Fed funds futures pricing. So this is guys with skin in the game, and they're interpolating that into a probability, which is a great tool. So if the CPI number is dramatically different than expected, these numbers will change, and whether the Fed acts or not, the probabilities around it will be implied in that change. So let's go back to the platform and talk about one thing. We got a couple minutes left. The other binary event coming up today is, what do we have, Bridge?
USD CAD.
Right. So dollar Canada, we've got a Bank of Canada. Oops, sorry, I did that wrong. Bank of Canada, 8:30 this afternoon, 8:30 this morning. We have that's Chicago time, guys. BOC is, I'm going to go to the economic calendar here if you want to see it.
And it's been a rough week for the Canadian dollar, too, from kind of what we've seen hitting lows that I believe haven't been seen since 2020.
Right.
So, yeah, we're kind of looking at a low period.
Right.
Yeah.
So 8:45, the announcement. They're looking for a 50 basis point cut out of the Bank of Canada. That will bring their rates appreciably below where ours are. You just said 4.5 going down to 4.25. There's a little bit of discrepancy whether or not they go 25 or 50 basis points. There'll be a press conference at 9:30 afterwards. What will this do? Again, it depends on whether they cut 25 or 50 and the statements afterwards. So, but they are on, again, they've gotten some very soft employment numbers last Friday. Their inflation is growing a little bit though too. So the argument is, will they choose to act, and how aggressively they will. So if we go to the Canada, we see that the Canada market again flirting with those relatively high levels of 142. If they do cut, the conventional thinking is we'll see a print above 142, but this may be a classic buy the rumor, sell the fact. Now, they put a lot into this market recently. And let's just go back out to the daily. They put a lot of, again, this is a market that, yes, dollar strong basis Canada, lower dollar strong versus euro versus yen at 152. But this is one where it'll be interesting to see, will we get a movement off of whether they do 50 or 25? Sure. 50 is kind of what is expected, probably a muted movement, but if they do just 25, maybe we'll see, you could possibly see a little bit of a sell-off in dollar Canada, which means they're not going to be quite as aggressive cutting rates as forecast. So a couple of good things to trade off of. Look at your trading ranges, check your positions, take advantage of if we do get a little bit of an outsized move and how that plays into. So you'll get a move at 7:30 off of all the majors, then one particular to Canada at 8:45. So lots of good trading opportunity today in FX. Guys, that's it for us. Bridget, fantastic job out of you.
Thank you.
Coming up next, Tom Sosnoff, Tony Batista, Vanetta Logan. Have a great day. We'll see you back here tomorrow.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
here, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Hello.
Why do you
Hello,
leave me
Thomas.
alone with him?
Why are you alone with me?
Why am I alone with you?
Don't you have a restraining order by now?
I probably should. I probably should have just stayed home. It's cold.
It's not that bad today. Tomorrow's supposed to be cold.
I mean, it's still. I don't have pants on. I have a skirt on. I'm just saying, it's cold.
And look at us. We're all in solidarity gray today because we're all a little bit.
I'm in
gloomy.
greenish. I'm green. I'm just saying.
You were so pedantic. It's hilarious.
You really are.
It's fine. So what'd you get up to last night? What's going on? Were you out?
I was out. I was out for pizza.
Ooh, where'd you go for pizza?
I went to an old favorite, a neighborhood favorite, Spacco Napoli.
I love Spaccanapoli.
Yeah, it's good, isn't it?
It is. It is.
Neapolitan pizza. Yes, very nice.
Yeah, coal-fired, I think.
It's not coal-fired, but...
It's not? I
yeah,
thought they were grandfathered in. I thought they had, like, one of those old...
Wood grill, I believe.
I believe Tony's right. I think it's wood.
All right, could be wood grill.
But they have a great crust.
Yes,
And
yes.
it's a really good restaurant.
And the service is really good. The people are super nice.
Yeah, they all speak fake Italian.
Okay, wow.
They're all like Dylan Radigan trying to speak Italian, you know. No, they're all nice.
You get the arancini?
You know what? I was about to, and I tried something else. So,
what did you have when you say I tried something else? The natural thing would.
I had a little.
Say,
I tried I had this spicy supersad and some other stuff.
Okay.
But as an appetizer.
So you had like a charcuterie board.
No. That was on my pizza. As an appetizer, I tried some of their hot pepper rapini.
Oh, I don't know. What is that?
It's like a spinach.
Oh, okay.
With garlic and olive oil and some hot oil. And they put a little sausage in it. It's
Was it good?
Yeah.
Okay.
Yeah, but their pizza's better.
What made you go to Spaccanapoli?
Because it's the only place that has gluten-free pizza. Like, they have a really nice gluten-free pizza.
So you're with your wife.
Yeah, so they have
that's nice.
Yeah, so they have really good
hump day.
So, yeah.
Oh.
So, it's a neighborhood place.
Yeah, it's super cute. I love that neighborhood.
Yeah.
It's super cute.
It's right by Bad Coffee.
It is. It is. It's also right by the Black Ensemble Theater, which I know that you were a patron of.
Black Ensemble Theater. I don't know where that is.
It's like whatever that east-west street is. If you go east a little, it's right there.
On Lawrence.
Yeah. I don't know I don't live up
Ravenswood and Lawrence, yeah.
Yeah, so it's Lawrence. So yeah, if you go east on Lawrence, it's right there.
Yeah. So
Catch a show.
Why not? But I haven't been there. I haven't been there in probably a couple months or like 6 months or so. So it's good.
Nice.
Yeah.
And how is the toast? Where are the seasonal toasts?
Oh, we're closed on Tuesday, so they reopened today.
Okay.
Yeah.
Are they going to have like a cranberry toast something for the season, for the holiday, or a pumpkin something? What do they got?
It's funny. It's funny that you say, because like people like you would expect that because it's so public, and I don't do public things. Like I don't
do public things like have a permit to operate, but you do though now.
Okay.
I don't do
Vanetta,
things.
here's what happens when he starts at 7:04 in the morning.
I don't do public stuff. Like I don't play Christmas music and that kind of stuff.
Bah humbug. Yeah.
So you're not there like right now. You don't know what your employers are doing. I bet they're having a holly jolly Christmas right now. I bet they're rocking around the Christmas tree right now.
Putting lights up.
Yeah.
Mm-hmm.
No,
Doing all kinds of good stuff.
We only hired Jews.
I don't know.
Do you know Spaccanapoli is the guy he's an Italian Jew who came over from I think he came over from Milan.
From Spain. Make the story really funny.
No, he came over from Milan, and super nice guy. But
well, I didn't know his origin story. No.
Well, they write about him a lot because it's like one of the top 50 or 100 pizzerias in America.
Sure, and it's been here for decades. So.
It's probably been here 2 decades.
Yeah.
Yeah, it's good. It's that's funny. Anyway, yeah, but I don't do the public stuff now.
Bat, today's your big day.
You know what? You don't have control over anything anymore. You used to not do the public stuff. We had our Christmas party in March, and we had all types of fun events.
No, now I just killed everything. Now there's no Christmas party, no fun, nothing.
That's right. Now you're the fun vacuum for the holidays.
I mean, my desk is decorated for Christmas. You can't stop me.
Yeah, the front desk is decorated for Christmas. Everything is decorated for Christmas.
Yeah.
I don't give a no Christmas. I don't care about no kids.
Bat, today's your big night. Your inaugural visit to Alinea.
This is true.
Are you going to bring me the leftovers on your way home?
The food is like this big. What are you talking about, leftovers? It's foam.
What?
It's not
foam.
my thing, but I'm gonna do my best to enjoy it. I'm gonna
Can
be there for
can
my
I make
son.
a couple of suggestions to you?
Sure.
This is just a public service announcement because, all right. Number 1, try not to say anything.
Well, he has to talk.
Less is more with my language. Go ahead.
Less is more.
He has to say please and thank you.
Yeah, you can say please and thank you.
Sure.
Yeah.
Okay, what's lesson number 2?
Yeah.
Well, that's really all he has to do is not
Okay,
talk.
that's it. Just lesson number
You
1.
only really have to do one thing. Just not talk. Bring your credit cards, don't talk.
It's prepaid. I mean, there's nothing I got to do. I got to just show up.
They even charge you like the tip and everything else prepaid?
No, not the tip. They just charge for the meal.
Oh,
to reserve the spot, you got to pay for the meal.
Oh.
The full boat, not just a percentage?
No. It's not like a $50. I'm gonna hold the table of 3 type thing. No, it was the full Monty, as they say.
Do a power move. Come in shorts.
Do not come in shorts. Where's my camera? Do not show up to that fine dining establishment wearing shorts.
You know me, Vanetta. I'm not going to do that.
Do not show up wearing your velour tracksuit.
Yes, you should.
That's a possibility.
You should. And don't take out your iPad and start trading tonight, okay? Or watch what I'm doing, okay? No answering emails at dinner.
I hear you.
Well,
I'm going to do good.
I hope Vinny.
Where is that? Where is Alinea? I don't even know where it is.
Lincoln Park.
Is it?
You know what, Sadnov? I was just looking it up before we came on the show, and I haven't found it yet. Like my reservation, what time I'm supposed to be there, and where it's located.
I don't even know where it is.
Do you have the password?
No. I don't even know where. I don't even know where it is.
Well,
I think it is in Lincoln Park somewhere. I don't know.
Well, there's no sign or anything for it. I don't think so.
I think you just have to hold up your W-2 and then the doors open. I don't know how that works.
Magically open.
I went to a restaurant.
That's why I don't know where it is.
I went to a restaurant in Quebec City. We were in Quebec City last year, I think, for like the holidays. And it's really beautiful little.
It was like 3 or 4 years ago, but yeah, okay.
I would say 2 years ago.
Yeah,
okay, yeah.
Whatever.
And it was really beautiful, but we made a reservation somewhere, or I made a reservation somewhere, and all they sent you was a code. And so, like, the address and a code. And so you had to...
And then you had to go on a series of adventures. A quest. A mythical quest.
Well, it was like in a cave or something, but it was like they sent you a code, you get in through the code, and it's cool.
See, that's fun. See, that's an experience.
You know, if you go to the Ever downstairs and you're in the bar, they have a secret door that takes you from the bar.
I'm so tired of secret doors.
So a secret door takes
Last
you.
time Vanna was in there, she found herself in compromising positions. Go ahead.
Look, I get that we're Chicago and that we bear the legacy of Al Capone, but I'm so tired of every single place having a secret door now.
I like the secret door.
Well, because you built a place that has a secret door.
I like secret doors.
This is true. This is true.
People like secret doors. They like surprises.
I like to just be like, oh, what's this? This is what it is. Okay, I'm here. I don't want to be going through secret doors and getting lost. I listen to too much true crime. You don't ever want to go to a second location. All right, so okay.
I like secret doors.
I know you do. It's a good time. All right, so
you know what? Tom's just mentioning that because I'm actually the one who found the secret door. I'm actually the one who got the table inside the room in the secret door. That was a private little space for us to be in. And now Saz is going to make it his own. Everything I do, he steals from me. As a matter of fact, Cairo in 1983.
Oh my God, Cairo
was probably
in 1983.
the first establishment to have a secret door. That was the #1 nightclub in Chicago, 1986.
You know what I really love about you is the fact that you live really well in the past. Like, you know.
You both do. No, I'm gonna call you out like an umpire.
I don't.
I know both of you.
I don't.
You can't quote a movie past 2000.
Thank you, Vanessa. Thank you very much.
That's possible, but I don't.
I agree.
I don't
John.
tell
He doesn't
stories
agree with
about
anything.
1983.
Yes, you literally told a story about like you and Scott on a snowmobile in Wyoming in like 19
holding hands as you frolic through the
and
snow.
watching an 80s movie.
Yeah.
That was in the 90s.
We were all traumatized yesterday by Bat's Club Med story. I will not get over that.
I found the picture, by the way.
Did you see the picture?
Tweet it out,
No,
but found
I
the
don't want to see anything.
He looks like the guy who
John's
just got
it for
arrested.
the best of.
He looks exactly
You
like.
look like Luigi Mangione.
Yeah, exactly.
Wow.
Too soon.
Exactly.
Too soon.
Okay.
Too soon.
It is too soon. I can't with you boomers today. Hey,
He found the picture. I don't know if he posted it, but it's scary.
I didn't post the picture, but John has it. It's going to make the best of, like our little.
Yeah, you're going to be traumatized. If you think you're traumatized,
I'm already traumatized.
wait till you see this picture.
Someone get me the help that I need.
You're truly going to be traumatized.
I have PTSD, post-trader stress disorder.
Pretty good.
Did I ever tell you the story about that woman that we hired as our receptionist once? And she had to sit just outside the trade. Did you ever hear that story?
I've heard lots of stories about lots of traumatized receptionists from Eastern Europe. You got to be more specific, homie.
No, this one was not. No, Eastern European women are not traumatized.
Okay, cool.
We hired this woman, and the receptionist desk was right off the trade desk.
Yes.
Right? And there was about maybe like 10, 12 guys all on the trade desk that we'd all traded together for years.
Sure.
Okay. And so the chatter nonstop.
Right. A wide array of undiagnosed personality disorders.
100%. Every nutcase loser you could think of was on that trade desk. And every story they had was the same stories they'd been telling for 20 years.
Yeah, I lived.
Anyway.
Yeah.
So she was there, really nice person. She was there for about a week. And then I guess she had just recently been divorced from a trader.
Oh,
and
no.
we did not know this.
Right, sure.
And after
that is fresh trauma.
After about 5 days, literally 5 days, like she wasn't, half the guys didn't even know her name.
Right, yeah.
She got up on her chair.
I've heard the story. Like Norma Ray.
She turned around and she goes, I hate all of you MFers. You all sound exactly like my ex-husband. And then she got up and walked out the door.
Dude, she was standing 10 toes down on business. She said it with her whole chest. No notes. She's an icon.
She got up, screamed at everybody, walked out the door.
And it's still true to this day.
Everybody.
And nobody can complain about
everybody
it.
looked at each other. They go, is she gone? And as soon as the door was closed, she was gone. A big cheer went up. And then it was like.
Everything was back to normal.
Everything was back to normal. Literally 5 seconds later.
You traumatized that poor woman, and I hope she's in a better.
We didn't know she was married to a trader.
I hope she took that settlement money and that she's in a better place.
She said, "Every one of you guys sound like my ex-husband. You talk the same stories. I can't stand listening to any of you. I'm out of here." Oh my God, it was one of the funniest things. We laughed about that for a year.
I truly, I hope she's in such a better place now. Hey, we got a great show for you today, whether you've been traumatized by a trader or not. We're going to set up a hotline. At the top of the 8 o'clock hour, Julia in his house, a little bad taste. Julia runs Bad Trader. But every Wednesday, she comes in to share a little something with the boys. Today, it's Intro to Market Regimes. Oh, you have a regime now?
Wednesday is our double dose of geniuses with Julia and Jacob.
Every day is a double dose of geniuses. Everyone who works here is so smart.
It's a challenge for us. Julia and Jacob pushed Tony and I to the edge of our
J&J 1-2 combo
of our intellectual capacity.
Julia's going to be in at 8 o'clock. And because it is Wednesday, it's What's Your Assumption? So where viewers write in with an underlying and a directional bias. Tom and Bat try to do as many trades as possible. That's going to pop off at around 8:40. Then 9 o'clock, like Tom mentioned, we got the other genius in the house. That's Jacob for the skinny on options math. EMH versus autocorrection, so efficient market hypothesis. Ooh, look at me. Versus autocorrelation. Sorry, I misread that. So EMH versus autocorrelation.
Very Jacobish.
Yeah.
That is very Jacobish. So get your helmet and maybe take an edible. I don't know. Then around 9:30, we got live from the trade desk. Big boy Scott Sheridan counting down all the top trending tickers over at Tasty Trade. And you got Nikki. How come you don't throw Nikki in the genius conversation? Nikki's coming in.
How come you don't throw Nikki in the genius conversation?
We probably should.
He came out with cherry picks yesterday. It was fire. Him and Dr. Data worked very hard to put that together.
Oh, you would have liked to see Jacob yesterday on our pitch. We do the pitch in the afternoon.
I do know that, yes.
He had a cat wrapped around his head.
He had a cat? What kind of cat? What color was it?
I don't know.
You don't know colors?
I mean, it was hardwood floors.
It was a bunch of different bunch of different colors. Like
like a calico? Or like a tabby?
I don't know what those are.
A dilute tortie?
It had stripes.
Oh, so probably like a tabby then. It had stripes. Okay. I would have liked to have seen. Why didn't you come get me? Would have liked to have seen that. Anyway, but no, Nikki, our other genius, he's going to be in with his Johnny Trades idea. These are trade ideas for people with smaller accounts, like the rest of us. And as if that wasn't enough, Liz and Jenny live from the floor of the SIBO. That's going to be at 10 a.m. I saw Liz leaving yesterday, and she had these beautiful bags that Alyssa gave her, full of tasty swag. Have you seen our new tasty swag bag? They're really not. Even I don't have one. But Jenny.
I don't have one.
Jenny was taking them for the hardworking crew, because that's a separate filming crew and production crew that works with them on the floor of the SIBO. So
bull crap.
It was not. They work really hard over there to make sure the ladies look nice, so they deserve something.
Yeah, well, it's funny because when they first got to the floor of the SIBO, the guys were being very respectful.
Yes.
The SPX pit. Now they're loosening up a little bit.
Oh, no. Yeah, but listen, Jenny, you're tough.
No, they're tough.
Yeah.
But the guys are, she said they're going back to their old...
they're reverting to their factory settings.
Control-Alt-Delete.
Yeah.
Yes.
Yeah.
She said they're getting back to their factory settings. Exactly.
Yes.
Right.
Okay.
And everything's changing down there now. So they're getting a little too comfortable with them in the pit.
I hate that for them. Okay. Well, they're going to be live from the floor of the SIBO. That's going to
They don't mind because the guys are still scared of them.
That's going to be at 10 a.m. And at 1 o'clock, we got Truth or Skepticism. Tom Sosnoff, Dylan Radigan. What are you talking about with Dylan today?
We have a very interesting topic today. I'm going to tell you what it is because it's not...
it's not the norm?
It is not the norm.
Okay.
What is American exceptionalism?
Oh, okay. Oh, you're getting into it.
Yes.
That is like...
It's a heavy topic.
Is it? Because I kind of feel like it was like my paper in the 9th grade, but whatever.
Was it really? Your paper in the 9th grade was on American exceptionalism?
I am a very gifted writer. I've writer, and so. AP English, what you know about this? Anyway, that's our run of show for today.
You're a good copywriter. I'll give you that.
You can watch. Oh my God, was that a I am off kilter, you guys. Is that a compliment? I'm gonna keep it moving.
And you didn't even ask for it.
I know, right? I don't even know what to do with myself. But you can watch Truth or Skepticism.
You're better than Beth.
Live here on the Tasty Live website or on our YouTube channel. But hey, in the meantime, in between time, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news. Coming across the wire. Our leading story. Top story. Jump in. In today's headline.
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's December the 11th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Sure.
Ready for the news.
Any earnings today, Mr. Bat?
Adobe would be for today.
Ooh, okay. What are you gonna do in Adobe?
Let me see if I have an Adobe position on, because I
GME was last night, right? It looks like the stock's unchanged. I don't know
which one?
possible.
GME?
I got that one. I'll cover that one.
GME is absolutely unchanged. Did it come out yet?
I don't know.
I know it was supposed to come out this morning. The stock was up $1 earlier today, but it's literally unchanged right now, which is super weird. Adobe, we do not have a position. We have had a position on much of this year. Let's take a look at Adobe.
Because they're a little bit behind their peers in terms of AI generative video features, but they are adding AI to a ton of their products, whether that's Photoshop or Premiere or Lightroom.
ADBE. I suck at Photoshop. Year to date, we are down money in Adobe, and because I was gonna say I don't think we did that, and we're down small. We tried.
All right, you tried. Right. Hey, getting to the first headline of the day, traders are pretty sure of a Fed rate cut, but what happens if inflation data is too hot? You are going to get November CPI today, and the bar for a CPI surprise is capable of derailing easing is high. Fed funds futures traders are around 85% sure the Fed is going to deliver a 25 basis point rate cut next week. But the CPI report is expected to show that progress on inflation has hit a wall. It's expected to show a 2.7% 12-month inflation rate, around up 0.1 of a percentage point, coming out in about 8 minutes.
Yeah, so we are a little bit long bonds here. They're down 15 ticks this morning. They're back to 118.5. They traded 120.5 2 days ago. So we got out, and now we're reloading. Here's small. I sold some bond puts this morning, right about here. Looking forward to hopefully, I think got to be just a little bit long bonds here, Tony.
EMEA S&Ps are up 8 pre-market, Nasdaq's up 55, Russell's up 5, Dow's down 14, and as Tom said, bonds are down 15, notes are down 6.5 going into this number in about 7 minutes.
Investor optimism towards U.S. stocks has eclipsed the 2000.com bubble, and that raises the risk of a negative shock. U.S. consumers have never been so bullish on stock, with record divergence relative to their income expectations. Are we setting ourselves
You remember
up?
what happened after that? That was.
No, I do not. I was a baby.
Okay. Well, that was January, February, and then that was January, February, March, and then we started to crash in March, and we crashed for 2 years.
Okay. Well, do you personally, as a seasoned trader, get the same feeling now that you did in 2000?
You got that little tingling in your spidey senses?
Hold on, I'm offering some bond puts here. I think 2000 was a little bit. 1999 was crazier as far as like outrageous pricing for worthless companies.
Okay.
But it was very much the difference in 2000 was that the rally was concentrated to almost 100% into like NASDAQ and .com stocks.
Mm-hmm.
Like we were trading mostly S&Ps in 1998, 1999.
Okay.
And S&Ps were dead. Like we'd be sitting there listening to all the noise everywhere else and couldn't figure out like what the hell these people were doing. because it was out of control.
And it was so concentrated in like the
It was concentrated in like stocks like, Yahoo and all these other crazy, it doesn't matter, all these .com stocks. And there was basically in the S&P pit, there was nothing. It was dead. So it was this has been a much broader rally. That's why I think this sell-off is going to be more challenging, more difficult. I'd be I don't think they're going to roll over, maybe not until March, but you got to be really careful here. I mean, if you started to get short in December and January of 2000, you took a little bit of pain. Just like if you started to get long in the end of 2008, early 2009, you took a little bit of pain, but then you got paid. I think it's the same thing here.
Okay. Goldman Sachs CEO says deal making could surpass 10-year averages next year. David Solomon said that deal making in equities, mergers, and acquisitions could exceed that 10-year average. We might even be ahead of the 10-year average, he said. What are your thoughts on M&A getting hot again?
Well, M&A has been dead for so long that I think M&A kind of has to get hot.
Okay.
So I think that that's a pretty easy cyclical, comment to make.
Okay.
That's all. I think it's a very cyclical comment. I think.
Is there a way to play a perceived boom in M&A?
No.
Okay.
No, I would have no idea how to do that.
Bat, what are the bank stocks doing? Like a Goldman, JP Morgan, and the like?
Goldman Sachs is trading around $585, and so up a little bit this morning on this pending number that's coming out in about 3 minutes or so. I looked at KER the other day. We haven't looked at, KRE the other day for maybe some regional bank play. That's been trending higher also, trading around $65. Ivy rank was 47, but I didn't do anything in there. Maybe something in the future. So KRE kind of coming back into play.
Here's something interesting. A post-mortem has been done on Tiger Global. They fueled the pandemic-era venture capital boom. In 2021, the hedge fund backed 315 startups. That's bonkers. And much of the time,
that's the number of occurrences.
The VC industry wasn't happy about it, but they had to write down a ton of their investments. The email company Superhuman down 45%. Search engine DuckDuckGo down by 72%. They invested in NFT.
Is DuckDuckGo a public company?
This is their venture of secondary market valuation.
Secondary market.
Yeah, secondary market valuations. And NFT marketplace OpenSea, that valuation's down by 94%.
That's a bad one.
Yeah. But I didn't know that I didn't know that they just invested in over 300 startups in just 1 year. And anyway, just a new study came out that just basically all of their returns were the worst that the industry had ever seen. The spray and pray model of VC didn't really work for Tiger Global.
Spray and pray?
Seriously? And pray, yeah. That's what it says in the headline, spray and pray.
I do too.
Spray and pray. In 2022, they set out to raise $6 billion for their 16th private fund. So good job out of them. Hey, real fast before the number comes out, Michael Saylor made the case during Microsoft's shareholder meeting that Microsoft could convert cash flow, dividend, and buybacks and debt into Bitcoin, and then he was laughed out of the room.
He should have been. That's like the
Microsoft investors voted down his proposal. Yeah. Bat, sometimes you get them mixed up, MSTR and MSFT.
Well, I'd like to talk about MSTR because that stock looks like it's up about $6 or $7, and some rumors it might be going into the Nasdaq. So I don't know. What do you think about that?
That's been rumored for a long time. I think it will. Why would the Nasdaq not put it in there?
Sure.
Right.
Print some money.
But they were rumored. I thought that was rumored last Friday to be a big rumor, but who knows?
Are you doing anything?
Microsoft is unchanged at 443.
Anything in Bitcoin, just real fast before the number comes out?
Sure. Bitcoin's hanging out at 99,000. It's up around 2,000 on the futures.
Okay.
Bitcoin is alive again.
It's live. I'm just waiting for 7:30 by our clocks now.
Yeah.
Yeah, you got it. It just came out. Even the S&P is upticked to about up 13 or so. Bonds are down 15. They haven't moved.
They
They're
really
2 ticks
haven't.
off of their lows.
The bonds really haven't moved much. They're down 13, 15, they're 9. I don't know. The bond market's trying to figure out what the hell this is.
Mm-hmm. Even the S&Ps went from up 7 to up about 14, 15 right now.
Yeah.
Much to do about nothing so far. Volatility in by 20 cents, 15, 20 cents.
Yeah, much to do about nothing is exactly right. I'm looking at these. I was working some bond puts. First of all, you can't trade bond options right now because they just wide. Well, yeah, the market's too wide for the moment. But I was trying to sell these 118 puts in Jan for 125, and
you sold some at 123.
I sold some at 123. Now the market's, I don't know, 120ish maybe.
Yep. Even the S&P's up 15. Bonds are down 9. I'll let you know if anything else happens.
Yeah, it's a little bit.
It had a bigger effect. It had a bigger effect on net gas, which is up 12 cents.
Oh, that's interesting.
Just kidding.
I don't think.
I'm just kidding. I'm just.
No,
kidding.
I know,
I'm
but
just
I was
kidding.
like, oh, it's something.
Yeah, this is for the bond market. This is literally a non-event. I mean, they were down 13 before, and they're down 12 right now. And the S&Ps, like Tony said, they were up 8. Now they're up 15 or 16.
That is correct.
I would pay this no, never mind.
Pay it, no, never mind.
Yep. All right. Back to work.
Hey,
Party's over. Back to work.
Gen Digital, which owns well-known computer and identity theft products like Norton and LifeLock, is expanding into consumer lending, and they paid $1 billion to buy MoneyLion. What? Yes, I was shocked. Did you know, girl? You didn't even know. I'm breaking news to you. So the company's based in Prague. They run Norton, LifeLock, Reputation Defender, and they're buying MoneyLion, whose business includes credit building loans and early payday offering. The two companies together. Look at your. What do you think about this?
We owned a lot of MoneyLion for a long time.
I know, but now it's worth $1 billion. Did you get out?
Oh yeah, I don't have any money line, but
you got a nominal amount.
So
I'm
consumers can seek help with identity monitoring, managing subscriptions, analyzing debt levels, negotiating bill.
Now let me just say something. When we were liking it, it was a $4 to $6 billion company.
No, Tony. No. It's
a $1 billion company right now. It's got a market cap of $360 million.
I know, but it doesn't make any sense that they're paying $1 billion with a market cap of $360 million.
No, $960 million.
Oh, $960 million. So, can I say a couple things about MoneyLion?
Yeah, go ahead.
First of all, we had the CEO on the show.
Yes.
I really like him.
Yeah.
Ex-Citadel guy, went to Purdue, an engineer, super smart. We looked at MoneyLion. Tasty looked at MoneyLion about 2019, before the pandemic.
Yes.
Yeah, I wanted to buy MoneyLion 2019.
I know.
And very interesting company. They have great technology. Unfortunately, they did a SPAC for $2 billion.
Something like that. Yeah.
They did a SPAC instead for $2 billion. And then the stock went to like 300 million.
Yeah. Yeah, it struggled.
Yeah.
Yeah.
And the stock went down to what, like $1?
Yes. And then it reverse split.
Yeah, then it reverse split. So I'm not even sure what it is now. But at the time, the stock was like $10 when it had a SPAC. It went down to $1. So they lost 90%.
Ooh.
We were stuck long it, and then now they've had a nice rally. That's great. They're really good people.
Okay.
I like them. I don't know. I've never had an account at MoneyLion.
Sure.
But
You were not really their clientele.
I've looked at their technology every which way. It's an interesting company.
Okay, well, good for them.
I don't know what they're worth, but interesting.
Yeah, well, we're going to keep it moving. Hey, President-elect Donald Trump has tapped Federal Trade Commissioner Andrew Ferguson to lead the Consumer Protection and Antitrust Agency. People are more hopeful for a less onerous regulations coming out of the FTC, the current administration. Good and bad. I mean, obviously, as consumers, you want protections for, like, you don't just want everything to become a monopoly, but some people believe that their businesses should just be businesses. I don't know. But we're going to have a new FTC person. Hooray.
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 Huzzah.
I don't know who Andrew Ferguson is.
Yeah, I don't either. He previously served as counsel to Republican Senator Mitch McConnell, and he clerked for Supreme Court Justice Clarence Thomas. I'm going to leave that there. Moving on to earnings. GameStop.
GME, give it to me.
GameStop reported third quarter profit on spending cuts. They ramped up their cost-saving efforts, including shuttering stores and selling higher margin goods. CEO Ryan Cohen told investors in June that the company would operate with a smaller network. This helped GameStop report a net income of $17.4 million in the third quarter compared to a net loss of $3.1 million a year ago. So good job.
Yeah, they didn't lose money this year. Good job.
Looks like the stock's up $1.
Yeah, just about. You are correct. At just under $28. Yes, you are correct.
So do you have to adjust anything in your position, or it'll just be winner?
GameStop?
Yeah.
We did a put ratio spread for credit. We're fine.
Oh, okay. All right. Good job. Attorneys for Meta shareholders asked a Delaware judge this week to sanction the company's former chief operating officer, Sheryl Sandberg, and fellow Facebook board member and current White House chief of staff, Jeff Zients, for deleting emails related to the Cambridge Analytica privacy scandal. Oh no. The attorneys contend that Sandberg and Zients used personal email accounts to communicate about key issues relating to their 2018 shareholder lawsuit, and people are big mad.
Big mad.
Meta has been kind of almost outperforming the rest of the Magnificent Seven. What are you doing in Meta?
Meta's hanging out this morning on the offer just around $6.24, which would make it up around $5, so a little less, $4.50, and bring it up to a new high. Meta.
What are you doing in Meta? The Ivy rank is low. It sucks.
I have no position on Meta. I guess I'm a couple deltas short, but it's nothing.
Google, this is funny, is asking the FTC to break up Microsoft's exclusive agreement to host OpenAI's technology on its cloud services. The conversation happened after the FTC asked Google about Microsoft's business practices as part of a broader investigation. And also, these are some of the issues that could go away with the election of a new FTC chair. There are some pretty big cases pending against Google, against Microsoft, and against Meta. But I think it's funny that Google does want the FTC not to investigate them, but to investigate Microsoft. Google up big yesterday on their quantum computing news. Can they hold it today?
That's a good question.
Looks like it's unchanged, maybe down around 20 cents on the Goog.
Okay. Oh, the Goog.
Still, like you said, the big day in the market for Google yesterday.
Micron landed $6 billion in federal grants to make chips in the U.S. from the Federal Chips Act. Do you have a position in Micron?
I do. I think that was out yesterday, though.
Okay, well, when it came out, it was after 8 a.m. when I was on the show. So it came out, the timestamp here is 2:05 p.m. What do you want me to do?
Stock was down huge yesterday. Let's see. It's up about $1 today, $1.50.
Yeah,
but it was down like $5 yesterday. Weird stock yesterday.
Did you adjust your position in there?
Yeah, I'm tiny bit long this morning, but it's only because we got a little bit hurt in there yesterday.
Okay. Other surprise movement and news yesterday, Walgreens put itself up for sale. WBA, Sycamore Partners, is in talks to acquire the struggling drugstore chain, Walgreens Boots Alliance. Drugstores have really failed to thrive post-pandemic, which is kind of a weird sort of mind shift. You would think they would be doing well, but both Walgreens and CVS are struggling, and so now Walgreens going to go private.
Yeah, interesting.
Walgreens had a nice move from under 9 to over 10. 10.40 is where it closed. 10.20 looks like where it's going to open.
Yeah, I mean, that's not exactly the takeover I think that Walgreens longs were looking for. But
sure.
Yeah, we're flat Walgreens here.
Okay. Amazon has launched a new online car dealership with Hyundai, and it's now live. People in 48 cities can browse, order, finance, and pick up Hyundai vehicles on Amazon's new car shopping site. When the deal was just announced, it did send shares of things like CarMax and Carvana lower, but the site is now actually live.
Cool.
Would you buy a Hyundai on Amazon?
I've never had a Hyundai.
I get them when I rent cars sometimes, like a Tucson. Not bad. It's okay.
I don't know. Never been in one.
All right.
Do you get free delivery if you're a Prime member?
Maybe.
Amazon up $1.50, maybe 226 and change. But the market's a little bit higher. When even the S&P's up 20 and bonds down 6 ticks.
What about CVNA?
Ooh, Carvana, CVNA, trading at hard to tell. Markets are a little bit wide. Let's just call it 239. That would make it up around $3. Had a little bit of a weekday yesterday, getting it back today.
Talk about Tom being the kiss of death. Just after one time in riding in a robo-taxi, GM is shuttering their robo-taxi business. No, I'm just kidding. GM is exiting the robo-taxi market, and it will bring its cruise operations in-house. It's basically claiming Waymo is the winner, but you already declared Waymo the winner. One ride, you were sold for life. GM now says they plan to realign its autonomous driving strategy. What are you doing in GM?
I do not have one. I do not have one position there.
Okay.
GM up around 70 cents on the news.
All right. Good job out of you. In other crazy news, yesterday was just like a big day for just news popping off. The deal, the $25 billion potential merger between Kroger's and Albertsons has been blocked by U.S. courts, delivering a deliberation after two judges deliberated simultaneously, and judgments, that's it. They delivered judgments within an hour of each other. A federal judge and a state judge, I think one in Washington, one in Oregon, blocked the merger of the grocery chain Kroger's and Albertsons. Kroger's and Albertsons has always maintained, they're like, look, we are not a monopoly. Basically, we are trying to join together to fight Walmart, and that is the enemy, Your Honor. But that did not fly in court. Has been smacked down a bunch of times in court. But chances are they probably own the groceries in your town, like Ralph's, Vons, things like that, King Super in Colorado, the Mariano's chain here. But called off. Federal judge blocked it. So.
I'm a Kroger guy.
Zaz, what do you think of blocking these deals?
I don't know, but I'm a Kroger. I guess I shop at Kroger.
Yeah, well, you don't really have a choice.
Yeah.
Hey, Boeing stock is taking off. Looks like the MAX production restart seems to have done it. Investors must have been waiting with bated breath for 737 MAX production to restart, and shares of the airplane maker jumped 4.5% yesterday.
Yeah, it was up like $7.
Boeing up another $2 this morning too. 2.5 maybe.
Yeah, we have been playing Boeing to the upside, so all is good there.
Okay.
Be a little short it this morning.
In other aviation news, SpaceX and its investors have agreed to purchase as much as $1.25 billion of insider shares in a transaction valuing Elon Musk's rocket and satellite maker at $350 billion.
All yours.
That's more than one Sano makes.
The per share price of $185 is up substantially from the $112 set in a prior valuation less than just 3 months ago.
I like how it goes from $112 to $350.
Well, $112 per share up to $185 per share, $350 overall valuation.
Got it.
Okay.
I still like that. In 3 months, stock's gone up by 33%.
You can't trade SpaceX, but you can trade Tesla. That's been a massive mover this week. Bat, what's Tesla doing this morning?
Tesla's on a 10-day bender, now a 409 or so, up around $7.5, $8, something like that. Tesla's going to be a pain like it was yesterday.
Tesla was a pain yesterday. Tesla going to be a pain today.
What are you gonna do?
I'm a little bit short Tesla, but
Okay.
I didn't.
I'm gonna roll up putties like a Johnny.
Hey, if you're like me in America, we run on Dunkin', but now your shower could soon run on Dunkin' as well. Native, known for its aluminum-free deodorants, recently launched a new limited edition line of deodorant and body care products that smell like treats sold at Dunkin'. Look, where's my camera? I am begging you with my whole body, as someone who takes public transportation, who takes Ubers, who's only yay high and is forced to sometimes stand in the armpits of people. Please use deodorant with aluminum. I don't care about your beliefs. Just use aluminum in your deodorant. For the love of all of us whose olfactory
Smells
senses,
like Dunkin'
whose
Donuts.
olfactory senses are still working, please use aluminum in your deodorant. Don't send me the studies. I don't care. I'm full of microplastic and aluminum, but I don't smell. All these hippie deodorants and stuff like Native and your Toms of Maine, they do nothing. And people are out here thinking they don't smell like funk, and they funky.
Vanetta's on a roll.
I just get so mad. But I love Dunkin'. And I would like to smell like Dunkin', but anyway.
I gotta be honest, Vinny likes this Native stuff.
No, especially a teenage boy should use aluminum everywhere. Have you smelled
don't worry,
your
he's
son?
got a bunch of colognes he puts on too. So he masks the
it's
odor.
just masking it. Oh, it's just nasty. Finally today, my viral video of the day. Sometimes if you step out the house looking a certain way, you can cause a scene. This internet creator captured what it was like when he and his companion step outside. Watch this. Like everyone's got their phones out. At first I was like, is this guy in a Cybertruck? Like... It's Eggnog the Bulldog.
Eggnog the Bulldog.
Oh, I love Eggnog the Bulldog.
I never heard of him.
Look at his little face wearing a reindeer costume.
I never heard of him either.
You can follow him, Eggnog the Bulldog, on Instagram.
People know about this dog?
Yeah. It's Eggnog. Top 10 name for a bulldog. Anyway.
Eggnog the Bulldog?
Yeah, Adam Sandler loves bulldogs, so he had bulldogs named like Meatball, which is a great name for a bulldog. Anyway, that's my time, Bat. What's coming up next?
Good job out of you. We're going to take a quick 90-second break and come back. We got more Tasty Live with Confirm and Send next. We'll be back in 90 seconds.
Hey, Doc. Your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is going to be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's going to be hangry.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Oh my God, I forgot to tell you something. Hold on 1 second. My last day, early in the morning, I'm washing my hands in this place, you know, like this communal shower, bathroom area. I'm washing, and the guy in the stall is listening to the show.
You're in the shower in a campsite in Missouri.
There's showers and there's stalls to do number 2 in.
I got it. And you're telling me that somebody...
And a guy starts laughing. He's laughing, so I stop washing my hands and I'm grabbing like towels to clean. I'm listening to, and I hear your voice.
Why didn't you go knock on the door and say...
He's taking a shit, all right?
I know. Oh, why didn't you knock on the door and say, hey, Tony Batista here.
I mean, what am I doing? Hey.
Right, autograph session happening right now.
we just ripped higher up to 50 points, and I just thought we would stay there. But
the thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000%, and I made a bunch of money, and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win, and it was mostly failures thereafter that. And I thought, I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive, really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live, Sadna. If you remember that, right?
Absolutely.
Sure, but you know what? This time we got a little bit of confirm and send. But before we do, let's take a quick look at the market because we got Julia coming up, and you know she's going to come with some heat and a bunch of slides. So let's do this quick. Even the S&P's up 21 and change after the number. NASDAQ up 109. Russell up 20. And the Dow up 82. Anything that was red has reversed to the upside. Volatility was in by 20 cents. It's still in by around 20 cents. That's 23 cents on the VIX futures. Bonds were down around 14, 15 ticks. They're now down 9. Bitcoin was up 2,000 and change. It still is up $2,200 to 99. Sosnoff flirting with the 100,000 number. Oil up 90 cents again, kind of staging a little 3-4 day rally. Gold up $12. That's staging another 3 or 4 day rally also. Silver doing the opposite again, down 20 cents on silver. And the big mover on a percentage basis is nat gas up 13 cents and change. We talked about some stocks that are moving. Tesla will be my problem child today, up another, I'll round up another $10.
Yeah, I offered some Tesla at 410, and I messed up on my order. I mean, I forgot to put it in pre-market, so I didn't get filled when I just traded up there. So now I just re-entered it.
Oh, you had it a day order instead. That's good.
Yeah, I wasn't paying attention.
Yep.
We haven't done much today. We've just we scalped some bond puts, and in a good way, and we haven't done anything else. Just adjusted some positions, and that's all we did. The only opening trade was to sell some bond puts. So far, so good. But I think I'm going to have a few problem children today, Tesla being my main one. I'm Tom Sosnoff. He's Tony Batista. It's 7:54 Central Time. We are located in the West Loop in Chicago. And if you're new to Tasty, welcome. We've only been doing this forever, and we'll continue to do it forever. So welcome. Stay around for a while, forever. And let's do it.
I'm ready.
Just another day, Groundhog Day, Wednesday.
No, we had 2 down days yesterday and the day before.
We did, but I called for 3. I called for 3, so.
Well, you kind of want an up opening to get lower. I don't think you can have one going.
I agree with you. I think we will go. We will go lower today. It's Wednesday.
I don't know. We're going to go lower today, but you want this opening, is what I meant.
It's Wednesday, December 11th. Tom has done 0 Christmas shopping so far, just so you know. So I'm kind of a little behind. I don't even know what to do or where to go or anything like that. And but here we are.
I agree.
2 weeks to Christmas, right? 2 weeks exactly.
Yeah. This is it.
Yeah, I'm under the gun. I did buy wrapping paper at Costco, so I do have wrapping paper.
Wow, that's awesome. Good job out of you.
I know. I'm thinking ahead. I don't think I have any tape, but I have wrapping paper. But I have no presents. So there we go.
Nice, I think.
Let's do it. Confirm and send.
I'm ready.
Why is it that you guys don't discuss or trade leverage ETFs too very much? We don't discuss leverage ETFs very much. We don't trade leverage ETFs that much. Why is that?
First of all, they're not that capital efficient because they use basically the same amount of capital you would if it's a 3-time leverage, then 3 times the amount of contracts, and you get too big is really the main reason for them. They have natural drag to them, which is another reason. They're not as liquid. There's a lot of reasons. I mean, if we don't do it, it's because it's not viable to do. I mean, at least that's what I think, in my opinion.
Well, Tony just gave the 3 answers that I gave to the person that wrote this email. When we're looking for highly leveraged products, we tend to trade futures. And one of the reasons that leverage ETFs exist is because some people, for whatever reason, don't understand futures or don't like to trade futures. When you're very comfortable trading futures, it doesn't make a lot of sense to use capital inefficient leveraged ETFs, but there's a lot of them out there. The 3 reasons we don't use or talk about much with leveraged ETFs is they are really vehicles that should be used intraday or for no longer than 1 day. And there's a couple of reasons for that. One, they are not capital efficient, meaning they can cost up to 3 times as much capital to have a position on in leveraged ETFs. That's number 1. Number 2, just like Tony said, also they are sometimes the markets are wide. And they're not, because they move around more, they don't have as tight markets. And number 3 is that they have, in order to be a leveraged ETF, they have to use futures to make up their to basically create that kind of leverage inside of that ETF product. So they have to do a daily roll, which means they have an incredible amount of intraday Tesla filling. They have intraday drag in
Now I got filled.
They have intraday drag in leveraged ETFs, and so they don't act the way that you might think they're going to act. They're very hard to hold for long periods of time, and they act kind of weird sometimes just because of the intraday drag. So just be careful of those 3 things: the intraday drag, the liquidity issue, and the capital inefficiency. Let's go to the next slide. So I've been trading a smaller account, but I'm about to come into some money. Having only traded a small amount of money in the past, how would you suggest I scale up?
Slowly would be my easiest way. If you're doing defined risk trades that are $3 to $5 wide, maybe you might want to go to $5 to $10 wide, more of a synthetic strangle, maybe even $10 to $20 wide on an iron condor, or one side by selling naked puts or naked calls if you're wanting to get short, and then go to strangle. So I would widen the strikes between my buy and my sell before I added contracts to anything. That's how I would do it. I mean, defined risk trades are going to move smaller than undefined risk trades.
Yeah. when you're trading a smaller account and you're ramping up to a larger account, the most important thing to do at first is to prove concept. And the way you prove concept is, I mean, essentially, you start small. You start your scaling up process small, like Tony said, by widening the strikes. Rather than adding more contracts, you add more risk, and then you prove that you can handle the additional risk, and then you continue to scale up by widening the strikes, and then eventually you add more contracts.
Yep.
Let's go to the next slide.
Perfect.
I believe a broken wing butterfly is selling premium, but do I want high IVR or monthly volatility to be high? And lucky thing for this person, we have a broken wing butterfly expert on the show right now.
On our panel today. That is correct, Sadlov. I am the broken wing butterfly expert because I've had so much success in them. In my option trades today, every Tuesday and Thursday, you'll notice I put them on SPX. Anyway, I digress. You do want, I mean, typically I'm going to trade products that have monthly volatility that's high because I like to go further out of the money, but that's not the factor. The factor is the high IVR. You want to be able to sell that embedded short, either call or put spread, or both if you're doing a double broken wing butterfly. You want to get paid more for that. So you'll always want high IVR. You'll be able to go further out of the money with high IVR. You'll be able to go further out of the money with high monthly implied volatility. But that's a little bit of a catch-22 because a higher monthly implied volatility just means that that stock has a higher expected move than a stock that has a lower monthly implied volatility. I like to put them on with an over 70% pop. That's one thing to look for, really closer to an 80, 85% pop or higher.
Yeah, I mean, the simple answer.
I mean, there's nothing to add when you have an expert in the room, Sadnov, and I already cleared it all up.
There is not much to add here. Do I want high IVR? Of course. Do I want monthly IVR to be high? Sure. Yep, it's simple. Most of the strategies we use that involve selling premium, you want high IVR, high volatility. Correct. Let's go next slide. IV rank for SPX seems low going into today's CPI or PPI. I typically stick to tasty mechanics and sell premium, but I was thinking about trying something different. I was thinking about trying to buy a vertical on both sides. What strategies would you consider, if any, with IV rank so low? And by the way, the expected move this morning was about $26 or $27. The actual move was, let's call it 23 or 24. It was at best a wash. It's probably a loss if you bought premium.
Mm-hmm. I mean, well, if he bought an at the money vertical and he was trying to the upside, then he did fine. I mean,
sure.
You know, if you stayed with the mechanics and bought a strike or two in the money and sold a strike or two out of the money, you know, that was a directional play. You're going to get paid on that. If you're just buying a strangle, then you're probably not going to get paid on that. So I guess it depends on your, you know, what strikes you're looking to do. If you went to the expected move and tried to hit the home run and bought both sides of an iron condor, you're going to lose money if we open here. So I stick to the mechanics. You want to put a directional shot on, go right ahead. But again, use the mechanics, basically make it a stock substitution.
Got it.
Very good. Beautiful. I can't believe I put two in a row I got right.
Yeah, I mean, I'm not going to really add much to that. We're not really premium buyers, but when IV rank is really low, if you wanted to buy a vertical spread and play it directionally in one direction, I think that's fine. If you want to do both directions, I don't love that as much because then you're going to really need an outlier move because you're going to need to maximize it. I prefer, just pick a direction, take your shot. That's it.
Very good. Very good.
Let's go to the next slide. So, do the deltas on futures change more quickly than the deltas on equities?
I would say yes, just because they have a higher and faster expected move than the deltas of most equity products. So I would say yes, they do. I mean, the model is the same. They just have a bigger movement to them.
I'm going to say no. the delta, we can agree to disagree on this. I don't think the deltas on futures change more quickly than the deltas on equities. I don't think that futures.
Well, if an equity had an expected move of $1,
yeah,
and it moves its expected move of $1,
yeah,
a 50 delta option is going to move 2-3 deltas.
No, all I'm saying is the models are built the same way.
The models are the same. I agree with you there. I 100% agree. Go ahead.
The models are the same. I'm going to say no. You can't make this assumption. They're going to be the same. Let's go next slide. And the last one. Sometimes I notice the future on Bitcoin /BTC. They're up, but Bitcoin.
Sosnoff. Nobody makes a buck like you do, my friend, and Tesla scalp a little stocky.
Hey! We're doing that. We're teaching lessons here as we go through this.
Oh my God, are you ever unbelievable? You are good, me lord.
Sometimes I'll notice the futures on Bitcoin are up, but Bitcoin is down, or vice versa. How can that be?
And they're talking about Bitcoin Cash here.
Yes.
Moving differently than /BTC. They're talking about Bitcoin /USD. A Bitcoin USD trades 24 hours, basically 7 days a week. And Bitcoin, the future /BTC, closes and then reopens. So that time when Bitcoin is closed, it's catching up to what the cash is doing.
It's exactly the answer.
And they're not fungible, by the way.
Yeah, they're not interchangeable. But Bitcoin futures and Bitcoin Cash are exactly the same thing. Just let's be clear about this. There's no difference. But what happens is that the Bitcoin futures, I think they close at 3:15 and then reopen at 3:30. So they have a different cycle of what you see last. The cash, I believe, closes at midnight. Is it midnight or noon? I think it's midnight.
Something
and
like that.
And then they reset it. So they just have different times when they reset, but they're the exact same thing. So the only reason they look like, one day you'll see Bitcoin futures, like the futures are up 2,500 this morning. Maybe the cash is up 1,000. I don't really know. But the reason that they're different is just because of the different closing times they have when they mark the products. That's all it is.
Very good, my friend. You know what?
They're the exact same product.
Let's take a quick 90-second break and come back. We got more Tasty Live after this with Oh Joy, Bad Taste, and Julia next. We'll be back in 90 seconds.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Got the need for speed? No problem. On tastytrade, adjusting your option positions is a right click away. Rolling just got quicker. Tastytrade, make your move.
shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
We're gonna go to New Orleans. I got to be in New Orleans. What's up?
Y'all three guys, just the whole organization is just phenomenal, and it's changed my life. And I wish more people would just sit back and listen to y'all and take it seriously, because it will change your life if you enjoy trading. I don't know if I could ever repay any of y'all for this free advice and free teaching y'all do. Is just remarkable. Tom, I got your hat on, and ever since I got it on, I've been blowing the market up, so make sure you don't give one to Tony or Scott, because I don't want them to benefit from us.
That's okay. Good job out of you.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois at Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0? Really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Golf play, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Tomas, we are back, my friend, but enough of you. We got Bad Taste and Julia here. What's up, Julia?
I'm doing great. How are you?
Doing great myself. Thank you so much for asking.
Very, very nice. How are you?
Good.
Yeah, we're not great. We're just good.
I'm better than good.
Better than good?
Better than good, not great.
We're somewhere in between here.
Yeah.
We're mad okay is what we're.
No, I'm good. So far, so good. I mean, I don't need Spooze up 30-point handles this morning to take a little of the happiness away, but that's okay.
That's okay. It's not a day for the Bears, but that's okay.
Yeah, so far.
So far. Oh, you think it might flip?
You had your 2 days, Sosnoff. You had your 2 days.
We had a 2-day
move.
bear market. Yeah, that's the most we could ask for, I think.
Hoping for a little bit more.
Speaking of bear markets, guess what we're talking about today?
What?
We're talking about market regimes.
Oh, I love a little market regime.
I think you do, actually. I think this is an easier piece because it's stuff that you guys are already pretty intimately familiar with, which I'm excited to talk about. I think this is an important topic, but navigating the nuances of it, as you guys are well familiar with, is not super easy. So we're going to talk about market regimes, but first things first, we had some bad trader updates that I wanted to talk about.
Go ahead.
Okay, let's go to the next
Fire
one.
away.
Fire away. We just made an accessibility update. If you guys aren't on the Bad Trader app, it's a cool little experimental project. It's over in the App Store and the Google Play Store. We just made an accessibility update, so now you can increase the font size in the community. Well, just in the whole app, actually, which is kind of cool. What's your font size?
My font. Well, I have perfect eyesight. So
I was gonna say it's probably have the base one, but you know what?
He is such a freaking liar. I figured out what he does. I saw his emails. His font size is huge. It's got to be like a man 6 inches. I mean, it is as big as you could get on an email. It's horrible.
That's not font size.
Hey, when you got to look at a phone all day, believe me, I get it. You can increase that font size by increasing the font size on your device. I have some instructions right over here if you guys want to do that a little bit later. But we have some cool other updates to the portfolio page. Let's go to the next slide as well. We added market caps to the portfolio page, which is kind of neat. So basically, if you log into your brokerage account, you can see the different market caps of your holdings. When you click on large, small, mega, mid, you can see all the different companies that fall in that category, which I think is great because market cap diversification is important too.
Yeah, I would say.
Absolutely.
Give it something. I'll give it like 2 stars
Okay, out of what? 3?
out of 5.
Okay, you know what? Fine. All right, let's go to the next one.
I mean, market cap diversification I'm talking about.
Okay,
not
fine. On
not
the
your
tier
design.
list, that's like not the highest tier, whatever.
Okay.
But we also have major market events on the portfolio page. So again, when you log into your brokerage, you can actually see which events affect your top holdings this month, earnings, dividends, and then you can also see the results in there as well once they actually report, which is great for that. Now, that is an important risk management technique. So that's pretty S tier is watching earnings, I think.
Oh, yeah.
That is S tier, if I do say so myself. And then let's go to the next one. And then this isn't so much an update, but so a little bit more of a reminder. You guys can get your bad trader wrapped, your 2024 snapshot of how you're trading this year. Or maybe you don't want to think about it. I don't know. That's a you decision. But you can see how many trades you've done year to date, what you've traded the most, and then as well, what your biggest winners and losers were. Which is kind of cool. So if you want to go get your bad trader wrapped, that's also over on the portfolio page when you log in. Hell yeah.
And I think you should also tell people that if you have accounts that, if you still have an account mistakenly by accident or whatever at some other brokerage firm.
That's going to be later this week.
Oh, okay.
You mistakenly have an account that's not a Tasty. You may or may not be able to log in the near future, which is kind of cool. That'll be for next Wednesday. How about that?
Okay, perfect.
Okay, hell yeah. Let's go to the next slide and finally talk about market regimes. So last week we talked about how the market might transition between different regimes or states with their own unique statistical properties that tend to propagate for a sustained period of time. And identifying these regimes is a very important part of active trading. Would you agree with that?
I would.
Doing the best that you can, at least.
I think understanding that there are different regimes is interesting. I don't think you can actually understand them.
Would you say that if there are certain indicators that suggest we might have transitioned regimes, then it's important to maybe modify your strategy?
I would love somebody like you to be actually able to tell me that with some form of certainty. I mean, all of it is just, it's hearsay.
It's hearsay. That's kind of loaded. I don't know.
That is a very traditional industry answer that Tasty would not accept.
Oh, that's a nice way of saying that, huh? That makes sense.
It's not an acceptable answer at Tasty to say that we've entered into a new regime. You can say that it looks like, for example, it looks like the market has rolled over.
Or you can say it looks like when you get a VIX pop, right? You would adjust your portfolio, adjust maybe some of your positions, and your strategy.
Yesterday is a perfect example. You could have said, after 2 down days, you could have said, hey, it looks like we're entering a new regime. And then today they're up, and then you'd be like, oh, no, we're not. My point is you actually never know with markets.
Sure, that's valid.
Okay.
What I want to talk about today sort of introduce this concept of regimes, specifically when the market transitions to a high volatility regimes. I think it has very unique characteristics that a lot of us might recognize as the market transitioning into a higher volatility regime. When I think of volatility regimes, I think they're kind of ranked by
I'll
volatility. You've got the low volatility bear market, bull market.
I'll accept that, counselor.
Okay, that's progress, Tony. Did you hear that?
Yeah, he's been very, very agreeable today so far.
I'll accept that only because I think it takes longer to move out of a volatility regime than it does like a stock. That's all.
Sure. Okay. When I'm talking about market regimes, they're usually classified by volatility. So that's maybe a little more your bread and butter.
Okay.
So I wanted to talk about sort of recognizing them and some of those telltale signs. And let's go to the next slide. So like I said, market regimes are usually classified by unique volatility, price, and macroeconomic conditions. And transitions between regimes are typically initiated sort of by broader shocks to the market. And so, for example, we might move into a bull market, for example, after an interest rate cut or some kind of announcement of fiscal stimulus, for example. A bear market might come from interest rate hikes or geopolitical crises or something else. And then you have crashes, right? So very high volatility conditions that are caused by very specific circumstances. So you got the Great Depression, Black Monday, 2008 housing crisis, the COVID crash. So again, very specific circumstances that cause something as volatile as a crash. But either way, there are these sort of triggers almost that might move us into a different sort of regime.
That's
might
fine.
not, but
Sure.
yeah. Okay, so let's go to, we're going along so far. Let's go to the next slide. And so while market regimes tend to exist for a sustained period of time, their duration and stability tends to vary because they're driven by pretty unique circumstances, right? We can agree with that.
Yeah.
But generally, especially when we, do quantitative backtests, we sort of assume that there's somewhere between 2 and 4 market regimes. With the exact number that you use, it kind of depends on exactly how you're trying to test a strategy. And that's because, so for example, if you assume there's only 2 market regimes, you might lose some information about the granularity about these different regimes. But that being said, you reduce the risk of overfitting. So like basically the risk of developing a strategy that works really, really well for your historical data, but doesn't work well in a generalized way for the future. If you assume there's more market regimes, you might have more granularity, but you run a higher risk of overfitting, for example, like developing strategies that might work really well for this historical data set, but don't necessarily work well in general. So the exact number that you would use really depends on how you're trying to run your back test and your analysis. Yeah?
I'm okay with that.
Okay, we're okay so far.
Yeah.
Going better
So
than I
far,
thought,
we're
Tony.
good.
That's not bad.
Yep.
Hell yeah. Okay, so let's go to the next slide. So common indicators of a regime shift. So like you've talked about, identifying regimes, volatility regimes in the market, it's pretty difficult to do. But there's some telltale signs specifically when the market moves into a high volatility regime, such as a sell-off. And for example, when we try to identify this regime shift, a lot of the time they're characterized by very large moves in the market to nobody's surprise. If we look at 3.7 daily moves in the S&P, either to the upside or to the downside, we can see how they kind of cluster together. So this is again this volatility clustering of these 3 sigma moves, which again, when we have these big daily moves, might be indicative that we've moved into a high volatility market regime, right? One of these sort of indicators. Yeah.
100%.
100%.
As well as marked by, let's go to the next slide, increased intraday volatility, which when we look at intraday volatility, we can see that they spike around the popping of the dot-com bubble, 2008. We see a little blip around 2016, 2020, and then we got the bear market of 22, which again can be kind of used as an indicator that we've sort of transitioned into one of these high volatility regimes. Yeah? I don't see that every day. Okay, let's go to the next slide. And then as well, our favorite indicator, the VIX. The VIX is very, very, very rarely above 30. It does not happen an awful lot. But when it does happen, it's typically when we've moved again into one of these high volatility market states. We did see it even early this year where we kind of popped above 30, but that wasn't necessarily sustained. So it's not necessarily like a foolproof indicator. But generally, when we've seen the VIX above 30, between 30 and 40 happens about 7% of the time, or above 40 about 3% of the time. It tends to happen when we're in these like ultra volatile market environments that again tend to propagate for a sustained period of time. Although the duration of that tends to vary because again, they're triggered by very unique circumstances, right?
Absolutely.
100%.
Amazing. Let's go to the next slide. And then we got another GIF. Guess what time it is? It's GIF o'clock. And then another pretty common indicator when we've shifted into this high volatility market state is when you kind of see correlations to the market increase across broad sectors. So here we got SPY, XLK, XLV, XLY, XOP, a bunch of these sector ETFs. And what we look at these 30-day correlations, when we had the COVID sell-off in 2020, we can see that everything, even utilities, got a lot more correlated to the market, which is why underlying diversification is so important. Even though these are rare circumstances, when everything moves in correlation with the market, and this is price correlation too, we have to worry about volatility correlation as well. Like you want to be as diversified as possible to sort of protect the portfolio from this sort of event happening, right?
Nice.
100%.
Yeah, that's good.
Pretty picture. So this is another indicator.
Yep.
So let's go to the next slide. So predicting transitions between different regimes or the characteristics of specific regimes, it's in real time. It's a pretty interesting area of research, but I don't think can be really used dependably by retail traders, generally speaking. Yes?
I don't think it could be used dependently by anybody.
I'm kind of inclined to agree. I'm kind of inclined to agree. But that being said, and this is where I might lose you guys a little bit, but let's go to the next slide. But there are actually pretty reliable computational methods for detecting when a regime shift has already happened in real time. And we've talked about some of the intuitive indicators like price correlation increasing, intraday volatility increasing, the VIX increasing. There's certain indicators that we can use, but there's also computational methods that would typically be used for other problems in engineering that we can use to detect regime shifts in real time, specifically when we classify volatility or when we classify market regimes by volatility. I'll go through all the other words on that slide, but what do we think about that?
I think it's...
I think you're genius.
I think it's okay. I still don't know I still don't know how. I still don't know that you can truly detect it, but I think that you think that there's both.
I think you can detect it, but that doesn't necessarily mean that you can trade it, if that makes sense. Like I might know that I'm in a high volatility
in
regime,
hindsight, you can say it, but I don't know that you can detect it happening.
Maybe that'll be next week's segment. How about that?
Boom. That's what I'm talking about. Good job out of you.
Hell yeah.
Look at Sadlov getting back into Tesla.
I don't have to read the rest of the words on this slide. Maybe that'll be for next week. But let's go through the takeaways real quick, or not. That's okay. We don't need takeaways.
We can do takeaways.
We'll be really fast, I promise. But market regimes are typically characterized by unique volatility, price, and macroeconomic conditions. And transitions between those regimes are usually, initiated by sort of shocks to the market. Transitions to high volatility regimes are generally the easiest to spot. I wouldn't say that they're easy in general, but they're typically the easiest to spot, and they can be marked by certain characteristics, such as increases in price volatility in the broad indices, specifically in like SPY, the NASDAQ, the Russell, elevated VIX levels, or increased sector correlation to the market. And predicting regime detections is precarious, maybe impossible, but there are some methods, and maybe I'll win Tom over one of these days, for actually detecting transitions in real time. That doesn't necessarily mean that you can trade them because, like I said, they all have different durations.
Predicting is hard. In hindsight, kind of pointing it out later on. All right.
Okay. Let's see if we can win Tom over one of these days. Okay, that's all I got.
All right, that was good.
Cool.
Good job, buddy. Let's take a quick 90-second break. We'll come back. We got more Tasty Live after this with opening bell.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. I thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
TikTok.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm gonna say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the bed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. You know, it's coming up, sound off the opening bell here in just about a minute, so I'm not even going to talk about it, but we do have the opening bell here in a minute. Even the S&Ps, am I on the show, Tom?
Yeah, you're good. You're good.
Okay. Even the S&Ps are up 30 right now.
Yeah.
What do you say about that?
Can we, do we whack them and how?
Ooh, volatility in by 33 cents. We've had 2 down days. I'm not so sure we can do that.
You don't think so? Up 30?
Yeah, I don't think I can do that.
I just sold my first contract in the S&Ps at 77. I'm not sure if I want to get more short here or not. Short some Tesla.
Yeah, I'm short some Tesla. That's gonna sting a little bit. Ooh, Sadlov, I don't know if you've seen Mondelez. Told me I couldn't make any money in Mondelez. Trading $64, Sadlov. That's up about $3 since I put on my trade, which is pure stock substitution. That makes that trade a $300 winner overnight. Time to go, Sadlov. Mondelez.
I wouldn't buy Mondelez with your money.
Oh, well, I bought it $3 lower on a stock substitution. Zebra trade. That's right. Stealing a little page from the ladies. Zero extrinsic ratio, blah, blah, blah trade. Looking good, Sadnov. Looking good. Look at you with your Tesla little scalpy.
Just took a point
Taking
and a half.
A little less now. 50 cents, huh?
What?
Taking a little less. 50 cents, huh?
No, a point and a half.
You sold it at... Oh, $9.99. I'm sorry. It looked like 9 even. I apologize. I never doubt you. I'm so sorry.
Come on, Johnny. Come on.
You're the man.
We're scalping here.
Yeah, and you're scalping MES futures too for nice little 4 handles. Good job out of you. GameStop up $1.50, Saznoff, for earnings. That's inside the expected move.
Yeah, we got a lot of bad trades on here. Let's see what we got. GameStop, GME. We did a tiny trade in there. We just did a put ratio, right? Yeah.
Mm-hmm.
That's gonna be nothing. Nothing, honey.
That's gonna be nothing is correct.
That's gonna be nothing, honey.
Even the S&Ps are up 29. Bonds are down 3 ticks. What's moving around the globe here, Sadnov? Have you looked?
No, hang on. Just give me 1 second. I just want to see a couple things. Moving in our positions today. You know what's a pig? Intel. Under $20, $19.95. I guessed wrong in there.
Yeah, I got an email saying, please have Tom mention Intel being a pig because it is a pig.
Yeah.
And he's right. It is a pig.
Intel PIG pig.
Agreed. AVGO, which has earnings after the close tomorrow, not today, is up $6 and change. Costco, which has earnings not today after the close, but tomorrow, is also up around $5.
Can I just tell you that
Adobe
AVGO is an incredibly difficult stock to trade.
I will give you that too. I will give you that.
It doesn't get any. It is so challenging. I've been in that stock, messing around with it like almost every day, and
yep,
I'm telling you, Godspeed.
It's a toughie. I'll give you that.
Godspeed.
Yep.
I just adjusted my position there, widened my strikes out.
You did something in Boeing also, didn't you?
I just rolled up some puts in Boeing because the stock's up. I mean, I've been long Boeing the whole time. I don't know. I'm just trying to just play the game. Let's take a look at MSTR. Yeah, we're not even these stocks are crazy. We're not getting hurt in there at all. Not yet, at least.
Not yet, but we're trying.
We are trying. I'm gonna roll up some puts in Coinbase and Monster, and we'll see what we can do.
I squeezed my.
What do you think here?
I squeezed my Tesla roll up of puts. That cost me a little bit.
Tesla, ooh,
up 11.
Yeah, I covered. I guess that was a good cover.
Oh, good job out of you.
Do you get short more Tesla here? I think so.
I mean, I'm leaning a little short by default just because I have both sides on, but yeah. Stock's up $11. I rolled up 12. Stock's up 11 or $12. I rolled up by $5. That's my way of staying a little bit short. Continues during the day, then I'll roll up another $5 or $10.
I absolutely despise the stock up here. So
It's becoming a little troublesome. I'll agree with you there.
It's also becoming a little like I mean, I know they're squeezing the shorts, and I know the shorts are like, they're not happy, but it's kind of got ridiculous.
Yep.
All right, let's take a look and see our own positions here and see where the
Definitely
problem
seems that way.
Yeah, I'm just a little short. That's my problem.
Got it.
I just
you
went
mean
home.
short overall the market, and volatility is upticking in Tesla too.
I just went home
As it goes higher, makes sense.
I just went home a little short deltas, and also the Russell is not doing much at all compared to the S&Ps.
No, it is not.
Let's take a look at different equities. Yeah, equity-wise, it's just the same cast of characters.
Is it though? Let's see what's moving to the downside, Sosnoff. You got UNH down around $16, Lilly down around $5, SMCI down 4, Sosnoff. SMCI was catching itself a little bid the last 3 days. Has sold off in SMCI. PDD, the Chinese stocks go a little bit lower by $3. Uber a little bit lower by about $2 because Tom Sosnoff took a Waymo. Baba down $1 and change. To the upside,
I don't have an Uber position on, but it's getting cheap. Where's Lyft trading, by the way? I haven't looked at that for a while.
LYFT with an IB rank of 17 is the reason why you haven't looked at it. It's following suit with Uber. It's a little bit lower by about $1 this morning. Reddit, you said, is a mover. Sosnoff, it is a mover. It's up $8 today after selling off yesterday.
Just sold some puts in Uber. You can get filled very close to the offer in there.
Oh, nice.
At least I did.
Oh, you scalped your Tesla again too. Look at you.
Tesla, yeah. What's it up now?
Tesla's only up $6.40.
I do not like Tesla here. Sam,
I think it's on a 10-day bender, Sosnoff. I think
Tesla's going to close. I think Tesla's going to close down in the day.
I hate it when you say this because I need it to close down on the day, and there's no way you can be right.
I think Tesla's going to close down in the day. I'm pissed that I covered.
Please, baby Jesus, could he please be right? Please, please, please.
Yeah. But I'm just a little mad at myself for covering, but this S&Ps...
Goldman Sachs up $5, Sosnoff.
S&Ps are strong today. I need them to turn around.
31.
Bonds are strong also. Yeah, Tesla's definitely...
Bonds are strong.
Tesla definitely down in the day. I'll give that to you right now. I'm throwing you a bone, Batista.
I really can't. There are days I don't like you. There are days I just can't tolerate you. Today would be the day with that call.
Yeah. Tesla's are pretty much a lock. Let's see what else we got here.
Coin up 14 now.
Coin?
Boeing up 3.
Yeah, well, you've got a really nice move in Bitcoin this morning, and I'm looking right now at Coinbase. Yeah.
Markets are a little wide in Boeing, by the way.
I don't love the markets in Coinbase and Boeing and in MSTR, but those aren't. I'm not getting hurt in any of those today. We're getting hurt only in the indexes and in the S&Ps versus the Russell. Let's see. Yeah, Tesla's only up $4 now. It was up 12 before. You can kiss it goodbye. Today is the top in Tesla, but not the top in the S&Ps.
God, please, could he be right? Please, please, please.
No, I'm right. All right, what else you got for me?
Can you feel it in your bones?
What?
Can you feel it in your bones?
Yeah.
You know what, Sosnoff? We can take a 90-second break because we got What's Your Assumption next. Our viewers came to bat for you, Sosnoff, where they have 10 trades for you. Are you ready?
Let's do it.
Let's take a quick 90-second break and come back. We got more Tasty Live after this with What's Your Assumption?
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all freaking losers. There's no skill.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
When I was in Krakow a month ago, I was introduced to this is cherry vodka. It's not like vodka you get in the States. It's like 80 or 90 proof. We should get a sponsorship of some sort involved with these guys, or at least a co-marketing effort.
It seems a little risque, I'm going to be honest. I mean, she's got two cherries that are kind of...
Easy.
Yeah, you're uncomfortable considering...
The show doesn't have a lot of sex appeal. The network
You're
in
50% right.
But here's the thing that I don't get about TJ. He's got to stop doing the show from a lazy boy. He goes
Usually you can see
lower
right up
and
his
lower.
nostrils.
Like you,
I want him to go even lower, so it's just all you see is just like
like he's in an iron lung. Okay, we want him to be in an iron lung.
It's like it's a bubble boy.
Stas, what comes up next? The opening bell. Don't look so surprised. Sadlov has been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
Like what has
Wasn't
changed?
it?
I don't think so. Nothing's changed. The only thing they did, I think, was they had the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not bean traders here.
Do not engage.
When I got,
And I got it. We didn't. Wait a minute. So
when I got in this business,
we used to open it. We used to open at 9 o'clock. We since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that at $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Saz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me, baby.
Get the full scoop by checking out the archives at tastylive.com.
It was a great show. It was very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with, what's your assumption?
I'm ready for a little what's your assumption today. I kind of feel like I need some trades.
You feel like you deserve an assumption?
Yes, I'm ready.
Let's do it.
What time is it? 8:44. I'm Tom Sosnoff. He's Tony Batista. We got Jacob coming up next. Then we got Scott coming on. Then we got a full day of other activities. All right, let's do it.
I'm ready.
What's your assumption? These are trade ideas that have come into us from places unknown all over the world. Actually, places known, people kind of known, but let's see what they got.
Awesome.
So we're going to start out from Raleigh, North Carolina, and we got Sam. He's looking at CVS, has been down and has good risk reward. Well, let's see what Walgreens is doing today, just for fun. I got a little Walgreens position on. Walgreens down.
WBA is down 30 cents.
Sam, CVS is let's call it this, an okay stock to trade. I for sure would not call it
down $1.60, Sadnov. So today's a better day to put it on than yesterday, and it's certainly on its lows.
It's on its low tick. What does he want to do? We're a little bullish, been down, good risk reward. Yeah, I think in here, just because this is not, Sam, this is pretty much a directional play. I mean, I sell the 50 puts. That's all I do. I don't really have any.
It's a pure directional trade.
It's a pure directional trade. The markets are okay. Let's see. 88.98 is basically the market. So you kind of go in right between the markets on a down day. So 88.98 puts us at either 93 or 94 cents. So I'll go in at 94 cents. Nothing done. Try 93 cents. Filled. I mean, I
markets
split
a penny wide. Gotta like that.
I split the bid ask. That's all really you can do.
Very nice.
Let's go to the next slide. And that's the nicest way to play that bullish. Audris from Lithuania. All right, let's do a little trade from Lithuanian. He's looking at Baidu. I'm looking at Baidu. I've got a bunch of positions on in there right now. What's Baidu doing today? Down a little bit?
Yeah, a lot of the Chinese stocks are a little bit lower. Baidu down by around $1.37.
Yeah, I think you got to be long Baidu. My play in there.
Remember when you got long one of these stocks just because I said they were going lower, and for the last 2 days they've gone lower? You remember when you said that to me?
Yeah,
when you kind of made fun of me. You like to do the opposite of what your friends tell you to do.
I'm a put seller.
Not this friend, Sosnoff. This friend is spot on.
I'm a straight put seller in there. I sold the 85 puts for 276. Make it 277 for them, but I'm just trying to get some stuff on and move on. For me, it's a straight Jan put sell. You can do a bullish diagonal too. Let's see. If I was going to do a bullish diagonal in there, just for kicks and giggles, I would sell the. If we sold the Jan 90s and bought the Feb 85s, you could do that trade too. That trade's going to trade around, I don't know. Prices are a little weird in here. It's got to be careful. They're a little bit wide. Some of these markets
by weird, he just means the markets are a little bit
they're
wider
just wide.
than he would like.
So I don't want to pay much more than $4.25 for this. I'm going to leave it in. Let's see if we get filled. All right, I'll work on the next one. Let's go to the next slide. Aaron, Aaron from Waxhaw, North Carolina. He wants to buy the euro and sell the British pound. Euro's cheap relative to the pound. Buy €1, sell £2. It's a tough one for me because we're long both. Buy €1, sell £2. I'll do it, Aaron, but I'll do it. What the hell? Buy €1, sell £2. Take a fill. Hey, Ron, I'm trusting on this one. It's weird to me because I'm already long the pound, so it's kind of like messing me up a little bit. But we'll see.
Because the futures trade, you just go from X number of futures to a smaller number.
Yeah.
It doesn't.
Yeah. Yes. I already have that. I was whatever. I did your trade. 1 by 2. Yep. We bought €1. We sold 2 British pounds. If you want to know the prices, We bought the euro. Let's see. Where's my euro trade? Why don't I see the euro trade here? Hold on. Did I mess this up?
You sold euro and I'm sorry, you sold pound and bought pound.
What the hell?
Got it, you brilliant.
I was gonna say, where's my euro trade?
and okay, now you're flat.
Okay, there you go. Sorry. So I bought the euro.
No. Okay, yeah, you sold pound and bought euro. I'm so sorry.
Yeah, sold pound at 52 and 47. Bought euro at 55. All right, let's go to.
I think you sold too many pounds, Thomas.
What am I? This is my first time with my new hands. No, it's perfect.
Yeah, you did too much quantity.
What are you talking about? I only did it 1 by 2. It's fine.
Oh, 1 by 2. You did do 1 by 2. I thought you wanted to do it 1 by 1. I'm so sorry.
No, it said 1 by 2.
Got it. I was looking at your account, not at the screen.
Okay.
I apologize.
No problem. 1 by 2. Done.
Yeah, got it.
Let's move on. Ben from Cape Elizabeth. Love a little Cape Elizabeth, Ben. Nothing done on the Baidu diagonal. Andreas, it's I did get filled on the short puts in Baidu. Qualcomm. This is from Cape Elizabeth. I'm assuming that's Cape Elizabeth, Maine.
That is correct.
Is it? Cool.
Good job at it, you.
I love Cape Elizabeth, Maine. I told you one of my favorite fried clam places and lobster roll places is there, right on the water. It's great. Beautiful. Let's see what Ben's got. Been in a range. IVR is not terrible. Thinking of a strangle at the expected move. We have no Qualcomm position on. IVR is 31. It's all right. Expected move is $11. Stock is currently let's call it 160. So we'll do one. You can do 150, 170. I probably move it out of strike. 175, 145. It looks like it's gonna trade at mid price, 324. Let's go next slide. All right, Ben, thanks.
That goes easy.
Yeah, that was easy. Ron who has a place in Arizona and Las Vegas, Tony.
Nice.
So, looking at Delta Airlines and Jan monthlies.
Because he's flying all the time back and forth. He likes a little Delta.
Good volume, good IVR, call skew, not crazy. Nickel wide market sure looks like a 20-ish Delta plug and play strangle to me. You gotta like that.
Plug and play.
We currently have no position on in Delta Airlines. It's up $1 this morning. How high is this stuff? Not that much plug and play, Ron, because this stock is on it's in the stratosphere.
It's up $1. Try your luck.
Stock 63. You do the 57.70. That's about as wide as you can get. Volume's kind of light in there. 242 maybe. 243 partial. Working
that is correct.
243. We got a partial so far. Filled.
There you go.
All right, let's go next slide. Thanks, Ron. Steven from Miami Beach. Looking at gold. He's bullish. 23 to 58 days. Sell a put. Contrarian play. I don't know why Canada's crashing down. I think it will pop up. I don't know why Canada is. Does he mean gold is crashing down?
I'm not sure what he's thinking.
Oh, I'm sorry. 6C. I thought that was a G. He's talking about the Canadian dollar.
Yes.
My apologies.
Yes, he is.
/ 6C. My 2020 vision let me down. Doesn't that look like it's...
Yeah.
Doesn't that look like GC?
Don't you hate it when that happens, Sadnov?
Doesn't it look like GC?
Not really.
No,
Not
no,
really.
but
Okay.
I mean,
We're gonna go.
I could.
We got to go to Feb here, Steve, because Jan only has 23 days, and we'd be rolling. So we would do 58 days, and there's not a hell of a lot of volume here. But let's try. Let's try the 70 puts for $3 or 3 cents. Nothing done yet. We're working it. We need a downtick in the stock.
We need a downtick bad.
Let's go to the next slide. Max from Houston, Texas wants to get short Reddit. It's a little rich, up $10, near the high end of its range. It's been a little soft the last 2 days, but back up near the highs. What do you want to do here? Time frame 10 days. Now, I don't love the 10 days. We'll go Jan. Seller Reddit call spread. We'll do Jan's. Well, man, these call spreads are cheap. How wide are these markets? They're not that bad. They're pretty bad.
They could be. They get wide on some strikes here.
Yeah, they get kind of wide.
There's a reason why the bat hasn't traded, because I'm mechanical.
Yeah, I don't know about this getting filled in here. We're gonna have a few challenges, Max. We're gonna try.
Wait a minute, more challenges than we normally have, Saz? I don't know if we're prepared for that.
I'm gonna sell the 180-85 call spread. I'm just trying to do a little price discovery here to figure out where it is. I think it's like in the mid 140s, but I'm not 100% sure. So I'm trying to do some price discovery.
Mm-hmm.
Let's keep going. Alex from Canada is bullish on Intel. Is Intel going out of business? Well, it sure looks like it is. INTC. It's in the 19. Oh, it traded into the 19s. It's 2002 right now. I am long Intel and not doing very well. I'm out $1 on some puts I sold.
Okay, that was a new low, Sosnoff, that 19 print.
I know. I sold some 22.5 puts.
5 cents off of its lows.
I sold some 22.5 puts the other day. I'll sell some 20 puts now. I am not happy with my Intel trading. Offering the 20 puts at 114. Let's see if we get filled. Filled.
Beautiful.
I'm already long Intel, Alex. That's the only reason I hesitate a little bit. I just lowered my put price on the Canadian dollar because the Canadian dollar just popped up 20 pips. And Reddit.
Oh, nice.
I'm going to lower my call price on Reddit. See if we can get filled. Nothing done. Let's go next slide. MDS, another person from Hunell from Miami, and I am not. What is MDS?
MDS. Let's take a look at it. MDS is
MDB. I'm sorry, MDB. My eyes must be failing me this morning. MDB.
You don't think it's a problem? You don't think it's a problem with you, right? Mongo.
Stock price dropped after the CEO left. Probably an overreaction after a decent earnings report.
It's not you, right, Sadnov? Your eyes are fine.
No, John's got the screen a little fuzzy today. This guy's a little bullish. Well, it trades a little bit. Markets are about $1 wide. It's not the easiest trade in the world. I think you got to go Iron Condor in here. The markets are too wide. What do you think?
I agree with you.
I don't like the width of these markets. I think you got to go basically 16 Delta Iron Condor and reduce your quantity just to see where the kind of like the markets where I don't know where anything it's It's really hard to say because the mid price is going to jump around by like 10 cents.
Yeah. So you got to go in and then cancel and replace, I think is.
Yeah, this is a lot of cancel replace stuff.
It's a lot of work for people like us.
Yeah, for old guys that are been doing this.
Can't see.
That have been doing this a long time. This is a tough one. I think it should trade around 225, 230 in that range, but nothing done yet. I think I'm close. Let's keep going. What's the next one? Adam, future tasty dev.
I like it.
From Iron Mountain, Michigan. Failed to innovate. The public is moving towards products with more features and securities. Verizon, telephone, or other telecoms. Which one would you prefer to try, Mr. Batista?
Taking a look at them right now. I'm starting with VZ. Ivy rank of 42 is good. I'm looking at January options. That's your Mondelez. January options are okay, 3-4 cents wide. I don't know if you're going to like the expected move of only $1.80. When you get to telephone, Ivy rank is 27. There's expected move of 90 cents. I think VZ is going to be your play, Sadnov, but it's going to be hard to find something.
I have not traded Verizon probably all year. I don't
you got
think
filled on your MDB, by the way.
Yeah, the Iron Condor in there, 225, I think.
You are correct. 225 credit.
VZ. Yeah, Adam, I love the way you're thinking, but I just don't see the play here. I mean, this has a volatility of IVX of 22, a move of $1.80, no earnings, right? In
That's
January.
correct. Yep. No earnings in the January expiration.
I just don't see enough of. I don't see enough here to make me want to do something. In the Canadian dollar, I lowered my. Oh, I got filled.
Oh, look at you.
Sold the puts. I kind of hit the bid in there, but I'm bullish on all these currencies, so I understand. And in Reddit, I'm just.
So what do you want, the position or the tick? You took the position.
Yes, in Reddit, the stock has dropped $1.50 since we put the order in, so we did not get filled.
Got it.
So I just bring that to your attention, Mr. Batista.
Mm-hmm. That's fair.
Yeah, I bring that to everyone's attention. All right. So I think we did 8 out of 10. 6C is a fill, John. We got filled.
Yeah, you just got filled. This is just a second.
Telecoms, we did not. So that's an X.
Where's Beth when you need her?
Telecom would be an X.
X gets the square.
Yes. All right. So, yeah, John, just put an X in telecoms because we did not get filled in there. So in CVS, we sold a naked put. Stock's kind of on its butt. In Baidu, we sold a naked put. Stock's kind of on its butt. In the euro British pound, we bought the euro once and sold the British pound twice. After I screwed up, I made it right. So
that's okay.
Let me just confirm because we were a little bit of a fast market there a minute ago. Yes, we're all good. In Qualcomm, let me check this for a quick second. In Qualcomm, we sold a 1 standard deviation strangle. In Delta Airlines, we sold a strangle as well. In 6C, we sold a naked put, playing the upside in the Canadian dollar. In Reddit, we never got filled. In Intel, we sold a naked put. A lot of naked put selling on stocks that have been beaten up. In MongoDB, we sold a wide iron condor at the 16 delta, 5
$5 wide for $225. And the telecoms, we did nothing. So we filled 8 out of 10 trades.
Beautiful. Look at you, Sadov. And you got all your X's and check marks in the right place. Crackerjack team doing that for you right there, Sadov. On the fly. We're going to take a quick 90-second break and come back. Somebody else who flies real high is my friend Jacob coming up next with the Skinny on Options math. We'll be back in 90 seconds.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy.
Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you know, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
tastytrade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it. Join the club, genius.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With this, man, nothing says the skinny on options math like my friend Jacob. What's up, my friend?
I better not. I believe I'm the only one.
You are the only one.
No, we've had skinnies on other things, though. I guess Julia's abandoned the brand. She's just a bad trader now.
That's correct. Well played. Well played.
Better for her to soar high. Tom, how are you doing this morning?
I'm doing great. I'm doing great.
All good.
Tony, you're always good, Tony.
I am always good.
By which I mean you're not allowed to complain contractually.
That's true. That is true. Tom doesn't like that.
Yeah. It's important.
No complaining.
No. But as long as everything's kept, bright and cheery around his lordship.
Yes, true. That's true. I'm complaining because Tom made a bold call that Tesla would be down today, and it was only up around $2 for a moment. Now it's rallied another $5 to up $7. I was going to have to bow to him for a moment, but now I don't have to. He's the same crappy trader I knew this morning.
Yeah. It's hard to see when that will turn around.
Yeah, it's hard to see that. Yep.
But efficient market hypothesis says that we shouldn't really expect it to keep running up. Surely,
right.
Current price is right.
That's correct.
Which is more or less the point of today. Is I wanted to start to talk today about how to view the efficient market hypothesis in line with these big runs in underlyings, and sort of how to see that these things don't contradict the idea, and instead we can sort of, by filtering the whole volatility surface and all the option prices through the efficient market hypothesis, we can get an idea about what the market anticipates future prices to be. Even if they have to be centered around current prices, you can have a lot of room to decide or to view how the distribution is going to look, right? Is it balanced around current prices because it's going to sit there? Is it balanced around future current prices because it's a little bit likely to make a huge down move and very likely to make a small up move? Is it balanced around future prices because it's likely to have huge moves in both directions, but no one knows which, right? Those are all different things, all in line with the efficient market hypothesis that will appear in the implied volatility surface in different ways. And so I sort of wanted to get into that today to see that, because I think that it's easy to doubt the efficient market hypothesis when you get things in the past like the degree of autocorrelation has been very high in historical asset prices, which can seem at odds with the efficient market hypothesis. So I sort of wanted to disentangle or clarify how that doesn't contradict anything. Instead, it just gives us more information about what we're looking at. Yeah.
Okie dokie. Let's take a look.
Let's look.
Oh, boy.
Yeah. I mean, the right's just some arrows lines going up. Don't worry about it. The key thing here is that the efficient market hypothesis says that, and you have to do the risk neutral measure, which has another, like a measure theoretic way to put it forwards, but I think sort of intuitively for people's understanding, it should just be viewed as properly discounting future prices by the risk-free rate, so that you don't think that everything's better in the future and worse now, when in fact that's just, inflation. So the distribution of future prices has to be balanced around the current prices, right? The expected value, which we've gone over before, is right all of the possible future values times the probability of those values added up, and that has to be balanced around current prices, right? In order for the current price to be the center of the future distribution, it can be above, it can be below, but it has to be so in a balanced way, right? Any likelihood of being way above has to be balanced either by a similar likelihood of being way below, or by a greater likelihood of being slightly below. And that can get you into this sort of balance feature. And this can seem at odds with traders who like to do things like talk about underlying momentum and reversals, right? Because if an underlying had momentum, right, if an up move was implied there's going to be more up moves, well, then you'd expect the expected future price would be higher than the current price.
Sure.
By more than the risk-free rate, right? By an excess amount. And so how can we sort of combine have these two things coexist? We observe a history where the market has a large degree of autocorrelations, and we have the efficient market hypothesis telling us that we should really expect all future prices need to be balanced. So let's look at a volatility surface and see if we can unpack that a little bit. So a volatility surface is a measure of how much the market's anticipation for future prices differs from a pure Black-Scholes model, right? So in a pure Black-Scholes model, this surface would be perfectly flat. It would just be a flat plane. But what it's doing instead is it tends to be lower near the money and lower near expiration and higher if we look further out in time. And that's for typical underlyings, right? These things can reverse in like weird meme stock situations. But the idea is that if you look at it, it's saying that those prices are more, right, when the volatility is higher, implied volatility is higher, that means that those prices are more likely to be broken than the pure Black-Scholes flat volatility surface would imply. And so what each of these does is that they give any fair option price, give some sort of bounds on our probabilities that take the form, right, pick a future time and that strike price, and there'll be some sort of bound about it. It must be at least this likely, right? If an out of the money call option is trading for $5, then that says that there's at least $5 worth of probability about that out of the money strike that the underlying is likely to be there. And so those gives us bounds on the probabilities because, right, the expected value from before is the probabilities times the values. So it gives us bounds on these probabilities, right? If you have higher applied volatility on those far of the money options, it means those strikes are more likely to be broken. And if you, in theory, had the sort of the complete volatility surface, right, in reality, we only have strikes every $1 or every $5, depending on the underlying, and we only have expirations every day or week or month or, whatever. And so there's mysteries in between, right? We don't really know what a fair option price for these sort of missing options would be. Theoretically, if we had a complete fair volatility surface, it would exactly dictate the distribution of future prices, right? All of those bounds on probabilities would become infinitely tight, and we'd in fact get a fully determined distribution. And there's sort of a dual fact to that, which is that no matter what distribution of future prices, right, as long as it's right, you can't be 75% to be above $200, but only 50% to be above $90. That's not a consistent distribution. But if you have a consistent distribution of future prices, there are fair option prices that fit that. And then those fair option prices can turn into a volatility surface. So really what I think I want people to do is to sort of try to learn how to look at the volatility surface. And usually we don't actually look at it like this graph. Usually we look at it sort of in the platform, on the trade table, looking down the rows, right? You can see either by strike how much it increases going away from the money, or how by expiration how much it increases going out in time, right? Those are sort of the two ways we actually wind up incorporating to our own views. And that by looking at those, we can get an idea about how different from a pure Black-Scholes model we are going to be, right? It's not wrong. It can't, you could think it's wrong, but that doesn't get you anywhere. If instead we accept the efficient microhypothesis and we think that these prices are right, we can see what they have to tell us about the market's expectation for future things. So like on the next one, let's look at autocorrelation specifically. That's right. Technically, autocorrelation is the correlation between a time series and a lagged version of itself. But sort of for an informal idea, it's how much up moves are associated with more up moves and down moves associated with more down moves. In a pure Black-Scholes Brownian motion world, there's zero autocorrelation, right? At every moment, it's perfectly fair up or down. Historically, we've had positive autocorrelation in almost all underlyings. That just is the case. They have bigger runs than Black-Scholes predicts. And so that means that there's less cancellation in day-to-day moves, right? If an up move one day is more associated with up moves the next day, that means that over a month, you'll get sort of bigger up moves than a Black-Scholes would say a single day would amount to, because in a pure Black-Scholes world, there'll be more cancellation day to day. And what that'll turn into is a steeper upturn in the volatility surface when we look at further out of the money strikes. And so we can see by looking at sort of the different volatility surfaces for different underlyings, how much the market expects them to be autocorrelated, right? And they almost all of them have some amount of positive autocorrelation as viewed by the volatility surface does go up as you look out at further expirations, but the degree of that it can be very different, right? I don't know, Tony, if you want to pull up the platform and look at, we can compare Tesla and SPY, and you'll see sort of a different shape, right? They're both going to increase as we go out in further expirations, but the degree to which is going to be different. Maybe, yeah, Tony, you've got the button.
Would you like me to pull up first?
Let's do SPY first to sort of get our baseline, right? Our most typical of all underlyings.
And you want to look at DECE options?
Actually, I wanted to look at close that and look at looking at different expirations. Right? I want to see how much it goes out, how it behaves looking out at further ones. Of course, I can't see on that screen. It's too small.
17, 18, 250 days away. If you're looking at the implied volatility, is around 15, 14.
Right. And then
there we go.
Exactly, right? So it upscales, but pretty slowly, right? So from the 15 for a week out to about 20 on a year out.
Week out could be as little as 9 or 10, depending on the week. But you're right.
Right. I don't know. Here, Tesla's wild. I guess there's down the. You have to
Tesla actually have more, just the opposite. You got more volatility in the weeklies, 80s, 60s, 70s. And as you go 200 days out, you're closer to 65. And as you go 500 days out, you're closer to 60, 63. So you got a little bit of a messed up, a little bit of volatility in the front month in Tesla or the shortest dated options right now.
So that's almost right. This is a perfect example to show how like looking at these can tell us what the market is thinking about these underlyings that makes them different or strange, right? The market here is saying that it expects Tesla to have more cancellations over the long term than a pure black holes, which is some negative autocorrelation, right? That bottom right-hand graph where it's sort of predicting more whipsaws than a pure black holes would have, a negative autocorrelation, which is surprising, but it's important to like recognize that. And so if you want to trade in Tesla, I mean, on one level, you don't have to be aware of this at all. As long as you're trading the prices that exist, you're going to be forced into trading them correctly. But on the other level, if you actually want to have some expectation or anticipation about what's going to happen to you, you can see that the market is at least saying that it thinks that up moves in Tesla are more likely to be followed by down moves in Tesla and vice versa than in SPY, where it's expecting sort of ups to follow ups and downs to follow downs. Now, of course, once they happen, the prices all adjust and you don't get an advantage from this, but it can help you sort of prepare for where your risks are like, right? This maybe tells you that a naked option in Tesla is a little bit less risky than it might seem compared to a naked option in SPY when placing them really far out, whereas when placing them close in, more risky, right? A close-in SPY option that's naked contains about the amount of risk you expect, but in Tesla, more so because Tesla has this negative autocorrelation where the short-term moves are expected to be very sudden, but then to cancel themselves out over the long term. And I just think that it's really interesting that we can look at different underlyings and then just look at all of implied volatilities and get this sort of forecast prediction for what's going to go on with them.
Makes sense.
Yeah. That's all I want to talk about today is to get people to look at their implied volatility surfaces, not as a statement of like what is a good trade and what's a bad trade, but to give you an anticipation for what the market says this underlying is going to behave by. In particular, autocorrelation, both positive and negative, can be seen in the volatility surface. Historically, we can look at how much autocorrelation did happen. But when you want to look forwards, we want to look at the volatility surface and how much autocorrelation is expected to happen. Whether or not you think one of them is coincidence versus some systemic feature of the market, that's up to you. Right. So regardless of the distribution of future asset prices, there are corresponding fair option prices that would fit the efficient market hypothesis. And the volatility surface sort of translates assumed fair option prices, right? We've got option prices, we assume that they're fair, and it tells us what the market's opinion on the distribution of future prices. So, for example, the strength of anticipated future autocorrelations can be read by how steeply the volatility surface increases as we look at further out, right? And if it decreases, that sort of implies a negative autocorrelation. The success of momentum-based trading decisions depends not on whether the market has autocorrelations, but whether or not the realized autocorrelations are more or less than anticipated, right? This is the sort of the key thing to the efficient market analysis. Because these things are already priced in, that there are autocorrelations won't help a momentum trader. What would help a momentum-based trader is if autocorrelations exceed the anticipated amount, right? They need to have already been priced wrongly, or not priced wrongly, but the reality has to turn out in a particular way. That's the sort of the key thing, is to not think of these things as mispriced options, but as forecasts and predictions, which aren't wrong when they don't happen, right? If something's 70% to happen, you're not wrong when the 30% hits, as long as 7 out of 10 times the 70% hits, which is sort of the right way to look at things.
Tomas, what say you?
That's kind of, I mean, if I had to go back and just think about how we think of markets, I mean, that's kind of how we've always approached it.
Well, we would always say something to the effect like almost looking at it like volatility. Like when volatility is higher in the front month than the back month, it's expecting more action now than later on. in the cycle. Look at Tesla up $100 in the last week. Of course, volatility is going to be expanding there in the shorter term, thinking it's going to be more normalized as time goes on. The SPY being more flat to slightly higher with the intention that you don't know what's going to go on in the future seems to be a little bit more normal.
Yeah, exactly. Right. Yeah. This comparison of front month and back month volatilities can get you an idea about how wild you think the motions are going to be now versus how much they're going to, right? It's not that they're going to have smaller motions in the future, but that they're going to have more cancellations in the future.
Earnings, earnings skew volatility in the short period of time versus the back month. So
it's kind of why it's a little bit of why we choose to not to, it's why we think we have, it's why we think we have more opportunity at kind of a mid-range, because it's kind of it's almost like, in between the short term, the known of the short term and the unknown of the long term, but I feel like you get paid the most for that intermediate term. And it's just kind of what we built most of our, trading philosophies around.
Yeah.
Very nice.
Wonderful.
Good job out of you, my friend. You know what?
Thank you, boy.
A quick 90-second break. You did wonderful, Jacob. Don't ever change. We're going to come back. We got Mr. Scott Sheridan from the Tasty Trade World headquarters, who I know will never change. We'll be back in 90 seconds. No, Tasty Live.
Like a rock.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit. For lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
First, Tasty Live united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other Tasty Live traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Coming up on Bad Money with Jim Blamer, Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with this man. Tasty Trade World Headquarters, your friend of mine, the very popular, the very handsome Mr. Scott Sheridan. How are you, kind sir?
I'm excellent. And I have a question. Don't want to get you in trouble.
Ooh.
So
Then as your consigliere, I would say stop right here.
All right.
No, go ahead.
Okay, because you can't see right now, nobody else, I don't think anybody else can see right now, but one of your offspring's in the room.
Yes, I know that.
Okay. So my question, does offspring A know about dinner for offspring B?
Of course.
Oh, you know about it. Okay.
Yes.
Then I can ask you, are you changing, or is that how you're going to one of the finest restaurants in the world?
Who, me?
Yeah.
Of course I'm changing. This is how I dress Fasadov. If I dress any nicer, he gets all chubby.
Okay. See, I would expect, thinking about you, nice button-down shirt, maybe a blazer.
Why did you get the down?
You could go back. Are you going to flex a gold chain?
I might stay with the silver.
Oh, yeah.
I might stay with the silver.
Hey, you want me to get my Guido chains out? Yeah.
By the
there we
way,
go.
speaking of bearing all, did you happen to post the picture that you sent to me?
The Club Med picture, you got it?
Oh, yeah.
Oh, I wanted to see it.
Oh,
I wanted to see a young bat.
This is what I said when he showed it to me. I can't put this on air because I don't.
He looks like this. He looks like the kid that.
He's got the mustache.
I said if I saw this,
you got
I was
it?
calling the FBI.
Oh my God. Oh, I think I've seen this picture. That's good. That's good.
That's good content.
The mustache is.
The mustache. How old were you in this picture?
32.
No, 20s. How old?
57.
How old?
57.
How old?
I gotta be 24.
Be careful here, Dad.
Let me see. Let me make sure I don't incriminate myself.
Be careful here, Dad.
You know what?
Be careful.
I'm sorry.
There's a lot of things that I now know about that overlap with a lot of different things. There's some things that have come to light in my old age that I now know about that, I know the timeline.
Wait, how old?
I'm about 23.
23. All right. God,
I'll send it to John. John, I'm sorry, I had to do it in a text message. I apologize.
Can you find a 23-year-old Sosnoff too? I want to compare.
Now, listen, you can understand why I went up there, right?
No, I can't. But because remember, according to your story.
What does that mean? Hold on.
According to your story, yes.
Hold on. What does that mean? Now we can understand. What does
it's like
that
a baby's arm holding an apple. I was just showing.
We didn't see the after show, if you know what I mean. So no, we don't understand.
No, we don't understand at all.
But wait a minute.
Well, I mean, I can hold the hat up with my, my.
Wait, what happened to the tape that was on your belly?
Oh, I told you that part of the story?
Sorry. Oh, and remember, you didn't volunteer. You were chosen.
I was chosen. I was chosen for a lot of things back then when I was 23. You know what I mean?
Okay, do you want to name one other thing?
Cash in my pocket.
Oh my God.
Handsome guy.
God.
Cocktail waitresses, 2 at a time.
Yeah.
While you guys were building billion-dollar companies, I was out there, having a good time.
Yeah, thanks, Dad. Thanks, Dad.
I showed
things could have been different.
John just said I'm not going to show that.
Okay, you know what? Fair enough. I mean,
no. Those who stay tuned, I believe Matt, who's in, he does all of our like behind the scenes work, is cutting it up, and he's going to put it on the best of on Friday when it comes out. So I believe you'll see it there on Friday.
He has it.
Oh, he doesn't have. He's got a hat.
because it definitely deserves to be.
You can put it up. Put it up. Put it up, John. I don't care. My wife's driving the kid to school. It's fine. Don't worry. She's not watching. She knows what it looks like.
Oh, God. Poor woman.
Oh, she's back.
All right, I'm not going to touch this one.
Uh-huh.
Uh-huh.
Well, let's move on. He'll put it up when he gets it.
All right. So, well, I hope you enjoy your dinner. I'm looking forward to hearing the details tomorrow.
So how about this? How about this, Scott? I've been looking for the reservation to Alinea. I can't find it. Now, I saw the charge on my credit card, so it said it was from my wife. Well, my wife gave my son's email or whatever, or my son had the email, so he's been corresponding with them. And he said he would like two liquor pairings for 2 of the 3 people who are going, and he bought a cookbook.
I like this kid.
Hey, this kid spends your money.
Yeah, I like this kid.
I was about to say, what's the over-under on you guys leaving early?
Oh, they can't leave.
No, you can't. So
They
wait,
won't even let you?
I don't remember. At Alinea, do you have...
You can't leave early.
Are there choices to how many courses you want, or it's just everybody does like the 20 course?
There was no choice when I signed up.
Right.
No choice.
Yeah,
There's no choice,
no.
but you can opt out of certain things and.
Well, of course, they're not going to make you eat it. I mean, I get you don't have to eat everything, but like,
No, I don't
remember
mean-
Elizabeth? There was a restaurant up on Western. It was like 5, 7, or 11 courses. You could pick which one you wanted.
Yeah, a lot of places have that.
That's what I'm asking. A lot of places have it. I don't know. I don't remember if Alinea is one of those places.
They don't.
So you just get what you get.
Yeah, you get
and
what-
everybody's eating the same thing.
Yes.
Do they handle
You get
dietary?
what you get, and you don't get upset.
No,
Right.
no. You can ask for certain. If you don't eat certain things,
They'll make
they'll replace
modifications.
it. Yeah.
Really?
Yeah.
All right.
Like if you say I don't eat
Hey, can you
veal,
modify this and bring it back, please?
or if you don't eat lamb, they'll
What's your over under on making it through the 4 hours?
100. They'll make it. 100%. They paid
Is
for
it
it. It's
4
already
hours or
prepaid.
3 hours?
No, I mean, that's
3 hours. I thought it was 4 hours. Maybe it's 3 hours.
It's prepaid.
how
You
long
make
is
it through the whole thing.
No, I know.
Nobody ever leaves early.
I don't know. Vinny got to sit there with my dad and Chris for 3 hours. I mean, and I don't know can he watch TikToks there? Like, can he have the volume on?
I don't know what that poor kid's gonna.
I don't know. That's a lot. I don't know if I could last.
Who's driving home?
It was his idea. He's wanted to do this. He knows exactly what he's up for.
Apparently, he's been.
I mean, I couldn't listen to you for 3.5 hours.
My question is, who's driving home? Oh, we have a driver. I'm not naming names, but we have a driver. Somebody wants to go to the Notre Dame, Indiana game. They have a driver here who will take them to South Bend, wait, and drive them home for $600. It's the greatest deal ever.
That's like a meal at Alinea.
Oh, there we go.
There you go.
What are you doing with your left hand, by the way?
Yeah, what are you doing?
Are you tickling something? What do you got going on?
I'm playing the trombone.
Is that Photoshop?
It's trombone.
Because I don't ever remember you looking that skinny.
No. That's another hat. So the hat was on my head, and then you took it, you put it on your butt.
I don't
and then
think
you
so.
switched hats from front to back.
I don't think so.
Yeah. What do you mean? Yeah. All right. One in the. How's it go, son? One in the.
I'm not going there. I'm not going there. I'm not going there. This is. Oh my God. That's a picture.
Well, send a picture. I hope you have a great dinner.
Yeah.
Look.
Thank you very much. I appreciate it. I will. The picture will be of Vinny smiling, I'm sure.
Nice. Then you know.
We
tomorrow
compare it
morning,
with
there's no over under on him going to school tomorrow morning is 0.
Why, you think he'll be drinking too much?
No, he's gonna wake up. He's gonna, we were out late. I had a lot to eat. I'll go to school late.
He's not late. He's out till 8:30 with his parents. He'll be fine.
That's late. Okay.
He's already telling me that his class on Friday this last class of the day is like a almost like a study hall type thing.
So he wants
Can I drive him to go skiing?
Skiing.
So I've already told him. So I already told him we are not ski bums. Your job is to go to high school.
Wait a minute.
So you go to high
Where do
school.
you go? Wilmot? Where would you even go?
Or Alpine.
They're making snow right now?
Oh yeah, they're both open. He's been already twice.
Oof, there was that. Did they still have that program from the suburbs in the city, the Blizzard?
They do the bus that
Yeah.
takes them up there, but they're too cool for that. They'd much rather have their parent drive them.
How long of a drive is it? An hour and a half?
One's an hour and a half. The other one's more like 45 minutes.
Yeah,
you remember when I would take you, right, Nick?
No. Skiing? We didn't go skiing once. Not once. I didn't ski until I was 32 years old, 2 years ago.
This kid's got a lot easier. This kid does.
I mean, it's silver spoon. It's silver spoon.
A lot easier.
Yeah. Well, because my dad was at Club Med with a hat on his pecker. His dad, is a big successful business guy. So, it was a different story. It was a different Tony.
It's a good point.
Yeah, I mean, you can't, that's what you get.
I mean, to be fair, he's neutered now.
Oh, totally.
He's neutered.
Totally.
Like, I mean,
shell of himself.
He is a shell. He's been defrocked. He's been neutered. He doesn't even have. I don't even know if he's a guy anymore.
Yeah.
Yeah.
Hey. Still water runs real deep, gentlemen. Still water runs real deep. Remember that.
Stop.
I don't know either. Nobody knows.
Oh, okay. Well,
okay, old man.
You got us on that one. I'm not sure what the deep water is, but anyway.
Well, a river is rapid, but it's always very thin. There's not a lot of content to it. There's not a lot of secrecy to it. There's not a lot of substance to it. A deep ocean looks like it's very calm, but there's a lot to it. There's a lot more that meets the eye.
He probably stole that from like Yellowstone or something. He watched an episode
That
last
is
night.
very heavy.
You almost.
That was Kevin Costner.
Yeah, you
Kevin
almost
Costner said that.
salvaged that one, but you missed. I still don't know what it means. I think deeper bodies of water are just easier to dispose of bodies. And I don't know. Well, right?
That's not what I meant. No.
All right. Why don't we get to some business?
Okay.
And then I'll leave the real talent in the room.
Yeah, we got Johnny Trades, my man. Hurry up.
John, can I get my
1 minute.
Thank you.
You want your list?
That's helpful. I mean, I'm good. I'm not that good.
Be nice to the side people, okay? I heard Tom was being angry this morning. I thought he was a little testy. Change this, do that.
So who are you talking about?
Woof. All right, how about this?
I'm nice
Thank
to
you.
everybody all the time.
Thank you very much.
Yes,
whoever-
me Lord. Yes, me Lord. You are so nice, me Lord.
All right, top 15 someone's going through the system. First 40 minutes of the day, no broad-based indices or futures. Tom, for you, number 15, GME at a 15. For everybody else, Tesla at a 70, NVIDIA at a 16, Google with an L at a 26, MSTR at a 46, PLTR at a 58, Meta at a 9, Amazon at a 17, Apple at an 8, SMC at a 35, Boeing at a 39, AMD at a 15, AVGO at a 49, Coin at a 46, Goog Noel at a 29, and number 15 for Tom, GME at a 15. Rounding out the next 10, we have GLD at a 71, UNH at a 64, IBIT at a 55, Intel at a 45, and Uber at a 30.
Uber.
Thomas, what say you?
Ever since we took the ride in the
That's it.
The Waymo, that changed it.
That's
Waymo.
Yeah, what's Google at? Google's got to be 190 something.
250.
Yeah, Google 192 up $7. Make you holler.
After up $8 yesterday, and then
Remember when I gave you that call diagonal?
All from one ride?
Got all mad.
the stock dropped down $12 first.
Well, now it's up 20.
Okay, but
you got to have an intestinal fortitude to hold a position.
Oh, please. Go ahead.
I mean, yeah.
Oh, I'm going to leave it to you two. I'm done. Hour's done. We have Johnny Trades.
Thank you. Yes, Johnny Trades
Go
coming
ahead,
right up.
Bring him in.
Wednesdays.
Play some
and-
music.
Here we go, Johnny Trades. You ready? Got a couple trade ideas for you. Come on, you got to be able to hold a couple positions. All right, I got a couple trades for you. I think you're going to like some of these. I think this is going to be a good day for the Johnnies. All right. First trade. You got a position in Nike?
I do. I'm long.
Stock's an absolute dog.
It's a pig.
Pig. I'm getting long.
It is.
A poor man's covered call into earnings next week. Stock hasn't had an up move in forever.
Yeah, so Nike right now, it's up today.
You know what, son? This is some of my proudest moments right now because I did a Mondelez, basically back ratio spread, which is all directional on stocks that reached their like 52-week lows or something like that. Nike's one of those that was on that list of near 52-week lows. My son, we did not talk, but you are truly a trader. My work here is done. I probably will be gone by January 1, and I hope that you take over and you fill those shoes very well. You have done it, son.
Nike.
And I can prove that by going
earnings?
to my option trades today every Tuesday and Thursday.
When are earnings in Nike?
You can see my
The
last
19th.
on the list.
Thursday of next week.
Thursday of next week.
So I went into February. I bought the 70 strike call. So that's your synthetic stock position.
Okay.
And then went and sold the 81 call against it in the December 20th.
Why would you buy the 70s? Why wouldn't you just buy like the 75s or the 77 and a halves?
Oh, because it's a poor man's covered call. So I want to get like 70 to 80 long deltas. You buy the 75s.
If he wanted to do a poor man's Johnny Sissy Mary trade,
like I'm not
he
a
would do the
sissy
75
Mary.
call.
Sell which strike?
Sold the 81 in the December 20th into next week's earnings.
Buying back month, selling front month.
Yeah.
$8.
You can't do that. It's too much risk for you.
$8.
Yeah, I don't like
You
that trade.
just took $60 a heat on futures. You got $8 of risk over to February.
Oh my God.
Yeah, it's pathetic. It's pathetic to watch. You're lucky you're not here. It's hard to watch.
Are you trying to trade-splain trading to me?
I've been trying to do that for 9 years now.
Okay, what else you got? I have not filled yet. I'm working something.
All right.
Close to it, but not that.
Palantir, got a position? PLTR.
I don't know if we still have one. Let's see. Yes, small.
It's a tough one for a Johnny, but I'm looking at a trade that I don't.
We have the 62.5, 80.
Okay, I like that. It's tough for me because to be naked in here, you're $2,000, $2,500 in buying power. So I'm doing an iron fly. It's not something I normally do, but it's one of the highest vols on the board. I'm selling the 80 or the 70 straddle. I'm buying the 55 and the 85. So 15 points wide. I did it at $8.46 credit. So a little bit more than half the width. So you have like a 40% pop right now.
I don't hate that. What doing, Jan?
Yeah, I figured you would like that.
Okay, so what are you doing? The
70 straddle, and then you can buy the wings, whatever wings you want. I try to keep this between $500 and $1,000 in risk. I wouldn't hate the idea of going to the 90
Johnny
or the
trades,
50.
right? It's called Johnny trades. Not
So you're buying the 85, 55?
Yeah, those are my wings. You can move them $5 more if you want.
Yeah, go 57.5, 85.
And then you only pay $1 for the wings, or $1.50, something like that total. If you go to the 90, 50. 20 points.
Go to the 90.
Hey, Nick,
you go to the 90, 57 and a half.
I'm here to report he did do the 75 strike in Nike.
Of course.
I mean, yes, he did the 75 strike, 82 and a half.
How you filled?
All right. I like
862.
All right. Last one, NVIDIA. So you got AVGO earnings tomorrow after the close. It's up nicely today with everything else. I think.
Which one? AVGO?
Has earnings tomorrow after the close.
Yeah, tomorrow after the close.
Yes.
We have a position in there already.
Yes.
Not a good day in there for us, but we have the 161-200, Jan.
Okay. So you're okay.
Let's add the strangle on.
Yeah. Yeah. So
it's been a tough.
It's got two-sided action.
It's been a tough go.
Take a little bit of delta. Okay. Take a little delta exposure. Be a man.
It's a 350 call. It's a $6.54 strangle.
Okay. I like it. Well, I think NVIDIA has some catch up to do if you think the market's going to stay here.
You're saying AVGO, right?
No, I'm saying AVGO has earnings tomorrow, so you might have a sympathy move. If AVGO Broadcom goes up, you would think maybe the chip space as a whole goes up. So I'm taking some long delta in something that's been kind of dead money, as you would say, for the last 2 months or so. NVIDIA, it's at 137. It's $10, $12 off highs. It's kind of the lower end of where it's been trading. I think there's some upside here. And volatility is super low.
Hold on. I'm confused. So we're not doing AVGO?
No. the story was that if you think AVGO goes up or maybe sideways up, there's probably a sympathy move here.
Okay, so you're talking about NVIDIA.
Yes. I'm buying the 145 call in February. I'm selling the 155 against it in January. $5.79 debit. Gets you about 20-ish long deltas here. Pretty cheap long delta in something that has not participated in the upside and has relatively low implied volatility to itself.
So I have a pretty big downside position here right now.
So this might be a nice little hedge for you.
So what are you doing again? You're doing a call diagonal? Give me the strikes.
145 in February.
February, you're buying the 145s?
Yeah. And I'm selling the 155 against it in January.
I hate it.
All right.
And the 145 in February.
So which one do you like? I want to see which one you like.
And you're buying the one.
How about rate them? Rate them. Can you rate them 1, 2, and 3?
And you're buying what are you selling in January?
I'm selling the 155. It's a $500 to get 20 deltas of upside.
You're selling it 1-to-1?
Yeah, I'm a Johnny, dude. I can't. You want to sell them 1 to 3? Then do it.
Called Johnny
and you do it
Trader,
for a $2 debit.
No, actually, with the Ivy rank this low,
money trades.
with the Ivy rank this low, what I did was I put on a lot of the 132 put calendar.
Oh.
What are you hoping to make there? About 9 cents?
Yeah.
Oh, you're pretty funny. When I cash that out, I'll wave the cash in front of you.
The whole point was volatility's low. It tends to expand into upside moves. Maybe you get a $3, $4, $5 bounce. This goes from $5 to $7. Your put calendar goes from $1.50 to $1.56.
Okay, so you're buying the Feb 1.
Pathetic.
Hold it. What are you doing? You're buying the Feb 145s.
And I'm selling the 155s in
150s.
January. It's a time spread. It's not the most complicated thing we do here.
Yeah, I don't like it.
Buy one, sell the other. It doesn't, no crab, no upside this, upside that. It's just 1 and 1.
Well, you got to remember, he was trading before there were puts. So, there wasn't a lot of months to trade. He's not used to like synthetic trades and stuff like that. He's more of just a shooter.
Yeah. Yeah.
Not used to an intelligent trade.
Yeah. I'm not used to the brilliance that the Batistas have on these trades, but I like my position as is. Thank
you. Sure.
Yeah,
no
I
problem.
put 2 or 3 trades on. Don't kick a gift horse.
Yeah, but you butchered the Nike one. And you're going to get mad at me when Nike goes up and you scratch the trade and you're like, why didn't I make money?
Like Google that he did.
Yeah, like the Google trade. Yeah.
Like the Google trade.
Like,
no, but I'm
going to capitulate. You're the capitulating
getting a chance
king.
here to sell Tesla again.
Ooh.
Oh, joy.
What's it up, 12?
Yes.
$12.13. Sadnov says it's going red today.
Yeah. So thought we had it red, but it didn't stay there.
Sadnov, can I buy you a chain for Christmas?
Yeah, you want a chain?
Chain?
You probably have one. You gotta have something. You can be like the Bat Boys with the chain. I got 2 chains.
You were born with those chains on.
I was. This one is my dad's. It's probably the one in the picture. The Italian horn.
Yep, and yeah, he's right. It probably is. You're exactly right.
That. I can't believe you wear that.
Oh my God. Honestly. Hey, if you know what? Yeah. If we weren't still suffering from the Luigi guy, we'd come over there and slap you right now.
Yeah, Dad, why would you wear a chain? Like, family, heirlooms, love. Right. These are things that Tom does not possess.
Yeah, well, no, son, he does. It's called a trust fund. They passed that down.
That's true. You really screwed me on that one.
Trust fund.
Now would you rather have the chain or a trust fund? Would you rather?
Hey,
would you rather have the penny or the trade?
I'm up for adoption if you want to go that route. I'm a halfie. I blend right in.
You're gonna have to wait about 6 more years, son. Usually they last about 7 years. Then you can get in there. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming up next, Saz?
What do we got coming up next?
Visit Jenny next. Good job out of you.
At the CBOE.
CBOE, Sadnov. CBOE. No, not SIBO, Sadnov. It's from the floor of the SIBO. We'll be back in 90 seconds. It's Tasty Live. SIBO. I had a horse named SIBO.
Peace.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
He's a senior in high school.
Okay, cool.
He has $25,000 from working. That's amazing. Do you think it's best for him to stick with defined risk or undefined risk strategies?
The term undefined risk is a really crappy term. Undefined risk strategies have a higher probability of success. Defined risk strategies have maybe less risk. I prefer undefined risk. He should mix them up.
Any percentage, like weighting, like 60-40, 70-30? Like,
I mean, I'm 75-25, undefined over defined. He can be whatever he feels comfortable with. He can be 75-25 defined or 75-25 undefined, or he could be 50-50, anything he wants.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure.
everybody's asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. The beautiful brunette to the left of me is Miss Jenny Andrews. It's our favorite day of the week with our favorite knuckleheads behind us. We are live from the SIBO SPX pit.
And it has been a busy morning. We had the CPI come out this morning. I think SPUs were up about 7 when it happened. Now we have SPUs up 38. There is some action going on in the pit behind us.
There are. Our boys Steve and Matthew heard there's a rally in the alley for the first time ever. Stock. Maybe they can add that to their Christmas repertoire.
How can it be the first time? The market has been going straight up for so long. How could this be the first time we were singing There's a Rally in the Alley?
I think it's the first time we sang on the SIBO floor in 10 years.
Really? Really? We used to.
They can confirm it for us.
So how and when did the Rally in the Alley song start? Did it start on the floor? Yes.
Yes. Yes.
Do you remember way back when the first person you heard singing where There's a Rally in the Alley?
What are the chances that we can get these guys to collectively sing
Yes.
There's a Rally in the Alley? I mean, it's going to have to be a very slow day.
Maybe we can. Maybe we can. We'll see. Well, next week we'll see if they're interested in everyone getting together and singing There's a Rally in the Alley.
Well, only if there's a rally and if it's a very slow market, because a lot of times they have to be doing what they're doing because,
it's got to
work.
They don't want to miss. Here, when you're a trader on the floor, every order is money in your pocket. So if there's an order going on, if they have a choice of get on this ticket or sing with Liz and Jenny, they're getting on a ticket. They're not going to miss that.
I'm pretty sure they would say, I don't want to do it, even when if it's not singing with Liz and Jenny. But, you never know. We will see.
Okay, so I heard last night was a big night on The Voice for your cousin's daughter.
Yes. My husband's cousin's daughter. If we could pop into the Twitter real quick. Okay. I gotta do this. Shy was amazing. I believe she should have gotten first. She came in second on The Voice.
Second on The Voice is unbelievable, and she's already getting record contracts.
Okay, yeah, she's already Snoop and Bublé both want her. Gwen Stefani was fighting for her too. I don't think she's Reba's style. That's okay. But Jenny, you didn't see it yesterday?
I'm never home at night. Well, since my daughter was in the car accident, I've been driving her everywhere. But I got the car back last night.
I can't believe how fast that was. That's a good turnaround.
Anyway, yeah.
But this is what I want to tell you. You got to watch the opening scene because all 8 of the ones that went to the live show, so they got knocked off as it goes, all 8 of them opened it up with the Wicked song, and it was better than Wicked sings Wicked.
All of them together?
All of them together, and it was awesome. So yeah, you got to go back and watch it.
I will. Well, congrats to your family. You're going to have a celebrity in the family.
I know. I got a celebrity in the family.
So when
she's got Michael Bublé's phone number, I can be like, call me. Can I ask Michael?
I mean, how do you feel? I don't want to say you're being knocked down, but you were the local celebrity in the family list. How do you feel now that you're going to have Shy at the top of the family tree?
I'm pretty sure it goes Shy. And then I mean, can I get under this table? Is that low enough?
So the funny thing is, we have lots of people on our network. When we go out on the road, everyone comes up to Tom. We could be anywhere. We were in
the elevator.
We were in a hotel elevator, and this dentist came up to Tom and was shaking and wanting to touch him. And they don't recognize anyone else.
No,
it's so funny. It's so funny.
Okay. It's all right. It's okay.
Well, how do you think Tom rose to stardom?
I think if you wear a beret and look like Sam Kinison on a daily basis, people are going to recognize you.
Funny stuff, Liz. Funny stuff. Okay. Last night we put on one earnings trade in GameStop.
I will pop in.
The only earnings that we had yesterday were GameStop and Macy's. I think Macy's is down about 6 or 7%. We didn't do anything.
We didn't do anything at Macy's. So I'll go to Macy's.
Yeah,
first
let's
since
go
you
to
were
the platform. Let's go to the platform. Okay, here we are. Let's take a look at what our GameStop position looks like. Oh, $72 winner. I'll take it.
Yeah, it is good. You just said Macy's first, so I'm sorry.
Did I say Macy's?
Yeah, you said Macy's is down, but we didn't do it, so I popped in there. Macy's is only down 76 cents. It's down 5% right now.
Okay.
Okay, now we're going to go GME.
Okay, got it.
Okay, GME. Hey, that's not bad.
GME, no, it's not bad. Not bad at all. I say we just close it and take the small win. It was a very small earnings trade. We only risked $140. We made $64.
Yeah, let's take it.
Let's close it.
So, yeah, we risked 140, making 60. That's good. 45% overnight.
Bada bing, bada boom.
Not as fast as Jajun, but you get the gist.
It's only 10:05.
I know.
It's only 10:05. I don't know when we should put in the Jajun trade.
Well, let's wait until one more thing. I just wanted to kind of walk through something before I'm trying to install for the Jajun trade
till 10:10. Till 10:10, because we have so many people emailing us and asking us about it. We tell them, we do it at 10:10. So we're gonna stay on.
We're gonna stretch.
We're not gonna get to it until 10:10. Doesn't matter. We're not trying to time this booze because nobody can do that. We're gonna just put it on at 10:10.
It's just from a Jajun study that said at 10:10.
Yeah.
Okay, so what do you think about IBIT? I think you were going to do something for the stall tactic until we get there.
Yeah, sure. We can do that now. Okay, I thought you were asking me, what do I personally think of IBIT? Because
I know you told me you sold calls and puts against it yesterday.
Yesterday I gave myself, let me see if I have one in my pocket. Oh, yeah. Oh, no.
She's got her badge, ladies and gentlemen.
She's
locked and loaded with her badge.
I thought I had a certified badass card in my pocket.
This is what she was excited to see.
But when I pulled it out, it's just my badge to get into the SIBO. Anyway, yes, you all heard yesterday I'm selling strangles in IBIT, but we put on a big lizard, and I think we can make an adjustment to it with the cryptos all up today.
Let's take a look at this. IBIT is up 4.44%. I do love the percentage. They're selling something back there. So we have the 55 big lizard. It's almost through our call spread. We have $47 in profit, Jenny. What say you?
Okay, so all right, let's talk about this. We took in almost 290.
288. Correct.
288. We have a big lizard where it's 55, 57 and a half, so 250 wide, but 55, 47 and a half, 750 wide to the downside.
Yes,
when we have a winning big lizard, we can look at, or it's like broken wing butterfly, same concept. We could look at moving up our long wing and creating a butterfly. If we can create a butterfly and then have it on for free-ish, yeah, then it's interesting. When you do a big lizard, we took in a credit. What we would need to happen then is for the credit to be equal to the width of the spread. It's a little bit different than when we do that broken wing butterfly and then we're trying to have it on for free. The credits, you're like flip-flopping them.
And in the words of Dr. Jim Forever Gimme, there's a gotcha, because what we would be doing here is we can take it off for $50, walk away.
Yeah, sure.
Or you can move the 47.5 to the 52.5 and pay 35 cents.
So then we'd have a 250 wide butterfly, and we
For
would
a
have
credit.
collected more than 250.
I say we do it.
But you see what I'm saying? Where I'm like, we have, when we start with the big lizard, we have that credit. You have to make sure that credit's bigger than the width of the butterfly. When we start with an out of the money broken wing butterfly, we're doing the opposite, where we're starting with the credit and we're getting it to zero.
I know what you're saying.
You know what I mean? You're picking up when I'm putting
I'm
down?
picking up what you're putting down.
Hey, I keep watching my phone. I don't mean to look distracted, but I was expecting a very important phone call from a Mr. Jacob Perlman. Hasn't happened yet.
We're watching you, Jacob.
Jacob, if you're watching.
We didn't know what was happening in the study today, so we're going to put that on the back burner. Maybe he can maybe he can mansplain it to us at some point.
Study's on the back burner unless Jacob calls me during the show, and I'm just going to put my phone right to the microphone, and he could walk us through the study.
Oh, the microphone's right here. I was like, what are you doing?
He's going to walk us through.
Yeah, true story. Okay, so let's take this IBIT. I kind of agree with you. To your point, we collected 288, right? So 288 over. So if we can do this for 38 cents or less, we've locked in a profit and have a free butterfly.
So honestly, if this were a 40-something day trade, I probably wouldn't do it. But with a 9-day trade, basically what we have to do, it has to end somewhere in the middle of this butterfly at expiration. That's next Friday. We don't have long to wait.
Nope.
I don't have patience for 45 days, but for a 9-day butterfly, Let's do it.
So we collected 38 cents over. I'm paying 35. Bada bing, bada boom. We locked in a free chance.
Yeah, now we have on a free butterfly and IBIT.
I'm not going to pay up for it. If we get filled at 35, great. I've got.
You can pay up to 38.
I know, but it's
or 50, 60, 70. I guess only like 33. That's fine.
Yeah, I'm leaving 35.
Otherwise, we could just take it off and take the $50.
Well, let's let the fates decide. At the end of the day, the end of the show, we'll see. Right?
We'll see what happens. We'll see what happens. So that was turning a big lizard into a butterfly, if we get filled. If we get filled. Okay.
Which I think a lot of people do, and I did originally. I'll never forget when we first started doing this, when we first started at Tasty.
Yeah.
I was like, oh, look at this. Turning this butterfly in. And then Tony's like, you got to remember, if it doesn't come out or if it continues going up, you gave away $50.
Right, you gave away your profits.
Because that was your profits. You're giving up your profits that you can take right now. It's like Wimpy. If you give me a hamburger on Tuesday, if you give me a hamburger today, I'll gladly pay you on Tuesday.
Right.
You have a shot at more profit.
Now, if we have other bullish crypto positions on, I'm happy to kind of leave this butterfly here because now it's kind of just neutral to slightly bearish crypto position on here in IBIT. We do have, what do we have in Mara?
I was just looking at that. We have a short put.
And so we could still make some money on that if crypto keeps going up.
Yeah, Mara's a crypto proxy as well.
So that's fine. I think we're okay with that. It is 10:10. The clock struck 10:10. Are you ready?
We need like a bell that goes off. Matthew, can we get a bell that goes off at 10:10?
Ding. Thank you. Thank you. It's 10:10. There was the bell.
Okay.
Sounding more like a buzzer.
We're not. Hey, beggars can't be choosers. We appreciate it. Okay, SPX.
The Jejun trade. Here we go.
So we open up the 0 DTE SPX. We are in the middle of the SPX crowd. A lot of times they are trading the 0 DTEs behind us. You wrap it around the at the monies. We're going to land right now on the 60.75, 60.80 for 290, Jenny Andrews.
Okay, ship it. Lock it, ship it.
Send. I wish we could get like them to fill it live,
Okay.
Where they would.
Oh, where we could actually.
I wish I could get one of them to work our order for us.
Maybe we could just send it right behind us. Now it's filled. Put in a GTC to close it for $50. That's it. Yesterday you saw by the end of our show, what we're doing now, if we don't get filled for a win by the end of our show, we're closing at the end of the show. That's how we're running this now.
So we got filled 290. I'm putting it in for 340.
340. Put in an order to close it for 340. And all we need are a few points up in the SPOOs, and hopefully we'd get hit.
We put it on, I just like to make a mental note, we put it on when the SPOOs were up 40.75.
Right. And again, we're referencing the ES up 40.75. We're not referencing the SPX up 43.07.
Which is confusing.
But that's just what we look at.
It's just because it's right here on my, and a lot of times if I'm going to change, so take a look at this. If I move what this SPX is, it's going to go. Let's say I go to GLD, then that switches to GLD, but my ES always stays right there.
Right. Okay. So that's in. We got the Jejun trade in. We're doing pretty good on time. Anything else that went on between yesterday and today that we think is relevant?
No, I thought Macy's was down more. I really thought that was relevant.
I think it was earlier.
Okay, because I heard it was down 20%, but that looked like it was down.
It was down like 5 or 6%. Yeah, it had a little bit of a comeback.
Did anything reverse? Did Oracle move up? Because Oracle was an earnings trade where we did the 217 calendar. I know it was just a miracle of miracles. That 217 is going to roll off.
It's right around 180, which I woulda, shoulda, coulda. Wish I would have left my 180 calendar on. I closed it yesterday.
You did?
Yeah.
God bless you.
I did. I closed it yesterday, but what can you do?
Okay.
It's tough. You can never. It's so hard as a trader. I find it's really important to never go back and see what you what you would have made, what you could have made. Even Intel. We were talking about that today. Like, oh, remember when Intel was 24? Too bad we didn't sell out all of our Intel. We kept it, and now it's back down to 20.
We don't have Intel in.
No, we don't. Let's pull it up and take a look at it.
I can't believe it's under 20.
Ugh, it's painful.
Take a look at this chart. Intel. Down again today, because every day that it ends in a Y, Intel goes down.
I mean, I have taken a big hit in Intel this week. In the last, how many? Can you count those days?
Yeah, I will.
1, 2, 3, 4, 5, 6, 7,
8 days.
The last 8 days, my account has taken a hit in Intel, for sure.
But I got to tell you, that's something that's got to go in the black tape column. But let's talk about what we've got. So save fresh set of eyes. We don't have it in here. Intel's got a 46 rank. The government keeps throwing money at it, and it keeps going down.
Hey, I don't know what to say other than all I know is they're heavily recruiting from my son's school.
Intel is?
Yes.
Wow.
Yeah.
Where are they headquartered?
Well, they're building this giant.
Yes, you've been telling us
they're
this.
building this giant Intel in Ohio. So he wanted to get long at a long time ago when he opened his account because they always recruit from his school. And it's a coveted internship position. They want to go. They want to work for Intel for the summer. Yeah.
And I got to tell you, so you do have a 21-year-old. Well, he's not 21 yet. I'm
Almost.
not making time go by. He's 20 years old. But he's got an account, and it's funny because you're right. He's probably looking at Intel because they that age, they trade what they know. So they hear Intel. They see all this recruiting. It's a name they know. So put into the account.
He wanted everything he knew, right? So he worked.
Yeah.
He did an internship where he was working not for but with Motorola. So first thing he wanted to buy was Motorola.
That makes sense.
Do you want to see something funny?
What is
MOT. Take a look at the chart. This is a classic. This is
I don't think it's MOT.
Motorola.
No.
What is it? Motorola. Where are they? Hold on.
I think they're bought by somebody else.
No.
Ford Motor.
You know what? Text.
Hold
Text.
on a minute,
We're taking live tweets. Send us the Motorola
I wanna be
symbol
like Frank.
and include the hashtag LAZJNY.
Frank, text me.
Frank.
Frank, we need you. Frank.
But if you look at it, it's one of those that have gone straight up. And when he bought it,
locked in $1.
I was like, oh, you made so much in Motor. You better get out of this now.
Locked in $1.
I don't know. You'll have to look.
Oh God, that's so funny. Okay, well, we'll find out what that is.
Yeah.
Okay.
Anyway, Intel, we have nothing. After the down move, eight straight days of down moves, do you want to get in with some short puts or I don't know what we want to put in?
So I would go 37-day because you're going to go to MSI. Thank you, Frank.
Oh, MSI.
Let me figure. Let's figure. I almost just yelled it back at one of these traders, man. What's the Motorola?
Why would they know? We're in the SPX pit.
Somebody will Google it for us.
Yeah. Okay, Intel, find a trade, Liz. What do we want to do?
Intel 45 rank. If you're going to look at this, just out of the money put, you can get $1.13, $1.12 mid market, and put up $3.49.
I mean, that's a damn good return on capital.
It's a damn good return on capital.
And now, would you ever... Okay, so we have no position. There are lots of people out there with Intel positions. Would you ever sell the 2021 strangle around your stock, or would you not be willing to cap yourself out for 37 days?
Oh, I would for sure. If you're selling the strangle around your stock, it's synthetically the same thing as just I pulled up because we know the 21 put is a synthetic. If you go to the in the money put, it's a synthetic covered call. That's all of our viewers are super smart, so I don't need to say that again. But an in the money short put is a synthetic covered call. So if you have stock, you can sell the 2021 and you technically have a strangle around your stock synthetically.
Right. There's a lot. It seems to be a lot of premium in there right now.
And you're getting 283. It's the same thing as if I would rather do. To be honest with you, I'd rather do 220s than 121 and 120. You don't need the 220 and a half, right?
Right. Or if I get it. But having no position, our account, new trade.
I would actually bring it to the 20 instead of that 19 for 67 cents.
Yeah, for sure. I was thinking even 21 for $1.68.
But you're getting more extrinsic.
Yeah, sell that 20 put.
20. Okay.
So we're going to jump into Intel with the 20 put.
Shipped. Done.
Now, I want you to go to the MSI chart.
477?
Okay, when he got in, so when did he...
Oh, this is like a knife
2 years ago. Okay, so 2 years ago.
Not
so
25, here's 24.
January of
23. It was, 255. I was thinking it was going to be like $25.
No, but still. He got in at $255, and at some point I said, look at how much money you've made in Motorola.
I'm going to tell you the point. He got in at $255. I'm going to tell him you got him out at $275. Because that's
I don't know. No, he made, because this was expensive. I think he bought like 2 shares of it. Do you know what I mean?
Lot. Yeah, that's like, it's a lot. It's $500.
So, can you believe Motorola's run?
No.
Yeah.
Is that up?
We don't even trade it.
It's because it's so illiquid. 241,000 shares have traded.
What are the stars?
Hold on.
Oh, I don't think you have them. Oh, yeah, there you are. Only 2 stars. Only 2 stars on the liquidity meter means we don't really trade it.
We don't really trade it.
But it did have a big run, Motorola. Well, good for them. They're, I think, headquartered outside of Chicago.
Your guess is as good as mine. I have no idea.
I think they are.
Well, good luck on your headquartered in Chicago. Okay, so that Motorola, we didn't put anything in a Motorola.
No, but we sold puts in Intel. Why don't we go to Bob's list, see what else has earnings today, and then we can get into what's your assumption a little later, because we do have we have a handful of trades. We've got quite a bit to do. We've got some earnings. We have what's your assumption. I was looking at that Russell ES pair today. What are you laughing at?
You told me to go to Bob's list, so I jumped into Twitter.
Who's the Debbie Downer? Is that me?
When you told Mikey that you wouldn't talk to your money tree about silver.
No. I said, Mikey, don't get greedy. We had 3 up days in silver. How much more do you want?
Just say wah-wah afterwards.
Wah.
You know, that's a great SNL skit.
Can you go back to the silver chart?
I bet it's up again.
SIL, the micro silver. Go back to the micro silver chart.
Up again.
And on November 29th or on November 27th, whatever day it was, Mikey, ever since then, silver's been going up for you.
It's still up. Up, still up. She's not talking to the tree anymore and it's still going up.
Now, I don't know about you, but this looks like it could be forming a head and shoulders.
Where do you see a head? Where do you see a shoulder?
Okay, so you see...
Mikey, I think it's going to the moon. Obviously, we're kidding. We have no
We
idea.
don't know. We don't know. We don't know.
And she doesn't know anything about
I just
charting.
said don't get greedy, Mikey. Don't get greedy.
I really appreciate the Debbie Downer reference, though, more than you will ever know, Mikey. Okay.
Well, but we didn't make $413. That's because it's like the one is gone. I don't know.
We didn't make $413, but we did make some money. We locked it.
Right, we did lock in a profit. We did lock in a profit when we butterflied off this position. We had both sides. Luckily, we had taken off the call side because Tesla has been going straight up.
What was our call side?
I mean, if you go to the Tesla chart, we actually met someone. We met someone on the road, right? Who said if Tesla hits...
Oh, if Tesla hits 420, it's going to 600.
Really?
Yep.
Should we put on a trade?
Well, it didn't hit 420 yet.
Then let's wait for 420.
But the upside butterfly that we had, Jenny, to be honest with you, was well, I would not lie to you ever, is the 375, 380, 395. So it would have been through our upside.
Oh, I know. I had a lot of people on the road ask me about the upside, what we were doing with it, but we took it off one day.
We did.
We took it off one day. Okay, so it hasn't hit. Today's high was 413.
We're coming in at all-time highs.
So if it hits 420, that's when he's hopping in.
That's what he said. And the best part is I told my son when I got home from the road that, and he's like, should I buy another share? I was like,
oh.
I was like, here's the deal. Just scalp. He's having fun. He's keeping one in there. He's scalping in and out. I was like,
I do feel bad that I'm taking him down in OKLO. Is it down again today? No. 1844.
But I mean, it's not moving today. It's not like you're taking him down today. You did yesterday.
From the get-go, from day one. From day one, I think he got in.
Yeah, it's free money. You gave it to him. It's not like he can be like, Jenny!
Well, think of what else I could have bought him. Last year, I think I bought him a pair of Ray-Bans.
True.
Maybe he would have rather had something else other than 100 shares of OKLO.
He's got the bug. He's got the bug.
When OKLO is zero and it's trading on the over-the-counter market?
Yeah. Then he'll be like, Jenny!
All right. Let's, should we get into what's your assumption?
Let's do it. I'm going to make sure I'm going in the right direction. There we go.
We don't have the music. John, play the music.
I bet John's playing it right now.
All right, today is Wednesday. We have What's Your Assumption, where viewers send in their assumptions and we find trades.
I'm taking a look at this. I know the boys did 10. I don't know how many they put in, but we don't have that many. We only have a couple.
Yeah, we usually are pretty busy. We just picked, we cherry-picked a few that we wanted to do. Some of them we already had in our account. Some of them had earnings coming up.
Do you hear they're like starting to rumble?
I know. Let's see what's going on. 50 calls in Jan, 5,000 calls in Jan.
Do you want to go to the most active real quick too?
6,000.
Here, I'm going to do this.
We can take a look at what is busy today.
Just because I'm going to refresh real quick too, so hold on.
Okay.
This is not inside information. Go to SIBO.com, type in most active, and it's all right here.
All right, what's been busy?
Today's 680 calls. 680 calls.
That expire today? That expire
680, 690s calls, and then the puts are the 660s, 670s.
Yeah, I mean, SPX is trading almost 684.
Yeah.
We're up 48. Interesting. We'll see. We'll see.
So we'll keep an eye on that.
Okay, so we'll jump into what's your assumption. Then we can take a look at what at most active. See if there's anything out of the ordinary going on.
We can. Okay, so first up, we've got our first one up is CVS bullish.
Okay.
GN 2025, and this is from Sam from Raleigh, North Carolina. Has been down and has a good risk reward.
And it had a big fall yesterday. Let's go back into the platform and we'll take a look at CVS. If you look at the chart, it has been down, big move down yesterday.
Why?
Or is that today? No, today it's down
today's.
260. Now, yesterday, Walgreens Boots had a big jump. Rumors of, or maybe it's not rumors. They said,
it was halted for a while yesterday.
Walgreens?
Yes. Well, because you stayed at work a little bit longer than I did, and I was driving home, so I was listening to the other networks, and they said Walgreens Boots was halted. I never saw it halted.
Here's what we heard, right? They're putting part of it for sale.
I'll go to the news.
But I don't understand. Now, Walgreens is based in Deerfield. Did you know that?
Yes. I did know that.
So Walgreens is based in Deerfield. They've been having lots of problems. Walgreens stock has gotten very cheap. Yesterday there was talk of going for sale, putting some of it for sale.
It says Walgreens in talks to be taken private by Sycamore Partners. Sources say.
Okay,
Who's
so
your source?
but now, it's kind of odd that Walgreens is based here in Deerfield, Illinois, just a stone's throw away from where we're sitting, and Boots, that's all in Europe.
Well, Walgreens bought Boots a long time ago.
Right.
I have no idea why.
So I don't know. I don't know what's going on with Walgreens, but I don't think
CVS is down and Walgreens was up.
I know.
But this person is bullish at CVS, and they put their assumptions in yesterday, so I'm assuming they saw the down move. It was a little down move yesterday, and then now it's down a lot more.
So if there becomes a purchase price, like if someone's getting bought and there becomes a purchase price, then the stock's just going to kind of stay where it is. There'll be some money in those options until the deal goes through, because we saw that in MoneyLion.
But Walgreens is nothing.
But that was why it had that jump up yesterday. Yes. That's why it had that jump up yesterday. So CVS down every day. What do you think?
So they want to be bullish, and they're looking at a bullish one. You could take a look at just selling the 50 put.
It's not a bad return on capital.
So it's the 30 delta. You're getting $1.27 for it. You're only putting in $7.93. It's not bad.
It's not bad. No, $792 to make $127. That's not bad. And your break even then is about $48.73.
Yeah, that's
not bad.
Ship it.
Not bad. Ship it. So then we're in CVS. I wonder, I'm curious. I'm just going to look. I want to see what the, so market cap in CVS, $69.6 billion. What do you think market cap is in Walgreens? WBA.
Fraction.
Yeah, let's see. $69 billion in CVS, Walgreens, $7 billion.
Yeah, a fraction.
Yeah.
Tom should buy it.
I mean, I don't know. I stopped trading. I told you I stopped trading places that I'm not a fan of.
Yeah, I mean, I will always have Walgreens Boots Alliance in my account. It was my mom's #1 holding. God rest her soul.
Yeah.
So I mean, I have a little bit in there, but I didn't do nearly as much as she did. Thank the Lord.
Yeah. Well, Bev,
okay.
Super Trader Bev.
But so let's go. Next up. Oh, this is it.
Okay.
So Baidu bullish, Jan Feb bullish diagonal spread, and I love this because this person, I can't say the name because I'm going to butcher it, but they're from Lithuania.
They're from Lithuania.
And Jenny's like Murray from the Goldbergs. We're sitting on the train. She's like, I'm from Lithuania. I was like, no, you're
know
not.
That. Everyone knows that.
No,
I'm not from Lithuania. No, my grandma is.
And then I said, I thought you were French Canadian. She goes, the French Canadian married the Lithuanian.
Right. My grandpa was French Canadian. He married my grandma. She was from Lithuania.
Yeah.
Yeah. But
you should be coming to all of our basketball games. Our entire basketball is fielded by 6'8" Lithuanians.
Right. And I've been to their games, and they're great.
Right,
they're great. And so the whole team, Lithuanians, except for JD.
They're all willowy, skinny, blonde Lithuanians, and my son fits right in.
Then how? Okay, my grandma's from Lithuania. She's not tall. She's not blonde.
Every Lithuanian I'm in the basketball world.
Yeah.
So everybody's always like, it's the only place I feel normal.
Yeah, you fit right in. Just start speaking the language.
But yeah, I know you know your heritage. I don't know. Like, I'm a mutt. I'm sure I'm Lithuanian. I think I'm everything.
Well, I think your people are more likely to know if they're just one. Like my grandpa was all French Canadian. My grandma's all Lithuanian. My dad was all Polish.
Your grandma didn't have an accent.
No, but like her family would speak Lithuanian, and we grew up eating kugli. Tom loves kugli.
She was probably first generation. Like her family, they came here when she was little.
Yeah, probably.
Yes. Now I learned this from my sister-in-law's mom, she's from Slovenia. You have the accent, and this is why Tony will kind of always revert back to Brooklyn. You keep the accent of where you went through puberty.
Is that true? Mm-hmm. Well, yesterday we were talking to Dr. Data, and
he doesn't have an accent.
We did not think he had an accent, but apparently other people do. He's from Louisiana.
Yeah. He got rid of it.
He got rid.
Okay, but nonetheless, from Lithuania, we're going to be bullish Baidu. January, February diagonal. Let's take a look at it.
Baidu, all the Chinese stocks 2 days ago, they had a roaring move up. And then they're down today. They were down yesterday. They couldn't hold that rally. And all the Chinese stocks look very similar, I think.
They do. I mean, only because we were talking about it. We'll look at JD real quick to keep an eye on it. I'm kind of out of all my positions. This is down again today, too.
Yeah. The Chinese stocks they couldn't hold that rally. Do you want to get into Baidu? Do we want the risk of a naked put in there? Or would we rather put it on something like a diagonal?
So they asked for the diagonal. They wanted the January, February diagonal. But I think we were running into a problem.
Oh, because $5 wide strikes. It's trading 88, so it's fine. You can take a look, Liz. If you go out to February, which sounds crazy going out to February.
No, but this is their assumption, not ours.
If you go out to February and buy the 85 call,
that's expensive. I'd rather buy the 90.
So if you buy the 85 call, you can get a $10 wide. If you buy the 90 call, you can get a $5 wide.
Okay.
That's the conundrum.
So I put the shorts in, and I'm just going to visually tell you because I know that's hard to see.
Okay.
So I have the January 95 call, right? And then in the February, 72 days, I bought the 85, and it's $6. It's $6, which is over 50%.
$6 for a $10 wide. I agree.
That's the only reason I was thinking, let's buy the 90, because then you're paying $350 for a $2 wide.
$350 for a $2 wide. Either way, it's not the ideal scenario for a diagonal. We don't like paying more than 50% the width of that spread. So not ideal. But if you're bullish, you could do.
What about the 85-80 put spread? If I just got a 30 rank, we're getting 150, 148 for it in January.
Sure, let's do that. That
just gives us room to be wrong. And keep in mind, it's trading 88. If I sell the 85 for $1, that brings my break even all the way down to,
I think that's good. Keeping it simple. Just selling that put spread. There's a 30 rank.
Yeah, it's got a 30 rank. That's not bad.
And the diagonal, it was just tricky with the $5 wide strikes.
And I don't like paying $6 for a $10.
I know.
We talked about that yesterday. There's no risk-reward scenario there.
And until February, if it goes up, how much are you going to make? You're not going to make much more than you'd make on this put spread.
No, you won't.
So I think I like that put spread.
Okay, next up.
Okay.
Qualcomm. Neutral. January. It's been in a range. IVR is not terrible.
Look where he's from. Cape Elizabeth.
Cape Elizabeth.
Have you ever heard of Cape Elizabeth?
No. But do you remember? Were you? Might have been my college years when I tried to get everybody to start calling me Elizabeth.
I would have called you Elizabeth.
I would like to be called Elizabeth.
I will happily call you Elizabeth.
Thank you. From here on
now
forth,
on, it's the
from here on forever forth.
It's the Elizabeth and Jenny show.
Rolls right off your tongue. Okay. So Qualcomm January, been in a range. IVR is not terrible. Thinking is strangle at the expected move.
Okay, let's take a look at Qualcomm. Qualcomm strangle in January. Earnings are after January, so we're okay. If you want to go to the trade page.
Earnings are after January.
Yep.
Okay. So you go into January.
If you go, I'm just going to do 16 delta, or you go ahead and pick whatever you want.
That sounds good. So if you go 16 delta, I'm going to go 19 on the top.
Yeah.
So 45.75, does that look right?
You've got 312, 310. You're getting over $300 on the 16 delta strangle in Qualcomm, and earnings are after Jan. That's not bad.
It's not bad.
No.
Not bad.
Maybe we do it. If I had a certified badass card in my pocket, I'd give it to you.
No, but you just have your badge.
What is this?
Can I just have your badge? It's the owner of...
What other cards do I have in my pocket?
She's got the owner of... What was that place called?
I don't know. It was a restaurant where all the traders used to go.
Tudo's Italiano.
Tudo's.
We ran into him and he gave Jenny his card.
If I ever want to throw a party in Tudo's, I'm ready.
Empty. The owner of Tudo's.
I got a million cards and badges. We don't need no stinking badges. I got a million cards and badges, but no certified badass cards in my pocket.
We'll find some certified badass cards.
Okay.
Okay. So this isn't bad for a strangle. No, I'm just going to look, just because we have a little bit of time.
Sure, go ahead.
Let's say if somebody wanted to define their risk. $1,700 isn't bad. Collecting 312, it's not bad either.
Not bad. Not bad.
37 days, 312. If I wanted to define my risk, this is where it gets a little tricky. It's $5 wide strikes. You can actually add your buying power on accident.
Well, I think if you want to define your risk here, you bring each strike in one and then just make a $5 wide.
$5 or $10?
You could just make a $5 wide. Bring each strike in and make a $5 wide. You could probably get a third of the width.
That's a number I can live with. 206.
You're getting 206?
206 and a $5 wide.
Wait a second. Wait, what do you have? The 150, 145?
Yep.
170, 175?
That's correct.
You could widen it if you want to, because normally we'd look for about 160.
I like it. Well, I might move the downside.
Let's see. We're trading 159, so $9 down is the 50, and it's pretty symmetrical.
Yeah, I'm gonna go 50-45.
Go get the 205.
I'm getting 205.
Go crazy. We're gonna get 205.
Done. Well, we're not filled yet.
Shipped and working.
Shipped and working. The only thing that we got filled on really quickly was that Jajun trade.
Jajun. Spoos up almost 50. Do you even have anything good in your account right now?
No.
Not really.
No, because I'm in protection mode.
I don't know. I mean,
on days like this, I would be like raking it in, but not today.
Not today. Not today. I don't have that much. Wind it. Well,
okay, next up, let's get through our what's your assumption, and then we're gonna jump back into Twitter.
Let's see what's going on.
40 lots around.
There's not that. It wasn't that big of a trade.
Yeah,
40 lots around.
But there was a lot of sells, so that's a lot.
Yeah. Right. So let's say there are 15 people on the trade, 40 lots each. What's going on? 57.75 puts in Jan. Someone's selling them.
But how much? It's only 600.
Yeah.
Okay, we'll go to our
60.95 calls in D's. D's 20th. D's 20, 60.95 calls. Take a look at those.
Okay. Tell me what it is.
December 20 expiration.
That's normal expiration. That's regular.
Oh wait, here. 4,000 puts, 4,000 calls. There's a lot going on here.
I mean, let's look at the. We're gonna look at the most active as soon as we're done with what's your assumption. If that's okay.
Okay.
Delta is next, right? Delta.
Neutral, Jan,
monthly.
monthly.
Do you want to table this and just go to the SPX to the?
Yeah, I kind of want to see what's going. So December 20th, 1695 calls and puts.
So I just went into the most active. The December 20th isn't anywhere over there yet.
Well, it just popped up.
Okay, so let's take a look at what today's. What are they? 6090?
D's 20th.
I'm in D's 20.
6095.
6090, 6095.
No, it's just 6095 calls.
The calls are $36.
SPX.
SPX 695 calls. They're 36.30 is the mid market.
6095 calls. So that was trading. We've got the December 17th, 6200 calls.
D17. That's a weekly 6,200.
Yeah.
Okay, those 6,200s are 60 cents. That's a 3 delta, Jenny. Can you put the prices up there for me, please? They have the prices.
Yeah, so, I mean, it looks like, and I wonder if more calls are trading than puts today. Calls,
well, that's what I'm saying. If you take a look at the
D17, 6,200 calls.
So if you take a look at this, Jenny, if you're just in the volume, and upon first review, when I go into the active ones, there's 40,000. The top one is 40,000, 6090 calls versus the puts. There's only 24,000. So it's 40,000 versus 20,000.
High school's calling me. What do you think happened?
Oh no.
Oh brother.
Oh no.
What do you think happened?
Answer it.
I'll call back.
A lot of times it's like an automated message, though, don't you?
Oh, it could be.
Yeah.
Could be.
Yeah.
Could be about the cold freeze. Are we going to be below freezing tomorrow? Cold day?
Yeah. You might get a cold day. You guys get off when the Pope stubs his toe.
Cold day tomorrow? I don't know.
I bet you have off tomorrow.
For a cold day?
Yeah.
It has to be. Maybe we do. Maybe we do.
If I had to bet, and I am a wagering woman, that's what I would put that on.
Okay. So
you can see from the most active right here that there are more calls being traded than there are puts in the SPX 0 DTEs. Because if you look at this, and I know you can't see it that easily, I'll make it bigger.
Are people just preparing for the end of the year rally? Thinking there's going to be a big end of the year?
They're all the 0
zeros.
DTEs. Everything's December
11th. December 11th. Yeah.
Yes, and then the only thing that isn't SPX or SPY is January 22nd expiration, the 60 calls. VIX, 60 calls. 17,000 of them traded.
No way.
17,748.
What are they, a nickel?
Jan 22, 60 calls. I'll look at
Jan 22, VIX 60 calls. Did you even read that right? They're 18 cents at 20 cents.
Jan 22, 60 calls. 17,748.
That's pretty good. Seems like easy money.
Just kidding.
So, whoever's selling those, whoever's brave enough to sell those, seems like easy money. I'm teasing. I'm kidding. Kidding. You never know what can happen.
Nothing she says is a trade recommendation.
Okay.
Okay, I'm going to go back into, and we'll go back to that.
Yeah, Delta. We were on Delta. Neutral, Jan monthly, good volume, good IVR. Call skew, not crazy. Nickel wide bid-ask spread. Sure looks like a 20-ish Delta plug. Strangle. Plug and chug strangle to me.
Okay. 20 Delta
Had to be careful. We had to eliminate one of these what's your assumptions for some foul language. Have to be careful as I'm reading these.
Yeah.
Yeah.
Do you remember the one day we were... Okay, now my only issue here, I want to see what cycle they were in. They're Jan monthly. Jenny Andrews. I'm just going to call you Andrews from here forward. Andrews.
And I'm going to call you Elizabeth. Yes, Elizabeth.
Andrews and Elizabeth. Okay, perfect. If you're going to be neutral, if you take a look at Delta, go to the regular Jan monthly, and you tell me why you wouldn't be neutral in the regular Jan monthly and how we did not catch this.
They have earnings. They have earnings on Jan 10th, so we wouldn't necessarily be neutral in Delta. Going through earnings. If we wanted to put on a neutral Delta trade, I'd put it on in the 23-day weekly.
You can do that.
Yeah.
You got a 64 rank. You just want to make sure you're before that earnings. Jenny, take a look at this though. Look at this vol.
I was going to say,
I bet the earnings are in the regular Jan.
Oh, and you're saying go to the 30-day?
Oh, I would still go to the 23, but if you look at that, the volatilities don't lie. The 23-day has a 35, the 30 has a 39, and then it jumps to a 46.
Right. So, but there's in the 23-day, there's still decent premium in Delta. If you look at it, you can sell. I mean, Delta's so cheap. I don't mind taking in just $1. You could sell the 69 call and the 58 put, taking $107 and use $700. That's not bad for in 23 days.
You're taking in $100.
107.
Yeah, 107. That's not bad.
No, I don't think that's bad.
Take a look at the Delta Airlines chart and tell me if you feel like it's bad or not bad.
It looks like every other airline except Spirit and Southwest. And what else is not up? I don't know, but
hold on. I gotta look at United.
United's up. American Airlines is up. I mean, look
United.
at that. Doesn't look too different. And that, look at American Airlines.
AAL is this is American. United went like parabolic on everyone.
I know, and now American's catching up.
It's not really though. So look at this.
Well,
so American went from 9 to 18, so it doubled.
It doubled.
From the high to the low. You all went from 35 to 105.
Yeah.
It tripled.
Yeah. These airlines have gone bonkers.
Yeah. Okay, but we're back to Delta.
All right. So I don't know what to think of that Delta strangle. It's only 23 days. What could possibly go wrong?
So let me ask you this, Andrews. How about this? They want to be neutral. They want to be neutral through January. Let's do an at-the-money calendar. And let's do the 23-day, 37-day.
Sure. That's going to be very cheap, very low risk.
Yeah.
What are you going to do? 23-day.
I'm going to sell...
Earnings setup. Buy the 37-day.
Yeah, by the 37-day.
Earnings setup. Great. This is our first earnings setup calendar.
Hold on. You got to look. Go to the January, because we have to pick either the 62.5 or the 65. They were neutral. So
let's just do 62.5. It's the closest to where it's trading.
So I'm buying the 62.5 in the January 17-day, and I'm going to go to the 23-day.
What?
There's no 62.5.
Sell the 62.
$1.32. That's all we can lose.
Yeah, I mean, for an earnings setup calendar, not bad. Unless you could do 65, because you'll have a 65. If you buy the 65 call in Jan and then you sell the 65 call in the 23-day.
126, I'm doing it. We're doing 65.
Do it.
This is neutral.
Earnings setup calendar. First one for the next earnings cycle.
We just need to be very clear. Like, we were about to sell premium, get $1, and put up $700 to do it. We bought a calendar and paid $126. It's not gonna be apples to apples.
The most, I mean, what we'd be looking for 20% on this.
Not right. Or a lot of times the earnings setup calendars can make a little bit more if it's held through and gone. But that's in a situation where
if you want to keep one and hold it through earnings, then I would do two. You'd have to do two. You'd have to do. But I would just push one through, and we'll put in a GTC looking for 20% out of that.
Right. Okay. Let's go to the next one. And then wait. Hold on.
All right. I want to make sure. How many more? What's your assumptions?
We've got a couple, but if there's anything we can do, you can break in.
No. Go ahead. We can.
And you can check Twitter too. So Delta was up there, and now we have 6C, which is the Canadian dollar. So they're bullish 6C. This is Steve from Miami Beach.
Okay.
Sell a put, contrarian play. I don't know why Canada is crashing down, and I think it will pop up for a profit. So I'm going to go to 6C.
Okay. 6C. Here we go.
And we can probably just sell a put spread. I'm going to go on the 23-day. And just to see price discovery, I'm going to go to the 7.705.
You can compare the 23-day. I would compare a 23-day to 58-day. Sure. Either one.
Okay.
I mean, if you're getting a decent collection in 23-day, then do that one.
I just wanted to look. So in the 23-day, I can do the 705. 7, which is $5 wide and collect $1.
7075.
0.705.
Okay.
0.7.
Oh, okay. Got it.
And it's $1.
Got it. Perfect. So risking $400 to make $1.
Okay, that's in the 23-day.
Sure.
And I'll look at the next one.
And I'm fine with that.
Are you sure?
I know Canadian dollar's having a little bounce today, but it's been down.
Yeah, it's been down. You can take a look at the chart.
Okay, go ahead and ship that. So we're just selling a very basic put spread in the Canadian dollar.
Shipped.
Easy peasy.
Shipped. Put spreads in the Canadian dollar. Now, we're not getting filled. CVS, we're not filled. Baidu, we're not filled. Delta Airlines, we're not filled. 6C, we're not filled. What did we get filled on today? The only thing that we are filled on today... Oh, I guess we got filled on quite a bit. Oh, never mind.
Let's see.
Today, GME, SPX, Intel, and Qualcomm. We've got filled in 5.
We're still, if you go to working orders, we're working quite a bit. We might adjust it. You can tweak, you can adjust it, come in by a couple pennies here and there.
We will. Is there anything? Do we want to get to this last what's your assumption, and do we have?
Sure. We can get to the one last what's your assumption, then we'll finish up in Twitter, and then it'll be a wrap for the day.
It's so funny because we were just talking about Motorola. So VZ, telephone, or other telecoms, bearish.
Okay, VZ, telephone, or other telecoms, bearish. There's not a lot, I know from experience, I traded both of these, there's not a lot of premium in these. So if I'm bearish, if I said, oh, I'm bearish in Verizon or telephone, I would probably just buy an in-the-money put and replicate short stock because there's not, you can take a look, there's usually not, yeah, they're very cheap.
9-day.
Are you in Verizon or telephone?
I'm in VZ.
Okay.
Would you like to be in Verizon or telephone? I'll go to yours.
Doesn't matter.
Yeah, they're really cheap.
All right, so if you're in Verizon and you go to, are you in January?
I was nearer term just because it was cheaper.
Okay.
9-day, 16-day, but what are you opening up? Tell me and I'll look at it.
It doesn't matter. And honestly, if I'm going to use options as a directional trade, I will go shorter term to pay very little extrinsic value.
So if I open up the 9-day and I'm just going to pay 95 cents for the 43 put.
Sure, you're giving up a little bit of money, but if it gets you get a move down, you're risking $100, but if you get a move down, you've got that synthetic short 100 shares of stock.
It's very low risk, right?
Sure.
So I'll ship that.
Okay. So that's Verizon. Telephone.
No, I mean, let's not do both.
No, I wasn't going to do both. I was just looking at to see telephone is at the top of its range. Verizon was
at the bottom of it.
Yeah, or middle. Maybe we go with telephone.
Got it.
I don't know if it matters.
I'm not getting filled on anything anyway.
Yeah, let's put them both in and see what gets filled first.
Telephone. Okay. Telephone's $23. That same concept. I'm going to go to the 9-day. Look at a put. I'm going to spend 70 cents on a 24 put.
Honestly, in telephone, you can go. There's so little premium. You can go to 37-day and have a short 100 shares for 37 days for $1.
Oh, you can for the 24.
Yeah. Go to the buy the 24 put for $1.
Okay. We'll see if we can get filled on any of this stuff. I just keep pushing it through. We're not getting.
Why do you think we're having a hard time getting filled on some of these today?
I don't know.
Like, not so busy today? Markets are a little wide?
I don't know. It's kind of weird.
Right?
I mean, SPOOs are up 47.50 right now.
Yeah.
They're going to be almost up 50. This is a crazy day. What do you think is going to happen the rest of the day?
I don't know. I do think it's weird that we're not getting filled on a lot of positions. Is it slow? Is it already slowing down because of the?
Quiet.
I know they're all quiet. Why don't we get into Twitter? Make sure we get to all the tweets before we're finished.
You got it. We'll Twitter it up.
Okay.
Go top down. Oh, Liz and Jenny's sound is out with Steve Jones. So
but that was 31 minutes ago.
Yeah,
so we're on. We're on.
Dear Elizabeth, thank you. Family Search Center, branch of the Family Service Library. Our mission to help patrons search for their family genealogy. Oh, that's wonderful. Thank you very much.
Thank you, Steve.
And
Mikey,
I have no idea what my genealogy is.
Mikey, nice work on the SPX in and out. So here's what he did. Bought the 60. Let's see, what did he do? He has a butterfly on now. 60.85, 60.90, 60.95. He has a butterfly on, locked in for a credit.
Mikey, this is for you. He asked for the GG.
Hoping that it lands right at your center strike at the end of the day, 60.90. SPX at 60.90, end of the day, Mikey hits it big.
I hope so too. Those were two of my favorite shows, Bewitched and I Dream a Genie.
Really?
Didn't you watch those when you were a kid?
Yeah, I guess so.
Oh, I loved them. I wanted to name my daughter Tabitha from Bewitched.
Okay, so my brother ran the show in the house, and I was watching like Lost in Space.
Oh.
And
that's
WrestleMania.
That's why I always say Warning Will Robinson, and you're always trying to wrestle me?
Yeah. I wasn't watching Bewitched. That wasn't allowed.
Bewitched and I Dream a Genie were the two. I loved them.
We always watched Gilligan's Island.
Yeah, that was good too.
Yeah.
Thank you, Mikey. I appreciate you calling me Elizabeth as well.
All right. What else do we have?
So Frank Walsh, Walgreens is like McDonald's in that they own a lot of real estate that their stores are on.
Okay.
Oh, that is true.
So I think as far as tweets, I think we got to all the tweets. I think we got to all the tweets. As far as things to watch today, there was only one earnings trade. Only one Adobe, which we did not even look at it yet, did we?
It's a $550 product.
No.
I don't really want to mess with that unless it's something I wanted to get into.
And what's the expected move in Adobe?
The expected move in Adobe is $43.24.
That's pretty big. Pretty big expected move.
Yeah.
You could do an Iron Condor.
I don't.
And you could do a baby one.
But I'm telling you, I think things have been moving outside their expected moves.
Oh, and it's only 250 white stripes on the bottom, $5 on the top.
Yeah, so I mean, if you're doing a baby, I mean, I know we're supposed to be playing like 9 times out of 10 ball collapse, we expect the moves bigger. We've been seeing these massive moves in one direction or the other.
Sometimes this cycle.
This cycle. So Jenny, how about we do this? I'm going to go through what we are working, and we decide if we want to penny it up or penny it down. So we've got about a minute left, okay?
Got it.
So, working orders.
Got it.
Take off filled. And then we'll go into filled orders. Telephone. I'm going to pay 104.
I would do one or the other. Telephone or Verizon. One or the other.
I'm going telephone.
Okay. So.
I just chose it. I'm paying 104. Let's see if we can get filled.
Okay. We're working telephone. What else are we working right now? Delta.
Hold on. I'm going to go into each one individually. We're filled. Delta 126.
Yeah, I'd add a couple pennies onto that. Try to buy that calendar. We love earning setup calendars.
100%.
And now I'm glad you saw that, because now we can actually start looking for earnings setup calendars, since we'll have earnings coming up in Jan again.
'Tis the season.
Yeah.
Okay, Canadian dollar, it goes away by 5 cents each time. I'm not going to.
We were only getting $100 on that.
Yes.
I don't want to give up anything
so
else.
Cancel that. Baidu, it's the put spread for 145, and it's working at 149.
Okay.
And you notice we did not get filled on IBIT either. I'll take 145. That's it.
Oh, on IBIT. I don't mind giving up a little bit and having that free butterfly, because it's not like Tesla. It's very different. So when Tesla's such a big product, it's so hard to pinpoint a strike of where it could end. But IBIT is only $50-something, where I think we have a chance that it could land in the middle of that butterfly.
I paid 38 cents, so we have the butterfly on for free. We didn't lock in credit. We paid 38 cents. Okay.
Okay. Excellent.
And then I'm going to talk about what we did today. So we're going to go into the.
And I'm getting everything pushed out on the follow page right now.
So from the bottom up.
Yes.
Wait, these are not working. Hold on. From the bottom up, GME, we closed it today for a nice little winner. We put on the diagonal. Jajun, in and out in 15 minutes. We did it at 10:11 and out at 10:25. Intel, we sold the GN with 37-day put for 114. Qualcomm, we are in with an Iron Condor. Telephone, broken all the rules. We bought an in-the-money put. Delta Airlines is an earnings setup calendar. IBIT, we created a free butterfly.
Okay, excellent. And I just pushed everything out to the follow page. If you're not familiar with the follow page, there are lots of tasty, tasty live personalities that you can follow on the follow page.
Let's just check her work, ladies and gentlemen. I'm going to go to the follow page.
It's all out there. It's all out there.
Let's see. Let's see.
There we go.
Oh, there we go. You did it.
So you can follow any of these traders, see what they're trading. For us, it's just what we trade on our show.
None of them are trade recommendations. This is just so you can see an idea of what traders are doing during the
day.
Yeah.
Excellent. All right, Liz. Time is up.
Time's up. Fastest hour of the day, done and dusted.
Thank you, everybody, for watching today. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow, everybody.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it. Join the club, genius.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man Mikey Butler with me as always, and if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day, my favorite hour of the day. Get to spend with my buddy Mike Butler. How's it going, sir?
It's going well. Markets are a-moonin'.
Yes.
I saw MicroStrategy is being added to the NASDAQ.
Maybe. That's speculation. Don't peddle fake news.
Maybe.
It
will be.
Yeah, they do the additions on Friday. So they do they usually add 2 or 3 names. They remove 2 or 3 names. There's speculation that MicroStrategy would be in it.
Naturally.
Yes.
You had stated that Trump is ringing the NASDAQ bell tomorrow.
Yes, my MAGA bags will be pumped. I imagine.
We got Fartcoin mooning. We got MAGA mooning.
Fartcoin is it could be the investment thesis of a lifetime.
This is how it starts. Ryan might have the
but he moved out.
What do you
He
mean?
switched to AZ16.
Did he actually do
something.
it though?
I think so. He was talking about it.
That's rough.
This is just.
But I do like your theory. Your theory is that your coin's gonna pump because why not? When tomorrow.
I didn't know that. I just said my thesis was that something Trump related has to pump this before Christmas.
Yeah.
And so.
And here you have it.
We'll see. It could also dump.
True.
Who knows?
We had Adobe earnings actually closed today.
Yes.
I did an earnings preview for that one. I will post it in the YouTube chat. If you want to join us in the YouTubes, we're streaming live. Just go to Tasty Live. And Costco has breached $1,000 a share, pumping for no reason whatsoever.
It's got earnings.
Earnings tomorrow. This is the pre-earnings pump. This is what we talk about all the time.
Yes. AVGO is another one that has earnings
AVGO.
too.
Yeah, Costco, very interesting, over $1,000. Let's see what they say. Maybe they'll announce a stock split. Maybe they'll wait, but we'll see. But yeah, AVGO, Costco, and Adobe are the 3 that we focused on this week. I think I might join you in AVGO. I'm gonna wait till tomorrow though, see where it's at.
Yeah, I got I have a good position at the moment. I would like an inside/up move. 185 is my crab trade perfect spot, so I'm right there. But I'm along the 175. I think this trade is up a couple bucks here, $65 today. So if you had this position on and wanted to take some profits, I wouldn't hate that idea to avoid earnings, but I'm gonna hold, see what happens. With a trade like this setup where I'm long January, short the December weeklies, even if we get a move to like 195, this should still be a decently profitable trade. I mean, just from an extrinsic value standpoint on these 2 options, my break even's at 190, which is basically the expected move to the upside. It looks like 192 is kind of closer. But if the stock were to go to 190, these calls that I'm short would still they'd be worth $5. They're worth $5 now, or $4 and change. They'd be worth $5 in intrinsic value at the end of the week. So there's no issue there. The issue becomes if we get a move to 205, 210, where this is fully in the money and the extrinsic value of this long option, moves from $7 to $1 or $2. That's where you see the issue. So if we stay somewhere in this range, the 175 to 190, that's kind of like my home run spot for this trade.
I like it.
So we'll see.
But yeah, AVGO is really the only one that's low priced enough to where we can have some flexibility with strategy. But it also has a pretty high earnings expected move. We talked yesterday about how Costco has a really low expected move relative to the stock price, 30 points relative to $1,000 stock price now. It's just I don't like being involved in those from a short premium standpoint because you're just asking for a 2-3 standard deviation move. Not saying that it happens more often, but if it does happen, you're in a lot more pain if you have a 30-point expected move than if you had a 60-point expected move. If it goes 100 points up or down.
Yes.
Yeah. So there you go.
Quick little market rundown. E-mini S&P 500 futures trying to get back to that 6,100 mark. I think that was basically our high of the year, just about there. We got a little bit above that in the middle of last week, but we got a high of 60.99. We've had about a 55-point intraday range here. NASDAQ, the strongest of the group, up 379, a little over 1.75%. Obviously, Tesla helping that, up another $11. You got Apple reaching 250-ish. Amazon has been a really, really strong stock over the last couple weeks, as well as Google, up another $8 today to new all-time highs. The laggard of the group has been NVIDIA, which is having a nice day today, but has kind of chopped around this range for a better part of the month or last month or two. Dow up 25, basically unchanged, and the Russell up 15. So NASDAQ being the strongest of the group, Russell and E-minis there too as well. You got oil catching a little bit of a bid. I closed out early this morning, up $1.36 on the oil futures, almost 2% here. I closed out about 50 cents lower, but caught a nice little bounce there. Volatility futures, we got the roll in, so they're sitting at 16 right now. You got the VIX at 1362. Volatility futures have stayed at the 16 mark pretty much all day. Bonds down 12 ticks. You got gold and silver both continuing to move higher. Gold up $38, silver up 30 cents, and then Bitcoin back above 100K. The futures are at 101, the spots at 100, up 3% and change.
Big move.
Big move.
Big move, but still within our expectations. Bitcoin is a volatile product.
Yeah. Do you remember what I think Ryan had like a 7 or 8K range was what volatility was projecting
for
something
this
around
week?
that?
Yeah, it was like down to 90 and up to 105 or something like that.
Yeah, something along those lines.
And we're seeing that like for the next 16 days, we're seeing a similar 10K range. So down to 90, up to 110. That's within expectations.
Have you done anything this morning? Are you still long that micro crude?
No. I closed that for $110 winner.
Nice.
A couple days ago.
Oh, really?
Yeah. Closed that.
Nice trade.
A couple days ago. But yeah, I have not done anything today. Some positions are coming in a little bit. NVIDIA, I've got the 145, 155 call calendar, long February, short Jan. That one is getting some value back today. GLD, 250 call calendar. That one's interesting.
Ooh, beautiful.
You know what? Maybe I'm actually going to manipulate this right now.
What's the short option in
250,
January?
The 9-day.
Ooh.
So in GLD, I started with the 250, 260.
Are you February or January?
January.
Okay.
So I started with the 250, 260. Gold sold off. I rolled this 260 down to the 250 calendar. So I started with a $5 debit, collected $1.28 to reduce basis. So now I have a 372 debit on a 250 call calendar. Gold is at 250 right now. So what I can do here is
do have $2 of extrinsic value left.
Yeah.
So if gold were to stay right here, you have $2 in value minus whatever the decay is in the long option. Let's call it 50 cents. You probably have $1-ish if you hold.
Yeah.
So what are you thinking?
I think
do you
what
want
I'm
to
gonna
lean
do-
long or?
Yeah, I just don't want to have this calendar on. I don't want to have the calendar on when I can move it to a diagonal spread.
What's your basis on the trade? You said
370.
Okay.
So I think what I'm going to do is I'm going to,
Why not just close and?
yeah. Well,
You can start a fresh one or
Yeah,
do
I mean-
like a February Jan because it's with something that's gotten 17% implied volatility. You've had, 3 times that in realized implied volatility in the last 3 days. You've hit 30% implied volatility on each of these moves in terms of the actual move, and I'm just ballparking those numbers. I mean, just when you look at the 2-day 2-day expiration has another $2 of potential move. You've hit that 3 days in a row. And so you've kind of gotten bailed out. So maybe hold it or close it and start a fresh one in February, Jan, if you want to get long it again. I don't know. Up to you, obviously.
Yeah. I mean, there's
I don't-
240 of extrinsic value to decay in the 9-day cycle. So I could wait. If it keeps rallying, it's not going to be great. I was looking at buying back the 9-day, rolling to the 20-day quarterly cycle, and moving it from the 250 to the 255 for $1 debit. So that would bring me back to basically where I started. $5 diagonal spread with a $5 debit. Yeah. But it's gonna be a cheaper trade if it gets out of the money. If I get rid of this $1 of intrinsic value in the 9-day, like if we get a $1 sell off, that 350 turns to 250, and now it's much easier to move it up and out. So maybe I'll hold on to it actually.
Indecisive.
Yeah.
Too many options.
I know there's too many options. 9 days though, 250 in extrinsic value. If it gets back below 250, I'll have more flexibility than rolling up and out now for a debit, but it's still a very small trade.
Yeah. Yes.
So yeah, I retract my statement. I'm gonna hold on to it and see if we get below 250.
Well, I got into a couple positions today. I did a Nike position. I got long Nike into earnings next week. I did a poor man's covered call. You might be interested in that. The stock's up about $1 from where I put the trade on, so it has rallied. But stock has gotten halved in the last couple years. I think it's an interesting upside play. So I bought the 70 call out in February. I sold the 81 against it in next week's expiration, so the monthly December expiration, because you have earnings on the 19th. So I'm playing into that earnings implied volatility there. Poor man's covered call. I did it at $8.10, probably marked 50 or 60 cents higher. I did an iron fly and PLTR, super high implied volatility relative to everything else in the market. It's been moving around. Capital requirements are a little bit higher in there. So it's hard to be naked, even though it's a $70 stock. You would think that would be a perfect one for us. But volatility being a little bit too high pumps up the buying power requirements. So I did an iron fly there. I also got long NVIDIA. So playing for a little sympathy move on AVGO's move today and into earnings tomorrow. Closed out of my micro crude. I closed out of the GME short-term diagonal spread that we did yesterday. The 9-day, 2-day took like 30, 40 cents, $37 out of it. So shout out whoever gave me that. And then added another micro euro call futures contract into this dip below 105. I got in at like 149. Just playing the game, man.
Yeah, it's just so funny. Like GME every year it has its day where it goes from 10 to 60. Like it's just so funny.
Like deja vu.
Yeah. What a world where it's like actual strategy is just owning stock in GME and just waiting.
Just waiting for that volatility to manifest itself.
Yeah.
I don't know. The market does have, or at least seems to have, a memory.
Mm-hmm.
You know, like it seems to have like a.
Well, it's just fun.
A
It's so
deja
funny
vu
because it's like
aspect to
once
it.
it starts happening, that's when all the people come out of the woodwork and they're like, yeah,
Yes.
let's pump it.
Yes, that is
It's
certainly
like this
part.
is our world.
This is certainly
live
part
in
of the
now.
game, no doubt.
But yeah, I am light on positions. We've had a fortunate couple of months.
Yes.
In this account, just like being long and taking off bullish trades, like it's silly. But I do have my eye on in the SPX Iron Condor here. I have the 5950, 6200 shorts, and then defined risk 10 points out of the money. It's up 55 cents right now. I'm just gonna hold on to it. If we continue higher to 6,200, so be it. I'll just roll the call spread out and close the put spread.
Talk about another
Day or two.
Yeah, tomorrow. When we're at 6,200 tomorrow.
Yeah. Imagine the world where we're at 6,200 tomorrow. That'd be insane.
That would be interesting.
Santa would have arrived early.
Yes, no doubt.
But yeah, I'm also in the NVIDIA bullish trade. I've got that gold calendar, bullish trade in AMD, bullish trade in Celsius, bullish trade in Target. Actually, no, 160 call in Target. That was left over. Bearish XLU. Down $100 on that trade. That was from
XLU.
That was from a put zebra from 90 days ago.
Ooh. Gross.
So yeah, I guess I literally need $1 sell off and it'll be a scratch.
There you go. We've had a big.
We've gotten
move.
it. We've gotten a big move down.
Maybe you'd close that one too.
Is this a loser? Yeah, it is.
I'm thinking about the move in metals. I have that zebra in. Oh no, I closed out of the zebra and then I did a 1x2 kind of poor man's cover call here, just to show you my risk profile here. Right where I need to be. So I'm long this 23 strike call in February, short 2 of the January 30s. So it gives you that kind of straddle type risk profile, but you got a little bit more buffer to the upside because you can roll the short option. I forgot I closed out of the zebra. The zebra probably would have been a good one, but that's hindsight.
I actually
missed out on $120 on the zebra. It's all right.
I've got I have 2 of the in the money 80s on the put side
For what?
XLU.
XLU.
So I'm gonna put in a GTC order to close them at $3. See if we get an intraday.
What expiration?
9 days.
Oh.
So very short term. So I just put in a GTC order to close it at $3, just so I don't forget about it. But I'm gonna keep my eye on this and see if it doesn't get filled and we kind of chop around here. I'm gonna have to move this to a further dated cycle to just dull the volatility of it, because it's still $500 of value and it's just stock.
You're just long the puts?
I'm just long the puts.
Yeah, you close that, you're out.
Yeah.
Done. So you're just short. I mean, the delta on these is a 90 delta. So stock move goes back up 30 cents, you lose 30 cents. Stock goes down another 30 cents, you make 30 cents. So
very volatile.
Very volatile. And you
But
caught.
if it sells off a point, then it'll fill. And I did catch the move. But yeah, I will keep this on today, but I'm looking for a point out of this, and it'll fill for a scratch.
Ooh, Mr. Risk Taker over there. I like it.
What do we have to lose?
Money.
True. But yeah, that's it.
Yeah.
Very light on positions. Probably using like 10% of buying power.
Yeah, you got trade ideas, throw them in the chat. We need them.
Yeah.
We need some stuff.
We do, actually. So I'm going to pop over to the YouTube chat now. Again, if you want to join us, we're streaming live. You can throw in your trade ideas and questions along the right-hand side chat. I've got the Cherry Picks newsletter link pinned to the top of the chat. Go get that for free. All right. David, what do you think about SPX vertical calendar spread? Sell an at the money put vertical in the 1 day and buy the same vertical in the 3 day for a small debit.
So you're selling just a put spread in the 1 day and then in the 2 day, they say?
Selling the 1 day and then buying the same vertical spread in the 3 day. You'd have to give us an exact example.
Yeah.
Because if you're just selling selling a credit spread and then buying a debit spread, you're just box trading. Like you're just collecting premium.
If you do it different expirations,
Yeah.
you're all over the place. You want it up today and then down tomorrow.
Yeah,
Like,
so, yeah.
you know, you got to, not only do you have to hit one good trade, but you got to hit the next trade too to make any money. And then if you're doing a short put spread and then buying a call spread, you're doing, you're just double bullish. So give us some strikes or an example that would buy the same vertical.
Yeah, just give us the exact example you're looking for.
Yeah.
On AVGO, I'm in the crab trade with you. What about an AVGO cheap butterfly for next week to protect the upside a little bit? 185, 195, 205 for $1.30 in December 20th.
95, 205. Yeah, I mean, I don't hate it. You're doing it into strength. I might do it like a broken wing butterfly. I don't know. I like that it's 9 days. I wouldn't do this like 40 days out in time. I just don't like buying butterflies that far out in time, but yeah, I wouldn't mind. Why is this using so much capital? They margining me on this?
Are you offsetting one of your strikes? Your current one?
Well, I have the two. I guess because I'm adding risk on the upside here because this is covered by the long option. If I add the butterfly, that's now more risk on the upside, which is why it's dynamic. Yeah. So that's why I'm using more capital here on the upside because I have another, 1,500-ish in risk on this, or I have 1,000 in risk on this position, but that can come into play in the short term if I take that off. Yeah. So it does use more capital. I think you would have to do like a diagonal spread, do like the January 185. And then like the 195, something like that. Yeah, I mean, I don't know. I have my position. I'm going to hold it, play for a little inside up move. Stock would have to be new highs to feel any pain. So I'm going to sit.
All right. Dronin 85, 125, strangle an MU in January.
85, 125. Okay.
Yeah, I think it's a fine setup. Collecting $3, $1,000 in buying power, nice return on capital. One thing to note is they have earnings on December 18th.
Mm-hmm.
So this is not going to really move in your favor too much until then. You're holding directional risk until then. So I personally would just not have this on, wait till earnings on the 18th, and then throw something like this on. Because you need the vol crush and you need the binary event to happen for you to get any kind of value out of this.
Mm-hmm.
So if you wait a week, you can reset the strikes to the new stock price and everything, but that's what I would do.
Might do a little cheapy call diagonal spread here into next week. 105, 110, January Dece, $3. You might even get a little sympathy move tomorrow with AVGO.
Good.
Limits the downside risk because you're not naked. I don't hate the idea of putting on a naked position, but just as an another positive. Do the 105, 115, $4. That's what we'll do. $1.75-ish in credit you're selling in the weekly or in the next week's expiration. We'll do that. 415. We'll see if we get filled. Come on. 417.
There you go.
I mean, stock's near lows.
Why not?
Why not? I like that.
When should I pick a calendar over a diagonal spread? We almost always pick diagonal spreads over calendars because it eliminates risk from one side. It increases your probability of profit significantly for that reason. Even though pop isn't, you can't really see it with a diagonal spread, it's true. If you have no risk to one side, you're gonna have a much higher pop than something with risk on both sides.
Yes.
It's more expensive. I would say the one time or the times where I will pick a calendar spread is if it's a high price product where it's much cheaper to do a calendar spread with the same idea. And if implied volatility is so high in the near term cycle, like for a binary event, and implied volatility is really low in the back months to where I can collect like 50 or 60% of my extrinsic value premium in a weekly cycle compared to what I'm buying in the back month. The more I'm collecting in the short option relative to the back month payment, the more inclined I will be to do a calendar spread because you have a much wider range of profitability if you're reducing your cost basis on the long option you're buying by 50%. And it's a long-term option. So, but normally we do diagonal spreads because they're much higher max profit potential and they have no risk to one side.
Yes. Nothing worse than getting the direction right or your thought about direction and not making money on it, which sometimes can happen with calendar spreads if you get that tail sort of move.
Yeah. Have you thought about a pairs trade, bullish Boeing and bearish United?
Oh, God. United has not had a downtick in a year. Boeing, I caught a Boeing trade. I think one of you guys suggested me the trade. I closed it out on the 2nd. I took like $100 and some odd out of it, but it obviously would have been better today. The United trade, I've tried to short or be on the short side, not like straight up short this, but I've tried to play the short side here 2 or 3 times this year and am 0 for those attempts. So you can look at it from the aspect that I could be due and that you should take that trade and because I've lost so much on it, or you could take it as stock never goes down.
Yeah. But I guess I think you got to build a narrative around that. Like if you're long Boeing and short United, what catalyst are you looking for where Boeing does really well, but United does not? You know?
I don't know if it's as like I'm just looking. So one of the things that I thought of was like just looking at the correlation to SPY. So Boeing has 0 correlation. It's a negative 0.01, which is absolutely random to the SPY. UAL is at a positive 0.43, which isn't super high, but considering that Boeing basically has no correlation and UAL has a pretty positive correlation, I don't know if there's a, the pair is not, I don't think the pair is there.
Yeah. I think if it was opposite, like if Boeing was mooning and UAL was near the lows, I think it would be much easier to build that narrative of getting long United and short Boeing, just in the sense of like Boeing will probably have something that comes out in the future. Maybe you see a little tank there, but UAL being at the lows, maybe it rebounds, but it's a tough narrative, but I mean, you can totally do it if you want to do it. Do we both fight at all off air?
Fight?
Not really.
Oh.
What you'll notice is when a couple of chill guys are just being chill guys, there's really not much to fight about.
Pump my bags.
Yeah.
Amazing.
That's literally it.
Yes.
You wake up, you check your bags, you check your fantasy teams, you have some coffee.
Yes. We don't fight.
It's just very
There's not much fighting in the office. It's very much exactly as you see things on the show. The joking, the making fun, the subtle jabs. It pretty much happens all day long. I mean, the office, what do you think we have in terms? I mean, I know we're like the newer traders, but in terms of like ex-floor traders, we got to have 20.
Yeah.
Maybe even more.
It's a big number.
So when you
15, 20, I think is right.
I would think so. So, you know, that's the vibe here. It's a good vibe. It's fun. You got to have thick skin though. You got to be able to take a joke.
True.
Can't be a hothead.
NVO Jan 17 16 Delta Strangle. So that puts you at 97.5-ish and
130.
130-ish.
Yeah,
Sure.
I don't hate that.
It's literally a very similar setup to MU.
Yeah.
You're kind of outside the expected move from the from a 50-50 standpoint, but NVO doesn't have earnings in January. It looks like it's later January, based on what I can see. So, yeah, I think it's totally fine.
Yeah. Yeah, it looks like it's questionable. It's definitely not confirmed.
Yeah, and there's nothing about the IV structure that shows us where it could be.
I moved the strikes. I did the 100, 125, which is about a 20-ish delta. It's just where I prefer to be for short premium. I know, the difference isn't huge. It's 70 or 80 cents on each option, but
yeah,
I did that at 431. So I'd love to get $100 out of it. That would be a home run. $1,100 in buying power. So
there you go. IONQ calendar.
IO what? IONQ.
IONQ.
Oh yeah, this is one of the Mimi stocks. Calendar. Puts, calls.
Buy the Jan 31 call. Sell the December 36. So a diagonal spread.
January 30.
Sell the 36 by the Jan 31. So yeah.
This must be a weekly.
Yeah, the Jan 31, the Jan 24 maybe. Jan 24, 31 strike. Yeah, the Jan 31 strike, and then the December.
And the weeklies, and the weekly 24 weeklies. You want to buy
the
that?
Jan 24, yeah.
And then sell.
And then you sell the 36 in the December monthly. And then you could sell the 20 strike put for 60 cents for a very little additional buying power. Yeah. And take shares if it gets there, sure, if you want to do that. But yeah, I think it's fine. It's a 5-point wide diagonal spread for 375. Pretty cookie cutter.
I don't think I'm gonna do that. I'm gonna go. It's got super high implied volatility. This could rip your face off, no doubt. Oh, I was hoping there'd be a little bit. I was hoping I could do like a 1x2 for basically 0. So maybe if we do the January 30 and then sell, these options don't look that great. Well, 35s twice. The question is, do I want to get my face ripped off in this stock? It's $38 2 or 3 days ago. Market cap of $8 billion right now.
Classic.
Do I do this at 30 in January, sell 2 of the 34s? You do it at a $2 debit? These markets don't look great. All right, we're going to try it. Why not? 210. 1x2, so I'm naked on the upside. My risk to the upside is like at like 40. We can show this. Okay. There we go. Put the Theo on there. All right, so let's see through end of December, the monthly expiration. My risk is at like 37 and change. Trying to finance the long call, but you have risk to the upside, so just keep that in mind. Give me more.
Give me more. Okay, so we have an example of the SPX trade we were looking at earlier.
Okay.
So
only puts.
Only puts. So in the December 12th cycle, selling the 60.85 put,
Yep.
buying the 60.80.
Okay.
And then in the December 16th cycle, boxing it off. So selling the 60.80 put, buying the 60.85.
For a $5 credit.
Credit.
Yeah.
Yeah.
It's so here. This is what you'll run into. So
First of all, your risk is $500.
Yeah, so to speak, but you have two different expirations. So
Yeah.
if the market were to go down today and that spread goes fully in the money, that's a $5 debit. You're out that $5. If the market were then to go up on Monday or through Monday, you'd be out whatever the value is left on the table of that long put spread, which is $5 in the money. So you have more risk than what the it shows you as basically having no risk here, but that's because of the calendar nature of this.
Mm-hmm.
You're assuming that one of these is going to, if you hit one of these, meaning you stay out of the money today or in the money on Monday, you'll basically scratch the trade because you'll have one that'll be worth 5, one that'll be worth 0.
Yeah.
If you miss on both these, meaning today the market drops 5 more points and expires in the money on your put spread, and then on Monday the market goes up and that expires out of the money, you'd lose on both the trades, and so you'd probably lose like $500.
Yeah.
It's just I don't think there's an upside to this trade, is what I'm trying to say.
Yeah.
Like if you were
you're literally playing for two things happening in very specific orders.
Yes, you need this, but it's more important that today's options expire out of the money.
Correct.
Because if those expire out of the money, then you have a free long put spread.
Correct.
Your risk is you got nothing. There's no issue. But if it expires slightly in the money or fully in the money, now your risk is all over the place.
Mm-hmm.
Because then you own this long put spread into Monday, which is worth $3, so you'll lose out on $3.
Yeah. So ultimately, you're taking downside risk to try and finance a downside put spread after today's options expire worthless if they do.
Yes. I would rather do this like some sort of like pseudo butterfly. Sell a wider put spread today into today's expiration and then buy a tighter one further out in time. And so if you get a move today in this position, so this is what it'll look like at expiration. But if you get a move down here today for this position, you'll make money, assuming this spread stays out of the money. If it goes fully in the money, you probably, are only out $1 or $2. You don't have the same binary risk. This sort of trade sets up in a way where if the short put spread expires out of the money today, you own that $5 wide put spread for free. You have no risk because you're selling the whole package at 70 cents. If that short put spread, the 60-70, 60-55 expires out of the money, you have this free put spread, long put spread going into Monday. That's how I would set it up, like a butterfly, like a crab trade almost. That's what this is.
Yeah. Yep. But yeah, puts, calls, doesn't matter. It's all the same trade.
Mm-hmm.
If you're boxing it off. Even if you're using all puts, it's still a box spread.
Yeah.
How would you play for government upgrading their systems Fed spends 80% of annual $100 billion on IT budget, maintaining outdated systems. Steve says much of government moving to cloud, no upgrade on premises, but maybe Microsoft, Amazon, Oracle, Dell.
Yeah. The NASDAQ. That was basically a batch of the NASDAQ. So
Yeah.
I would say that's a part of it. SMH is another broad-based way to play it.
Yeah.
Each of those underlyings, I mean, you've got your thought. You could, pick your winners and structure some long delta trades.
And that's the nice thing about these ETFs is like, yes, like you don't know which product it's going to be. If it's going to be a very specific product that benefits greatly from something like this, you don't know what it's going to be. But you do know that it's more than likely going to be something that's already in the NASDAQ or in SMH.
Yeah. It's just whether the weighting matters.
Yeah.
You catch that.
Yeah.
Yes.
Uber short put in January, 20 delta for $1 credit.
Yeah, I think this is super interesting. The stock has basically got, it's down like 50% from the highs, got up to 88. We're sitting at 60. I have some long delta here. I'm basically just long the 70 call now with my January calls are basically marked at 0. I did a 1x2, similar to what I did in IONQ. I'm out about $100 on this trade, but I have long delta, so I'm with you. This is one, if I didn't have a position, you do like 65. There's just like no volatility in January. It's kind of weird.
Yeah. This one's also weird because it's tanking. Like Uber is tanking right now. It's down 12 points in 2 days. So a short put for $1, I might lean more towards a diagonal spread.
Get that gamma.
Personally. Because you can get, so like a short put in January for $1, that's your max profit. You could do a Feb Jan diagonal spread where your max profit's $500, like a 60-70 diagonal spread or like a 67 and a half for $4. Like you have way less risk and you have much more profit potential.
Yeah.
So that's what I would do personally.
Yeah. Agreed.
Because you don't really want to. You don't want to step in front of a train that's dropping like a huge falling knife and playing for implied volatility to be inside realized volatility when currently realized volatility is well outside of implied volatility. Okay, Pablo's got a spicy one here.
All right.
1 year out, 100 shares of NVIDIA stock.
Mm-hmm.
Short the 160 call.
1 year out in
1
time.
year out.
In, let's call it December.
Let's call it December.
The 165.
160.
160. Okay.
Short a 120 put.
Short the 120 put. Same expiration.
Yeah. And then long a 138 put.
And then long the 138. So right at the money.
Super duper conservative trade. Question is, if the stock drops below the break even, that means I'm going to keep my 100 shares at the price where the break even is.
I've got to get the rest of my position out of here.
Yeah,
So just keep in mind, any analysis you're trying to do right now is there's so many variables that are going to happen over the next year that it's hard to plan for what to do with this trade a year from now. But
yes, you can see the expiration risk graph is what it is.
Yeah. I mean, you're buying this put spread, which is $18 wide. You're buying that at $9, and you're selling the call at $21. So you've got $11 of extrinsic value. It's $100 a month synthetically in decay. So you have $11. So your basis on the stock is $11 lower, which lines up right to where your break even or what your debit is of 125. So you have, this is your break even point. It's just that, if you get a move to 100, this isn't moving. Like in the next earnings announcement in January, if it goes to 100, your break even at this time, like we can even do it in the Theo right here. Just to show this, we go through, you gotta wait for this. This isn't moving and we're going all the way. We can even go out. Let's just go to April.
Yeah.
In April, you've collected $5, $6, $7 of value.
Yeah.
Assuming the stock stays right here.
Yeah. Because the break-even zones at expiration assume that your 160 call has gone to zero value.
Yeah.
And your 138, 120 long put spread that has 370 days is at $1,800 of max profit, which it will not be. Even if it goes down to 120, if it gets down to 120 in the next couple of weeks, this spread will appreciate in value, but it'll be trading for $6, $7, not $1,800. So, but yes, at expiration, this risk graph is true in the sense that your break even on this trade is right around 107.50 if you did this right now. But yeah, it's a neutral way to participate in the product. There will be moving parts though. Like if you got into this, I would, and let's say the stock drops dramatically, I would look at the value of the 160 call. It would probably lose half its value. Maybe you consider closing it and waiting to reestablish it later or something like that.
I don't even know if it would.
I think it would.
Think it'd lose half?
Yeah. It would go down.
A little bit. I mean,
it's not going to lose like 80% of its value. It'll lose 30, 40, 50% of its value. If NVIDIA went from 140 to 100.
Yeah.
But either way, yeah, it's a conservative way to participate in the upside neutral movement of the stock. You're picking up $1,300 of extrinsic value. So yeah, don't mind it.
Yeah. I would rather just buy the shares and sell monthly or even weekly calls against it.
Yeah.
I just think you'll get paid on it. Like, just from a simple analysis of 37 days and you're selling the 150 strike or even the 155, if you're selling the 155s, you're going to collect the same amount of extrinsic value along the way. And that doesn't account for if the stock goes up and this option stays out of money, the extra extrinsic value that you're getting month to month. So it's just, I don't know, not my trade, but I get it.
Ryan's looking at Adobe, December 13th strangle. Short the 490 put, short the 615 call. What do you think?
490. What was it? 560?
615.
615.
490, 615.
It's a big boy trade.
Yeah. So, yes, Theta is $500, but that's just because Adobe has earnings today, and this contract expires on Friday. I think you have to think bigger picture here. Like, if you're planning on closing this, if it's a loser, then this is I would not do this. But if you're doing this because you're trying to take advantage of the IV of Adobe, and if you get tested or if it's a loser, meaning Adobe's below 490 or above 615, you plan on rolling out from the 2-day into January or February and trading this, then I think it's fine. But if you're trading an undefined risk binary event for earnings with the plan to close it, if it's a loser, I don't like this because there will always be an earnings trade where you have a 3-4 standard deviation move against you. And if your plan is not to roll through it and manage it, then you got to define the risk. And that, in this case, it could even be like buying the 470 and selling the 635 or the 635. So you give up a little bit of premium, but you define your risk so that you're not in a heap of trouble if it goes crazy. That's my 2 cents.
Mm-hmm.
Uber getting killed again. Yep. E-minis are bound to pin 6100, I assume.
Of course, more.
Yeah.
More.
More, spelled M-O-A-R.
Yes.
Obviously. Any other last thoughts here? AVGO earnings tomorrow, so I got another day before that one.
Yeah, it's an interesting one. I mean, it's had some wild two-sided action. Yesterday, it closed at like 170, I think. Yeah, closed at 171. You had a $9 up move today. So definitely seeing some realized vol there, no doubt. Yeah. Everything is quickly going back to highs. I'm sad about closing my Google. It's at new highs today, 195.
Yeah.
Up $20, 10%, 2 days. Amazon as well. So just massive moves.
Yep. It's been crazy. It's been crazy.
Yeah. Vol low, so it's like, it's hard. Slim pickings.
Yeah.
We got a couple on though today.
Yeah.
So.
There you go.
Yeah.
We're missing Mr. Westwater tending to his newborn.
Yes.
He's been spitting fire this year.
Yeah. Yeah.
And he's helped us get out of the equity realm. That's why we're kind of just like, what are we supposed to do? Because Amazon, Apple, Google, they're all just mooning. Like, what
I think you gotta be more selective, and you can still trade them. We've done a lot of like diagonal spreads and stuff like that, but it's certainly from a short premium perspective, it's slim pickings right now.
Yeah. Uber defined risk. Short the 62.5 put, long the 57.5 put in Jan. Stock at 61. How would you manage? So 62.5, 57.5, Jan. You're kind of right there. There's not much to do.
Yeah, I would hold.
Yeah, 37 days out. Rolling this to February is a 14-cent, 10-cent credit. So if you wanted to be conservative, you could do something like that. But when you go to a 70-day cycle with a 5-point wide spread, you have to hold that for another month at least to get anything out of it.
Yeah.
So the more aggressive stance would just be holding it with 37 days. Still, 37 days is a long time. So yeah, I think holding it is what we would both do.
Yeah. Defined risk.
Yeah.
So gotta be able to take a little bit of heat. Happens to all of us. Some more frequently than others.
Nordson Corp has earnings today. It's
Nordson Corp?
Nothing. There's nothing to do there. Yeah, they only have 4 option contracts, all monthly. That's a big no-no. For a lot of people look at like stocks like this that are.
What stock is this?
NDSN.
NDSN.
Just as like a rule of thumb, if you have a stock, and no one brought this up in the chat. I just saw it on the list of things. But just as a rule of thumb, if a product does not have weekly expirations for options, and especially if a product only has 3 or 4 monthly expirations, that tells you that this is not an active market at all. And even if bid-ask spreads are somewhat narrow, you can get caught in this thing where nobody's trading it and you have these options you're trying to get out of and you can't.
Yeah.
So just got to be careful with these products. Like, we don't trade these products that have 4 or 5 expirations all monthly.
Yeah.
And the shares aren't even trading.
Yeah, you could see 80,000 shares is absolutely nothing. I mean, there's nothing going on in a stock like this. You don't want to get stuck in something like that.
Yeah. Costco earnings tomorrow will be fun.
Yeah, what are you going to do?
I don't think I'm going to do anything.
I know, it's too pricey.
It's too pricey. There's not enough implied volatility to sell a neutral iron condor. I guess I could sell a put spread and and just see how high it rallies, but I don't want to get caught if it sells off.
You could do a cheapy like 2-day, 9-day all or nothing trade, like the GME trade.
Yeah.
I guess that is one time I could see myself doing that sort of trade regularly.
Yeah.
Is in something like Costco where you just can't throw up the capital to get directional there. Something like this where you're long the 1040 in the December monthly and you sell at 1050 again, so you got $10. You know, like if the stock explodes higher, 50 points or more, you make $500. So 100% return on capital. But also, you wake up and the stock's at 950, your trade's at zero. So, you make 500 if you're directionally right, you lose 500 if you're directionally wrong.
Yeah.
Which is a lot. It's a coin flip.
It's like a vertical spread, but you have a little bit better IV exposure.
Yeah.
With the difference in contracts. But yeah, my prediction is they're going to announce a stock split, and they're going to announce that they're never going to change the price of hot dogs no matter what.
Isn't that like part of the?
That's how you really pump your equity.
Yeah.
Provide shareholder value by never changing the hot dog price and splitting the stock.
Beautiful. I love it.
That's my thesis. Andrew has a Jan, Iron Condor, and Tesla. 325, 365 put spread.
January 325.
365.
Okay, so we're long 325, 365. Yep.
And short the 375, 415 call spread. So it's ultimately an iron fly at this point.
Yeah.
Got into the trade on November 12th with shorts at 284.90. So you've brought the shorts in on each other. Net credit presently at 24.5, and the Iron Condor's marking at 29. So yes, you have a 40-point wide iron fly with a $24 credit. So you ultimately have a chicken iron condor in this sense.
Yeah.
Any recs for further management? I don't think so. I mean, really, you need this thing to come down a little bit, and you need time to pass.
Yeah.
Your premium is fine. Like, you have a good amount of premium. Your extrinsic value, your expiration break even, if you have 24.5, is right at 400. So you need today's move to reverse, but really most importantly, you need a lot of time to pass because these options are all close together, which means the decay of these options will offset one another in a pretty big way until you get closer to expiration.
Other option is close it out and essentially buy the guts and sell the wings. I mean, you're out $500. Stock's been running around all over the place. This trade is going to stay, bid. You're not going to get much value out of this. So you sell a wide iron condor where you collect $5 or something like that, and recoup that $5 in value on something that's further out of the money. That's a more reasonable position.
Yeah,
is another option. But
the 9-day option contract with these exact same strikes is trading for $28.
That's what I'm saying. It's like it's not going to move at all. So maybe it's like a close and roll something out of the money.
Yeah. This is literally like a week of expiration. If the stock comes down a little bit, that's when you're going to see a lot come out of this thing. Because I'm looking at these expirations, they're all trading for the same price pretty much.
That's it?
One more. Okay. Costco on the History Channel had founders saying, never raise the price of hot dogs, and they bought the manufacturing plant. You just love to see that.
Beautiful.
How is a 60, 67.5 diagonal better than selling a 55 put on Uber if it drops 10%? Diagonal loses 320 versus 0 for selling a put. True. But if Uber drops 20% or 30%, your short put
You're not playing for that.
Correct. But I'm just saying, like, if you're playing for a reversal to the upside, if that's your goal, a diagonal spread, you will make much more than $1 if there's a $4 reversal, if you entered it right now.
Yeah.
And you would still see losses on the 55 short put in January because, like, look at today's net change. This option was 20 cents yesterday. It's 80 cents today. If you get another 4-point move tomorrow, you're probably going to see $150 come out of or be added into this option. So your P&L is only 0 at expiration if it goes down 10%. But tomorrow, if it drops 10%, you will still see losses on that trade. In the diagonal spread, you're not going to see max loss. You're going to see a similar P&L. You just don't have the same amount of max risk. But yes, higher probability for short premium. It's just tough to short premium into a move like this is my point.
That's it.
That's it. Thanks for tuning in. If you got any questions, you can let us know. We're on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. But we'll be back same time, same place, 11 a.m. Central with trade ideas for you tomorrow. We'll see you then. Peace.
Peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
It's the day that when you write dates in the American system of month, day, year, which is a little bit funny, looks like 3.14, which is one of our better approximations. And actually this year is even better because it's 3.1415. I've never before, but this year there's a couple other math people who just got a pizza oven, and so they're bringing everyone over and we're gonna make a bunch of pizzas. It's one of the few very important transcendental numbers, right? I mean, 0, 1. There's a lot of good contenders for most important number. Anytime you have anything that's circular, you're going to wind up with pies. Anytime you have a pie, you should sort of expect there to be something circular. I can do one more than the date on Saturday. I can do 3.14159. Rational numbers are fractions, and pi just is not a fraction. 22/7 is pretty close, but that's not what it is. It's the ratio of a circle to its area, right? And so that's not an integer ratio. It just isn't. Oh. Pumpkin. Oh, just circles are great.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
We are back. It is Wednesday, December 11th, 2024. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. She's a first-time co-host, Katie McGarrigle. Welcome to the show.
Hey, thanks so much for having me. I'm glad I finally made the cut.
You've always been above board. You're always too busy for me, which is just fine, but it's a great day to have you on because it's a day with new all-time highs in stocks. I know that there were a few bears around here who probably aren't too happy about that, but what can you do about them?
Yeah, it's definitely been a wild question mark ride. I mean, I don't even know what this is anymore. I'm excited to talk to you. First off, I haven't seen you probably since New York, which was like 8 months ago now, which is crazy. But I'm excited to kind of catch up with you and get your, 2 cents on like what you think is kind of happening, what you're anticipating going into January 1st, into a new presidential administration. It should be a good time.
I'm excited. So, John, we can go right to the charts here and talk about the day and really the week's big event, which is the CPI report that came out this morning. It was really a snoozer. Everything was right on the screws. Headline inflation, month-over-month inflation, they are right where we would expect them to be in terms of expectations, right? That's a good thing. No surprises. Why was the reading higher, though? Apparently, the price of eggs have gone up 37.5% over the past year. We see that meats, poultry, fish, and eggs are a fairly large contributor to this year-over-year print. Outside of that, motor vehicle insurance, pet services, health insurance, water and sewage maintenance. On the other side, though, gas prices down 8.1% year over year, so there's the good news. Either way, though, the inflation is evolving in line with what people anticipated. There are really no shocks in it. And it seems like in this low volatility, low volume environment today, Katie, that's really the green light all stocks needed, at least all those tech stocks needed to justify a run to new all-time highs.
Yeah, I mean, and I know we'll get into it, but I followed Nick into an SPX year-end kind of trade a couple of weeks ago now, where we just basically did an iron condor in SPX right around the expected move for December 31st. And as of today, I'm definitely taking a little bit of heat to the upside. I'm trying to peel off my put spread, but yeah, definitely getting tested out there. And I mean, I don't have a car, so the oil thing hasn't really helped me at all, but the eggs have definitely hurt me as somebody who eats a lot of egg bites.
I'll tell you, I don't see this. I just bought a pack of 18 eggs the other day for, I think, like $3.99 at my local ShopRite. So this egg inflation, I guess, is not in my neck of the neighborhood, which is great because I eat 3 or 4 eggs a day. Wow. It would be very costly to the Vecchio bottom line around here. But yeah, but we are consuming, I suppose, pet services and health insurance, and we do use water and sewage and personal care. So many of these things have gone up in price. But the overall picture is, my thesis, Katie, for this entire year has been, as long as data evolves within the central tendency of what the Fed expects, then the market's going to be comfortable continuing to push higher, even if they can't give us as many cuts as we previously hoped for, because it means it's happening for a good reason, right? The economy is growing. The labor market's still healthy, and we really need not be concerned. These data points, they're not really all that concerning, which I suppose is why when we turn our attention to the stock market here today, we see a jump to all-time highs again, at least here in the NASDAQ, sitting up at the session high, which is 21,795, so 21,786 here on our chart. Does this surprise you? IVR4 right now. This is a low volatility, pretty low volume environment that seems like melt-up conditions remaining in place.
Honestly, like it really doesn't surprise me. It's, it's like, and like you're saying, tech has been super strong. Every dip has just been bought. It seems like even news that isn't positive necessarily is still like, oh, things aren't that bad, so we're just gonna keep on buying. So no, I'm not surprised, but something that may have surprised Tom is a little tidbit you told me before the show about NASDAQ. Do you want to brag a little bit?
I was getting a little heat on last call on September 19th when we were asked how we were handling the move in the NASDAQ, and I said something to the extent, I don't know if it was referred to as criminally insane, but at least that's my recollection, that buying 22,000 calls in the NASDAQ for a DEES 31 expiry was, a crazy idea. Today, if those were positions that other people took alongside, those call spreads are now in the money. And we are reaching what I had lined up here in NQH5 as the topside target in this potential bullish breakout that started to gather pace in September. That gave us a move up to about 22,100. So we're about 40 points away. Incidentally, this is a roll day, or at least 1 day past roll day, because we're now at 20 days to expiration in this position. That was initially put on with 70 odd days to go. So fortuitous timing for the NASDAQ to break out the way that it's broken out here, but all according to plan, right? This is why we put the trade on, Katie.
Right.
Because this was the expectation for how the market would move going all the way back to September. And now the question is, how much longer do we allow this to run? So I want to put this back to you. You mentioned just now how nothing really seems to matter. And I kind of feel that way too, right? We just had a coup in South Korea, the French government collapsed, there was a revolution in Syria, and yet markets are just not caring at all. Is this too complacent right now as we turn into 2025?
I definitely feel that way. My opinion is that, I'm waiting for the other shoe to drop, essentially. And historically, and maybe this is just my own hindsight bias, but historically, whenever I've decided to start to, actually get long something, so say I pulled off that SPX Iron Condor and started to do some type of bullish delta trade using like E-mini futures options. The second I do that, we are correcting, and we're going to see, a couple of days of weakness, if not longer than a couple of days of weakness. So yeah, I think it is a little bit complacent. I'm, also mindful that as we go into, the year-end holidays, we tend to see a little bit thinner markets. Obviously, we have a couple of days that are half days or just not trading days at all. So I'm definitely going to be keeping my eyes out and on my positions during that time, just because I feel like we tend to see a little bit more chop during that time. But I have absolutely been, very light on positions just because I can't really justify getting long something that has already probably had a tremendous run up. But secondarily, the volatility component of it, like you mentioned, has made it tougher for me to kind of find premium selling opportunities outside of a couple of the earnings trades here and there and some of the things that I've been joining Mike and Nick in during our Thursday show.
Yeah, the vol selling opportunities in this market right now are really, really limited. Our point of focus the last few weeks has been on the fact that when the VIX is below 15, the best trade that you can simply put on in terms of average daily returns and lowest daily volatility returns is simply being long the market. And that could be long futures, it could be long calls, it could be long call spreads, some variation of that depending upon your risk tolerance. And now it feels like vindication here with a push to highs. I also want to give Ilya some credit here because he is my resident punching bag in terms of being a bear, and I like to rag on him for that. But even over the past 2 days of correction, he said that bears really shouldn't feel comfortable until we get below that November 11th swing high up at 21,340.75. Yesterday, we hit a low of 31,352.75. kind of close. 10 points between friends and the NASDAQ isn't really much to quibble about. And that ultimately held. And here we are now up at highs. And so, even bears right now are recognizing that this is a difficult environment to try to operate on the short side. Momentum is very positive, and dips into former swing highs, resistance becomes support. It's a stair step up type of market. Now, I think that also means that it's an elevator down type of market. That's usually how these things work. Everyone's crowded in, so we scratch and claw to the upside.
Yeah.
Maybe it means that because it's so dry outside, it's a good time to buy that flood protection. But as for me, the day's news is all about taking profits on the NASDAQ. So I think we could just do that here, Katie.
Yeah.
This has been a really good run. We're 50 points away from the longer term target, but we're at the expiry roll window. So we held it through because CPI is CPI, but rattling off a trade where the risk to reward was about 4-1 going in, and we're taking about 3-1 overall. Happy to get filled on that. Happy to take this and take the ball going into the holidays here. The S&P is in a very similar position because, like in the NASDAQ, we were operating on the basis that this was a market that would be breaking out and moving up to about 60 to 6,000 here. The long call spread, long 6,000, short 6,200, has been a well-bearing fruit tree in recent weeks. But again, we're at 20 days to expiration, and as we're at the peak of the decay curve, we want to close this out too, and we'll try to explore opportunities to get long the market, I suppose, on the other side of my trip to Boston, Katie, because I'm out tomorrow and Friday. But right now, it's all about positioning into the new year and thinking about what level of risk you want to carry into 2025 after what I think has been a spectacular run up here in stocks that could very well continue into next year.
Yeah, and speaking of that too, like I kind of mentioned at the top of the show, it's been a while since you and I have really chatted about your trading approach. And I know obviously quite a bit about your background. We've worked together for a few years now, but talk to me about, I'm just looking at your chart setup, right? And yours is just so much different than mine, where I've been born and molded by the Sosnoff Batista conglomerate around here, if you will. So before we keep going, walk me through in a nutshell, how you approach your futures trades and your futures options trades. And, I've noticed you had on some spreads, of course, but what is your kind of mix between just doing outrights in minis and micros versus when you're trying to integrate probability with the futures options?
So I'm ticker agnostic first and foremost. There are obviously different relationships that various products have with volatility. Like there is a spot vol bias within stocks that doesn't exist, say, in precious metals. That relationship might be inverted, in fact, there. But understanding that we can be ticker agnostic anything, we can have a technical drive to it, and then we could use our volatility overlay, which is to identify the right type of approach to that given market. So if volatility is really low and the technicals are positive, we know that the average daily return, if you look at various option strategies, things that you can actually test here now in the back testing tool in the platform, right? You can see that the best type of strategies in certain environments are XYZ.
Mm-hmm.
And so if the technicals are there and the volatility environment's there, it's just about finding the tool out of the toolbox that fits. Now, the way that I've been doing this in stocks for the past several months, same thing for gold, has been looking at out of the money opportunities when volatility is low, where you're looking at a 25 or 30% probability of profit.
Okay.
Basically risking 1 to make 4 or 5. And if those hit, you can structure the next trade such that the max loss is basically going to be half the size of the previous winner. So putting a little bit more chips in, taking some, putting it in the pocket, and getting some convexivity. Being a momentum trader, though, right, I'm fully aware that at some point the chain of trades is not going to work.
Mm-hmm.
So hopefully we can rattle off 2, 3, 4, 5 in a row before that last long call trade or long delta bias is ultimately wrong. And hopefully we're profitable at the end of that momentum setup. So if it's not broken, don't fix it. And this is a market that keeps giving. So I'll continue to take on the upside for right now. And I see 6,300 in the cards heading into early 2025. So the question is, how do we do that here?
Yeah, that's definitely the question. And you raise a fun thing that I think we're going to start to announce relatively soon. But Every year we do Guess the Market. So it's an opportunity for the viewers out there, as well as all the talent here, to kind of make their quarterly guesses as to where we will be at the end of each quarter. So that will be rolled out soon for people to fill out in terms of like a form. And then every, quarterly witching, we will announce the winner of that. There's usually like Sosnoff money involved. It's a fun time. It's a fun way to kind of smack talk each other. But 6,300. Okay, so with that then, are you thinking, where did you say that was going to be, in early 2025? Do you have like more specific timelines?
Well, if the uptrend continues to follow its course, we could be there by, January 24th, perhaps.
Okay.
And there's really no reason for that to change. I mean, if we think the Trump administration is going to change things, then you maybe wait until January 21st to see where the legislative hammer and executive actions come down.
Yeah.
But until then, fiscal policy is not changing. The Fed path isn't changing. And this is going to be a really good quarter for corporate earnings. It's going to be the highest rate of earnings growth year over year since Q4 2021, which of course had the benefit of being the year after the pandemic. So yeah, earnings were going to be awesome back then.
Right.
But this is a double-digit earnings growth for the first time in 3 years, and that's something that I feel like a lot of people aren't considering when we talk about this market strength right now.
Yeah, no, that's a really valid point. And to be fully transparent, like I will join Mike and Nick in earnings plays here and there. But I have been kind of hands off in that regard, mostly kind of like what we talked about, where I've been a little bit complacent because I can't make sense of, directionality. But we've seen that a lot of times, there's been, some pretty outsized moves in a couple of names, but for the most part, I feel like I could have done more to participate in some of those earnings. But as you say that, and as we go into, the next earnings season, we're kind of dying down now. I think there's been a couple of names this week that announced, like, who was it? I can't remember off the top of my head.
Oracle.
But
Oracle was a big one this week.
Yeah. But I will definitely have some more capital on the sidelines for next earnings season.
This week has had forgettable earnings. I mean, AutoZone, I suppose, is that is a real company.
GameStop.
But that also is a real company, despite what Reddit may tell us. Adobe came out this week. Oracle came out this week. Broadcom is today after hours, as is Costco. So big day for the Costco guys on TikTok. I think it's worth going in here, staying long in this market right now. I have my protection in place from the long bond calls. If the market's going to keel over, it's probably for recession reasons.
Mm-hmm.
It's the question of how much risk you want to take. And I think that considering, this is getting a little long in the tooth, and I have my own reasons for why we could see a pullback in the first quarter, I want to keep it lighter and a little bit less aggressive than I was doing previously. So whereas before I was going 200 points wide, which in this case would be long 6,300, short 6,500.
Mm-hmm.
That would be a big swing, and that would be a great trade if that worked out. I'm just not as confident this time around. So I think something smaller, like long the 6,300, short 6,350. It's about a 38% probability of profit. So on the higher end for some of the out of the money call spreads that I like to take, but it's still sizing up, right around 3-to-1 risk to reward. And we just saw the profits taken on the last position. It was like plus $4,300. So at a max loss of 67.5 for continuing to play the uptrend, it's worthwhile to say that net between the two, if this one is wrong, we're still walking away relative winner.
Yeah, this is interesting because I mean, historically, and as you know, we have a research team here that's kind of tried to break down different approaches to different strategies. So I have always kind of set up my long vertical spreads like right at the money, right? Where you're buying a strike or two in the money, a strike or two out of the money, you're risking one to make one. However, when volatility has been like this, like you're saying, where it's been like below 15, I have employed these types of long vertical spreads that are out of the money in those volatility-based products. And I like your thinking here that, you can apply that same logic where you're kind of just taking not a shot in the dark, because you clearly have very sound logic with everything that you just said and backed up, but like you are taking less risk. Like you're risking, what did you say, like 1 to make 4 or something along those lines?
One to make 3. Yeah.
Yeah, I like applying that same logic to like these other names that are not just volatility products. So I might have to dabble in something like this as well. As soon as I figure out how to unmangle this SPX position, I've got the 61.25, 61.50 call spread. That's the part that's being tested, obviously, with us up 55 right now. I will definitely see if I can potentially follow you into something like this.
You know, the way that these markets have shaped up in recent weeks, it feels almost a little bit too clean technically, right? Where we set some highs, we pull back to former swing highs, right? Up, support, new level. Hey, former highs, now support. What did we just do here the last few days? Swung back into former highs, now becoming support. And so until that kind of cadence change, like that's kind of the characteristic of this market. I don't see anything other than what's been sideways chopped at the start of December as it looks like a bull flag, right? And a bull flag technically would mean a measured move that's roughly 60-40, we'll call it, down to 61.10. So 70 points higher, that's right up to 61.80 before we even blink, perhaps by the Fed meeting next week. Maybe that's what gets us there, the Fed meeting next week.
Yeah.
But the technicals here are still very positive. And, the pitch of the moving averages today, back positive across the board. And that is a sign of continued bullish momentum. So I can't, as I tell Ilya all the time, I don't know what you see sometimes, my friend, but I just can't justify being anything other than long deltas right now.
Hey, but you say that as soon as I join you, I'm the kiss of death. So
that's fine.
Maybe Ilya, maybe I'm the martyr that Ilya's looking for.
The hero that he needed but didn't know he actually had right in the office.
Yeah.
The flip side to this, Katie, though, is like if we get below yesterday's low of 60.39, that would be a sign that there's a potential top here, at least a short-term one. And at that point, I would say, you know what? I have so much duration left in this trade. There's going to be a loss, but there's enough intrinsic value that I can get out and kind of reposition and maybe see what happens on a pullback to the uptrend from the August and November swing lows. And maybe, hey, if we could get long at 59.70, it's better than getting long at 6,100.
Yeah, for sure. I have a related question for you. Obviously, we've talked about E-minis and NASDAQ. How do you feel about like small caps and Russell? Do you have differing opinions there? Are you still as bullish?
Yeah, so actually I'm rolling right now with there's 37 days to expiry on a long 2600, 2650 call spread. It's suffering a little bit here because it was put on through the turn of the month, but I'm really liking the price action that we're seeing in terms of, again, the characteristic of the market insofar as over the past few weeks, when we get into that 1 month moving average, it's been a place where the market has responded positively. And we did this in mid-November, and here we're starting to do it again right now, where we're bouncing off of that 1 month moving average. So if Trump has his way, the tariffs probably mean more domestic activity, and we're going to have to produce more things at home. I also think that the Fed is, we were an economy that was dealing with disinflationary forces in the 2010s before the pandemic. If we're returning back to that kind of steady state, then inflation might be lower as we move out over time. And that means lower interest rates. Even if we have tariffs in play, it would not mean the Fed has to do much more. And floating rate debt held by these, the 2,000 crappiest companies in America, as I like to joke, that becomes easier to service in an environment with lower rates. So yeah, I think the Russell still is pretty good. At least that's where my money is right now. So hopefully it continues to move up, but I'm optimistic. And I think a return at least to the highs that we had at the end of November, 2502 and 60, totally in the cards, perhaps within the next week. Wouldn't shock me if we're there before the Fed meeting on Wednesday.
Yeah, that makes sense. And the reason I kind of wanted to bring it up, not only from the fact that the stocks within are different, but also I get questions from time to time because people know that I trade quite a few futures options, and it's not something I have dabbled in very recently. And people have said, Katie, is that due to like the nature of the liquidity in the futures options and the Russell futures or things like that? And I would say like, no. I mean, if you're looking at some of the traditional expirations here, the bid ask spreads are like 50 or so cents wide, which looking at the contract multiplier for the Russell is about $25. So when you consider like how large the contract is, that's relatively liquid to get in and out of. I would just always, of course, caveat that by saying $25 is one leg. As you add in a vertical or as you add in an iron condor, that slippage can become a lot more material, especially if you're like a small Johnny trader like I am. So just keep that in mind if you're looking to kind of start to dabble in some of these futures options, that the more legs you add when you compound it with the liquidity of the futures options and the contract multipliers themselves, like be stingy with your price entry and exit, I guess is what I'm ultimately trying to say.
Yeah, and we talk frequently here, Katie, about how sometimes, while this is a futures-focused show, the futures product under certain circumstances may not be the best way to express that view, right? Like the view in the Russell may be valid, but maybe it's IWM that you head over to. Same thing for silver. Maybe it's not SI, but it's SLV that gets the action. So it's totally, we got to find the glove that fits. Again, I say being ticker agnostic, you got to be product agnostic. If you have a view you have on a particular S&P, gold, silver, find the place where it's the most cost effective to express that view, and when you have the best chance of getting out of the position when you want to get out of the position. Because if there's no liquidity there, then it's a nice bag you've got to hold, but there's not really much to it than that. In terms of the Russell, though, right, we're seeing the downtrend in place off the November highs continue. Maybe this is a bull flag. I'm going to stay long. I haven't been hurt by staying long through pullbacks in stocks recently, and I'm an if it's not broken, don't fix it kind of guy. So stay long.
All right. I'm going to definitely take a look at this. I mean, I am like my bread and butter for like risk on any given position is I usually kind of like to gravitate around that like $1,000 in spread width, just because that is right sized for the rest of my portfolio. So when I like look at the futures options in, the Russell or E-mini S&Ps or anything like that, I've got to probably do a little bit of like a tighter spread than something like you or Ilya might be doing. But there's definitely some, long call verticals if I wanted to participate in the Russell that are starting to stick out at me. Like maybe I do something like the 2575, 2600 long call spread in like the Russell where, you're risking $200 to make, over $1,000 or something along those lines, or $345 to make potentially, $2,100, like the 2575, 2625. I'm going to mess with these a little bit while we're kind of doing the rest of the show. And maybe if I do get filled, it'll be on the follow page for sure.
Yeah, and it's really all about finding the strategy that fits. The Russell has an IVR of 19.4 still, so you can make the case that selling put spreads here offers some diversification. My cat was in here, so there's all this cat hair floating around. We have like this has got to get off my face. And in the Russell, you can make the case that this is the place to sell the puts if you're going to do it in any of the indexes. But is the juice really worth the squeeze? And this. We are going into a window right now where I want to remind people, we started the month with a discussion on seasonality, and we talk about how the seasonality in stocks isn't really that great for December in recent years. Stocks have been up 6 of the past 10 Decembers, but the average return for both the S&P and the NASDAQ over the past decade has been negative. So kind of a crapshoot. You don't really lean on seasonality right now. Yeah. But for volatility, not that we ever do technical analysis on volatility, but December, January, February has seen a pretty consistent vol expansion over the past 10 and 20 years. So it feels like if I want to express a bullish equity view, selling puts right now kind of feels like picking up pennies in front of the steamroller. If I'm wrong, I'd rather be wrong small and take the out of the money upside bet than selling puts at the money or just slightly out of the or deeper in the money. Because if things go sideways, we are starting from a very, very low base in volatility, where then you get double whacked on the directional move and the vol expansion, and that becomes a much more painful trade. Even if you're expressing long deltas through and through, it just becomes a different risk profile. So I prefer not to be selling puts or put spreads right now if I'm going to be bullish.
Love it. Well, I just got filled at the 25.75, 26.25 long out of the money call spread in the Russell for the January 31st expiration. So, like I said, if we take the elevator down, we know.
And that's actually going to go there with gold too, because I have a position that's currently sitting at max loss. And even when we got into it, we were talking about, the structure being such that if it went to max loss, it would be 58% of the previous winner. And, you're got to be comfortable with that. But that's what happens when you're buying something at all-time highs. You just got to make sure that momentum trade is structured properly so you don't get caught really taking it on the chin. Katie, you and I were talking pre-show about bonds, and you said you really haven't been trading them all that much, which I got to say I'm a little jealous of, because my adventures in the bond market for the past 2.5 months have been nothing but treacherous. What's kept you away here in 2024, and what draws your interest about notes, bonds, treasuries in general heading into 2025?
Yeah, I mean, I think it's multi-pronged. I think one, historically, I learned how to trade futures with Pete Mulmat. And at the time, there were a couple of other products, I guess, that were available that made them a little bit more digestible to me. Like, one of the first bond trades I ever did was like the Euro-dollar futures, where you could set up those really teeny tiny calendars that were like those short-term, interest rate changes. And the contract multiplier was like super simple for me as a beginner to understand. And so I think there's still an element of the way that the bonds are quoted that like naturally makes them a lower choice on my list as I'm like looking to build my portfolio. So that's like just like a one, I guess, piece of it, like where it's like the nomenclature and the jargon just have like left me kind of at bay. Secondarily, I mean, looking at, the 45 day to expiration options, kind of like what we're talking about, the volatility and the premium just doesn't really feel like it's there, where I can't really make something fit in terms of like the classic tasty parameters of, if you're selling put spreads or call spreads, you're collecting 1/3 the width of the strikes. So I think I would have to, default then back to the long vertical spreads, which are something that I do all the time because they require very little maintenance. So I think those are kind of like two of the reasons. Have you dabbled at all in any of like the other, like, are you trading the futures options, or are you usually like doing like the major contracts or some of like, what do they have now? Like 5YY and what else is out there?
Yeah, they're the yield products. I haven't traded those. I've been trading the futures options in ZN and ZB this year, recently unsuccessfully. But as you noted, this really isn't the environment but for very isolated periods this year, bonds have had, stretches of really, really low vol. And so if we've played them, it's been that out of the money call perspective.
Yeah.
Recently, I jumped back in with a position here at 72 days to expiration because we had IVR. We'll look at the IVR right now, negative 0.9. It really hasn't been this cheap. That said, the technical structure is absolute crap. Right? We've lost the uptrend off the election lows. We see that we're losing the 1 month moving average. The slope of the 1 week moving average has turned negative. Stochastics just fell out of overbought territory. Not really great, Bob, if that's what we're looking at. But buying out of the money calls to me was a worthwhile thing to do because the correlation between bonds and stocks over the past several months has been negatively correlated. And so if I'm going to be a stock bull, having a small long delta position in bonds is kind of an offset, at least if that correlation remained. So getting long the 113, 115 call spread, 114, 116 call spread, yeah, it's kind of suck and win today, and that stinks. But it's structured in such a way that if it's wrong, it's a small loss. And it means probably the other things that I have on right now are working quite well. And, a day like today, of course, that's what's working out. So I'm totally comfortable with holding this loser.
Yeah. Okay, so you're long the 114, 116 in the February 21st expiration?
Yeah, and if I was putting this trade on today, I wouldn't put it on. So let's just be clear about that. This trade, this is not a trade I would put on again. Maybe that means I should get out of it. But it's not something that I have a lot of faith in. It's merely a hedge of sorts for my long equity exposure.
Yeah, yeah. No, I mean, like you're saying though, if we do see any type of turnaround, I think that using like the out of the money long options as just kind of throwing a dart, seeing if it hits, is a capital efficient way to start to involve yourself. I will say there is liquidity in these products. It's just like we're saying. So kind of to my point about the Russell, these are, one tick wide, which is great if you're looking to maybe participate in some of these different maturities that aren't just like the straight up TLT. But the premium has just not been there from a premium selling perspective for me. So I like your approach. You said you're typically trying to set up those types of trades at what, like long the 20 or 30 delta? And then just finding a spread that kind of fits your risk tolerance?
Yep. That's really it. I'm really simple.
Hey.
Really simple.
Nothing wrong with that. I think sometimes Mike and Nick try to get a little too spicy, as they say, and I'm much more kind of in your world where I'm like, I need to keep it easy on myself, reduce, management and trying to manipulate something too much because I just don't really have the time to do that. So if you got to find what fits for you.
Yeah, there's a few things that have stuck out to me over the years before we get into bonds, more of like a trading philosophy thing. I've conducted a longer term study a few years ago of the trading strategies that I used and the timeframes in which those strategies were executed, right? Is this a scalping strategy, intended for just day of? Is this a swing trade for a few days or a few weeks, few months? And I saw that I'm a garbage scalper. I don't have any edge there. My win rate is below 50% and my average loser is bigger than my winner. So I stopped doing that. And guess what? I became a better trader by, cutting off the appendage that was just kind of flailing there in the wind and dragging me down. And so I've also done this with the strategies because of my longer term macro bias that I have. Mm-hmm. Trying to be too complicated about this often costs me. And when I keep it simple and adhere to a long enough trading window, 2 to 3 months out, that's kind of my sweet spot. So that's why I kind of look, if I'm doing the out of the money call buying, I want that 50, 60, 70 day window, if possible, as opposed to if I'm doing the put spreads, that's the typical Tasty methodology, 45 and 21 out.
Yeah. No, makes total sense. So with that then, like, what is your thinking here? Because for people that are maybe a little bit newer, there's like an inverse relationship between these products and actual like rates. So walk me through, like, you said you're trading like the ZBs and the ZNs, but like, what are you thinking, especially like I said, as we enter kind of a new administration and as when's the next Fed announcement? Like next
Wednesday.
Week? Yeah. So what are you kind of thinking going into next Wednesday and then beyond?
I am lost in the sauce about bonds. And I think I've said this before here in the short term. I'm just CME rate cut odds for December up from 89% to 95% today. That's good. We had a 10-year bond auction or 10-year note auction today with a really good result. The bid to cover ratio was 2.7. It was up from the 6-month auction average of 2.55. When you have an auction like that with high bid to cover ratio and you stop through, it means that there's high demand for a bond or a note. And in this case, we got exactly those things today, a reduction in, or rather a bump in the Fed rate cut odds. We had a really good auction result here. And notes are just taking it on the chin right now. Mm-hmm. So, if you told me this was the setup going in today, I said, yeah, notes and bonds are going to be up. I'm glad I have my long exposure. And here we are at the lows of the day. So the heck if I know, Katie. I don't have much faith in a significant rally at the long end of the curve unless you see recession coming. And the fact of the matter is, regardless of who's president, Congress is going to give us a continuing resolution to start off the year.
Yep.
That means there's no change in fiscal policy probably until March at the absolute earliest. And the Fed is going to have given us another rate cut by then, maybe 2. Mm-hmm. That the next few months, nothing really changes from the market in terms of that outlook. So I don't know how bonds can sustain a rally unless the government stops spending money, which we know they're not going to do at least until March.
Yeah, no, makes complete sense. I think you've started to to resurface this need for me to start participating in here, if not for having built a more diversified portfolio. So I will be looking at both ZN and ZB, like you're saying, even though you think that there may not be as much movement on the long end of the curve, which is kind of where those two sit.
I would love a spike in vol to get to like the mid. I would love a spike in vol where we can either trade back down towards the lows to sell put spreads down there, or to put up an iron condor against the 6-month high-low range.
Mm-hmm.
And anything other than that, I am operating in like a suboptimal level of circumstances in bonds right now. And, you know, I said jokingly before, fade me, Katie, the single best strategy for bonds the past few months has been fading me. So if you see that I have long deltas right now, maybe don't do that.
Maybe think differently. Yeah. Well, I'm also just really interested in some of these like 10Y and like the 5YY and those products, just because I think the buying power is relatively capital efficient. I mean,
much
like
smaller.
$350 for, you know, the 2YY and like the 10Y as well. So perhaps if the premium's not there, maybe those are another way to participate with some more static delta, and they're treated more as, I know you said you're not a scalper, but like almost like swing trades where you're holding them a little bit longer in time than flattening every single day. And I need to pick up my little book and check those out a little bit more, because those fall into my wheelhouse of trading a lot of like micro futures, which I do also tend to do.
Yeah, you mentioned the micro futures, the much smaller products than the notes. For example, ZN tick value is $15.62.5.
Mm-hmm.
Overnight requirements $2,200. The micro 10-year yield, the tick value is $1. Overnight requirement is $3.52.
Yeah.
Katie, we have 15 minutes left here or so, and we got to end a little bit early for Truth or Skepticism. So we're going to speed run gold or other metals, energy, and FX.
Yeah.
But let's talk about being in the right place at the right time, because gold here today is up by another 1.32%. Yesterday, we decided to buy the breakout in the GCJ5 contract, structuring the trade in a manner that we would see a return to the all-time highs sometime within the next 77 trading days. And so with the last 2 days of gains, the position is beginning to move up very quickly, very neatly. I am particularly encouraged today because we clear out the high that we have here on the 25th of November, which, having previously moved above the 20 seconds high and then closed below the 22nd low, that was a bearish outside engulfing bar, or key reversal, if you will. And so that represented significant resistance on the chart. And we could see actually here after the election on November 7th, we tried to get back through that area right around 2760, 2780 here in GCJ5, and we failed. So now we're through that. And now when we go back to our chart with the analysis on it, this looks like a symmetrical triangle breakout in the context of an uptrend, which means we should be going back to all-time highs relatively soon. China, by the way, is buying gold again, which is good news for us folks. So long gold. And volatility is going up again, by the way, Katie. You'll love to see that if you're long calls.
Yeah. Well, in the same way that you were saying that, you know, the best bond trade was fading you, I think the best gold trade was probably fading me, because I have been, not recently, but obviously just the entire year has just been nothing but up. So I have been sitting on, you know, short call spreads, very small, very narrow, like I've been kind of saying, because I know that this thing displays call skew, which is one of the few products that, you know, actually shows richer call premium historically than put premium. So yeah, I was on the wrong side of this. But if you're saying, you know, all-time highs, and or we might continue to see a little bit of bullish action in here, I might have to follow suit.
The first leg still, the way that we've been trading this, Katie, there's a breakout here, so we got long. There was another breakout here, so we got long. We took profits back at the end of October and rolled the position into like a new call spread, which is still on.
Mm-hmm.
It was trading at 15 cents yesterday. It's now worth 50 cents. So maybe, just maybe, we'll be able to take this off as not an absolute loser. That said, I'm going to ride it into the ground, because worst thing that happens is it continues to rally and gets really aggressive to the upside, and I can make some more money back on this, or I lose the remaining 50 cents. But for GCJ5, that position is going to be held through the holidays, even if I'm not trading. That's why it was structured with 76 days to expiration. But the technicals here are reinforcing this breakout now. And that makes me feel really good about gold. It makes me feel really good about silver prices. Even though they're only up by 0.1% today, that's still building out of its double bottom, out of its downtrend break. Gold, silver, and even copper, they're holding up right now. So I think metals are giving us a signal that maybe we should be thinking about higher prices moving forward.
Yeah, I've definitely started to, at Thomas's guidance, we've done a couple of copper trades when he has been on the Options Trading Concepts live show. I have not dabbled in anything recently there, but I do believe there is like also a micro copper contract that people can participate in. So if you're looking for something that's a little bit more bite-sized, I believe MHG, yep, and it's, let's see here,
$1.25 tick value, $9.90 overnight buy requirement.
$1,000 in buying power. So kind of richer compared to some of the other, contracts we've been discussing, but a little more digestible than the major contract. But I think what I might be doing if I do want to go a little bit omnidirectional in gold is I might actually lean into that idea of the call skew and look at like a broken wing butterfly in the gold futures options where, if it stays where it's at, you'll still get paid. But if we actually do drift up to, some level, that's where, the peak of your max profit could be. So
that's a good place to have some max profit. Energy swinging higher here. Katie, this has been a place where I have had little to no exposure in recent weeks. I really don't like tight ranges, and I would really like to see this range do something before I take any bets. It's only a 12 IVR as well. Just kicking the tires here. What about like a reverse iron condor? Something that just says we're going to play the volatility. It's going to
just
expand
from one side to the other.
It's just got to go somewhere. So why not just say it's going to move from here? We're at $70 exactly at the midpoint of the range. Surely we're going to go outside of this sometime soon, right?
Yeah, I mean, I feel like we have to. And like you're saying, like there's just so much on the horizon in terms of change. I think that like a reverse iron condor or, a reverse iron fly where you're actually got your longs at, it's a little rich, right? But like you've got your longs at that straddle price if you wanted to just be a little bit more divisive. Definitely very interesting plays. I also have not really been participating too much in here other than waiting for when we see, continuous days of strength or weakness where I feel comfortable throwing in a short put spread or a short call spread.
Reverse, here's your fly. It's basically a 1-to-1 risk to reward. CLF5 might not be the place to do it for most people. That could be USO or over an MCL. But it's been a trade that actually we were looking at yesterday as well. I think I called it a reverse iron condor yesterday. I don't know what I was thinking. It's a reverse fly. In any event, crude here giving us something to work with perhaps. Natural gas is bumping up as well. This is a really difficult market to trade right now. And I only point that out not just because volatility is really, really low, which perhaps makes getting some exposure uniquely cheap. We see that the summer-winter month spread has flipped for the earliest in 9 years. Typically, that Widowmaker trade goes into next year when you get the bump. But now that we're in contango this early, it's, I got to say, natural gas is already exceptionally difficult to get a handle on. And we're in uncharted waters, so to speak. I don't know. Not for me, not on this Wednesday, Katie. Do you have anything going on in natural gas?
Not currently. I definitely will play the extremes in there very regularly just because they are liquid. It is a more suitable option for me than like something that has drag like UNG. And they are liquid enough to do like the verticals and things of that nature. I never go naked in natural gas. I will say that, like just due to the velocity of how it moves. But yeah, I'm also, if we get back down to 3, that'll be interesting to me, but like right now, I don't want to play like a range bound trade with an iron condor.
No, it's just the juice ain't worth the squeeze right now. In the world of the dollar, I have to say when I wrote this an hour plus ago, the dollar was on losing ground. It was losing ground post CPI. That's turned around here as bonds and notes have faded over the course of the day, sitting near session lows. Dollar's now up across the board. including against the Canadian dollar. BOC gave us that rate cut as we expected, as the market was expecting, fully priced in. But this is an interesting setup now here in the euro because it looked like an inverse left shoulder, head, right shoulder, clear neckline. Couldn't quite do it. Now we're breaking the uptrend off the lows. The pound is showing us a very similar technical cadence here where we're trying to get back up through the swing area on our chart, and we're not quite able to do it. And so we take a look at our pound uptrend. That may soon get pressured. The dollar is really reemerging here as, with a lot of significant strength over the course of the session. That may become a drag for equity markets, as we typically see. Sometimes too much dollar strength bothers people. But across the board, yen uptrend off the November lows. That's breaking here today. Euro uptrend off the November lows. That's breaking here today. So the talk of the dollar's death may be a little bit early. I still have on those long 0064 6J puts that we purchased back in September. And hopefully this is now the beginning of those moving back to in the money, as opposed to having slipped out of my fingers in recent weeks. Katie, we need to get going, though, because I know Tom and Radigan, or Dylan and Sosnoff, I guess we'll use a first and last name mix, are due up here for Truth or Skepticism. Tomorrow, the big thing, watch out for the ECB rate decision. There's also a 30-year bond auction in the afternoon. As we do at the end of every one of these shows, check out tastylive.com, top banner, Learn Beginner Futures, where you can find a coursework put together by the fine folks on the Tasty Live research team. Today we're talking Introduction to Futures Margin, but this briefly because Tom and Dylan are coming in. So click the blue link here at the bottom of the slide and go there directly so you can learn more. Katie, it was a pleasure to have you on. We have to do this again. I'm so grateful. Maybe more than an annual thing, so we don't need to wait until next December to hear from you again.
Yeah, I'm
That'd
down.
be awesome.
Yeah, it'll be great. I'm looking forward to it. And you've really opened up my eyes into approaching some of these futures options in a different way. So thank you.
Hopefully we are both right. Hopefully bonds work out for both of us and that Russell trade as well. But for Katie McGarrigle, I've been Chris Vecchio. Stick around, folks. After a brief break, it's Wednesday. It's time for Truth or Skepticism with Radigan and Sosnoff. See you there.
Peace.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
How can you trade earnings if you think it's going to be a volatile period?
It doesn't matter what you think. It matters what the market's already telling you. The volatility is already priced into the options. If you think it's going to be volatile and the market doesn't think it's going to be volatile, then you probably don't want to trade earnings. because the market's already priced in very little volatility. A wise person trading options would accept the market prices over what they think. It's called efficient market theory. And under efficient market theory, everything that's known is already priced in. So it doesn't mean that you can't be right directionally or guess right or anything like that kind of stuff. But it just means that if the market's pricing in low volatility, then accept that. If the market's pricing in high volatility, accept that.
Is there a volatility level that you like a minimum of for earnings?
Well, I would think you'd like a minimum level of high volatility. Like if you're trading something that is stock with low volatility, high volatility might be 30. If you're trading a stock with high volatility, low volatility might be 100. You can't answer that question without looking at IV rank. You want a minimum of 30.
First, tastylive united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other tastylive traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Hello, everybody. We are back. I'm Tom Sosnoff. I'm here with Dylan Radigan, and this is Truth or Skepticism. This is our Wednesday podcast. And how are you, Mr. Radigan?
I'm really, really good. We were assigned a topic, but I'm going to deny that assignment because I was walking earlier on the street and I was thinking, because you sort of get comfortable because like you're my friend and I've known you for a long time and I'm your friend and you've known me for a long time. And so you're just like, oh yeah, it's Tom or it's Dylan or whatever. But, we're both rare and unusual and exciting men. We've got very rare and unusual and exciting life experiences. And I think that's why we're able to have a discussion that's as interesting for some people and try to be helpful to other people when we and share things and all the rest of that. And so I was thinking, what would be I was like, man, imagine I only had one chance. If I could remember, I was never going to talk to Tom again, God forbid. But imagine I could only have one, like talking to the Pope. Like you got one meeting with the Pope. What would you want to talk to? Like, what do you really want to talk about? And I was thinking, what's the most important life skill? It's because it's really like how to live, right? At the end of the day, it's about, the children and your friends and your parents and the nieces and the nephews and the employees and the people of the world. And what are the fundamental schools for life? And one thing that I was thinking about that I think is inherent, especially in somebody who has success with trading, is the mental ability to deal with setbacks. When things that you want to happen, that you need to have happen, that you hope to happen, whether it's a trade, obviously, but also it's the job that you wanted, it's the situation you were hoping for, it's the, whatever, something you wanted that you didn't get, which is a universal life experience. And there's nothing more sort of like that you wanted that you don't get than, I bought a Tesla and the trade went again, got blasted right in the face, and I went from $10 to $5 and whatever. And so and because losing is such a standardized part of trading, I thought you might have some insights on the mental experience of dealing with setbacks. And so I wanted to. That was my sidewalk conversation with myself. Was I said, I wonder what Sosnoff would say when asked to teach a young lady or a young fellow in this world, how to deal with setbacks and not get too derailed by them?
That's an interesting question because I don't know that I've been asked that question. I've been asked a lot of questions in my life, probably too many. My immediate response to that question is the only way you can learn to deal with setbacks is to experience lots of setbacks. Because learning to deal with setbacks is very much like learning to deal with success. Learning to deal with failure is a big part of success. And I think one of the things that holds a lot of people back in this world from all the successes that they should have is not having enough failures. And so the most important response I think I can give is that the surviving an incredible number of failures is really the key to success. And when I say surviving, just dealing with it, handling it. One of the things I love about trading is that you are forced to have so many, if you trade a lot, you're going to have so many losing trades that failure, or a losing trade, if you want to call that failure, it's not failure, and it's not a total failure. It's just, there are failures along the way, there are setbacks along the way. And I think that teaches you a real skill set, how to deal with everything, how to deal with so many, negative situations and adverse conditions. And I think that, the number of failures, we did an entire tour once of the whole country called, a bad trader tour and good trade, bad trade. And a lot of it was just talking about how important, certain situations are, certain situations which create nervousness, panic, failure, fear, and how important that is to, ultimately to your ability to be successful and to make lots of good decisions. So I don't think it's the most important. If you asked me what is the single most important or the most important key to success, my answer would be longevity. But if you ask me how to deal with certain situations and certain failures, the answer is create a lot more failures. Create as many failures as you can in your life, and you can deal with anything.
With the contradiction, the sort of the paradox in that being that the single greatest barrier to longevity is too many setbacks.
Are outlier setbacks. You can't have. There's no such thing.
Or
as
yeah,
too many.
Okay, but a failure that is so substantial that it prevents staying in the game.
So I've had millions. I think maybe it's not millions, but hundreds of thousands of losing trades through my career. Some of them big, some of them small, but lots of losing trades. Some single digits, some 7 digits. So crazy losses. But in the end, all of that has made me stronger. But what has my most successful trait is that I'm still around, and longevity is really the key. So I will argue that, that a lot of times we don't even realize what we have until much further down the road. So longevity is the key to success, but the key to dealing with failures is just creating more failures.
And so I think that the issue is when you look at humans in general, that they tend to overemphasize the consequence of a given event.
Yeah.
Whether it's assigning it to a specific trade, or if I don't get this specific job, or if I don't get this specific house, or if I don't get accepted to this university, or if this one Tesla trade doesn't go my way, that they pick they focus on one or a small number of outcomes and view that one or those 2 or 3 outcomes as existential, as essential to their existence, as opposed to as one of thousands, or in your case, hundreds of thousands of events that they're going to be exposed to over the course of their life.
Sure.
And because people don't, they're like, I don't want to have 1,000 event exposures or 100,000 event exposures and lose on 2/3 of those events, whatever they may be. I want to pick events, and then I want those events to be beneficial to me. And I'm going to do it. And people make the decision making is more, I'm going to reduce the number of events that I expose myself to, and I'm going to manage my position with the events that I expose myself to, such that I get positive outcomes with the small number of events that I choose to expose myself to. I'm not going to apply to 100 colleges and see what happens. I'm going to apply to 1 or 2 or 3 colleges. I'm not going to apply for 100 jobs. I'm going to apply for 1 or 2 or 3 jobs. I'm not going to ask 100 people to marry me. I'm going to ask 1 or 2 or 3 people. And I think I'm sure you would agree that it's human nature to reduce the number of exposures for those types of events in a way that's different than, for instance, trading. But even with trading, you're like, I'm going to buy Apple stock, or I'm going to buy Tesla, or I have this one trade that's the whale. You know, how do you manage that human instinct?
I'm not sure that you do. I mean, I don't know. I don't know.
Do you agree that that's my point is, I think that's the greatest barrier to extended duration on the playing field, is that the instinct, instead of saying, okay, well, I'm putting this exposure on, if it doesn't work out, I will still be okay. As opposed to, if it doesn't work out, I will not be okay, which I feel like is a common mental trap.
That's what longevity is. That's what longevity actually is. That's kind of the definition of it, is being able to, you know, either having the discipline or the smarts or the understanding that you have to show up tomorrow. You know, one of the common denominators that you'll see when there are failures is that people tend to overextend. And when you overextend, you don't have enough of a cushion to be able to, recover. And in the end, you get really mad because you're like, I had the right idea, I just couldn't hold out long enough. And because nobody can handle the timing of different events is so damn hard. Yeah, I think that's one of the skill sets that you build, is understanding. It's just understanding. I mean, I hate to say size, but just understanding, how to allocate your resources. Regardless, you have to you have to understand that time is, everybody's usually right about everything. It's just the timing that's off. And so you have to appreciate that your time, that you can't always be, your timing can't always be right.
Bezos recently said that human beings tend to overestimate risk and underestimate the size of, they tend to overestimate the future risk, which obviously the options market would reflect that, and tend to underestimate the size of opportunity. Do you agree with that?
Well, if you're Jeff Bezos, I for sure do. I mean, that's the story. That's the story of his life. And, when you, I mean, you don't have to look very far to say that, yeah, I mean, he's a walking, talking example of somebody that can, that proved concept that way. But I agree with that. I agree with that wholeheartedly. But, it's easy for me to say because it's worked out. It's easy for him to say. But, I think it's a lot harder to practically apply that. It's very difficult.
You're saying because if you're in the scarcity of resources, staying involved or staying philosophical is a luxury you do not have.
Yeah, and I'm not saying, listen, with Bezos, to be fair, it's not like he came from he didn't come from a lot of money, my understanding. I mean, he pretty much built everything up from nothing. We kind of did the same thing. So it's doable. I just don't. Yeah, I mean, I like that saying for him. I like that saying for a lot of people. It's true.
Does that apply though to setbacks and failure?
I don't know. I mean, Obviously,
In other words, is it a reason to take more risk? Should we be taking more risk in general than we are?
Of course.
As human beings.
Of course.
Should we be putting on more trades, applying to more colleges,
I mean,
asking more people to marry us, applying for more jobs, switching houses more often, just doing more risky things than we are doing?
I think in general,
as a general population.
In general, there are certain cultures that have that approach, and I think one of the foundations of the American dream is essentially that. You know what? Give me the risk. Give it to me. I want to take the risk. Give it to me. I mean, I don't know that if in 2024 risk is at the top of everybody's, wish list or at the top of their to-do list, but it should be.
You talk about America, and America obviously has lots of sort of position in the world in terms of its power and status and notoriety and all the rest of that. In fact, there's a term, there's a phrase that is spoken amongst the people that is that it's called, I believe, American exceptionalism. American exceptionalism.
You like that transition into American exceptionalism?
It's what I do. It's what I do.
Yeah.
And so, in order for America to be exceptional, I would think that the statistics should be exceptional. That there would be more other nations that might implement similar systems to America because America's systems are so exceptional that other people want to implement similar versions of the American system because of the exceptionality. Or that the performance in core components of life might be at or among the best in the world in most categories. Why do you think that there's, on the one hand, this idea of American exceptionalism, but on the other hand, there's limited desire to replicate the American system in other governments and the American core sort of social statistics, whether it's life expectancy or healthcare spend or math, passing the math tests or whatever, tends to not even be in the top, 50 in many. Like it's not even, forget the top 10. Like the America tends not to score very well. I mean, tends to score quite poorly when it comes to life expectancy, math testing, healthcare spend and results, whatever. I'm just interested in it's another sort of paradox, if you will.
Yeah, no, I understand. The concept of American exceptionalism is really fascinating because, first of all, it may just be an American thing that we think we're exceptional. That could be one thing. I mean, there could be people all over the world that say, screw you. I don't think you're so exceptional. I've been there. I don't like it. I would never want to live there. I don't feel safe there.
So it could be just a delusion of like a local delusion. It's like the hometown hero from Saranac Lake. Like as long as you don't leave Saranac Lake, you're the big man.
Yeah, I mean, I'm not so sure that we go anywhere in the world and they're like, wow, like I don't think if you took a poll walking down the street, man on the street in Moscow or St. Petersburg or in North Korea,
or Milan, or Berlin, or Munich, or Paris,
or Singapore,
or Barcelona, or Tokyo, or Singapore.
Yeah, and I'm not so sure that if you did the man on the street there and you said, what do you think about American exceptionalism? Their answer would be, oh God, yeah, I want to be. I don't necessarily think that's going to be the answer. I think we have this idea that we're special. So the first thing I'll note about American exceptionalism is that it's Americans that think they're exceptional. It's not the rest of the world. Okay, so let's be very clear about that. That's an essential point.
I believe that's an essential. I think that's an essential distinction you're making.
Yeah. We think there's such a thing called American exceptionalism, but I think in Singapore right now they would say they have Singaporean exceptionalism, and I think if you went to Australia, they'd say they have Australian exceptionalism. So that's one thing. The other thing is that I think that the trade-off is that in America, there's lots more risk and there are way fewer safety nets. And so just like in trading where the more risk you take, the more reward you get. In America, the more risk you take, the more reward you get, but you also have a lot more downside in America because we don't have the same safety nets. If you blow it all or lose it all, there is no social network that's going to keep you, social service network that's going to keep you up there. It's not the same thing. We don't have the same health services. We don't have the same employment services. We don't have a lot of the same social security type net that they have everywhere else around the world. And because we don't want to pay for that, because we want to put the money back into growth instead. And so it's a very different choice that you have to make. And again, if you're born here, it's not really a choice that you make. It's just, this is who we are. I'm not so sure, that everybody else in the world doesn't necessarily thinks that our system is better. There's only one thing for a fact: there's more opportunity.
Mm-hmm.
You can't argue that there's more opportunity here than anywhere else. That I don't think you can argue. But the cost of that opportunity may be way too great for most people, and they have become comfortable in the systems they're in. Now, I think you're going to see over the next couple of decades, everything is going to begin to mesh together, and there's no reason that China is going to be very different from the U.S. That the U.S. is going to be very different from Brazil, and Brazil is going to be very different from Russia. Everything is going to start to, with global borders essentially coming down, and it's going to be very difficult to protect dictatorships. It's going to be very difficult to protect economies that aren't capitalistic in nature or not free in nature. It's going to be very difficult to protect governments that don't really have democracies. It's going to be incredibly challenging, and I think you're going to see a big kind of a global mesh of everything come together. I don't think there's going to be, I don't think the world's going to look like it looks today economically 10 or 20 years from now. I think there are going to be a lot of similarities. I think marketplaces are going to be tokenized. They're going to be universal. They're going to be.
What does that imply about national currencies? If your prognostication is correct, which I don't disagree, but I'm interested in where does that leave the dollar or the euro or?
There may be a dominant currency. I don't think we necessarily get rid of like fiat currency, but I do think there may be a dominant currency. We don't need 190 different currencies.
But are you a crypto enthusiast, or or do you think that my issue is I feel like the United States government, and for that matter, other governments, Russian government, Chinese government, European government, that they like controlling their currency. That is a first principle of national security is to control your currency.
You would have thought that, but with the euro, there's been kind of an experiment that's been going on now for 2 decades, and so it would be, it's a reasonable. You can say that there's enough experience now with broader currencies than that you can at least make the argument that it's possible. I mean, could I see the dollar
to have a supranational currency?
Yeah,
that the euro sits above Italy or France or Germany or whatever.
Yeah, I could see a world where there's instead of 180 currencies, there's 6 or 7 or 10. I can see that, and one or two could be digital. I don't see a world where everything is digital, but I don't know.
I mean, again, I just don't, because I agree with you in the sense that I think global borders are coming down. That's self-evident. It's not a matter of agreeing with your opinion. It's just a matter of how quickly and to what consequence, I guess, is the discussion.
Yeah.
Obviously, global integration is underway, and I think one of the consequences has to be it has to be resolved in the currency market.
I mean, the danger for the US is that when you're sitting at the top, as far as your currency is concerned, and as far as your marketplace is concerned, that you can be disrupted by the rest of the world because, you're only 350 million people, your GDP is massive compared to the rest of the world, but in the end, you're ripe for disruption. Okay, that's one thing, because you're relatively, every country is relatively dysfunctional. So you're ripe for disruption. The other side to it is, can all these other countries actually get along to figure it out, how to disrupt the US? And are they going to blow their brains out in the process of trying to disrupt the US? And I don't think anybody knows the answer to that. That's a huge challenge. The US has to avoid getting disrupted, and everybody else has to figure out how to actually do it, which is almost culture shock, because you have to change everything. And it's never been done to date.
I'm a little lost. Who you has to change everything? You're saying for the U.S. to no longer be the most powerful. I mean, because England was the most powerful country, and then it wasn't, right? I mean, this has happened.
That was a long time ago.
It has still happened. I mean, Rome was the most powerful country, then it wasn't.
Yeah,
I think it's more likely that the most powerful country stops being the most powerful country than that the most powerful country perpetuates infinitely. I mean,
well, of course,
history suggests that
statistically speaking, history suggests that is the case.
It's a 0% chance.
Right. But the U.S. has held on to it for a long time, and at this point, there are no challengers. Challengers have self-destructed. Russia self-destructed.
Yeah,
China self-destructed.
No, you don't. Yeah, I got.
Yeah,
that.
there's no challengers right now.
So does American exceptionalism exist outside of the American brain? Outside of the
it does in the capital markets. I don't think it does socially at all. I don't think it does.
It does in entertainment.
It does. I'd say in entertainment.
Right.
I'd say
in
it doesn't.
Technology.
It does in technology. I'd say it doesn't exist in education. I would say it doesn't exist in healthcare and social services. I would say, so certain things like that, I don't think it does exist. As far as innovation, as far as technology, as far as capital markets, it exists. Very much
Silicon Valley, Hollywood, and Wall Street are the big three.
Silicon Valley, Hollywood, and Wall Street. And I don't know how big a role Hollywood plays, but yes. And I would also say there's one
economy.
more.
It's a dominant economy, right?
Yeah, there's an innovation factor that as well, because there's an incubator mentality in the U.S. that the funds that flow into incubation for new companies is more than the rest of the world combined.
The funds of in the United States for sure. Yeah. I mean, well, the American capital markets are bar none, right? Not to mention, supported by the reserve currency. I mean, so you have the bulletproofing of the currency, plus you have the most aggressive risk culture in the world. Like there's no place else that even comes close to it.
Yeah.
But I find the thing that I find interesting, and we won't resolve this here, is whether one has to forfeit is it necessary to forfeit your education and healthcare system in order to excel in your innovation and risk systems? Like, is that just a justification of how it is right now?
Well,
it's like we were talking about. Do you have to sacrifice the old people to take care of the young people, or can you take care of the old people and the young people?
Well, in the
U.S.,
U.S.,
have to sacrifice health.
In the U.S., we've sacrificed education and we've sacrificed the old people, and it's worked. We've essentially, much of the success isn't spawned in academia, and we definitely don't do a great job of. The priority of taking care of older people it's not a priority in the U.S. Period.
But do you think that's a prerequisite in order to have cutting edge technology?
How is it a
Or do you think-
prerequisite? We don't have any of that, and we lead. So how could it possibly?
No,
be
I'm saying, is it a prerequisite to sacrifice those things in order to lead in technology? Or is it just an excuse because it's how it is right now?
It's a good question. It's probably a little bit of both, but it's probably more of an excuse. It's probably more of an excuse, but we definitely, in the U.S., we sacrifice a lot of things that a lot of other people feel is very precious to their ecosystems, and we just don't. You know, we don't put the same emphasis on education. We don't put the same, emphasis on family. It's just not the same thing here. Period. And anybody that says that it is, it's not even close to true.
Sure. I mean, yeah. I'm kind of drifting a little bit, but I feel like there's a podcast recently. A clip of a podcast, I guess, that I saw that was Jon Stewart was talking to Bernie Sanders. Okay, so these are sort of classic left wing ish human beings, at least in their public lives. Take it for what you will.
Sure.
And they were talking to one another, as you and I are talking to each other now. And Mr. Stewart was saying to Senator Sanders, I find myself in a strange position because RFK Jr. will say something that I agree with, like there's poison in our food system, or the something of whatever, or Elon Musk will say something that I agree with, like the government is ridden with waste and fraud and you do all these things. But if I say those things, this is Stewart talking, if I say I agree with Mr. Kennedy or I agree with Mr. Musk regarding this idea or that idea, waste or health or whatever, that I immediately find myself under a grave attack from my existing sort of audience, and he asked Sanders whether he has the same experience, where do you find it strange sometimes that you're listening and you're like, I kind of agree with what Musk is saying about this thing, or what Kennedy's saying about this thing, or whatever it is. And Bernie and Sanders said, I do have that experience. And that I think that one of the big problems is that we're not able to talk about good ideas or bad ideas because we're sort of imprisoned by the identity of who says the idea. And if the person with the identity that you don't align with says an idea that you do align with, that you have to line up with the identity, not with the idea.
Yeah, it's a difficult thing. If you think somebody is a racist and yet they say something about something else that you agree with, does that make you a racist? Or can you separate that?
Or if Robert Kennedy says, I think that we should have better food in the schools and in the grocery stores and in general, healthier and more nutritious food, does that make you anti-vaccine?
One of my favorite funny stories is I was listening to the radio one day years ago, and I was listening to Stern, and he had just gotten divorced, and he went out with somebody. He goes, the good news is I felt she was really attractive, and I wanted to sleep with her. The bad news is she had a swastika on her shoulder. And as a Jew, I didn't know what I should do next. It's the same thing.
Like the Curb Your Enthusiasm with the Palestinian chicken.
Exactly, the Palestinian chicken in Curb Your Enthusiasm. It's great, one of the greatest scenes ever. Loved it. With the yarmulke and the Palestinian chicken. Yeah, it's great.
That's right.
And Larry David was a master at that stuff. But yeah, it's kind of one of the challenges of American exceptionalism, but it's also one of the beauties of America is that we have that crazy challenge, and that I love my Tesla, but I hate Elon Musk. What do I do?
Or I agree with Elon Musk that the government is a wasteful organization, but I hate the fact that he's working with Donald Trump, who is a con man from New York.
Exactly. So what do you do? So I mean, these are you know,
these are what?
I mean, these are challenges. We have it on Tasty. We go, people will write to me. They go, you know, Tom, I love you, but I hate your political views. But I love your financial views. You know, I get it all the time. It's okay. I'm like, in finance, we can cross those lines and we can get through that. In other places, it's very difficult. In finance, I actually wrote a cherry bomb on this a couple weeks ago, and I said, you know, finance crosses those lines. It allows us to be, you know, it allows us to all come together on the things that we really love, and the other things, you know, we just deal with it. But some people can't get past that on other things. That's all. But that is part of what makes America really special. I don't know whether it's exceptional or just special, but that's one of the things. Is that
well, as an apprentice? All right, go ahead. I'll let you finish the
No,
thought.
I'm done. I'm done. Go ahead.
Well, as a well celebrated and admired apprentice of the British parliamentary system, and a fellow who started his career as a accidental chauffeur.
Yes. How can I help you?
Of a notorious MP, or at least a noted MP. I don't know if he was notorious. Would you recommend a parliamentary governmental system as a better way to govern large groups of people, meaning representative democracy as opposed to winner take all? So that there is a little bit more, theoretically, there are more voices in the room, and you have the ability to run a no confidence vote. I would say the two big things are, one, proportional representation, and the ability to do a no confidence vote.
I mean, the no confidence vote and not being stuck with some crazy person, you know, or some dead person or some, you know, whatever it is. The no confidence, the no confidence vote is really a cool thing. I love it. I'm not sure I love all the other aspects of a parliamentary system. I'm not sure how well it would work in a country the size of the U.S. and also with the diversity of the U.S. and so I kind of wonder about those things, because there's a lot of things that happen in, like, the UK, for example, that I don't actually like from, you know, in the parliamentary, the outcome of the parliamentary system, things that just don't seem to work. Finance is one of them. But the ability to for the no confidence vote to change governments, you know, I think that's pretty powerful. You're not locked in for 4 years or 8 years or whatever it is. You know, there's no lockup, which I really like.
So exciting.
It is exciting. There is a negative side to it, and the negative side is that, imagine if you're a trader and you're managing money, or you're a money manager or whatever you are, and every time you do something stupid, you're fired. You know, you have one drawdown and you're out of business. And essentially, you know, that's a little bit like a no confidence vote. You know, you had a bad quarter, boom, you're done. That's a little scary, but there are aspects of a parliamentary system that I do like.
They got rid of the Italian prime minister. I was here a couple of years ago when it happened, and they did it in a weekend. Like, when they want to do it, they can do it. I mean, they really got to want to do it. But if they want to do it, they can do it. You can go to bed Friday, the prime minister, and wake up Monday.
Yeah.
Not the prime minister.
Well, look what just happened in Syria. I mean, you know, basically 50 years of rule out the window, and with no conflict.
Well, it's interesting in watching that, because it made me think that, you know, that's kind of the future for Putin as well.
Oh,
you know, that it is good that one weekend it's just going to go, and everybody's going to be shocked that it's not World War III. It's not the boiling pot of chaos. It's just, next, like no problem.
It's going to happen to Putin. It's going to happen to Kim Jong-un, even though, as soon as people learn, it's going to happen. It's just a matter of time.
It's almost like the last thing that happens it's almost like it happens in the 10 years before. It's sort of like everybody said that the transition to digital and the exchanges was going to take over gradually. But then like the weekend that they flipped to like the next day, it was like, 80% is already electronic on day one or whatever it is.
The way it always happens. It always happens overnight.
Collapse or whatever.
It's overnight, Dylan. Everything now is overnight. It's overnight. They flip a switch. The virality, the speed, the gamma at which things move, and the virality behind it, it's insane nowadays. Can't stop it.
It really is.
Yeah, as soon as something gets momentum, it's over.
So can I have one momentarily gossipy conversation just because I admire it?
Sure.
So did you see that the president-elect sent his eldest son's ex-girlfriend to be the ambassador to Greece?
President-elect sent his
Donald Trump.
Yeah.
His firstborn son, Don Jr.
Yeah.
Broke up with his girlfriend for a long time, this woman, Kimberly, whatever her name is.
Oh, he broke up with her?
And the way that the breakup was announced was Don was pictured by paparazzi in Palm Beach with his new girlfriend holding hands, cuddly coochie coo, whatever, in Palm Beach. And on the same day, his father announced he was sending his now ex-girlfriend to Athens, Greece, to be the U.S. ambassador to Greece. And it struck me as like a loving act from a father to a son. I think it's terribly abusive of all the people involved, and especially the U.S. government. But it was an evidence of like affection for Don Jr. He's like, listen, I'm going to help you out. We'll send her to Greece.
So she's not around. She's not going to come to your door.
We're just going to get it out of our hair. It's not a problem. We'll be happy. We'll get an embassy.
Or what does it say to Greece?
It's very clear. What it says to Greece is very clear, and none of it's good. Okay, so that is a different discussion. Because I don't even think Kimberly. I don't think that woman is even Greek or has any association with Greece.
Wow, you really care about us.
Get Don's ex-girlfriend.
Yeah.
Anyway, I found that to be both a sort of a low point in American diplomacy and politics and power, but a high point in like paternal protection of. If Joe Biden can partner Hunter, Don Sr. can clear the field of Don Jr.'s ex-girlfriends for him, all using the U.S. taxpayer as the financier.
I think nobody understands the wrath of the ex better than Trump. So
he's like, he's got to give her a big embassy.
I think he understands.
Upgrade her financially.
I think he took care of his son. I think he took care of his son.
That's what I said. I wore my heart a little bit in a dark way. I was like, well, it shows that he has the ability to care.
There you go.
At least for his firstborn child.
I'm Tom Sosnoff. He's Dylan Radigan. This is Truth or Skepticism. That was fun, Dylan. We will see you next Wednesday.
Yeah.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I watched an hour and a half of TikTok, and that was enough for me. Skinny waist, what is it? Skinny waist, pretty face.
Yeah.
I'll finish that song.
Yeah, that's Meg the Stallion. It's not safe for morning
television.
Skinny waist,
Body yada
face,
yada
big
yada
bank,
yada
blah,
yada
blah,
yada.
blah.
Body yada 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 yada. Yes, Tom, you have.
I got it down to a science, Beth.
Yes.
I'm practically a TikToker. Skinny waist, pretty face, big bank, boom.
I didn't even know TikTok had music.
Yeah. I mean,
here you are, this big-time brokerage CEO, media mogul, TV star. You're a full-on celebrity, and you're running around singing TikTok music like a 16-year-old girl.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
He squirreled it all away. Now his financial life is dead.
Don't die like squirrel.
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm, okay? I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm gonna be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, all right.
I know it's on there. I know it's on there.
It's warm.
No. I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5 just because I like Kentucky Fried Chicken.
Come on. Do you want to be KFC's friend?
3.7. I gotta be real. 3.7.
Okay.
Because the chicken's good. I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce. I like it.
Out of 5, what do you give?
Let's try it. Let's try it. It's an elevated. It's an elevated. It's an elevated nothing. It's a chicken. It's actually pretty good.
What is going on, everybody, and welcome back to today's assignment. Another day in the market, all-time highs. But before we get into all of that, Dr. Jim, how are we doing? What's new? How are we doing this week?
Man, we're doing well. You know, it's just another day, just another 400-point zipper in the NASDAQ.
Something like,
you know, I mean, this is it, man. CPI this morning, you know, we made it through. I'm not quite sure this is real life, that this is actually happening in real time. But, man, here we are, one way or another. And apparently the number came in line, the fake imaginary CPI came in line to the fake imaginary estimates that will all be revised in 2 or 3 weeks to some other fake imaginary numbers. And the market loves it. Like, what's not to love, right?
Apparently, I have no words, if I'm being honest. I mean, I was looking at the run today and I was, just calculating from 8 o'clock Eastern to where we were. I was like, there's no way this is right. 400 something points within 3 to 4 hours. So I know I've said before, I'm personally not a fan of trading all-time highs. I know, what the data says, when we get an all-time high, it's likely we get another all-time high. So I understand we lean to the long side, but I don't know if it's a contrarian in me. I've just always had such a difficult time trading all-time highs. So I thought today would be the perfect time to have a segment on trading all-time highs, maybe give some perspective on trading all-time highs, and maybe these slides today are actually for me. So maybe I need to be on the receiving end of the slides today. But all-time highs, man, I'm not a fan. Dr. Jim, what are your thoughts, though? We got to hear it.
It's a tough trade. It's a tough trade, in my opinion. I mean, if you're if you're an investor, right, and you're like, you're in it for the super long haul, you're just looking to buy shares, accumulate, positions over a series of, decades, centuries, whatever, for your family tree, like whatever, then obviously all time, I mean, it's great. It's great. Market going higher is good. Like all that stuff is beneficial and positive, blah, 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 blah. Like that's not really a problem. But when you start kind of taking a more active role and now you're, 30 days, 45 days, 60 days, like this is the horizon that you're kind of utilizing in the marketplace. It's a tough trade, man. It's a really tough trade because what do? Do you buy him up here? That's really tough because you kind of feel like, man, I mean, you're Batman in Batman 3 where he's climbing out of that pit with no safety rope. Yeah. Like there's nothing to stop you. Like if this thing rips you go 7-9% to the downside, which is not that crazy. It's like, man, that could really sting in a big way. And so, you could, obviously, you could buy them up here. You can use tight stops. You can do all kinds of stuff. But then it's like, what do I do if I sell them up here? That's hard too, because it feels very much like you're stepping in front of a runaway train. So I don't have the answer, man. That's why I'm here, because I thought you had the answer.
No, I don't. I mean, I don't know. It's, I think we got a lot of reps trading all-time highs this year, to say the least. There's a lot of opportunities trading all-time highs this year. And I think what it really is, for me at least personally, is like an internal struggle sometimes. Like I know I should lean long, and on the Bad Trader stream today, we were breaking that down a little bit more. And, Bob Sala was in chat, and we were talking a little bit about that. I know he just loves to, continue to trade some of those top performers and also sell some out of the money puts, and I know it's pretty much the tasty trade mechanics and approach we still like to apply around these levels. So maybe I'm just going to have to lean on the probabilities and actually, trust the probabilities a little bit more and just adjust if need be. So I think that's really going to be the approach as we move forward. But I thought an all-time high segment would be pretty fun for the day on a 400+ point move in the NASDAQ. So I think it's fitting.
It's crazy stuff. No, so give me some of the give me some of the Bad Trader wisdom. Like how are y'all trading this, man? Like what are you guys doing? Like, you can give me, you can give me the surface level out of the money puts. No, give me the real answer, man. Like what are you guys doing? Like what are you guys doing?
What are we doing? I mean, I will say in the Bad Trader chat, we trade a lot of futures. I will admit, we trade a lot of directional futures in the mornings.
So now we're talking. So now, how are you getting into a position that's on the long side? Are you looking short? What are you looking for to kind of trigger your next trade?
I don't know if we're ready for that conversation right now, Dr. Jim. I know on the Bad Trader,
you're killing me, bro. I've built up so much credit with you.
I know on the Bad Trader stream we talk a lot about. We use a volume profile very often on the Bad Trader stream because it shows a lot of where the previous trading activity occurred. And one thing that I do love about the volume profile, Dr. Jim, is the fact that it's a distribution of volume. So it works off of a distribution curve. I personally became very familiar with distribution curves. Stats in high school, but also from selling a lot of options. That's when I actually applied distribution curves for the first time outside of school. So the fact that the volume profile works off of distribution curves, I think it's a great tool, to use just to manage your expectations in your approach, because we understand distribution curves come with probabilities. And when it comes down to a volume profile, we know it's 68.2. We kind of round up. When we talk about it, we just say 70%. But with the volume profile, it shows that main value area. So where the market is kind of finding value, and it finds that by taking the distribution of volume and finding where 68.2, aka 70% of the trading activity was occurring. So typically we know, and we've seen week in, week out, that we get a lot of more range bound type markets whenever we're trading within that main value area, just because, again, it's a thicker market. And it makes sense if we think about it, because if 70% of the trading activity is occurring within that value area, it makes sense. It's a little bit of a thicker market. It's not going to be as directionally volatile. So we kind of, use that to help gauge our expectations over there. But if anybody wants to check out more, come hang out with us in the Bad Trader app. It's a good time.
No, they should 100% be doing that.
Yeah.
I should be doing that. Like, I should be doing more of that. Like 100%.
It's fun, Doctor. We have a good time here, yeah.
So going into this morning.
Yeah.
So tell me more, man. Like going into this morning, like are we in kind of a thick volume profile area, or were you guys kind of thinking, given the CPI print, of course, that's kind of anything could happen? Were you guys kind of thinking that something could pop off one way or another?
Yeah. Well, we like to view the market, especially through auction market theory, and with CPI, it kind of just typical expectations go out the window on a binary event like this. And now that we're trading at all-time highs, we're in just full price discovery mode. So there's no value areas for price to even trade into, because there's, it's just straight price discovery. Price has never been established at these price points before. So buyers and sellers never even got a chance to agree upon price to even set that value. So it's really much trading, just a lot of price discovery. And I think that's tough because it feels like musical chairs. The music can just stop at any moment, but at the same time, we understand what the data says. We're likely to, keep heading higher, but it's one of those internal struggles we have even with that. So that was our approach. We're like, we're in straight price discovery mode. What do we do up here? And I think, selling options is one of the best things to do, because I think, directionally with selling options, you can lean a little bit more on time and, theta and volatility getting sucked out of those contracts. So even today, we were really just even, talking about how it's important to have more tools in your toolbox, because at a time like this, selling options, not trying to trade direction like that, might be a little bit more beneficial and leaning on time. So that was a little bit about the conversation we had today, Dr. Jim. So straight price.
Yeah, that's really interesting.
Yeah.
And now, thanks for sharing that with me, because A,
Absolutely.
it's interesting, but now also B, now I have a better understanding for why you really don't like trading at all-time highs. Because no, I'm serious. I'm actually serious.
No, you're right,
if you are leaning on, you want to know where the pools of volume are, you're looking at the volume profiles. If there is, if you enter uncharted territory like we have right now, then it's like you can't really lean on that. Like that's gone. It hasn't been established. That makes a lot of sense to me.
No, I think you hit the nail right on the head. I feel like you're my trading therapist right now. You're like breaking down my own thoughts and then telling it back to me, So that's
how I do. I gotta do it to my kids all day long, man.
Yeah.
Like I gotta do it to my kids all day long. So
it's that father and teacher that's just built within you.
Yeah.
Maybe father and teacher might be one and the same. But anyways, we can jump to the first slide of the day. All-time highs. I can jump to it right here, actually. Trading around all-time highs, just a little bit of an overview. Markets at all-time highs, represent an area of uncharted territory, right? I mean, all-time highs, we've never been there before. So it really is a sense of uncharted territories. And then momentum's often strong. I think today was a pretty good case of that, driven by optimism, FOMO, whatever it might be. Your guess is as good as mine, but it seems like there is a lot of, optimism at all-time highs. And I think that creates a very positive sentiment. And I almost feel like sometimes the stock market is like the U.S. economy. And if things are at all-time highs, the sentiment is a little bit more positive, I guess I would put it. But your guess is as good as mine, but it does seem that, optimism and FOMO drive a lot of this as well. And then price discovery, like we kind of mentioned just a few moments ago, it occurs as traders testing levels of demand and supply. I know we haven't really talked about, those terms at all here. And I know a lot of people label many different things, demand and supply, but when we label those two names, we're really talking about the value areas that we, take from those volume profiles. And then a key challenge, just lack of historical resistance to guide decisions. And then opportunities exist, but managing risk is critical. So I think that just really adds on to what we were talking about, nothing to really trade off of, nothing to really lean on. And especially trading directionally, that's a very difficult thing to do. Trading directionally is very difficult to do. That's why, our overall approach is selling premium. We have a lot of data to back those type of things up. So if you have nothing to lean on, not even any value areas trading directionally, in my opinion, it's very tough to do. Not that it can't be done. It's really tough to do. But the things to just really point out is, those pullbacks, the risk is a little bit more difficult to manage, I would say, trading all-time highs, specifically trading something directionally like outright futures contracts. So I would say this is just the first take for the first slide, Dr. Jim. Anything you want to add to that? But it can definitely be a challenge, at least trading directionally there.
No, it's a big challenge. It's a big challenge. And I mean, whether you look at a volume profile, whether you're looking at a resistance, whether you're just looking at it just kind of with your own two eyes, and it's like, man, this is uncharted territory. We've never been here before by definition. So it's going to be more challenging than maybe being in, kind of on a well-worn path, kind of in some area where we have been before. The only thing I will say is optimism and FOMO and, the irrationality that you might think the market has right now, it can persist much, much longer than you think it should or you think it could. And so in my estimation, it's already persisted for potentially a couple of years now. And so, 2023 and 2024 have been incredibly strong, incredibly robust. Now, you could say, coming off of 2022, it was a down year, everything kind of struggled. So obviously you can expect some kind of rebound. All right. So the first half of 2023, I'll give that to you. But the last 17 or 18 months, man, just incredible strength that I don't even think the biggest bulls on Wall Street saw coming. And so does that mean that this thing is going to run out of gas? Not necessarily. Not necessarily at all. Now, I still think that just historically, is this time different? Like we joke about there never being a down day. We joke about, bear markets being over. No, they're not over. It's coming back. The problem is nobody knows when. Nobody knows when. It could be today. It could be tomorrow. It could be 7 months from now. It could be 16 months from now. It could be 3 years from now. Like we just don't know when it's going to happen. But cyclically, the market is going to take a breather at some point. We just don't know when it's going to be.
I hear you. What is that saying, Dr. Jim? The markets can stay irrational longer than you can stay solvent. Is that what it is?
That's it. And I think that was I think that was no, it wasn't Alan Greenspan. I think Alan Greenspan said irrational exuberance. That was his line that he used during the tech bubble. So during like the late 90s, early 2000s, like he came out on one of his Fed testimonies, like what Powell does now. It was Greenspan at the time. And he said he described the market as being irrationally exuberant. And so, I don't know if you can come up with a better, fancier way to say we're in a bubble.
I don't think you can.
Than irrationally exuberant. So there you go.
I gotcha. Great piece to add there. Second slide of the day, all-time highs, historical NASDAQ stats. The NASDAQ composite historically performs well after making new highs. We know this is also the case with something like the S&P 500. We typically use the S&P 500, I feel like, whenever we're talking about all-time highs, just from what I've experienced. But, same thing on the NASDAQ, performs really well at all-time highs. Breakouts above all-time highs tend to have a higher probability of continuation in trending markets. And I know when we were talking about in the Bad Trader stream today, again, we always hear the term, the trend is your friend, but I almost feel like that's almost more true trading at all-time highs because of what the data says. It almost seems like that's the case. However, pullbacks can be sharp with false breakouts occurring a small percentage of the time. The only thing, again, this is why I feel like all-time highs is so difficult. I know down moves can come at any time, even not all-time highs, but that's where I like to use the term, it feels like musical chairs, because it just feels like everything's good until it's not at all-time highs. Like things can just sharply fall off the cliff and then recover to another all-time if it would like to. But that's the analogy that I like to use. And then high volatility is common, especially during earnings seasons or major economic news like today with the CPI data. So a few more bullet points on NASDAQ specifically. Anything else you want to add here? It's not too different from the first slide. We kind of touched on a lot of these points already, Dr. Jim, but is there anything you want to add on this one?
Well, I really like your analogy of musical chairs. I actually think that's perfect because if you think about the game of musical chairs, the music is going to stop.
Yeah.
Like it's going to stop.
Right.
Like
right.
it's a fact. Like it's going to stop at some point. You just don't know when.
Yeah.
I love this analogy for the market that we're in right now because I mean we joke about it, we kid about whatever, but there's going to, and I'm not talking about a crash. I'm not talking about that at all. But there's
Don't
going
scare
to be
the children,
some type
Dr.
of
J.
yeah, I mean, no. We're just talking about some kind of breather. There's going to be some kind of breather, couple percent, nothing crazy. I'm just talking about like 4,000 points in the Nasdaq. Nothing crazy. Just a quick little 27% off the top. You won't even feel it. You won't even know it. You won't even know it's gone. But if you think about musical chairs, I love this analogy because it's like we've been playing the game of musical chairs, let's say for the last 18 months. Like, again, I'll give you the first half of last year. That's fine. When you're playing the game that long and the music hasn't stopped, you kind of get lulled to sleep. Like you kind of go numb to the whole idea. You're kind of like, is it going to stop? I don't think so. Like I kept thinking it was going to stop and it hasn't stopped. And so it's kind of like, it works until it doesn't. It does this until it doesn't. It's like, that's right. And I mean, it's like even this stat, like, this stat is really, really helpful. But it's such an interesting stat, right? Because, okay, it averages a 1.2% return in the month following a breakout. So if you think about that, if it always hit a 1.2% return, then it would literally never stop. Because, you'd have a new breakout, another 1.2%, which would lead to another breakout, which would lead to another 1.2%, which of course is not what you're saying, and it's not what the slide is saying.
Right.
But when you're looking at it, it can kind of feel
At
like
face
that.
value,
Like,
yeah.
it's kind of like, all right, maybe that's where we're headed, right? But it's like, man, just when this thing turns, it feels very much like the internet bubble that I actually studied for my dissertation. When this thing turns, it could be nasty. I don't know if it's gonna be. Maybe it won't be. Maybe Powell's got it under control. Maybe the correction only be 5-7%, whatever. But it could be nasty.
Yeah, no, I agree. But yeah, alongside the musical chairs, it kind of feels like, I don't have any data points. The one data point that I have, once I start seeing screenshots of P&Ls on social media, I'm like, all right, let me scale out a little bit.
We were seeing that last year. We were seeing that 18 months ago, bro. In fact, I just saw your screenshot of your P&L like 2 weeks ago.
Right.
So does that mean we're at the top?
Right. We might be, man. We might be.
I'm just saying.
We could be. Or maybe near. I don't know. But some tips for trading around all-time highs. We might all have different tips, but be patient. False breakouts can trap aggressive traders. So just be careful being aggressive at these levels. You know what I mean? And I think that leaning on your risk, just paying attention to your personal risk appetite is really important at these levels. And then pay attention to macroeconomic events that may cause reversals or continuations, whatever it is. I just wanted to put this one in here because sometimes I'll be like, oh snap, we got CPI tomorrow. I almost forgot we had this major economic event going on. So I think one thing for me is just more so checking those calendars into part of your routine a little bit. I know we'll pop open the platform, check out SPY, QQQ, VIX, see what's going on. But I think a good approach also is just glancing at, what kind of economic news we have getting into the week. So you're never caught off guard. And then, using NASDAQ futures to hedge positions or gain exposure. Futures are used for many different ways. And I think we talk about, or I guess I talk a lot about trading these directionally, but you can also use futures to hedge your other positions. I know one of the first times I traded futures, it was because I was hedging one of my positions when I was on the Where Do I Start series. So I just wanted to bring to light again some of the different ways you can utilize some of these futures contracts. And then develop a plan for both continuation, new highs, and rejection scenarios, AKA have a plan for new highs, have a plan for if your expectations don't pan out the way you thought it would. I think, a lot of optimism and FOMO and all-time highs sometimes, and again, maybe I'm projecting, but sometimes can make us forget about the risk at hand or the potential risk until it actually happens, So I think we can just be very proactive about these levels. And I just really wanted to shine a light at all-time highs, being proactive, and just the approach at all-time highs in my personal experience, some tips, things like that. I know I tweeted before, I think it was a year ago. I was like, man, I don't like trading all-time highs. Here I go, 12 months later, trading all-time highs. Here we go again. So it's funny, Dr. Jim, and I know we mentioned this a few times last January. I just would have never expected us to be at all-time highs. I think I had a different guesstimate, I guess you could say, for the year on what we could potentially do. Little did I think 12 months later, we'd be talking about all-time highs in December to Dr. Jim. But anyways, anything you want to add on this last slide today, Dr. Jim.
I mean, yeah, man, it's like, I mean, NASDAQ 22,000 is on the doorstep. I mean, it could happen. I mean, it could honestly happen by the close today if you get a real big squeeze into the close. It probably won't. That would be be a bit much, but it could. But it could absolutely happen tomorrow. That's less than 1% now at this point.
Yeah.
And so that's pretty crazy. That's pretty wild. The thing that I will say is just speaking to most of the people that are watching this show or listening to the show, most people that are inside the Tasty universe are actually, I know Tom has tried to bring them over to the dark side, and Tom has tried to push a bearish bias on them, but most Tasty traders have resisted successfully, and they are long delta. And so if that's the case, hey, man, you may not have as many opportunities from an active trading standpoint, but here's what's the beautiful thing about portfolio management, especially when you have a few different buckets in your portfolio. Most traders that I speak to, that I talk to, that are inside of our universe have some kind of combination of long passive assets and then an active portfolio that may have, a bunch of different directional biases, long, short, neutral, whatever. Well, at times over your investing career or even over the course of a year or two, you're going to lean on one more than you might lean on the other. And so right now, you may not have as much opportunity with your active portfolio, but man, the passive long stuff is doing phenomenal. The passive long stuff is doing incredibly well. So just lean into that right now. You'll have plenty of opportunities later on when volatility picks back up and there's some two-sided action. And that's when you kind of shift over and say, all right, now I kind of want the active portfolio, to kind of pull the weight a little bit more.
I don't know. I think I might share a little DNA with Tom when it comes down to trading all-time highs.
Yeah, but you don't, though. You don't, because you're long. That's what's funny about it. You're long. I understand.
I don't have a long position on right now on expressing that opinion on QQQ Spy, though.
You said you do or you don't?
I don't. I don't have a position on at all.
Yeah, well, maybe not now, but you've told me yourself. You are, when you view the markets, you view them through a long lens, not a short lens, correct?
Yes. When we were all-time highs, I initially leaned to the short side, I will say. But my opinion has been changing across the span of the last 12 months.
Okay, changing to where now you're kind of default long lens.
Yes. I was very
so that tells me that we're very close to the top. That tells me that we gotta be. It's gotta be. If we broke down Errol Coleman, we gotta be 3 weeks away at the most.
Yeah,
3 weeks away at the most.
I love mean reversion strategies. I'm just a contrarian at heart. I'll go against the stubbornness as well. But no. Anything else to add before we head on out of here today, Dr. James?
No, I think this is good stuff. As an active trader, this is difficult. It's difficult when you have one-sided market. It's easier on the downside just because volatility typically does pick up and there's just lots of movement both ways, so there's lots of opportunities. Now it's almost like a double whammy because you get hit with the all-time highs, you also get hit with volatility, but volatility is actually staying in there right now. I see the VIX futures are at 16, so it's like, all right, that's not too bad. That's actually reasonable. So I don't know what that means, but at least hopefully we'll have a little.
That's not too bad. That's reasonable. I don't know what that means, but that's not too bad.
No, I mean, it's all right,
That's funny. No, that's going to wrap it up for today, guys. I hope you enjoyed the segment on all-time highs. We'll see what we get into the rest of December, but it definitely looks like we're getting that Santa rally. So I hope, some tasty traders are taking advantage of that and are managing our positions appropriately. But that's going to wrap it up for today's assignment. Thanks for hanging out with Dr. Jim and I today. Dr. Jim, we always appreciate you having you here and hearing your opinions and feedback on everything. Be sure to stay tuned for Tim Knight coming on next, and we'll catch you guys next week. Peace.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Hello, Tim Knight. Then it is time for charts, and we have got more record highs today. The CPI came out this morning. It came in at 2.7%, which is exactly what they thought, and the market shot higher. So I guess secretly people were worried about worse or something like that, but they took the news, which was kind of a non-event. It was exactly what they said it would be, as a reason to buy. And the NASDAQ in particular is super strong now. It's up over 400 points. And I've got my charts preloaded. Let's go in and check them out. Okay, the spider is right near lifetime highs, almost certainly going to close at a lifetime high. We burned off some points the past couple of days, but we've undone that. So we've jumped back to where we were pretty much on the close on Friday. The diamonds are actually down a little bitty bit. We have pushed below this gap. So a little bit of a black mark against the bulls there, failed bullish breakout, specifically to this very narrow industrial sector. And you can see this reflected also in the XLI, which is pretty much unchanged right now. This is another industrial ETF. On the whole, past couple of weeks, just been sliding away. I don't have any ETF positions myself, except for a couple. One of them is EFA, like so. And the stop I've got, which is pretty tight right now, it's $80. We're only a couple of dimes away from that right now. The other one I'm not showing right here, didn't load it, is EWZ, which is actually up today, but has not been stopped out. So, in fact, I even added a little bit more because we had a big pop there. I think PBR had a big rise or something, which is his biggest component, but those are March puts, so sticking with the EWZ. The other one, which is very germane this week, has been FXI, which on Monday enjoyed the benefit of the rather loose monetary policy, and we've pretty much erased all those gains. We're almost back to where we were on Friday before there was any looseness at all. Now, the Magnificent Seven have been exceptionally strong. For example, here's Alphabet, GOOGL, up almost 5%, lifetime high. We have bested the high from back on July 10. As you can see here, we had a big gap up yesterday, and then we've augmented that today. It's just raging higher, so a lot of strength in the Mag 7. And what that's led to is, for the first time ever, a 20,000 plus point level on the NASDAQ composite. Way back in the day, the internet bubble, the magic big round number was 5,000. Shows how much things have changed. But yeah, back then, I'm just curious. Let's just lay down a 5,000 there just to kind of, I don't know what this is going to yield, but I am curious if it played jump rope with this or not for a while. So there's 5,000. Okay, so as you zoom in, yeah, so it got above it here. Shooting star there. That was the peak, by the way. By no means am I suggesting 20,000 is the peak just because it's a big round number. I'm just saying that sometimes getting beyond the big round number is the only goal. So peaked on the 10th and fell some, kind of freaked people out. Did it again, and then 80% loss after that. So, but that was a long time ago. So there's 5,000 way down. We've gone up 300%, even from the peak of the internet bubble. The cubes, obviously, are also up strong, almost 2%. We have stayed above this trend line ever since the August 5th bottom. It's nice and neat. Support. And here we are at a lifetime high. This is aided in large part by semiconductors. SMH, biggest component, which is NVIDIA, which I think had a Supreme Court case fall their way. But SMH is up almost 3%. There's nothing about this topping pattern which is spoiled at this point. Obviously, I hope it doesn't become spoiled. So long as we stay below this horizontal, this is still has a potential for an important reversal. But we've basically undone all that juicy goodness from yesterday with this gain. AMD, my favorite short here, even AMD is up about 2.5%. And I lightened up on this one earlier today and yesterday, but I'm sticking with what's left unless it crosses above this horizontal, this gap. I'm cool with it till then. If it crosses that, forget it. So, okay, let's look at just some odds and ends there. In the bearish category, there's some cool patterns out there. One is Crux. I mentioned this from time to time. It's got a long history, and it's got this cool tendency to actually respect its own topping patterns. You can see I've drawn those in pink here, these major reversal tops, which over the past 3-4 years, there have been 3 major reversals. You see plain as day right there. And so my speculation is that perhaps we're at another one now. If it keeps ascending, it's just too murky because there's no way I'm going to wait for this gap to be filled. But at the moment, it has the potential to be yet another really cool reversal. Estee Lauder, which is managing to be down today, 1 1/3. I've mentioned this one before. This has actually already lost most of its value. It's gone from almost $350 down to $80. And in spite of that, along the way, it's been engaged in this sharp series of lower lows and lower highs. And most recently, we've zipped up here. And I would suspect if we can stay below Monday's peak, this might be another opportunity. Here's our old friend CC, finally behaving itself down 6.5%. You can see the power these big patterns can provide. So that's a nice drop on CC. Cleveland Cliffs, another one you've seen a bunch, not as giant a pattern, but a nice one nonetheless. Off, even on a day like this, record highs off over 3%. Huntsman, and also HUN, big old pattern on this, goes back for half a decade, and we're off fractionally on that fella. Eli Lilly, also down a little bit, and messy top here. This one had a lifetime peak not that long ago. It was only a few months back. We got to about 1,000. We're $200 below that right now, and it's bringing it down pretty badly. Wingstop, this one, I've got 2026 puts on this. Here's the failed trend line. There's the top. There's the gap down. Shooting star a few days ago, and we're starting to really chip away at the integrity of this already broken trend line. And one last one, Humana, down almost 3%. I mentioned this one a couple of days back. We've been in this long channel for decades here, but it is in the process of breaking down sharply, as you can see. Lower lows, lower highs, gaps, the whole schmear. So that one's looking pretty weak. And I believe, if I'm not mistaken, I'm not very knowledgeable about insurance companies and such, but I believe this is involved in that realm. And another one, obviously, which is very much in the news, is United Health, UNH, which is a rather amazing chart. If you look at UNH back to the history that I've got, I don't know if this is the IPO, but this is as far back as I have, 23 cents. 23 cents back in 1990. And before recent events, this peaked at almost $630. So over how many tens of thousands of percent that is. Absolutely amazing. And of course, the murder took place on this day, which weirdly, like I said, after the news that the stock went up, it was the strangest thing. And that sort of blinked its eyes a couple of times to realize that this is not a good thing. And it's lost, I think I did a rough calculation, I think something like $80 to $90 billion in market cap. Here, little recovery, and then here again. So, yeah, as I've said, it just puzzles me because it's like you can be as late. I mean, this is not millisecond-based news. This is like stroll to the corner, grab the newspaper, read it over a cup of coffee the next day news. in terms of how fast you had to be to do anything about it, because this thing is taking a long, languorous time to make the move lower. I was just looking at different health insurance companies. Centene is another one, which with just a eye-poppingly big top like so. This one goes back about half a decade as well. So just kind of it's got a PE of 9, so it's not exactly richly valued, but it's an interesting top nonetheless. What else is cooking? Well, on the plus side, so it's not all doom and gloom. There are some bullish items here. We've talked about Roblox before, RBLX, and I've pointed out the big base that it's got here, going back almost 3 years now, and it is having a nice day. It is up over 6%. The next formidable resistance for this is this red line here. This is the gap at 66.34. So that's the next technically based gap on this. So that's about $7 away. Another one which has a similar base and is moving higher is Warby Parker, which is up about 1.5%. But there's a couple of kind of auto-related charts we've talked about recently, and these are going as predicted, which is kind of a nice feeling. Let's look at one's bullish, one's bearish. The bullish ones are old friend Tesla. I wrote about this at some length yesterday and talked about it, and the general notion I was trying to get across, well, was severalfold. One, as I've said ad nauseum, I think one day this could be the most valuable company on the planet, and it's getting there. Elon's already the richest person who's ever lived, or at least alive, approaching $500 billion net worth. SpaceX being the biggest component of that, a private company. But Tesla has had a sensational, what has it been, 7 months? April 28th or so was the bottom, and it's just been raging a couple 100% since then. And it's at lifetime highs now. First time in about 37 months it's done that. It's been quite the trip. Peaked in November 2021, bottomed ultimately in early 2023, threatened to break down to double digits. Had about almost an 80% drop. And it has completely recovered that. It's been a long road and a very messy road, but the big leg only took place over the past 7 months. We bottomed here around 140 late in April, and we're at 420 now. Lifetime high. So really just tremendous. And I think it'll keep going. New highs tend to feed on, new highs tend to beget other new highs. And my baseless guess is that it'll poop out somewhere around the mid 400s, 440, 450, something like that in the next couple of months. But it's a terrific stock, a terrific company with great products. In contrast to this is Uber, which I brought to your attention as a head and shoulders top. Look at that. Down almost 5%. And it's very interesting because if you think back to the October 10 event, which was the We Robot event, that was an interesting inflection point for both companies because it was a little bit of a flop of an event. The press kind of rolled its eyes. It was kind of a disappointment. And the general feeling was, well, Tesla's not going to have self-driving really figured out for years. I guess this all belongs to Uber. And so Uber reached its own lifetime high the day after the event. So it's kind of an embarrassment for Tesla. Great contrarian notion because that was the exact time to get out of Uber and get into Tesla. Uber has gone from 87 to 62. And Tesla, as you've seen, has had, I don't know what the dollar gain is, but it's got to be in the triple digits. It's been huge. With the CPI out, the TLT is, I guess the nice way to put it, relaxing, but bonds are falling, interest rates are rising because inflation's still cooking. And this lines up nicely with the notion that rates will be pushing higher next year. This chart's been doing okay. We got this blue line's doing a pretty good job of providing resistance. It got above it here, but it's kicking it back down again. In addition, another interest-sensitive item, which has been quite weak of late, has been utilities, XLU, which in the Dow universe has been the real dog lately. It used to be the champion. It peaked only days ago. This peaked on the 27th of November. But since then, we've gone from almost 84 down to 77 and change. which for something that moves this slowly is a pretty big deal. But interest rates definitely on the rise, in spite of, ostensibly on target inflation being reported. So we've got kind of an upside down day of today versus yesterday. And I would say the thing to keep watching, as is almost always the case, is NVIDIA. I think that's key to the tech rally. I think a medium-sized victory for the bulls would be to cross above the high we saw yesterday. And a king-size good news for the bulls would be a violation of this topping pattern we're working on to basically escape above right here. So we'll keep an eye on that. But as it is now, very strong day, a lot of records falling today. And PPI's out tomorrow morning. I don't know if anybody cares that much about that, but the big event this morning is now behind us. So, all right, well, good. I will see you here on Thursday post PPI, and thank you for coming by. See you later.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
Life goes by fast, really fast. One day we're 25 and living large, and the next day we're 65 and hopefully still living large. It's the 40 years in between that are mostly a blur. When asked what they would do differently, most people confidently say, nothing. I have no regrets. As much as I want to believe them, I know better. I believe there's one common regret virtually everyone chooses not to remember. It's the taboo topic of not taking as much risk as possible every chance you get. Remember, the genesis behind tastylive was to encourage risk-taking. What were we thinking? Imagine the risk of building a business designed to encourage people to take risks. One of the things I've learned about taking risk, it's not personal. You can't let your ego dictate your decision-making. Unless, of course, you're the richest person in the world, then it's a death trade. Another thing about taking risks is that it's never obvious. There are no easy decisions. Risk-taking should be fun, engaging, and challenging. But if it ever seems apparent, success will not be easy. The great thing about the world of finance is that success does not require genius. In my opinion, the model for success, without a lot of complex math, is relatively straightforward. It's risk times longevity. Between academia and financial media, we have overly complicated embracing the paradox of risk. It's finally time to simplify the model behind success to risk-taking times duration. This definition should give everyone hope and a reason to hang in there.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Yeah, Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Ring the alarm, boys. Turn up the charm. Listen up
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. Well, with the closing bell here, Sadnov, and what a closing bell it is. E-mini S&Ps did not fall for the third day in the row. Oh, no. Quite contraire. Mon ami, completely different. E-mini S&Ps up 51 handles, trading about $5 off of their highs. NASDAQ, leader in the clubhouse, up almost 2%, $407. Russell up 19, and I don't know where this came from, Saz, but the Dow is actually down 55. Volatility basically unchanged at 1619 after the roll. Bonds down 27 ticks. Tesla traded 420, Saznoff. You know why? Because everybody's high on 420, Saznoff. It can go lower now.
Okay, good. Hopefully it'll go lower now. I'm a little short. I just sold a little Tesla here. Let's see. Been scalping it all day, but really small. You can't get too big in there.
You got one tranche out there, I believe.
Yeah, just one tranche. Yeah, I'm not really. I got the market punished me today a little bit. The NASDAQ up 400. I didn't have that on my bingo card today. I'm long Russell, short S&Ps. Ugh. Don't like that trade either. But I definitely didn't have the NASDAQ up this big today. So we don't have a lot of good positions today. Today we got a lot of bad ones. Yesterday we had some good ones. Today, no bueno. I thought we were going to have 3 down days in a row, but no. I think we got up. Did we trade 6,100? I don't know. I didn't check.
On the E-mini S&Ps? Oh, yeah, 6102, Saz.
6102.50, exactly. Yeah, kind of weird.
I only have really 2 problems, but Tesla's becoming a significant one. Gold is another one.
Gold hasn't had. I have had more than, surprisingly. Just checking to see where we did this. Surprisingly, I have had more than a few emails about gold. You know, sometimes I feel like people write about certain things, like I have problems in natural gas, or I have problems in Tesla, I have problems in NVIDIA. This time, I think I got more emails about gold, which is really weird to me, but because I only have a small gold position on, but I guess that...
well, it's basically had 4 days where it's moved outside of its expected move.
Yeah.
$3 move in a day on gold. I'm talking about GLD now.
Oh, yeah, GLD sucks. I lost money in GLD today, too.
And they're all on gap up openings too. So, you know, if you're waiting, you got hurt. If you did it right away, you got hurt less. You know, there was no intraday trading in there if you had any type of short delta.
Oh yeah, no. In fact, let's take it a step further. There was no intraday trading anywhere. I mean, they opened. They opened higher after the CPI number came out. The expected move on the CPI, I think overnight, was like 27, I want to say. And they opened inside of that. And I don't believe, and I pretty much think I've watched them all day. I don't think they've had a downtick all day.
They really haven't. They just marched higher.
I don't think
a little oscillation, but not more than that.
I don't think they've sold off more than 2 or 3 points all day long. I mean, there was one point this morning where I thought Tesla would be down a day. It was up 12, then it was only up 2, and I thought they might get it.
That is true. You almost had it, Saz. They almost erected a statue. Now they're not doing anything.
Yeah, every stock, Apple's down, and on my screen, IBM's down. And some Chinese stocks are down, and every other stock is higher. I mean, every other. Let's see. No, AI.
Here you go, Sadnoff. I'll give you a quick little list here. MSTR up $33. Netflix up 24. There's Tesla up 21, making new highs. Crowd up 17. Coin up 15. Meta and Carvana up 14 and 13. AVGO, which has earnings tomorrow after the close. Nothing to do right now. Even the Qs, Saznoff, are up almost $10. Big move in the Qs, almost 2%. Reddit up $9 and change. Google up $9 is actually kind of mid-range for these stocks. Let's see what Let's see what's going on.
That's like 2 days in a row for Google.
Yes, it is. Yes, it is. And you got some healthcare stocks like UNH and Humana. UNH down 29, Humana down 7, AI down 3, and then it's Uber Sadnoff down $3, SMCI down 2. Like you said, not too many stocks to the downside. Apple, believe it or not, is down $1.
No, I said that. Yeah. No, this is a NASDAQ. NASDAQ up 400 with the Apple down. Little surprising, but I guess not that surprising.
Yep.
So it was a little early to put the fork in the bull market. It was a little early yesterday to put the fork in the bull market, but I said after 2 days I'd like to see 3 in a row, and we didn't get that. The good news is we didn't make a losing scalp today. The bad news is we didn't make the 3,000 scalps it would have taken to break even.
No, we didn't. Hey, you were a lot more bearish than I was. I did think we would go sideways going into the end of the year, and we are at the high end of the range here. Now, if we break out here and make a move, well, then I'm going to say I got this completely wrong for sure.
Oh, I don't think they're going anywhere here. I think they're just.
Oh my God! I wish you hadn't said that. Can you turn into a bull or so? You see, the problem with you is you're so stupid and pig-headed that you can't even throw in the towel. This is the same thing that happened to bonds when they went to 170. When they went from 120 to 150, I couldn't take it anymore. But you stayed into 170 to watch them go back down to 120. You're a genius, and I'm saying, Saz, can I get you some sugar for your tea? I mean, that's the difference. I mean, it's not right.
Speaking of bonds, I just sold some puts actually right here on the lows of the day. I didn't think we'd see when they traded over 120 the other day. I didn't think we'd see in the 117 handle. We're not there quite yet, but we could easily get there tomorrow. But I'm surprised the bonds are back down to 118. I mean, selfishly, because I want to buy some, I think they're going to get. I mean, I'd like to see them go down to 117 and change.
Be careful what you ask for, my friend.
Well, I'm only short the 118 puts here, so it's not like that big a deal. But I would like to see them go a little bit lower. Then I think they'd be an interesting scoopy. As far as the market goes, I mean, the biggest beast of them all is Tesla, which is, it's gotten to the point where at 420, it's pretty ridiculous. I think that they've done the squeezing of the shorts has taken place. I mean, I think there's some hedge funds that are not going to be having a very good Christmas.
In Tesla, you mean?
Well, I don't think that retail investors are. I just don't see retail investors being, short Tesla stock. It's not a $400 stock. I don't really think that's
Tesla's ahead in volume than the SPX today, Sadnov, and not too far behind, and maybe even ahead is Nvidia, if you can believe that.
Yeah, but what I think that's more of is that should signal now if the market's at record highs, okay, which we're basically
we
there,
are
right, and you see more volume, and again, this is a very weird scenario. If you see more volume in something like Tesla, which means Tesla trades more calls than puts. These are not put buyers in Tesla. Tesla has call skew. Tesla trades
and a lot of it, and it continues to go higher too, Sal. The IV rank of 74.
Yeah.
Tesla had an IV rank in the 60s yesterday and the day before. So not only is it going higher, the premium's going higher too. I'm sorry to interrupt you.
So Tesla has a lot of call skew. And when you see underlyings with a ton of call skew at market highs, trading more options than the SPX, which not theoretically, but conceptually, at market highs, you would think people would be buying puts for protection, right? I mean, that's that's why they have put skew. And by the way, is there even put skew in the SPX right now? I don't even know if there is put skew.
Oh, I don't think there is. I mean, I could look at SPY. All right, I'll look at SPX for you. Hold on.
Doesn't matter. You could look at either. You could look at either one. I look at SPX.
I'll go to SPX. It's a good exercise. You want me to go to 8 days? You want me to go further out?
I think you got to go further out to like what we do, but I don't think there's any put skew.
I'll go 36 days, and we'll go to what is that? 59.85. That would be $100 lower is 40, and 61.85 is 46. So no, there's actually call skew at least $100 out.
Right. Okay. Stop for a second. Stop. Doesn't matter. There's call skew in the SPX. Now, let me just explain what a red flag is, in case anybody's never been to the beach before.
And there's no dividend there, so I mean, there's nothing to.
There's no dividend. There's no dividend.
It wouldn't skew it anyway because the dividend would be lower. So, but I'm just pointing it out.
So let's talk about this for a second. If there's sharks swimming in the water, they put a red flag up, right?
Mm-hmm.
In the trading world, we don't have such a thing as red flags. There used to be platforms that have a green flag They basically a green arrow and a red arrow, but those things don't exist anymore. They don't have a red flag telling you danger. If there was a red flag, one of the red flags would be when Tesla with huge, or any equity with huge call skew, is trading more call options than put options trading in the SPX at record highs. But even a more telling fear factor for me and red flag would be when the SPX calls are trading higher than the SPX puts, meaning there is no fear, right? I mean, there's no other, you can't explain it any other way.
No, you can't. There's nothing else you could do. You're right. There's no fear.
You're going to have put spreads. Yeah, there's no fear out there. So we have entered an incredibly interesting...
We've entered the Twilight Zone, Sadnov. Did you used to like to watch that as a kid?
I did not.
Oh my God, you're kidding me. How could you not like the Twilight Zone?
I didn't like it.
The Twilight Zone was awesome.
I watched it. I did not like it. And I didn't watch it very often.
You watched it, but you did not like it because you only had 4 channels at that time? You didn't own the reservoir yet?
I did not like the Twilight Zone. I don't have to explain myself to you. It wasn't my favorite show.
But you watched it.
I watched it because all the other kids...
You want to be one of the cool kids?
No, but kids would be talking about it, so I'd have to check it out. And I'm like, this is so freaking stupid. No. So yeah, I mean, in my neighborhood...
What would they say? Oh, that's the guy that looks like the girl who put the mask on her face?
Huh?
No?
No.
Hey, how about Adobe and CIEN before we get to the overtime crew in about 10 minutes?
I did not trade. I don't trade Sienna, and Adobe. They have earnings tonight.
They do. I believe maybe tomorrow morning. Let me look at AVB, but it doesn't matter. You have to do something.
It's usually at night.
Once again, you are correct, me lord. It's the 11th after the market closes.
Expected move in December.
$42 make you holla.
Does that $22 move seem ridiculously low to you on a 600?
42.
Oh, 42. Oh, I was going to say
42. You know what? The font must be a little blurry. The production team must have made it a little blurry for you. Seriously, when are you going to go back to glasses? Because it's not working. Like your trading is suffering, okay? You know it is. You know it is. You can't see the tape anymore like you used to.
Adobe.
You're so mature.
I am very mature for my age.
42. Since 22 seemed low, 42's got to seem just right. IV rank is 68.
I mean, Adobe's got to be way behind the times. I mean, they got to stink. What are you doing in Adobe?
I didn't do anything in Adobe. I mean, you know me for earnings. I like to do post-earnings trades. Markets are 50 to 75 cents wide here. Volume is good, not great.
Yeah, this is a very small trade. I would just do something, have something on. Adobe, 460, 670.
You're up in the 10 delta zone.
6 delta zone.
Uh-huh.
I think it's gonna be hard to get a fill at a decent price in here. So let's just leave it and see. I don't really care that much about Adobe. Yeah, I don't really care that much about Adobe. Let's see, what else do we got going on here for tomorrow? I don't know. I kind of feel like I would. There's other things. No, I'm going to go with my 2 red flags and kind of like that.
Okay.
Interesting thing about SPX. When the SPX has call skew, I think you have to get short. You hate that.
Well, you already are short, so you have that going for you. How about you do nothing and you just take what you are given should you get the market direction correct, which would be the first time this year?
I think you gotta give it to them a little bit. And you got to go out to the expected move. So the expected move in February, 71 days out. If I just give them a little short delta way out there in the SPX, it's 250 points. We're currently trading at 61, let's just say. So we'll go to 63.50. Go way out there. Anyway.
What are you looking at?
I'm looking at the 63.50, 63.70 call spread.
Triangle and Adobe? Oh, call spread.
No, in the SPX.
Oh, gotcha. Got you.
Just trying to find something that's like at the expected move out in February, just to get some further out deltas. Oh, my sound's off. I got filled at 485. Some more higher.
I see.
Just want to do a little price discovery.
And you did that in what option, Saz? Just curious. What month did you put those in? Curious.
I did them in February. I said I want to go out 70 days. I want to do it in February.
Oh, you certainly did. You did February. Okay.
Yeah, I want to do February.
You.
No, I wanted February because I wanted to be at the expected move, which was 250 points in February, which is why I did that strike. And then I think it's also time to do a little short Tesla here on the close. What's Tesla doing right now?
Up $21, maybe $22. $21. Trump's going to pump.
Trump's going to pump. What does that mean?
The market.
Please. This, if I was Trump right here and I saw the market doing what it's doing, I'd be really nervous because Biden gets credit for all this rally and Trump's going to get credit for the crash.
No, Biden ain't getting credit for this. Come on.
You'll
see.
Know that. You'll see. Let's see. In Tesla.
Biden ain't even up yet.
In Tesla, it's going to be...
Biden doesn't get up. Oh, wait. Eastern Standard Time. Yeah, 4 o'clock. He's getting up now, about 8 minutes or so.
You think so? 450. Yeah, man, I don't like this premium in Tesla. The call spreads are cheap.
Of course, because there's so much call skew. You know this. Do I have to give you a refresher course? You know, there's a 37-page refresher course on Tasty that gives you all our mechanics. Should I help you with this?
I'm going to wait till after the close and sell some Tesla. I can't sell it because I think it's going to open $5 higher after the close.
Oh, great. Well, why don't you, conventional wisdom would say then buy some and then sell double as much, $5 higher.
Buy it and then sell it $5 higher. Yeah.
Makes sense, right? You know what else makes sense, my friend? These three gentlemen. That's right. Chris, Ilya, and my friend Dylan. How's everybody doing? I just wanted to get Dylan while he was eating his pistachios.
Gentlemen, how goes it?
Goes well. He's not probably eating pistachios. If I know him, he's probably eating like a nougat or something like that. Dylan, what do I got?
Almond.
Oh, that was like Taron or something like that.
I like a good almond. No. You know, I don't want. I gotta maintain. If it gets too exciting, I won't be focused on the glory that's about to unfold around us.
Yes, when Sosnov capitulates.
Oh, you never know. Could be anything.
Capitulates. What are you on crack?
That's the standard answer. Standard answer.
But
Christopher,
how about I mean, I told
Christopher,
you that. All right, listen. Say what you guys.
Go
say,
ahead. I was going to go to
No,
Christopher.
no.
Christopher, this is your time to gloat, my friend. Give me something. Say something. You're welcome. Say anything.
They called me a madman.
They call you a madman. There you go. Perfect. Good job out of you. Good job out of you.
22K, Tony. Those 22K calls purchased on September 19th in the NASDAQ. They never look so good, but I'm out of them now. We were 20 days to expiration, so we took profit. Have moved forward the position to a new long NASDAQ, long 23K, short 23, 500 call spread.
Because Trump's going to pump?
Doesn't matter who's president. This market's still going up.
Understood. Ilya, say something profound.
It's a good thing I got out of those NASDAQ puts when I did. My God, I'm pretty happy with sitting in the puts in the Russell though. That's not making the move. That's doing the right thing. Good on you, Russell.
You're like the towering line drive of baseball right now. You're happy you got out of your puts at a salvageable price. I get it.
That's right. I looked at the July high going away, and despite all this talk of big boys don't use stops and whatnot, I looked at it and said, you know what? Maybe I don't get kicked in the face on this one.
Can you teach Tom how to do that?
You know what's funny is that this is what happens at market tops. The dummies get all giddy. It's like, because that's what happens. Like this is very classic. This is classic market behavior. Like,
we got another 1,000 points ahead of us at ES now.
All the Batistas, all the Vecchios, they get all puffy chested up here. And then when it starts turning around after like day 2, they go, I don't know what happened. It looks so good. You can't sit here.
Yesterday was day 2, Tom. Yesterday was day 2, Tom.
You can't sit here. You can't sit here and for years go, you know what? You got to sell into strength. You can't sit here and say, which you don't do, Chris. I'll give you credit for that. But Tony does. Tony's just he's like, he jumps on whatever bandwagon's hot. But
no, you're completely wrong. I
you
am talking
cannot
about
sit here. Hold on, let me finish.
Volatility is low for 4 months, and I have told you not to get short because volatility is low. I said to you, and I quote, I'll miss the first 2 or 3 days of a down move not to have short delta into this short volatility. And when volatility upticks into the 17, 18, 19, 20 handle, then you can start doing something and nibbling on the long. Till then, you cannot be short this market.
Volatility is low.
And I said we would go sideways up until the end of the year. And then I said in the beginning of the year, maybe as early as the first or second week of January, we'll go lower. That is what I've said from the very beginning. Because they're going to lower taxes on capital gains.
Volatility
is what
low.
I said.
Volatility is low. It's time to go. And when the market's high, you got to take profits and you got to be smart and go to the sidelines. And that's just the nature. Sell high and buy low. You can't like arbitrarily decide when to pick and choose to do that. So that's why I stick to my guns.
And do you lick your wounds while you stick to your guns?
No, actually, I'm gonna just fine. I'm not having a problem. I didn't do anything bad today. So we'll see.
Did you do any good today?
A couple good scalps, nothing else. But I'm positioned. I like my position.
You liked it better yesterday.
Liked it way better yesterday.
Fair enough.
What is your position?
Take me home.
Universally short?
It's not even that. For me, it's not even that big a short. I'm really not. I haven't added to my shorts in like weeks.
No, you haven't. But you've been trying to maintain.
I've been maintaining just like a pretty small short position. I haven't loaded up at all. I want to. I will consider it for sure. I think we're at that level, but I don't know if we're going anywhere before triple witching, which is a week from Friday, and the roll and everything else coming out right now. So I'm not forcing it, but Friday the 13th possible, but maybe a week later.
say this: the S&P is not making record highs, despite the fact that the tech leadership of this entire rally for over a year now is obviously feeling very good about itself, and that's because the Dow is soggy, and so is Russell. So it's a very one-way kind of thing here. If you were going to roll over anywhere, so sort of looking at the S&P basically at the high, if you were going to turn somewhere, this is a good spot to do it. Is there any evidence that we're turning, though?
No.
I'm not seeing it.
No. And by the way, I just canceled that Adobe order. They took that Adobe strangle that I just put in, Tony. It's 30 cents lower than where I was trying to sell it 2 minutes ago. So they just crushed premium in there.
Yeah, and they widened some of the strikes a little bit too.
Yeah, I
totally agree.
It's hard to get filled in there. So I didn't do anything for earnings tonight.
Markets aren't good in there either anyway, so I think it's probably prudent.
No, tomorrow morning you'd be spending a lot of time trying to get out. And yeah. I don't know. Weird day. No sell-offs. No sell-offs all day long. Just a grind higher.
Biggest sell-off we had was on the close here, just about 10 handles from 6102 to 60,091.92.
Bell to bell
CPI
rally
was a scorcher.
Bell to bell rally.
As soon as that number came out.
Yep, totally agree. All right, gentlemen, you know what comes up next? Overtime. That's right. With these three gentlemen, we'll be back in 90 seconds. Not going to want to miss this.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
NASDAQ closes as a new all-time high thanks to Alphabet. It is Wednesday. It's December 11th, 2024, just after 4 p.m. Eastern. I'm Chris Vecchio from New York. Ilya Spivak in San Francisco. Dylan Radigan in Milan as we take you through the rest of this hour. Get ready for the futures market close at the top of the hour. If you're joining us today on the platform, tell us what you're trading on YouTube. Join the conversation over there. If you're on youtube.com, tell us what you think of tastylive.com. See what we're all about. It was a day where the market was waiting for that CPI report. And as we turn to the charts, we see that once that was out of the way, the rally in the NASDAQ began. CPI comes in right on the screws, absolutely no surprises. And there, henceforth, the market begins to move up. Now, we have some earnings here after hours. There's a little bit of a pullback right now over the last few minutes. But by and large, it's a good session. NASDAQ up 1.7% here, if not off the high, closer to 2% up. We see the S&P is up by 0.69%, just under 6090. The Russell, a little bit of a laggard, up by 0.38%, and perhaps thanks to the dramatic underperformance by UNH, once again, down by 5.66%. The largest component of the Dow Jones brings down that index, which closes lower by 0.3% or so. But guys, this is a day where the market looked at the inflation data. It saw no problems. It got a further pat on the back when we had the 10-year note auction, which was really, really strong. Stops through higher bid to cover ratio than the previous auction and the 6-month auction average. And stocks just get mostly a green light here. Ilya, the CPI report today, break it down for us. Outside of the eggs category, which were up 30-something% year over year, most categories are in a place that the Fed is probably comfortable enough with to cut rates next week.
I mean, there's no question. And the markets were not questioning, I think, whether the Fed was going to cut or not next week going into this report. As it happens, the numbers come out basically right on the money. I mean, exactly as expected on year headline, exactly as expected on core. CPI 3.3 there, and yes, you get a third consecutive month of standstill there. So disinflation now hasn't occurred for 5 months since we went from 3.3 down to 3.2 back at mid-year. We idled there for a while, then we went back up to 3.3 for a while, and we've been sitting there. But unlike what happened at the beginning of the year, when you had, frankly, a more modest stalling, a smaller roadblock to disinflation, and the Fed got all hot and bothered about it and started moaning about the lack of progress, started cutting rate cut expectations. This is May and June. Now the Fed, if you listen to Powell, read the FOMC minutes from November, it's all, hey, data is volatile. You got to look through that. We're on track to 2%. Everything's okay. So if the Fed doesn't care, then the markets can't be expected to care either. The cut in December is very much still on the menu. If we look at what is being baked in currently, we are looking at a 98.6% chance that the 25 basis points come off next week. That's not really a controversial thing. I don't think anybody thought that was going to be any different. If you look at the historical tab there on the CME FedWatch tool that you're showing, and you take off this multitude of lines, but for the 425 to 450 line, or the 400 to 425 line, rather, you can see sort of where the odds are for this situation. I mean, we're at the highest and most convincing setting for this rate cut since back in October. So needless to say, the markets think the move is coming. The larger question for me really was whether this CPI report would be a kind of inflection point for sentiment, where the markets would say, all right, everything's as expected. We're not going to get any kind of juice in this story until the Fed makes its policy announcement and gives us an updated SCP next week. We've seen that there's been a pullback in yields. There's been a pullback in the dollar since basically mid to late November. Maybe there's a similar correction just around speculative interest waning, as we discussed on the show yesterday in stocks. And clearly the answer is no. No waning speculative interest. And probably, and we'll get to this in a moment, the rocket ship that is NASDAQ today helps on that score, because if you look at the other indexes, they are much soggier than what you see here. RTY, the Russell, very much still in a trend lower. The Dow breaking down. The S&P, which kind of is a catch-all basket for all of this stuff, ends up essentially stuck at near the top of its range, but not extending higher. So it's interesting what could have been were the NASDAQ not for its own reasons on a race, but so it is. And clearly bond markets thought that this was some degree of relief as well. We'll see what that means
what
going
exactly
forward.
is the good news here? That inflation is not as bad?
I don't think there is any good. I don't think there is any good news. I think the important thing is there's no bad news. I don't think that this report changes anything. If we again look at the
which is the good thing is that it's unchanged basically.
Yeah, the good thing is that this did not.
The future expectations are unaltered by this.
This scared no one. I think that's the
inflation is evolving as expected.
Yeah, I think that's really the thing. I don't think this amounted to any kind of news. If you look at what is baked into the markets for next year, we got a little bit of a wiggle in a less dovish direction. So now we're baking in 57 basis points in rate cuts for next year versus it was 62 yesterday, and the lowest recently was December the 6th. That was 67. I mean, these are tinkerings at the margin.
Tinkerings at the margin, Dylan. This week during the pullback in stocks, you were saying that the super glides here and people need not worry. Your insistence, at least in the NASDAQ, rewarded today. Or we do get to close at a new all-time high. Was it a nice little 2-day pullback? Should we be looking bullish now into the FOMC meeting? It seems that people really aren't concerned about inflation. If we
I don't see how you don't own stocks at least between now and the inauguration until there's some crazy tariff thing. I think from here to the inauguration is like crazy town higher. That's what I think.
You see, Google today is
inflation
really
was your only boogeyman. You guys are telling me inflation is not manifesting as a problem. And look at there. Look, I mean, come on, look at this.
I think inflation only manifests as a problem if the markets think the Fed will go and change something about what they're doing in response. And so
you're suggesting that there's risk in the Fed comments next week? Is that what you're saying?
Yeah, I think there is. I think there's risk in the comments. I think there's risk in the SEP. I think the baseline, if you look at the last time they updated the SEP, that was September. They said 100 basis points in cuts next year. The market said 130. The markets have cut that in half, from 130 to 60, essentially. The Fed then has clearance to cut it in half as well, to go from 100 to 50. If they go to, let's say, 25, if they overreact, much like they overreacted in June when they went from 3 cuts to 1, then yeah, you could get spooked.
Google was Google today,
I don't think it's likely either. I think they're going to go to 50 and basically give the markets the equivalent pace of what they're doing. I don't think the comments are going to be controversial. They'll be wait and see, and they're going to wait and back up. And the real question will be, is that enough for speculative fodder to basically say, all clear, on we go? And the answer may well be yes.
I mean, all clear. I mean, if this Google chart of Tesla today is not the all clear, then God help us when they get the all clear. I mean, look at this thing.
Tesla 424 here, Google up as well, 5.52%. It seems to be more of the AI story. For those that weren't watching the news last night, Google put out an announcement that its new quantum chip Willow basically blows out prior expectations for any computational efforts we previously put forth. It was able to solve a computational problem that normal computers would take longer than the entire existence of the universe to date to solve. It solved it.
The Quibbit vibes.
Right. And so
like it.
As now I'm reading up on this, I've put together a little explainer here because I'm trying to learn about, I guess we got to learn about quantum computing now, take off our geopolitical hats of being experts on Israeli history and Syria.
No problem.
We're going to become experts.
We're on our way to teleportation, boys. It's all about the holy grail is teleportation, and the quantum computer is an essential step on the path.
Okay, so what is quantum computing? Quantum computing is a type of computing that uses principles of quantum mechanics to process information. Unlike classical computers that use bits, which are zeros and ones, quantum computers use qubits. Qubits can represent both zeros and ones simultaneously, thanks to a property called superposition. This allows quantum computers to perform many calculations at once. So Google's Willow chip is a significant advancement in this field. And why does it do this? It performed a benchmark computation under 5 minutes that would take a supercomputer 10 septillion years. That's a 1 followed by 24 zeros for those counting at home in order to complete. That is longer than the life of the universe to date. So this seems to be a material breakthrough. It has absolutely nothing to do with crypto. It's not going to be able to solve Bitcoin's cryptography at any point in the near future. So I just want to put that to bed before we go into there.
Does it say anything about teleportation?
Not yet. Mostly energy, mostly medicine, mostly AI stuff. But it is a significant step forward today. NVIDIA, I don't really see anything dramatic there, up 3%, which we call it not dramatic, but technically you could make the case that having been at uptrend support off of the August lows with that big bearish bar yesterday, today's inside day and closed back above the 1 week moving average is a nice bit of relief that perhaps suggests we're not done yet. But I bring up the stuff about quantum computing here, not tongue in cheek to say we have to become new experts on it, but to just contextualize why Google is up by 5.52 and why it's trading at new all-time highs. Dylan, we were talking last week about reflexivity and bubbles and how they form and how they're justified and how you get drips and drabs of information that substantiate the previous bias that provide new fodder for the bubble to grow even more. I don't think anyone had, at least we've been talking about it this year. We've talked about superconductors a little bit, and that personally excites me a lot. But quantum computing has not been any sort of narrative to drive the market higher in recent weeks and months. So a new narrative heading into 2025 may seem ridiculous, but it's enough for investors to put a 5.52% gain on the board today. And if Google
and if you can be a zero, if a computer can be a zero, can contain data that is both a 0 and a 1 at the same time, then teleportation is possible.
I was wondering, almost worried where you were going with that, but you kept it in the teleportation ring, which I appreciate.
One would reckon if a 0 and 1 can exist at the same time, then I can exist in two places at the same time.
Bingo. If I can be in Portola with my friend Ilya at the music festival, and I can be at the bakery in Bedford with my friend Chris simultaneously.
That sounds harrowing, frightening to see you in two places at once.
If I smoke a joint with Ilya in the park in Portola, does that make me want to order an extra muffin at the bakery in Bedford?
No, but it might help you teleport you to the bakery in Bedford.
Might help take you there.
At least mentally.
We have Humboldt's finest here for you, Dylan.
I'm sure. I am confident in that.
Okay, so you talked about Humboldt County. I watched just watching all sorts of random things. A few months ago, I caught this documentary on Bigfoot on Hulu.
Love the topic.
And it's all about how a bunch of farmers up in Humboldt County killed a bunch of day laborers decades ago, and they started spreading rumor. It spread the remains
they
around.
blamed it on Bigfoot.
And that's where the rumor of Bigfoot comes from. And they interviewed people who were part of the series of murders who like were on camera and like, you know, the garbled voice box and everything. And it was interesting. It was very interesting. Yeah, it was
How long ago was this?
Last year the documentary came out. Yeah, it was about Humboldt County.
I mean the murders.
70s.
Bigfoot is real, bro. It was not some murder cover-up story. What about these UFOs in Jersey? Speaking of odd and unusual occurrences.
I find it really funny that people are reporting that there were drones out, and then, you know, police are checking it out with like helicopters, and then people are calling the police on the helicopters as the drones.
That's right. Which goes back to bubble reflexivity.
Which goes
Full
back
circle.
to bubble reflexivity about, you know, you get this Ouroboros of a self-fulfilling narrative, which legitimately here though, right? You now
propelling
have
Google, propelling all the Bag 7, basically.
Propelling the semiconductors today, which have a pretty bang up session, 2.45%. The best traded semis, broadly speaking, for the past few months has just been trading around the midpoint of the range from the August high, or rather the July high to the August low. Not that any hay is being made here. But the NASDAQ, you know, continues to show that strength and may have a new toy to play with, a new object of speculative interest moving forward. We are now entering this week before the Fed meeting, however. The Fed meeting is a week from today. And Ilya, you point out, market's now pretty locked in, 95% chance that we get a rate cut next week. The path that follows thereafter, obviously not so certain. But I have to say, today's performance in bonds and notes, not on my bingo card. At 1:01 p.m. Eastern time, in our pocket, we had one of the best Treasury note auctions in months, and we had a CPI report that did not flash to the upside whatsoever. And the reasons that we were trading to the upside, motor vehicle insurance and eggs. So I was looking at bonds and notes saying, oh, maybe today's going to be a good day. Oh, those Fed rate cut odds are moving up. This should be a pretty good day today. And yet here we are closing down at the lows. Recently put on exposure here. We haven't even talked about what the adjustments made in NASDAQ and the S&P today. But before we go back to that, you know, having put on a trade here a few days ago, it's obviously just down 3 days in a row right now. Ilya, if we can't get a rally in treasuries when rate cut odds go up and demand for treasuries at auctions is as strong as it's been in some time, what are we doing here? What's the bull case right now, besides the fact that volatility is cheap and therefore out of the money call options might as well take a flyer?
Tough to say. And those of us that are long a little bit at the long end, as I am, are basically back to even here. And looking at this and going, yeah, I need a good reason to stay in this position. If we look at ZB, I mean, ZN tells the same story. We're basically at the lows from earlier in the month, from the beginning of the month, so we're essentially at immediate support. If we look at ZB, we're trying to kind of claw our way through that support here. We're basically on the last line of defense. So if you don't hold here, then we're back to higher rates. I think it makes sense, perhaps, that the bonds are doing this today, in part because the NASDAQ story is a growth story, in part because the chips breakthrough that Alphabet talked about is a growth vector. And growth means reflation, means higher rates. So especially at the long end, you get this kind of a pro-growth move in rates where you get more economic activity, you get a hotter economy, you necessarily get a Fed that doesn't have legs to cut in a lasting way. So it makes sense in that sense, but of course that's kind of episodic to today. I think as ever, it's very difficult to extrapolate these things into real economic growth and not market hopium about that growth until you start to see it more concretely on the ground. And that's not to say that you won't, or that the breakthrough is anything less impressive than it is. It's an incredible breakthrough. There's no question. For me, it's not the veracity of the story around quantum computing and AI and everything around the tech boom as we've witnessed it over the past 2-3 years accelerating. All of it is very encouraging and makes perfect sense as a longer term narrative. The question is, where does the build out phase hit the usual skids? There is a redistribution, and then the new champions emerge in what is the real deployment of the technology phase. I mean, to be kind of a simpleton about it, we're not talking about MySpace. We're not talking about Friendster. We're barely talking about Facebook at this point. So that's sort of the essence of what we're talking about here. Nothing disrupted the longer term telecoms narrative during the pain that was the .com bubble burst, but we still had a .com bubble burst. And that's the history of these types of things pretty much every single time that I can think of, and certainly every time in kind of semi-modern memory, be it railroads, be it, frankly, the 13 colonies that became the United States and the speculative bubble in their warrants. So the whole thing is very encouraging and will be the future, yes. The real question is, okay, when do you get the washout that then sets the stage for the long
Right,
arc?
but let's talk about bubbles for a second, if you don't mind. I don't disagree with the word you just said, but let us discuss this issue if we might.
Sure.
The thing with bubbles, as we all know, and as you surely know, and we all know,
yes,
is that they can go on for quite some time.
An indeterminate time not to be guessed by anyone.
And sure, at some point, at some future point, by virtue of the reference to the warrants of the 13 colonies, the railroads, the internet, everything in between, there's some sort of catastrophic decline in value that lies at some abstract point in the future.
Yes.
Which leaves us with two choices. One, we say, damn the torpedoes. We get long the bubble, be it that as it may, and we enjoy the glory of a fine Christmas in the Vecchio household.
And rightly so.
Or we sit around waiting for the eventuality that we know is certain, but we don't know when, and we may in the process forego years of extraordinary performance. And I'm just interested in how you reconcile that.
Again, I totally agree.
I'm sure you do. You're a rational and well-educated and intelligent man. And so understanding these two truths, how can you not at least participate a little in the glory of the bubble?
You have to. The question is about whether you allocate an incremental dollar on a 45-day expiry cycle to NASDAQ at record highs today, or whether you allocate an incremental dollar to shorting NASDAQ at record highs today. And I would do neither. I have no exposure. That's really the question. Am I long, broadly speaking, from a longer term, not a trading perspective, but a holding of equities for the eventual retirement account perspective? Of course, and in size. Of course. The question that we're talking about isn't the longer term narrative. It is the opportunity for tactical trading at a shorter term window. So do you short the NASDAQ here? You have no evidence to do that. You'd be nuts. Do you buy it at record highs, though, given how far we've come?
Yes.
I don't.
So now it gets interesting. Look at Party Boy. He wants more. wants more.
Well, until it's broken, you don't fix it. And so I get it. I totally get it.
But you're saying an incremental dollar today on the NASDAQ, no thank you, sir.
I'm saying I wouldn't go and buy
Party Boy
it right
saying
now.
give me every incremental dollar you've got. I got a wedding in Boston. I got to spend the money before I leave town. Let's make it happen so I don't have to think about it over the weekend.
I'm like, let me borrow your incremental dollar so I can lever up.
Yeah. For me to want
Who's
to
got
put
an
an incremental dollar on the NASDAQ
Sorry.
now, I'd have to believe that in 2-3 weeks' time, it's going to be higher than it is today.
So there's your 45 days.
Now, do I believe that it's going to be higher than it is today in 2-3 weeks' time? I don't.
Really?
I don't believe it's necessarily going to be lower, which is why I'm not short. Otherwise, I'd be short. I am short.
I don't know what you're saying. I don't know.
I don't know what this thing
is
going
to do.
I
don't know.
I don't know what this thing is going to do.
Yeah, this thing's crazy.
I'm happy to be short the Russell, which keeps falling.
Mm-hmm.
And it's because the price action has turned. If the price action here turns, then la-di-da.
Mm-hmm.
If it doesn't, then it doesn't. But I look at this and I go,
look. Boy's gold chart while we're talking. He's trying to foreshadow. Did you see that gold chart he flashed us? He's
and
like
I missed my window
swinging
to
her
buy
hair
it
around as she walks on the sidewalk. Look at this. He's just showing off his little gold chart. He's like, look at me. Look at me.
Just got to get that dirt off your shoulder.
No, let's hop into the NASDAQ here in the S&P, because yesterday was 21 days to expiration for me for the trades that were put back on back in September, right here when the Fed, right after the Fed gave us our 50 basis point rate cut, and we started playing with the reflation narrative. The trades at the time in the NQH5 contract were along the 22,000 calls. Let's see, there's a little bit of activity here today. It was along the 22,000 calls, short the 22,500. That was taken off the board. New position initiated, 51 days to expiration, long the 23K, short the 23,500. So similar structure, 500 points wide. I'm still optimistic on NQ. I'm still optimistic on ES, where today, if we go over to the ESH5 contract, likewise, that was at 20 days to expiration. So that was taken off the board. The long 6,000, short 6,200 call spread worked out very well. But I have mentioned that I'm getting a little bit less aggressive on stocks up here. And the way that you do that when you're looking at these call spreads is to change the width of the strikes from one another. And so instead of going 200 points wide here in ES again, I'm only going 50 points wide this time. So long the 63, short the 63.50, out 51 days. The volatility remains low, momentum remains positive, stocks continue to go up. And this may be day 6 of an ascending triangle breakout in the NASDAQ that took many, many months, about 5.5 months to form. So to say that it's over here just because we set new all-time highs, I don't think is a reason to get off the train. And then I'm also reminded of, when's the best place to buy stocks? Is it, if you're looking for a predictor of forward returns over the next month, is it 5% from an all-time high? Is it 10% from an all-time high? Is it at the all-time high? The single best thing that you can do if you're expecting stock returns is to buy the day that new all-time highs are hit. Period, end of story. So for me, it's going to stay long. Just restructuring the trades in a different manner to take some cream off the top.
I believe that we should rename the show "The Future of the Incremental Dollar," because anybody can talk about what they're doing with what they've got, and it's working, and I own this, and you own that, and we all own something, and some of it's good, and some of it's bad. But if you're watching this show, the question I even ask myself in being a panelist on this show is, and I love the way Ilya framed it, is, what am I doing with my incremental dollar today? And my greatest frustration with financial discussion is a bunch of yeehaws talking about what they own, what they like, what they think, what they got, what they don't got.
Blah, blah, blah.
And the one thing I love about this program or this platform, and I love about both of you and being honored to be your co-panelist, is the opportunity to talk about the future of the incremental dollar.
Incremental dollars get reinvested.
And I like that you, Becky, are like, give me, if you're not going to spend your incremental dollars, to send them right over here to the bakery in Bedford, and I will look after them.
Yeah, we should tell Tazza that they're getting a nice little bump on today's show. Dylan, when I think about the structuring of these trades, why continue to roll them up? In this case, long the 23 short to 23,500. Max loss is $1,500 against a potential max profit of 8,500. We're talking about another 1,000 points in the Nasdaq over the next 51 days. I think we can squeeze that out still. And the winner of the previous position is much bigger than the max loss here. It's almost double, right? Not quite double, but it's up there. And so worst comes to worst, if I call a scratch between these two, one's right, one's wrong, I'm still going to walk away a net winner between the two at the end of it all. And if it happens to work out, this is a pretty good risk to reward ratio, better than 5-1 right now. But this is a market that it's showing that it's worth taking the risk. When volatility is low, momentum's positive. If we stay on that track, if we just find the right tool from the toolkit, as we've done for most of this year, we've been rewarded by taking that kind of risk. So I think it's worth rolling the dice. Just get more time on your side. I wish I had more duration, quite frankly, for the Nasdaq. The liquidity further out wasn't fantastic today. I was looking at the strikes out in the 72 days to expiration, and you could just see, long the 23 open interest rate now trading volume. It's just not there. So I had to go to the shorter duration. I think what I will do is, as liquidity comes into the 72-day expiration contract, that February 21st expiry, I may end up rolling out to there in the next few sessions once we get down to like 45 or 40 days to DTE, only to provide myself more time. But I didn't see the liquidity there that I wanted to structure it as perfectly as I had hoped to. So those are all on the follow page now, by the way, folks. I did see someone in the chat say earlier, Chris hasn't been putting his trades in the follow page. Well, because I haven't been trading the S&P and the NASDAQ since I put these positions on in September. I just had to sit around and wait for them. So there's nothing really else to do. But that's my trading style. I like to take those views that are longer term, let the macro glacier move. And I'm a garbage scalper. So you don't follow me into the pits if I'm saying we're doing this just for today.
How about this for a madman's contrarian, even though I'm not sure I have conviction myself? Why not buy up some puts when volatility is all the way in and you're on record highs, and buy them tight, buy them right underneath there, right up in there, low vol, because whatever happens, there's going to Ilya's point, at some point between here and there, you're going to get a little blowback somewhere, somehow, the Fed, something, and volatility is so cheap. Why not buy some puts, call it at the money on highs?
The only thing I would really think of, given how the markets tended to give its true reaction to the Fed meeting the day after, like we saw that in September, right? I would think that if you wanted to structure a trade in that manner, and this actually is something on my mind right now, because at 8 days to expiration, taking a flyer on maybe the market pulls back into the swing area where we were like in mid-November, right? This cracks and it gets down to 5,900 or so.
And volatility is so low, you can get in there,
Right. Looking at we could take a bigger swing here than we would like to. Let's go out to 50. For $200, 18% of probability of profit, you could get a 10-1 bit of downside protection that we see a reversal here. And yes, on the other side of a Fed meeting. And that's
how many days out are you on that?
8 to next Thursday expiration.
So you're saying just buy at the money puts on the Fed meeting and just on a 10-1 insurance policy?
Not at the money. I would go out of the money if you're looking for some convexity here. But if you wanted to structure this, as an at the money trade right now.
No, I defer to you. I mean, what do you think, Ilya?
You could still get better than you could still get better, than 1-1 if you're even straddling or at least bracketing the at the money strike right now.
I mean, I think it makes sense if you have long exposure that you're hedging to basically cover yourself. If you're like me and you don't have any exposure to things that are on the long side, and instead you're essentially looking to take pot shots at the rally and basically find a turning point if there is one. And I've taken a few good ones this year along the way higher. There's been some notable pullbacks, and those have been very lucrative. And when those happen, I lean in. And when when I start position and it doesn't go my way, as we were just talking about on last call with NASDAQ, I run quickly to keep my losses very small. So the idea that I'm operating under isn't to be right a lot. It's to lose very little when I'm wrong and to make more by hopefully a significant margin when I'm right. So I'm looking at the setup that Chris has here, and I say, okay, well, if you're long, yeah, then you probably want to buy some protection going into the Fed announcement, even if they don't say anything that moves the needle on the outlook, because it'll be some kind of a speculative release valve. And if you're up on stocks into it, you might come down out of it just as speculation becomes reality, and that tactical exposure is unwound, especially with the year end so close by. So even if the Fed does nothing untoward and the market still looks relatively buoyant going in, you might get a pullback just around people shuffling papers from column A to column B. So I think that's sensible. If you're like me and you're looking for kind of swings within whatever the larger narrative is, then you don't do that. You wait and you take a directional short when that presents itself. In the Russell, it has. In the Dow, if you're interested in participating in Granddad's favorite index, you've taken out the support on a range. I don't have any exposure there, full disclosure, but that's an actionable something. In ES, you don't have anything there. I've taken a little bit of a put vertical in SPY, basically at the ES high, which held basically around the tactical idea that NASDAQ's rallying, nothing else is. Let's see if what's going on here is a one-off Alphabet announcement and things readjust into the end of the week. But it's a flyer. It's very risk defined, and if it goes wrong, it comes off the board in a hurry. So I'm thinking about it directionally, and I'm thinking about, do I want to be short something for the next 2-3 weeks?
It's the holiday season, and you want to short the markets.
It's right up my alley.
Shame on you.
Real
Shame
Grinch.
on you.
A real Grinch, Elliot.
If we could get a sell-off for Hanukkah, I would appreciate it. 8 days. Can I get 8 days?
Back to Moscow. You keep it up.
No, that's the Santa Claus rally window. Hanukkah falls during the Santa Claus rally window this year.
Call you in.
It does.
Yeah, we have oil to burn in the last week of Christmas this year.
Can I get 8 crazy nights?
No.
Listen, this thing,
permission denied.
The stock market's going high between December, whatever today is, 11th, and December 31st. You got 20 days, okay? I don't know how many days is the market open, Vecchio. Probably of those 20 days, probably like 14 days or something between the holidays and whatever, 13 days. The stock market's going to go cuckoo bananas in the next 12 or 13 trading days. Put it in the money in the bank. Money in the bank. I'm with Vecchio. Give me some incremental dollars. I'll buy it at the open.
Yeah, listen, like I rolled forward again into the positions in NQ and ES. I just structured the trades in a manner where it was taking down the amount of exposure and the max loss that would occur here. Because I have reasons to think that first quarter may be bad, but I'm not going to pretend that I know more than the collective wisdom of the market. And the collective wisdom of the market right now is that everything is fine for the time being, and we continue to rally. And we aren't even in the good seasonal part of the month yet. That's the second half of December.
What are you worried about, Donald Trump or something?
I haven't been worried about Trump or Harris being president this entire year. It's inconsequential because the bottom line is the markets look at the deficit spending, and that's going to continue for the next few months. They're talking about a continuing extension, a continuing resolution to extend the government spending up until a new budget can be curated under the Trump administration. So the Fed is going to keep doing Fed things, and the federal government will keep doing federal government things for at least the next 3.5 months before we really have any significant changes in law. And, Gridlock. Gridlock has been great for the stock market, Dylan. The House majority will be what, 217?
Where's the gridlock? You got an
in the House. In the House. Because with all the appointments that have gone on right now, and those seats will be filled. Like Matt Gaetz' seat is going to be filled by a Republican. It's a safe Republican district. But until those seats are filled, you're going to have a 217 to 215 Republican majority in the House. That's one Republican who votes with Democrats, and it's a tied vote on anything. And we saw how contentious a lot of the budgets were over the last 2 years, where if you had 1 or 2 or 3 people decide to defect and vote against something, against the Republican majority, then the Democrats had enough to block the legislation. So I have a hard time thinking that the first budget out of the gate that the Republicans produce, you're going to get a clean vote where the entire party falls in line without at least a period of public, I don't want to say squabbling, but negotiations. Okay, so then realistically, are we going to get the implementation of a new budget in March right away? Not one that's super destructive. That's going to take some time. The Doge Commission is going to take some time to work through, potentially into 2026. So I don't see any change here. The Doge
Commission is never going to happen. The Doge Commission is just it's just a pleasure. It's like a titillation. It's a toy.
I mean, it'll happen in the sense that they'll meet and they'll talk about stuff and the news will talk about it, but good luck passing it.
In terms of implementation,
I sort of think of the Doge Commission. This just occurred to me. I can't believe I've only had this thought now. I should have thought about this earlier. The Doge Commission is sort of like the Green New Deal. It isn't actually a policy. It's not even a set of policies. It's a kind of effervescent idea in the ether somewhere.
But what it is it's content.
Yes. It's content. That's right.
It's a content narrative that can be propelled into the social media and media.
Are you for the Green New Deal or are you against it? What is it? Are you for the Doge Commission or against it? What is that? I don't know.
Shouldn't all Americans be behind like we should get rid of administrative waste out of the system? Yes. Okay. So Doge Commission, tell us what that waste is. We're wasting $900 billion a year. Oh my gosh, that's a lot of money. Well, $600 billion of that is actually interest expense on the federal debt already. So like we can't get rid of that. You're gonna have to gut things, and we've talked previously how because it's a non-statutory authority, everything that the Doge Commission recommends is going to have to go through Congress. And
then they're just going to blame the Democrats and run on the Democrats refuse the Doge Commission. It's a political prop.
It's always it's going to be a political prop. The point is that the near-term path for policy is probably set. So,
what about the tariffs? Come on, the tariff. I think there'll be tariffs. There's got to be tariffs.
Yeah, there's going to be tariffs. Trump's made that clear. But moving away from equities here for a quick moment, low inflation, gold has cleared the hurdle. 2748 was the high that we had here on November 25th. That was the bearish outside engulfing bar high that marked a dramatic turn in the metals market. Obviously, since then, we've heard that China's resumed its gold buying. Guys, while the GCG5 position that I've had on is no longer at max loss, now trading at a healthy 50 cents as opposed to 0. The GCJ5 position that was put on yesterday when gold started breaking out is doing a little bit better. For those that missed yesterday's futures power hour or the not J6, we're not out there. GCJ5 right now, that's long the 2850, short the 2900 call spread, 76 days to expiration, looking for a return basically back to the highs that we had at the end of October, beginning November. It appears to me that this looks like to be we talk about the indecision in the market over the past few weeks, head and shoulders or bullish continuation in the form of symmetrical triangle. It looked like symmetrical triangle won out. So we're now back on bullish momentum trade stance, looking for a market to move back to the highs. And I find the most encouraging thing to be about this, the volatility is coming back. I love to see that. The last few weeks during correction time, volatility was coming off the board. Now that gold is breaking out, volatility is breaking its downtrend. Not that we do technical analysis on vol, but the changing characteristic for volatility, how it's moving in the rhythm of the market, tells me that the bulls have the baton again. So talking about trades carrying through the holidays, being long gold is now something I am fully comfortable with, just as I was in September and October.
No, I like
anytime this year.
I like it here. I didn't. I was moaning and groaning about not putting it on yesterday, and by the time I came to it today, it was at that high and barely pushed through. So now I'm going to have to look at it tomorrow and see if I can get that put on. I don't want to do it through GC or even through MGC because they're just not small enough for the kind of risk management I want to do. So I'm going to have to do it through GLD, but that means I have to wait for the U.S. cash equity open tomorrow. So that'll be what it is, and it'll probably look like a call vertical. We'll see, but it does look like we're going back to the highs. Just looking at the positioning here, about the only fly in the ointment here is that sort of head and shoulders looking thing near the top. It's kind of a cockeyed head and shoulders and evening star candlestick pattern at the head. The underside of whatever that range was, the neckline, that's where we're at. So we're basically right at resistance. Maybe there's a nice reaction pullback from that over a day or two, and that gives me a buying opportunity because I'm certainly not looking to short it.
Dylan, quick note of interest here from the chat. Frank points out that he's never seen a Bigfoot body, nor has anyone been recovered. So you can teleport that over to him when you have a moment to use Google's new Willow supercomputer.
My man. Listen, I'm right on that. Tell him I'm right. I appreciate the interest. I've noted, and I'm telling him I'm right on that. I'm right on that. And in the world of UFOs, teleportation, and Bigfoot, I will also accommodate my opinion of gold, which is equally mysterious. I have no idea why gold prices the way it does or why it moves the way it does, and I will never trade it as long as I live. As a result, as a result, I'm more confident in Bigfoot than I am in gold.
All right.
So don't ask me. Whatever you're going to ask me about gold, don't bother. But I'll be happy to talk about oil or silver or Bigfoot or AI or Quibbit. But
Let's
gold, God help us all.
Let's go over to oil then. Up 2.46% today. You know, back
Piece
in the middle of the range.
East, short it. I'm long piece in the Middle East. Okay, I'm short oil. I'm short green tech. I'm long euro. I'm long piece in the Middle East. I'm long piece in Ukraine. I'm long piece in Eastern Europe. I believe oil is setting up for peace, and we should prosper as a result of its increasing decline, whether it's in the inputs of industrial economies or in the price of the commodity itself.
So you're saying that we should...
Speaking of incremental dollars, the long euro idea, that's an incremental dollars.
Yeah, there are going to be a variety of incremental dollars over here in this particular Milan household, getting long incremental euros and short incremental barrels of crude oil in dollar-denominated currencies as a function of my expectation of world peace.
I like it. I'm long. So being on both sides of the dollar has actually been very lucrative this week. The euro hasn't fallen very much, and so having the long side there has been not very painful, frankly. Having the long side of the pound has been even less painful. It's stalled a little bit, but it hasn't actually gone down in any kind of meaningful way. But then having the long side of the greenback against the Aussie, that's worked pretty okay as well. The RBA started squawking about maybe rate cuts preliminarily. I'm getting a little bit antsy now that we're testing these lows that you've got there on the screen, Chris. But I am pretty happy with how it's worked out so far. I'm hoping the ECB gives the euro a nice kick higher, and that will sort of complete the good vibes.
Yeah, we have an ECB meeting coming up tomorrow morning. Bank of Canada met today. They did what was largely expected of them. I got to say, Ilya, the euro and the pound both, they're kind of looking a little wobbly here right now. talk about this inverse head and shoulders pattern that may have been forming on short-term time frames here in 6E or euro-dollar spot rate, depending upon what you trade. And we see here that the uptrend instead from the swing lows that we have November, December is ultimately lost. It's a similar technical setup to what we're seeing.
You're right at the bottom of the range, though.
Yeah, and the pound hasn't given it up yet, right? There was this swing area that we jump into starting in mid-November. We clearly run into resistance just for the sake of clarity and removing some of this stuff. We can see here left shoulder, head, right shoulder, and we're kind of pinned against the neckline. We haven't lost the uptrend here quite yet. But then the yen, more like the euro, uptrend off the November swing low, starting to break. The dollar is not at it right now, is the point. Right.
Well, and that's yields, right? The yen is a creature of yields, that is U.S. yields, and the story in yields. I mean, we just talked about bonds near the top of the show. Yields are up. No surprise then that the yen is down. But again, look at where it is. Former resistance turned support from November. It's sitting right there. Look at the euro. It's sitting on the bottom of its range. It's not breaking down. It's been oscillating in this range for quite a while. So
quite a while. But that euro's, if you're going to buy the euro, I'd buy it now. I'll tell you that. 2025, mark my words.
I'm not getting out of my
year of the euro.
I'm not getting out of my short here.
Your euro short or your dollar euro?
No, short dollars, long.
You're with me. You're with me.
Yeah, I'm long euro here. And mind you, I am very bearish euro longer term.
Well, yeah, it's a doomed currency. It's a contrived.
Yeah, I mean, very bearish. But as a tactical idea, I mean, I've been bearish, Chris. Have you ever known me not to be structurally bearish euro in the decades that you and I have worked
the whole economy, demographically, who are these people kidding? But 2025, year of the euro. Did you see the Giorgia Meloni headline in Politico, Vecchio? Did you catch that? The Italians have taken over.
I got to read that.
Did you see that, Ilya?
I didn't. What they say?
She's been declared the most powerful individual human in all of Europe.
I mean, that makes sense.
That's like, being named the best basketball player on the AAU under 17 team.
Hey, Europe's, throwing insults from the Bedford Bakery, huh? Listen, Europe's a real place.
You mentioned Italian. Those are my people. I can say those things about my people.
Yeah, okay. Well, then why don't you come over here and say it to our face?
Okay. I'll boopity bop my way over there and we'll have some words.
Let's get that quantum computing going. I want to be able to get a croissant in Bedford or in Milan at my choosing and with the same time spent on travel. That's what I want.
Teleportation, bro. Teleportation.
Take me there.
It's all about the quibits.
Let's talk about a potential dollar path here, though, because I saw a really interesting chart yesterday. I believe we shared it here or we shared it on Futures Power Hour. I forget. But it's from Steve Dunze, who's over at Pictet Asset Management over in Japan. And it's the dollar index rebased to election day 2016 to 17, which is your light blue line here, versus how the dollar's been traveling thus far in 2024 heading into 2025. You can see here that both of these election days line up on this left dotted line. And that looks like a pretty
lower is a stronger dollar. Am I reading that correctly?
Lower would be
a weaker dollar.
Higher, stronger dollar. But look at the rhythm here of these two lines, right around the 2016 election day and the 2014 election day.
I always become very suspicious of things.
As am I.
I mean, what do we even look at?
People start to trace things with crayons, and I go.
Once you start drawing lines on lines, I mean, I can go to kindergarten and get this done.
That's true. I'll consider that slanderous. Not quite the level of slander of asking me where I was in New York City the day that the UNH executive was killed, but it might be up there.
Sorry about that. I love you. It's only with love. It's really with great affection and respect. I do apologize.
Yeah, a guy who I play a baseball game with here says, just checking in to say, I hope you enjoy your new on-base percentage toy, talking about Juan Soto, and glad to see it wasn't you gunning down healthcare CEOs in your free time. So,
listen, you had a great familiarity.
I've got to do something about this.
Well, when you said it wasn't a silencer, it was a suppressor, like when you started offering subtle details of the nature of the weaponry on the day of the event, brings up questions.
I'm a millennial man who plays Call of Duty. Forgive me, Dylan. I mean, like, what else do you
Well,
want me
you
to say?
seem to know it was not a silencer.
Listen, if
GoldenEye has taught us nothing.
Yeah, please, right? Yeah, the only thing GoldenEye tells you is that you can't be. Never mind.
You're trying to say something of consequence.
I'm trying to say that overtime is out of time for this Wednesday, December 11th, 2024. We'll be back tomorrow, same time, same place. I won't. I'm in Boston for a wedding, so good luck the rest of this trading week. For Ilya Spivak and for Dylan Radigan, I've been Chris Vecchio. Stick around after the break. We'll be back with more Tasty Live with Macro Money and Ilya Spivak. See you soon.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
First, Tasty Live united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other Tasty Live traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
He's a senior in high school.
Okay, cool.
He has $25,000 from working. That's amazing. Do you think it's best for him to stick with defined risk or undefined risk strategies?
The term undefined risk is a really crappy term. Undefined risk strategies have a higher probability of success. Defined risk strategies have maybe less risk. I prefer undefined risk. He should mix them up.
Any percentage, like weighting, like 60-40, 70-30? Like,
I mean, I'm 75-25, undefined over defined. He can be whatever he feels comfortable with. He can be 75-25 defined or 75-25 undefined, or he can be 50-50, anything he wants.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
if you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88, so Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car, you get a car, you get a Scott Sheridan, you get a Scott Sheridan.
I want the car.
That's right.
Well, the markets certainly liked U.S. inflation data, at least if you look at the NASDAQ today. But everything basically takes the cue from numbers that were basically in line with expectations to say, event risk is out of the way, power them higher. That's the story that we come into the second half of the week with here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live, and we turn our attention across the Atlantic as we proceed throughout the week, because one of the most interesting pockets outside of heady stock markets has been the story that the CPI numbers really subsume at their core, and that is, of course, the critical narrative for markets basically the entire year, but for the U.S. presidential election, the outlook for the Fed and the implications of what that means for markets. But of course, as with anything in financial markets, everything is relative. And so on the flip side of the Fed, there is other central banks, and there is what the dollar does against other currencies, based on what the spread between the Fed and those other central banks looks like. So needless to say, it makes sense to take a look at what the other side of the ledger is doing when it does stuff. And doing stuff is exactly what we are going to see here, because the next big part of the macro story here over the next 24 hours is going to be a monetary policy announcement from the ECB, the European Central Bank. So what we are going to do here is take a look at what that looks like, take a look at how the markets have onboarded the information from the Fed and from the ECB into price action, where there might be an interesting trade setup in the euro from here, and how it might get catalyzed by this very ECB meeting. So let's start here with a look at what the euro has done and why it's been doing it. Needless to say, there's a pretty precipitous decline here, all the way down into lows that we hadn't seen since May of 2022. 2, near the 103 figure there. That's this rapid slide from the second half of September into the second half of November. And the story here really has nothing to do with Europe or with the euro as such. It is a story about the US dollar getting stronger. And why it was getting stronger surely is of no surprise to anyone at this point. It is what happened after the Fed started cutting rates in September. The Fed delivered, of course, we now all know, a 50 basis point rate cut, and then said it would do another 150 basis points to follow, 50 more in the calendar year 2024, 100 basis points in 2025. The markets looked at all of that dovish posturing and said, right, so the economy is not weak. Growth is running, give or take, in the vicinity of 3%. At least it's running closer to 3% than it is to 2%. So you're not going to be able to do all of these rate cuts next year, because as you start cutting with this kind of vigor now, what you'll do is lift inflation expectations and reflate the economy. So we're not going to see this many rate cuts out of you next year. And that's a trade that developed in markets, so-called reflation trade, as I've taken to calling it, for the better part of 3 months. You see it here. So on top is the 5-year and the 10-year break-even rates. These are inflation expectations for the U.S. as derived from bond markets. This is the spread between nominal and real rates. And of course, to get from nominal to real, you have to subtract inflation expectations from the nominal. So if you then subtract from the nominal the real, you end up with what that inflation adjustment is. That's what these are. You can see that from September, inflation expectations are rising as you get the sense that the Fed is overstretching on the dovish side of the ledger. Once the Fed is out of the way with their policy announcement, because indeed you can see the markets are front running this, they get into the top of the inflation expectations range before the Fed even pulls the trigger. But once they do, you see an upshift in bond yields. Interesting, of course, and maybe counterintuitive for an environment where the central bank is cutting rates, not hiking them. But of course, markets are forward-looking. They don't trade on what is, they trade on what they expect will be. And the question that the market is always asking is, what have you done for me lately? So we have, in response to what the Fed does, not a decline, but a rise in yields, a rise in the US dollar, and a flip for the yield curve from inverted to positive. That, of course, runs until about the end of November, about the second half of November, where we can see inflation expectations anchor and start to even come in a little bit. The dollar anchors, starts to come in a little bit. Yields anchor, start to come in a little bit. That's this bottom right here, where we set this big spike low and then come back up, and now we're digesting into some sort of a range. And of course, the question is, well, does this now open the door for the next leg down, or might we have a bounce here? And that's what we're going to look for in this conversation at trying to figure out. Now, the situation in Europe is dire and growing more so by the day. So it's interesting to look for a euro here that's holding up, frankly, as well as it is, because if we were trading euros on the basis of what's going on in Europe, that might be giving us a euro that is much lower than it is currently. Indeed, we can see economic growth in Europe is back to recession-like conditions. The latest numbers from S&P Global on the Purchasing Manager Index, which is a sort of timelier version of looking at the business cycle than perpetually lagged GDP numbers. The latest for November gives us contraction. As ever, these numbers are centered around 50, where that's neutral. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. What we have here is accelerating contraction. So we slipped back under 50. This would-be rebound from the recession-like conditions that we saw at the tail end of last year. That has now fizzled. We have the weakest performance for Eurozone economic activity growth since January. All of the positive vibes that were there in the earlier part of the year, now basically out the window. And that's because the service sector is now shrinking. It was offsetting this anemic situation in manufacturing going all the way back to 2022. No longer. Everything is shrinking at the same time now. So from a business cycle perspective, Europe is in trouble. It also doesn't help that we have the return, albeit nominally, of credit risk. This is the spread between German and French 10-year bond yields. And what you see is for France, we are now looking at the highest, or at least we were about a day or two ago. This is where we've spiked up to the highest spread, the widest one on French debt relative to Germany since back here in 2022. That's, of course, the tail end of the Eurozone debt crisis. So what's going on here? Well, we had that snap election that President Emmanuel Macron called. He lost his legislative majority. We now have him governing with a minority government. That minority government attempted to pass a budget. It couldn't do it. That led to the collapse of the government. The opposition, right and left, joined forces to essentially vote for no confidence in the government, and it's unraveled. So now we don't have a budget. And the response from markets is, of course, to build in additional sovereign risk into French yields. Irony of ironies, French yields relative to German ones, which are the kind of regional fiscal probity benchmark, the French ones are now at the same level as Greek ones. Now, that's not just because French yield spreads are up, it's because Greek yield spreads are down. And in fact, contagion around the Eurozone is not evident at the moment. The spreads for Italy are down relative to Germany, spreads for Spain, spreads for Greece, as we've just mentioned. All of that is down. So this is not a widespread situation, but it's also a growing divergence in fiscal health at the heart of Europe. France and Germany are the biggest economies. They are the essential axis that is the indispensable core of the entire European Union experience, going all the way back to the construction post-World War II. The entire artifice is really a French effort to prevent back-to-back situations where Germany comes across the French border and burns down everything in sight. So, as of course happened with World War I and World War II. So when you get this kind of instability at the very core, the very foundation of the euro, it's of course not encouraging and presents significant risks. As if to add insult to injury, through all of this, weak growth and the returning sort of preliminary rumbles of debt concerns, inflation expectations are actually up. If you look at what's been happening here basically since October, November, the German bond market, the break-even for the shorter term there, is telling you that actually inflation expectations have bottomed and are starting to edge up, which is not what you want to see. if you are looking for a situation where all of these many headwinds give you a reason for the ECB to start thinking about rate cuts. Because, of course, what you then end up with is a situation where you have basically the central bank's hands tied and unable to act. So, needless to say, it becomes a very important question here, what the ECB will do, since they are, as a matter of fact, meeting within less than 24 hours. So, why are these inflation expectations going up? Well, ostensibly, the problem has to do with energy prices. This is the 1 year forward cost of electricity in the Eurozone as it is transacted on Europe's markets. This is from the European Energy Exchange, or EEX. And what you see here is the rise in energy prices, especially in Germany, right here. Seems to sort of anchor around October and then accelerate higher as we start November. Notice that's basically what we're seeing here. And of course, it's a little bit more muted for France, but the general swings are about the same, and that's really because France is insulated against energy price shocks, unlike Germany, because France still runs a whole bunch of nuclear power. So, what to do for the ECB? Well, the expectations here are that the ECB is going to cut rates, and that expectation is pretty well calcified at this point. You're looking here at almost the full move priced in. The probability implied here from 3.25 deposit rate to 3.06 rates by month's end give you the likelihood of a cut at about 76%. So very, very likely that we're going to get this cut. As a matter of fact, the outlook for ECB monetary policy going into this meeting, that's the solid line here, as compared with where we were in October, that meeting, or the one in mid-September, we can see that from January onward, so for next year, the pathway has actually become more dovish. So the markets have made for a flatter curve. If we look at what all of this distills into, we can see there's that 19 basis points being baked in for this meeting, so almost a done deal. And for next year, 115 basis points in cuts on the menu. So let's call it four cuts in the price, and about a coin's toss chance for a fifth. So what can the ECB do to really move the needle here? Well, ostensibly, they could look at the growth story and say, woe is me, we need to be cutting rates more aggressively because the economy's unraveling. They could likewise look at this situation and say, well, we know this is not widespread. We know this is only in France so far, but that's worrying enough as is. We could use some lower borrowing costs, or at least the signaling that we are very open-minded to ramping up easing, just to check this thing before it runs out of control. And then at the same time, you look at something like this and you say, but inflation expectations are going up. We're going to let this thing out of the bag if we sound too dovish. So what to do? And perhaps the story is nothing. When the markets looked at this, as far as this meeting goes, they've clearly made up their mind. There's going to be a cut. When the markets look at next year, they've already baked in quite a bit of easing. What's going to be market moving or not in this equation is whether the ECB is going to dial up easing expectations further, because surely tightening is nowhere near where the ECB wants to go. So either it is status quo, that is to say the ECB looks at all the various balls it's juggling and goes, you know what, we're going to take it meeting by meeting, we don't know. Wait and see. Or they go, you know what, the rise in inflation expectations is episodic. It's not going to run away. It's just one thing. We'll get through this winter and that will unwind. We've obviously heard the Fed talk a lot about looking through data volatility and looking through shorter term fluctuations. The ECB could certainly make the argument this is one of those things. And by no means is the electricity price situation catastrophic, as we can see here. It got up to the top of its range from May and has receded. So it's tempting to get scared, but maybe not. And so instead, let's focus on the growth side of things. The inflation side of things will be fine, but let's focus on the unraveling of economic growth and give some support there. Well, maybe so. But if you're the ECB, you have a single mandate. That's inflation. And if inflation expectations are rising, maybe you keep your powder dry, as it were. Maybe you don't commit to anything too quickly. And that, given the options, may be a sense of relief for the euro, because given that we haven't fallen for a few weeks now with all of the headwinds facing the euro area and its currency, a lot of the bad news may be discounted already. So all you really need is just a bit of positivity, or at least a lack of further negativity going through major event risk, to give you some legs. And the passing of U.S. CPI data over the past 24 hours certainly helps. We can see here the euro has, of course, been tracking German versus U.S. bond yield spreads. This is a proxy for the relationship between the Fed and the ECB outlooks. The 2-year yield is where near-term policy expectations live. This is the U.S. dollar reflation trade right here. This is that trade receding. So we can see German bond yields a little bit less beaten down relative to U.S. counterparts, and so the euro has duly stopped falling. The structure here is one that might look like an inverse head and shoulders pattern, which is a bottom, shoulder, head, shoulder. It's not one until it's confirmed, which would require a close back over 106.29, 106.30 or so. But this might be the line in the sand against which the euro holds. So if you get an ECB that doesn't say much of anything, that is more dovish than where we already stand and what's already been discounted, there might just be enough for the euro to find some relief and say, well, if this is what motivates this exchange rate, and the dollar side of it is basically locked in place after CPI leaves benchmark expectations essentially unbothered, and the next thing is the Fed, which doesn't meet until next week, the euro side is possibly in charge for the next several sessions. And if the story there is less dovish than could have been, less dovish than markets perhaps speculate would come out of the ECB at this meeting with all of the headwinds on the board, the euro may well find its way higher. And if it breaks this level, then the head and shoulders structure would extrapolate a probe back above 108, which could give us an interesting something to work with. And that is macro money for today. As ever, we are here right after overtime. Monday through Thursday. That's a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise on with Chris for Futures Power Hour Mondays and Fridays, on with Victor Jones later today for The Price of Truth. That's just 30 minutes from now. Definitely come and join as we joust about the future and the appeal of cryptocurrencies, probably yet again. And I'm back with Victor and with Tom for First Call on Sundays at the International Market Open, the Futures Open in the U.S. I'm also opining on the platform formerly known as Twitter, as well as now on Blue Sky at Ilya Spivak, and writing for the news and insights portion of tastylive.com, where this very analysis will be in written form shortly. Thanks very much for joining. Macro Money's back tomorrow.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
This is English. You should watch him read.
From the smart mouths at Tasty Live.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe. Yeah, ladies as the toolbar. Battery life. Force. Quiz.
Today, of course, Katie McGarrigle. Where do I start? Episode 7. What up?
Same.
Feeling good? Feeling great?
I don't feel great. So actually, I thought about, behind the scenes, it's 4:30 here. I was getting a little hungry. So I went to the fridge and I grabbed a string cheese. And I housed it. And it reminded me of somebody here, and I don't know if it's you or if it's Mikey. Do you bite?
Yeah.
Oh my gosh.
Pulling the string cheese apart. Cheese is getting dirty. Get dirty hands. You just bite that thing off like a Slim Jim, but it's cheese. Yeah.
I thought it was you because I had this like weird, vivid flashback to the old studio where I remembered either you or Mikey just taking a bite out of it, and I was like,
yeah,
different way.
The bodies are in the basement. What they say, you eat that like a psycho. Yeah, I eat string cheese like a psycho.
Yeah. But I mean, in all seriousness, I'm good. How are you doing today?
Yeah, I'm doing better than Monday and Tuesday because the coins are going higher.
They sure are.
It feels good when you buy the dip and you get a little bit of a bounce. We got Bitcoin at 101.5, and we were down kind of 95 just a couple days ago.
Yeah, I mean, as we've kind of alluded to over this series, I have nibbled ever so slightly on both Bitcoin and in ETH. I'm excited for today's topic because when you and Mike and Nick are talking, it's almost like a dialect of a language that I don't, or I'm starting to understand, right? You know? But I'm excited about today's segment. And yes, to your point, it has been helping out my positions, or my portfolio, I should say. But I wasn't quite expecting it as quickly as that.
Yeah.
Lots of strong days, though, like you're saying.
It feels a lot better, obviously, on the upside, but this is pretty normal. Again, as we talked about, you get these big 5% moves down in a day, 10% sometimes down in a day. Happens on the upside, too. It actually happens more frequently on the upside. Here, we're up 5% in Bitcoin, 5% in Ethereum, Solana up 7%. Other smaller market cap tokens are up more. Memes, which I think you maybe have kind of alluded to. We're going to talk about something new today. We're going to talk about meme coins. We're going to talk about Doge specifically. There's a real exciting reason why. But yeah, they move quickly. You get used to it. You stomach the volatility over time. But it's good to be aware that a 5% move is normal, both on the upside and the downside as you think about risk management.
I think that that's a super helpful piece of context to have because, and this is fresh on my mind because I also did the show with Chris Vecchio today, and we talked about futures, and he was asking me about like complacency in the markets and if I felt that they were complacent right now. And I kind of alluded to the fact that I think that, yeah, maybe the other shoe is going to drop, but maybe not. Like, we have a new year coming. We have a new presidential administration. You know, there's a lot kind of on the horizon where I could continue to see the bullishness that we've seen. But also to that point, when I was learning about futures, it was really helpful for Pete to kind of tell me, okay, here's like what a normal daily, weekly, or monthly move looks like. So it's extremely helpful that you kind of drove that home again so that I actually have context around what is like a stomachable and digestible move and where does that ultimately present opportunity if it starts to deviate from that.
Well, you know what? We plan to talk about memes, but let's go in this direction for a second. I think we have time for both. Instead of throwing up our slides, let's throw up the web browser here and just take a look at some charts. Here's the price of Bitcoin. Each one of these candles are 4-hour periods. And if you just look at this, okay, what's normal? Well, if we go back to November 28th to December 12th here, I suppose what's normal is almost a $10,000 range in terms of the price. What catches people off guard at first, I think, is how quickly it moves inside of that range. So you often get these defined trading ranges. It's just that they're wide, and it's not necessarily even days between the top and the bottom of the range. It's hours, and those ranges are obviously much bigger over weekly and monthly periods of time. But if I just zoom out a little bit, you can see really how volatile this has been. And apologies, I'm just running a bunch of instances of this. But you can see, again, 91,000, you kind of flash down to there a couple times. You don't stay there. That, to me, is a signal as well that there's been a pretty strong bid in the market, which rips you all the way back up to what has now been kind of a ceiling around 100,000, 101,000. We could go right back down to 95.
Sure.
But I think it's what you do at both sides of that range in terms of risk management. You want to sell a little bit at the top of the range, not everything, but take some of the profits that you might have if you were buying it at 90. You just got over a 10% move in a day, in a week. You want to trade that. And so again, while people sometimes say this is dead money, a lot of people do just buy and hold this, and there isn't a liquid supply. Because it's so volatile, you don't necessarily need a lot of leverage, and it does present trading opportunities. If you want more leverage, you can trade the futures. Prices are going to be the same for the most part in terms of the price action.
Yeah.
So, yeah, it is good to be aware of that. And we've done a lot of research, Katie, that I'll have to bring up because I know we've talked about to this point kind of Bitcoin as a technology, Bitcoin, the investment case, and looking at it as like this digital gold. But what I'd also love to cover are the volatility characteristics, some of the data, at least historically, what we've seen. And I've mentioned this before, but this often moves more than 20% in a week. And more often than not, that 20% move is to the upside. There's a positive correlation between volatility and volatility expansions and price action.
Okay.
Versus what you see in, say, like the S&P with the VIX, an inverse correlation.
Right. Okay. Yeah, no, I think we've been kind of talking about what the future of, you and I doing stuff together is. So sound off in the chat if you want more of this in some capacity, because I would love to stay on and get into, some more of the nuances that are maybe 102 as opposed to 101. So yeah.
We'll get there. And of course, as you mentioned, shout out to the chat, Donna Ski, pull it and take a bite, eating that cheese like a normal person.
Well, everybody does things differently. I didn't mean to call you out on your
I think it's
killer
fair. I think it's fair.
characteristic.
It is called string cheese for a reason.
Yeah.
We just do things differently around here.
That's okay. I mean, you're the sensei and I'm just the grasshopper. So maybe I'll learn to adopt your cheese eating.
Oh yeah, you'll be
habits as well.
biting the string cheese in no time. Okay, let's jump into the show. I want to talk briefly here about meme coins.
Yes.
Specifically, I want to talk about Dogecoin. We're bringing Dogecoin back to the Tasty Trade platform.
Yay.
And hopefully Tasty Trade will continue to expand the token offering, but going to start with Doge. And from what I hear, it could be there as early as tomorrow or Friday. We'll let everybody know, but there will be more product coming soon.
Yes.
And more, hopefully, vehicles to trade. Not something that you can short here, but I would imagine that at some point you probably have a Dogecoin future. I think on some exchanges, there's definitely a way to get access to that. But another vehicle, I suppose, if you want to trade it for one reason or another. And I want to look at this, though, objectively, because I'm not saying that you should jump into this or there's an extremely strong investment case.
Mm-hmm.
Should be aware of the characteristics of it, but it will be available to trade.
Lovely.
On Tasty Trade.
Yeah.
Coming soon. Meme coins. How familiar are you with this concept, what these are? This elicits a lot of emotion at times, and we're going to get the argument, I'm sure, of there's no intrinsic value,
Mm-hmm.
Katie.
Mm-hmm. So, I mean, it's interesting to me in the sense that, of course, it's another vehicle, right? And even in other brokerage firms and, just holistically across the world, there's event contracts now, there's meme coins, there's derivatives of derivatives and volatility indices on those derivatives. So in one sense, it's interesting because it's like another tool for the toolbox. I obviously live on the internet, much like everybody, and I feel that sense of FOMO and jealousy when you see these people just dipping their toe into meme coins and then just printing money. And there's definitely an air of jealousy and okay, it can't be that easy. And so I don't know. I'm familiar. I am unfamiliar with some of the characteristics in the sense of what makes a good or an ideal meme coin, or how would you prioritize picking some, or what are the characteristics you should look at. So there's still and also how they're created, on a network or on, so there's just some more functional things there that is confusing to me. But, I work at Tasty, so I know enough, but not probably as much as I should. So impart your wisdom.
Okay, let's jump into it then. We'll talk about meme coins at a really high level and then look at Dogecoin as objectively as possible, then open it up to any questions that you have. More than anything, in my opinion, these are just fun things to trade. But to start off with, if people are not familiar with what we're referring to when we say a meme, I think nowadays most people are, but initially it was somewhat of a foreign concept. This is internet culture. This is an image, a video, piece of text that is, according to meme definition, when you Google it, is typically humorous in nature. That said, it's often copied and spread rapidly by internet users with slight variations. If you spend enough time on X, you have encountered memes.
Yeah.
Absolutely. And I think definitely something that's become much more prevalent in recent years. maybe, always kind of around, but I would argue post 2020, we've seen a lot more of this.
Yeah. When we were all locked inside, we all just became comedians.
Yes.
And we had to share little pictures with each other on the internet because we couldn't meet in real life.
There was growth in the adoption of memes. So that's what we're talking about, we're referring to. But let's talk about what are meme coins. And we threw this out there a while back on one of the Tasty Crypto episodes. But the way that I view this is it's the intersection of internet culture, social dynamics, and blockchain. Tokens inspired by internet memes, they have no actual value. Yes, that's true. That's okay.
Right.
I guess I should say that from kind of more of the fundamental intrinsic sense. But there is value. It's derived from community of just people getting excited about it, people having fun.
Mm-hmm.
There's not really the same fundamental, fee revenue that comes from the network or the digital gold investment case that might exist around Bitcoin. But what it really is the financialization of culture, specifically internet culture here. Maybe that lasts, maybe that doesn't. I think it has some staying power. But that's what we're talking about.
Okay.
And
I like
in recent
that.
months and really this year, 2024, this has exploded. It's become, in terms of memes, whether it's trading meme coins or just even launching meme coins, it's become a use case for some blockchain networks. You've seen significant growth in Solana because of meme coin trading.
Mm-hmm.
So that said, and stop me at any time, let's talk about what as you would refer to, the OG of meme coins. That's Dogecoin.
Okay.
This is coming to Tasty Trade soon. I look at this as the beta for the space or the benchmark. It's kind of a proxy for the performance of meme coins as an asset class, if we want to call it that. I know I kind of laugh, but I do think that there is some truth to that in terms of meme coins being an asset class.
Mm-hmm.
But Dogecoin was created in 2013. For a little background, initially created as a joke. It's the Shiba Inu dog that was a meme at the time.
Yeah.
So this is the original meme coin. The meme was that everyone's seen the picture of the Dogecoin dog now, or the Shiba Inu that's based off of. The developers that launched it, I think at the time, as the story goes, launched it as a joke, maybe kind of flying in the face of the speculative nature of cryptocurrency at that point in time. Bitcoin was around, Ethereum was in development in a sense, and here we have Dogecoin. That said, it was quickly adopted. A community grew up around it. Doge was used to transfer value. The blockchain is similar to Litecoin, similar to Bitcoin as a result of that. It's faster, has a different kind of supply dynamic. So there's inflationary supply for sure.
Okay.
But people quickly started to use this. And what was initially launched as a joke, and I suppose was worthless when you looked at it, is today the 7th largest crypto by market cap.
And which network did you say this launched on?
It's on its own blockchain.
Oh.
Yeah. And so that's a little bit different than compared to what we've seen on Ethereum, some of these layer 2s that make it cheaper to trade. We haven't really talked about those yet. But on Ethereum, you have memes.
Yep.
On Solana, you have memes. Solana's seen an explosion of meme coin trading. It's extremely cheap and really easy to launch meme coins on Solana. But Doge is its own thing, which makes it unique in that sense. It has its own supply dynamic. It uses a proof of work consensus mechanism. It's faster than Bitcoin, but it's its own thing. It's not a token that lives on the Ethereum network, for example.
Got it.
So that's
7th largest.
Yeah, that's the background. It's the 7th largest. The market cap right now, if we look at this, is $61.4 billion. Yeah. Estimated global users somewhere around 5 million. The estimates are kind of wild. It's anywhere from 3 to 7 million, are kind of wide in that sense.
What qualifies a user? Is it somebody that's currently holding it or has swapped it or interacted with it in some capacity or has accessed that chain?
It's a good question because you see these data points that are thrown out there. And one of the narratives in terms of adoption is that blockchain technology, the adoption of blockchain technology is growing faster than the adoption of internet over the same period of time. not looking at internet growth today, but if we just said from when the internet launched, if it was 20 years, what's that rate of change of adoption in terms of users? I think today there's roughly 4.5 billion internet users, and we have about 500 or so million crypto users. So to answer your question, when you measure internet users, you can look at IP addresses.
Sure.
Best proxy for that.
Yeah.
We all use multiple IP addresses.
Right.
When you look at how many people are interacting with the token or what's happening on chain, you can look at wallet addresses. Wallet addresses that have interacted with DeFi, for example, will give you representation of DeFi users, Bitcoin holders, Dogecoin holders. It's not a perfect representation of total users. It's probably higher here than 5 million, but that's the best measurement that we have to go off of. I would look at wallet addresses. Same thing with IP addresses.
Okay. Makes sense.
So this is something that, is interesting. It's got a median yearly return of 20%. Doesn't seem that high relative to some of these others, but this goes down 90%, and then can go up 1,000%. We're talking about something that when it launched was sub penny, if that's a term, less than a cent. Today, it's about 43 cents. It's up 356% this year. Over a 3-year period, it's up 143%. But as you can see in the chart below, we have a 3-year period that we're looking at, and it can be down in negative territory and then just absolutely explode higher.
Right. I mean, 356% return year to date.
Yeah.
That's the example.
Exactly. So you were in deep red negative territory for years, and then you exploded higher, and it gets you a 3-year return of over 100%. There's a lot that contributes to that I do think is real. When you look at this, you say, what's the intrinsic value? Well, people are using it. They're excited about it. If we go back to examples such as Elon Musk on Saturday Night Live, that was the prior peak. You have the Dallas Mavericks, who I believe you can still use Doge to purchase merchandise and possibly even tickets. Mark Cuban is a fan. And so you have this kind of celebrity endorsement almost, but it has real use cases.
Yeah.
Right? People often will look at Bitcoin and say, well, it has no intrinsic value. It has no use case. I would argue that there is a bit of value associated with money that's not controlled by the government at the end of the day. Not that it's always used for that purpose, but I would think that's valuable in some capacity, maybe not necessarily to all of us as U.S. citizens all the time, but globally there's some value there. Same thing exists here. It's a value transfer mechanism.
Sure.
It's seeing increased adoption. Does that justify a $60 billion valuation? I don't know. But that has been the investment driver up to this point. For some people, it's a lottery ticket. You had mentioned how you see people just get rich overnight. You don't see as many of the poor overnight,
right?
But that happens too. It's extremely volatile. That's the risk.
Yeah.
But there is that chance, and that exists everywhere. Go to the casino, bet on sports, speculate how you see fit. You're free to do that, and that's what this offers.
Stocks, that's the same. It's comparable.
Buy out of the money call options, 5 Delta flyers, right?
Yeah.
To an extent, I think that exists here too. But as we get deeper into memes, and we're just really talking about Doge today, but as you get deeper into it, you also realize that it is a tangible mechanism for a community to kind of rally around. And what often starts as a joke or is launched where it doesn't exactly have any value, value can kind of materialize or evolve. And then that value can be used to further support or grow the community, invest in projects, donate to charities, et cetera.
Right.
It's kind of interesting just to see how this almost just develops as this like living organism in some weird way, if that makes any sense.
Yeah.
But that's what's happened through this technology. Maybe 99% of these things ultimately go to zero, but it's what happens in between. It's the path that is really important and where there's potentially opportunity.
I think that was really well said, because I think, like you're saying, there is a knee-jerk reaction to just like write it off, but like when you put it into like actual use cases, it becomes a lot more attractive to participate in, even if it's or not, like at least knowing more about like how it can actually be applied to like real world scenarios.
Yeah, absolutely. I mean, another example of kind of what I'm referring to is this token on the Solana network called Bonk. And we don't have any slides for it, but it was launched in response to just the devastation that was caused by the FTX collapse. And the FTX company at the time, through some of its investments, was pretty supportive of Solana early on. It was like a figure in the space, if a company can be a figure. I mean, Sam Bankman-Fried was,
sure.
There was capital that was going into that space, and then a lot of this just kind of collapsed. The price of Solana went sub $10 at one point. It's 228 today. But Bonk was launched after the collapse of FTX and really started to support the developer community on Solana, and has a fee mechanism where through every transaction, there's a tiny little bit of the fee that goes into a Bonk treasury. That treasury is then used to support development projects and further support the ecosystem, whether that's Bonk or ultimately Solana or other things that are happening on chain. So that to me is really interesting.
Yeah.
And that was in response, again, to something that happened. No one really probably at the time that it was conceived thought that this is what was going to ultimately result. But here we are.
Yeah. So I guess like my question then is like, you know, you've brought up 2 meme-ish coins now. What does that create? Like, and another one that's recently been in the news is whatever the hell that girl's name is, like the Spitcoin girl.
Hawktua.
Yeah,
yes. Haley Welch.
Thank you. That is like, yeah, never been my bag, but like what does like the creation process look like? Is it like me and you getting in a room being like, yeah, we want to make Sosnov coin, and then like we like grab a developer and we like put it on Solana, and like then it's just there to create a market and like
yes, but easier than that. So what you're asking, the answer is yes. Anyone can do this. There are platforms now that make it extremely easy to do. One on Solana is called pump.fun.
Okay.
And these are platforms that allow you to launch tokens. Hence why there are, I would assume, hundreds of thousands at least, of random tokens and more that launch all the time.
Yeah.
Some of these have staying power. Some of them are quote unquote real in that Doge has been around since 2013.
Yeah.
Others
years.
might only exist for a couple of days. Others are frauds. Others are pump and dump kind of rug pull schemes. That absolutely exists. But just because that exists or that fraud is a relevant thing to the internet and there's crime that exists in our world doesn't mean that the technology itself isn't compelling or that there aren't other positive use cases for this too on the other side of it, right? But it's very easy to launch a token. And I think you'll see us experiment with this and try to have some fun, not for the purpose of trying to raise investment capital or anything like that, but just more so, it's something that you can own to identify as part of a community.
Yeah, Tasty Nation.
Yeah, it's really that. And some of those communities then are, those tokens, I suppose, are very valuable because of the value derived from the community. Mm-hmm. Like anything else. What, again, is so compelling about this is that it's kind of the idea that you could own equity in culture, that you can financialize culture. You can own a share of that thing that is, yes, intangible, but tangible at the same time.
Sure.
I've described this at times as quantum finance, where it can exist in 2 states, where it's worthless and priceless. And once it's acted upon, or a force is acted upon it, then it determines whether it's worthless or priceless.
Right. Okay.
If that makes any sense. Now we're getting into, biting off the cheese again.
No, it does. It does make sense. I guess, like my last question, well, maybe second to last question, we'll see how much time we have left with 2 minutes or so. But in the same way that we have walked through the arguments for investing in Bitcoin or investing in ETH, clearly this is like a little bit of a different animal because like you're saying, some just have a shelf life of a couple of days, whereas some have several years. When you are looking to expand your portfolio into some of these less traditional names and or meme coins, like, are you reading like the mission statement of every meme coin, or like how are you deciding? Is it just like for funsies, or are you actually looking at, oh well, they're doing, they're funding more future work to develop this network and this chain more? Like, is there like an ESG, like a morality element to this for you?
No, purely for fun. I've got one more slide. If we could just throw up our announcement, I would recommend everybody checks out Options Trading Concepts Live on Monday at 11 o'clock Central Time. We're trading memes on the show. We've got a portfolio. We've got this bag battles show that we're doing. It's purely for fun. We're going to get you involved with this as well, Katie. But yeah, I think from the volatility perspective, the asymmetry, that's interesting to me, that you have this thing that it maybe goes to zero, is worth nothing. No one's advocating that you put lots of money in this. But if you wanted to put $25, $50 into something, the same way that people have fun betting on sports, and some people do that professionally, that's what's interesting to me. When I look at, okay, what goes into deciding whether or not something's a smart investment, relative to what time frame, I'll use Fartcoin as an example, right? As silly as this is a token that was up huge today, 60% or so, $500 million market cap. That sounds insane, right? But when you look at this and you realize that this stupid thing is going to be funny to just about anyone that encounters it, and as a result, they also might want to own a little bit too. And you have, just people saying ridiculous things on Twitter, talking about hot air rising and it has to go up, or fart coins ripping. All of that just plays into it. That's why for a moment in time, it reaches those valuations. And people will just argue about this over Twitter, and they look at some stupid print where it's 500 million or 500 billion or whatever. It's not 500 billion. But you get my point. $500 million market cap. How could that be? It's larger than these real companies, blah, blah, blah. Well, that's off of some ridiculous print. I don't think there's liquidity at that price. I mean, clearly there's some trading activity there, but if everybody wants to sell, there's no buyer at that level. But it's fun. It's funny.
Yeah.
And if you happen to get right a couple times, you might make a little money in the process.
Yeah.
I don't know. You have to sell it to make the money. But the first time I saw the coin dog in me, it's worthless. I bought some, I lost my money, but it was funny to say, I got that dog in me. And then there are other people in the office saying, you got that dog in me?
Yeah,
It's just stupid.
Yeah,
But
it's like when you go on vacation and you buy like a dumb tchotchke from a souvenir store.
yeah.
Just for a laugh.
Except that these have liquid marketplaces online that you could trade 24/7.
Yeah, exactly.
So we're having fun. We'll see. I hope that I think memes are going to stick around. It's like anything else, though. There is risk involved with it, and maybe a lot more risk here. But with risk comes reward. And so we're going to keep talking about this on Tasty Crypto, and tune in on Monday at 11 a.m. to check out Bag Battles.
Yeah, Snoopy Babes, fart coins, and MAGA memes.
Yeah, we rebalanced a little bit. So we're going to have the portfolio up on the screen soon. There'll be a tracker. There's a lot more that's coming, and we want you to get involved with it as well, Katie.
Awesome. I'm looking forward to it. Thank you for explaining this to me. Another area of crypto has been discovered.
Awesome. Well, thank you for coming on the show. Thank you to everybody that's watching and popping in the chat here, contributing to the conversation. We see you. So shout out to all of you guys. Thank you for showing up. But that's going to do it for our show. Victor Jones is up next with The Price of Truth. You don't want to miss it. We'll be back on Monday next week. Until then, I'm Ryan.
I'm Katie.
Peace.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Welcome in Tasty CEO Tom Sosnoff, also founded Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on. How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah. As you should be, by the way. I'm glad you said it because I can't.
And this is how we think as traders. You're much better off, instead of trying to follow the trend or follow the fundamentals, you're much better off playing the role of a contrarian.
And what I really want to do today is kind of break it out of that box and make it what it really should be, which is about understanding and thinking about probabilistic, predictable outcomes, about quantitative strategies. True financial literacy is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it. Join the club, genius.
Oh, yeah, it is Wednesday, December 11th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. It is Wednesday, my friends. It is Wednesday, my friends. And you know what that means. That means we have the one, the only, the global head of macro here at Tasty Live, Mr. And I do mean Mr. Ilya Spivak. Ilya, how are you doing, my friend?
Good. I'm excited. This is going to be a whirlwind of a conversation with what these markets have been doing.
Yeah, excited. I'm not excited at all. I'm not excited.
My P&L's not excited.
Tis but a scratch. Annoying, you know? I knew I knew the probabilities of my position being a winner in December I knew it. I knew the likelihood was I was going to be kind of grumpy in December. But I can't help it. You know what I mean? Sometimes I just can't avoid the hero's call. That being said, a shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. But if you want to be part of the conversation, there's only one place you can do it. And that, my friends, is on Tasty Live's YouTube channel. So head on over there and subscribe and jump in the chat if you want to. If not, that's cool too.
By the way, that
just sit on your
chat
hands.
fire last week. Folks taking me to task very reasonably, by the way. Some very good critiques. Very smart audience here. Some very good critiques. But
of course there
don't
was.
you guys worry.
Because you're wrong. Because you're wrong.
Don't you guys
So
worry.
Of course
Daddy's
there's gonna be
brought
good
you some
critique.
treats today.
Speaking of the chat and the people, shout out to the people. Really quickly, we should probably point them out because that's what this show is all about. Shout out. I can't really do. I have no idea where this thing starts and ends. Shout out to all the regulars, Sleepy, Lone, everybody else. I don't know. You know, sometimes people gotta feel good. They gotta make their job feel important, and that's kind of going on behind the scenes. There's this show, you ever seen Howard Stern's biography, the movie that he made?
One of my favorites, actually.
Do you remember the role that Paul Giamatti played?
Pig Vomit, yeah.
That movie, Pig Vomit.
Yeah.
I just watched that clip because it is so relevant to some part of my life right now. Such
WNBC.
WNBC, but it not that part. The part where he goes on air and he just lights the dude up. That's one of my favorite, most gangster moments of all time. Because one of the things is when you have the microphone and somebody just thinks they're clever working behind the scenes, you just light them up on the microphone. You could do that, but nobody does it. But this is the one scene where he makes him pay. You know what I mean?
Mm-hmm.
Anyway, shout out to Pig Vomit as well as Howard Stern, my hero, the GOAT. At one point in time, then he went corporate. Anyways, somehow, Mr. Ilya Spivak, before we get into our part 3 of our conversation, my good friend, we got to talk about risk today. We got to talk about that CPI report. We got to talk about up, and away. We got to talk about the bazooka of money that China seems to want to they want to let it rip, the deval that they're threatening. There's so much going on today, which
ostensibly, yes.
I knew you would have a not so fast, my friends, on that one. Anyways, let's talk about risk today. Up, and away. You can start wherever you want to, my friend. You can start with price action or the CPI, or do a blend of both. Talk to me about what happened. What happened today, Ilya?
Well, let's look at first the kind of the general theme, and then we'll of course have to go to the NASDAQ because that's the screamer. The CPI seemed to be, as I suspected, more interesting for its passing than for its substance. There was a piece of event risk on the calendar. The markets were looking for that event risk to get behind them to activate whatever was going to get activated. They got through the number. The number was exactly in line with expectations, changed absolutely nothing about anything. The expectations for a Fed rate cut next week just calcified further. We were at about 88% going into the number. We're approaching 99 now. Yeah. So, okay, we're really going to have this cut now.
If our real quick, Ilya, if our friends in the control room, if you want to throw up the visuals here, I've got. Thank you very much. Go ahead, Ilya.
Yeah, I mean, so that's the CME FedWatch tool. Yesterday it was at 88. Today it's at 98 and change. So, la-di-da. The market's got.
So you're telling me there's a chance.
Risk. Yes, you're telling me there's a chance. That's right. That's right. Moreover, the outlook for next year wasn't really upset here either. Basically, what the markets did from mid-September to mid-November is they said the Fed's cutting into a hot economy. They're saying they're going to do 100 next year, but they're not going to be able to do that. So you get a massive upshift in yield. You get a massive upshift in the dollar for about 2.5 months. And the implied outlook for next year goes from 130 basis points, which is where it is before the Fed starts, to about 60. And for the past several days, it's kind of wiggled around 60.
Mm-hmm.
Today, it's a little
like
bit.
Today, they took out the third cut, effectively.
Sort of. It's at 57 total. Right. So, yes, the probability of the third cut is basically less than even now. Yep. Whereas before, it was kind of a coin toss. Now it's leaning to 2 with a slight chance of 3, but that's more remote.
Correct.
So, has anything changed? No. So if the Fed comes next week and says, right, we told you in September 100, you all have cut yours in half, we'll cut ours in half, 50. Then we're at status quo, nothing has changed. So the CPI wasn't really interesting for what was there. It was interesting for here was a piece of event risk that got out of the market's way. And you
totally
can see it.
I mean, at a 14 vol, at a 14 VIX area, it's not like the market was spooked by anything on the horizon. To that extent, to your point, it's it was not afraid of this CPI report by any stretch of the imagination. And the market, the consensus was 0.3 month-over-month number, which was already warmer than last month's 0.2. Yes. And, the inflation nowcast, all of that stuff had guided higher. The market expectations, if you look at the street expectations around CPI, was higher. So there was nothing here, to your point.
Yeah.
You would have had to had a warmer than warm print to spook the market or a super cool print to spook the market about growth concerns. And that was not in the cards today.
That was not there. So, but what you see, which is really interesting, is if you look at a chart of, let's say, look at continuous contract of ES, and you look on like a 15-minute chart, you see that the rally for the day starts with that number. And so you might be tempted to say, oh, the number had something. No, the number didn't have anything. It just moved aside. So when you get the number appearing there, everybody goes, right, nothing to see here, as you were. And so that's where you start to see the rally. I mean, it's clear as day here. That first big green candle, that's CPI. That's the markets going, no crisis, on we go. And so the other big story, and the reason I think why we ultimately end up with a green day here, is the story out of Alphabet and the quantum computing chip that they're announcing. They're saying it's basically the greatest thing ever, and we'll be living in Star Trek, the real version, any day now. And obviously the markets looked at this and said, good. So NASDAQ outperforms. It soars.
Dude, your inner monologue is hilarious. It must be hilarious on a daily basis for you to say the market looked at this and said, good. Like that's such a Russian. That's right. Such a Russian response.
I mean, I say this not without reason. If you look at what happened in NASDAQ, you don't see the same thing in the S&P. You don't see the same thing in Dow. You don't see the same thing in Russell. So this really was a one-off kind of thing where the market goes, okay, good. They had themselves a good rollout of a chip. So you see it in tech, but you don't see it everywhere. And the S&P 500, of course, because tech is in there, it rallies. It goes back to the high, but it doesn't hold there, and it doesn't actually set a new high. Of course, NASDAQ does. It's on a rocket ship today. But interestingly, this is not a broader risk-on story. Where I was kind of surprised to see it show up was in the bonds. Because the response you got from the bonds today seem to be more like more economic activity downwind kind of price action, that essentially this chip will be good for growth. In fact, the whole tech story around this will be good for growth. And what this means is inflation, and that will mean fewer rate cuts along the longer view. Because if you look at what happened in the front end, you didn't see this kind of vigor. The front end basically didn't do anything. The front end was standing still if we look at what was going on with ZT. But, of course, ZN, ZB, they took a shellacking. And it's interesting that they did, because the bond auction didn't give them a reason to do that. There was a 10-year sale today. The CPI didn't give them a reason to do that. Nothing moved around. The only kind of thing that makes sense for what the bonds did has to be this idea that with the kind of exuberance you see in the NASDAQ, you also get a level of economic activity, positive vibes. And maybe that's what is going on. In fact, the bonds went up after CPI for a bit. It was maybe about 2 hours later, 1.5 hours later, that they decided that this wasn't the thing for them and set daily lows. So it's an interesting sort of thing to look at. It's also not one that I think necessarily has legs beyond a day or two before this thing is a longer term economic narrative. There's a lot of other things that have to happen. This looks like a response to a headline, not the first step in a narrative that follows.
You know, there's a part of me that goes, wants to say, Ilya, you're spot on. There's another part of me that goes, I don't know the future. So because I agree with you,
Right.
has more to do with my leaning and my position deltas. And your point of view may also be coming from your
100%. I'm speculating entirely because and it's from a place where I'm long bonds and I don't like to see them going down.
Agreed.
That has to color it.
But even if I wasn't long, long right now, one of the reasons I had stayed long into it, because especially on big catalysts like this, I'll reevaluate a lot of my positions and say, if I have nothing on, what do I think the potentials are? What are the range of hands that could be played today? And do I like my position given the range of hands? And I thought the likelihood was a warm print. And I also thought the likelihood that it was that a warm print would almost potentially create an inversion scenario. In other words, the market would likely, yields in the front end would come up as people took out some of those cut odds. But I also thought, because you're taking out those cut odds, you're giving the Fed credit for doing what they need to do in 2025. And because you're giving them credit, you're a little bit more interested in that long end. And I thought
you're basically moving the policy curve in time. You're saying the cuts are the cuts are going to come at a different sort of temporal window.
Yes, correct. And so I thought there was a potential today, as silly as this might sound, I thought it was in the cards that we could be talking about a reinverted curve, because we were only a couple of basis points.
We're not far.
Uninverted. So I thought that was a real possibility today. And I thought that would be such a strange scenario. And I get the term premium. I get there's a lot of reasons for that not to happen. And so I thought that was the risk.
It's only a 12 basis point curve. It really wouldn't take that much.
Yeah, I thought it was very possible we started moving towards that other direction. But anyways, I'm with you. I want to give this a day or two to see what happens in the long end of the curve. This didn't really spook me out of my long bond trade. I am on the wrong side of it. It's still a profitable position, but I'm giving up some of those gains to the marketplace. And I just want to show you really quickly. You've talked about it moving back into the digestion area. For everybody out there, I want them to see. We had basically been within the range of 116.5 to 118.5 through October and through most of November. and we broke out of that range, and we've looked, we sniffed it out a couple of days ago. We're now back into that range at 118 and 5/32. So we're back into the range. What is the technician side of you? When you look at a chart like this, Ilya, what does the technician in you see?
I don't like that we closed under the spike low from a couple days back, which essentially marked the bottom of that range.
Mm-hmm.
That bothers me, considering that I'm long. I look at basically, so one of the things that I've kind of learned, or I think I've learned over the years, besides the fact that nobody knows anything, and especially me, is that support and resistance are not a line. They're not a single price level. It's a range. And so if you look at that digestion zone, you kind of see there's a sort of clustering of higher closes there from, let's call it, the second half of October into early November. We're basically sitting at the terminal spot where the underside of that kind of range for the support area is sitting. So if you look at it essentially as saying, let's call it from October 24th through November 12th, there's this sort of slop there. And you want to look at the close for November 8th. That's kind of the lowest underside of a top in that range. And that level is about 117.27. So that's basically where my line in the sand is. You'll notice that technically it's after you clear that on November the 25th that you get the rally. And then on the 26th, obviously, Thanksgiving interferes here. But on November the 26th, you get a pause, that little red or down orphan candle in there. That's called a harami, if you want to get very Japanese candlesticks-ish. Then you pause right there. And what that ultimately does is it holds that former resistance turned support at 117.27. So technically, that's kind of my barrier here. If it gets under that and closes under it, then the trade I had on is wrong. It doesn't mean that the bonds aren't bottoming. It just means the trade I had on is wrong. And what I need is to back up, rethink, maybe adjust exposure, maybe take the trade off and get back in later.
I think what I will probably do, because I'm a wild man, I'm like, I'm a cowboy with 2 6-shooter pistols, Ilya Spivak. But the good thing is I don't trade very big. So I would actually, I'm not afraid of this range. So if I was afraid of the range, I think I would do something similar to you. I cut and run at like 117 change. I'm not really afraid of this range. So I kind of want to trade this range. If I'm wrong, I'm going to be wrong by 2 points. We're going to break out below 115. And yields are going to, long end yields are going to go make a run at 5%. That's how I'm going to be wrong. If not, as long as I'm small, I can afford to keep trading this range a little bit. So I'm not terrified. But if I was a little bit bigger, a little bit over levered, or this is a bigger percentage of the overall portfolio, I, like you, would be nervous as you know what on a break of 118 for sure. It just depends on position size, I think.
Yeah, well, and it also comes down to the way that you express the position. So for me, I've got a TLT call that expires in 23 days. So I got to look at this and go, do I roll that call, or is my capital more efficiently used just getting out, letting it find where that bottom is and going again? What's the more sort of capital attractive way to do it? And we'll see. If it gets into the low 117s, maybe I say, you know what? Who knows when this thing bottoms. It's going to be all kinds of weirdness through the holidays. Maybe instead of waiting and hoping, I just take this off, take a little L of less than 1% of equity. Thank you, verticals, for your risk management, and back up and say, you know what? I'll come back in January or some such thing. So it'll depend on what it does here, but the DTE cycle is another consideration why you'd look at this and go, do I stay? Do I roll? I'm not afraid of the range so much as I want to make sure that momentum's on my side, as is time.
Yeah. Let's do this. Ilya Spivak. I almost want to. I'm pausing because I don't want to go into our conversation too early.
Mm-hmm. We can take a look at a whole range of other interesting things here.
Well,
one of which is the euro, and the other one is gold.
Well, before I get there, I don't want to go there yet. Actually, let's do gold first. Oh, I know what you're doing. Okay, let's do it your way, and then I want to go to China. I was going to flip them, but I actually see what you're doing.
Either way.
So let's start with gold, then we'll go quickly on currency, and then we'll go over to China, because all of that was sort of the story here today, or part of the story here today. Gold hockey stick, just like every other asset, because we're turning money into funny money. More on that later. Your
Stay tuned.
Your thoughts on gold at 27.60, man. I'm a little long gold. But really, I've been putting more money into the miners. I think they're super cheap, and I thought it was only a matter of time before they find some footing. Today, Newmont was up 2%. A lot of the miners had a pretty decent day. But talk me through your feelings on gold, whether they have a position or not, and how you're managing through it.
My bias is on the long side, but I haven't had exposure there since we've kind of stalled in this sloppy whatever this is. So I've had it long a bunch this year, but I don't have any exposure currently. I'm kind of kicking myself for having just essentially been paying attention to something else yesterday, because that was the time where the breakout from that very tight consolidative range started. It's, of course, tempting to point the finger at China, and that's a part of this conversation, because something to look at here is we have gold that's rallying up a storm at a time when the dollar is, let us say, not selling off. Depends where you look, but if you look against the yen, it's rallying. If you look against the Aussie, it's rallying. If you look against the European currencies, it's going nowhere. So you have a situation where you have the dollar that's not giving you a tailwind. You also have yields going up. We're just talking about bonds falling. This should be a terrible environment for gold. Gold doesn't like it when fiat money is going up. It doesn't like it when the situation in yields makes gold less attractive, because yields in gold are non-existent. Gold doesn't pay anything. So it's weird that gold is doing this on a day like today, and frankly yesterday as well, just looking at yields alone even. So you kind of, in my mind, have to look at China. We saw this kind of thing before. We saw it earlier this year. We saw it late last year, this kind of gold rally that makes no sense. If only you were to look at Chinese reserve holdings and the clip at which they were growing last year and early this year, you'd have your answer. You had a buyer out there that was moving at a very fast clip and in size. Well, we just got data from the PBOC over the weekend that they restarted in November after pausing in April, if memory serves. They were still buying then. So you had a long, long pause. and ostensibly they got low enough that they wanted to lean back in. So they've started buying again. That seems like what we're looking at here in gold, because the classic kind of macro catalysts are actually arguing the other way.
The macro catalysts are arguing the other way.
Higher yields and a well-supported dollar do not make for higher gold normally. As a matter of fact, they make for the opposite.
Got it. So you're basically saying that if China wasn't doing what they were doing, you would expect to see lower gold, but because they have such great demand, and because we saw, I think, the report on the 6th that they had restarted their buying.
That's exactly it.
That there's a bid in the marketplace that is creating the conditions for gold to do something other than,
or at least the market anticipates that bid, right? One of the wonderful things about reporting the kind of thing that China just reported about restarting buying is they're not saying they're buying now. All we know is in November they were buying again, having done nothing since April of this year. And so the message to the markets is, oh, they're back. And last time they bought for 18 consecutive months before they stopped. So the move then would be, okay, if they've restarted, they're not going to stop immediately. So markets speculate. It's not even that China is necessarily moving gold physically higher with its daily activities. It's that the markets have now seen a piece of news that says, oh, they're back, reprice for they're going to do this for a while.
Yep. Do you think, I'm pretty sure the answer is no, but do you think there's a level here, either on the low side? It seems like 2,600. I thought it might get into the 24 and change level. It didn't. We broke down a little bit through 2,600. Is there a level to the upside here where you think it's getting a little bit crazy, or do you not do that because gold is such a if this then that type of instrument?
Yeah, I mean, I don't think that you can really do that with gold the way that you can do it with stocks, because I think when you look at stocks, you can do things, and by the way, these things don't work a lot of the time, but you can start doing these things, especially on a longer term time horizon that says, you know what, valuations are this far removed from what is reasonable by some yardstick, or the internals of this company or its industry aren't what the price reflects given one investor's opinion or however many investors' opinion. And so the price is too high, too low, too rich, too cheap, whatever. With gold, I think as with currencies, oftentimes it really comes down to the price action and the macro. And with gold, the macro now very clearly is pointing in a different direction than the price action is going. So I think you have to look at this now and essentially say this is an instrument moving on the basis of momentum and speculative fervor around what is the reemergence of a giant buyer that was a really big deal for 18 months until basically the end of the second quarter of this year, give or take, middle end, something like that. So when you look at this, I think, yeah, sure, the high there, the swing top, the record high from October, that's your next kind of line in the sand. But if you were to break that high, I don't think that tells you, oh, you've crossed into the land from which there is only one way, and that's back down. No, I think that could just as easily be an indication of upside momentum that carries you higher. At this stage, I see the break of the nearer term high, the high on that big red candle that you see there, before we sort of settle into a range. And I think, okay, that's an interim breakout here. Maybe if the bonds correct, and you and I are right about today was something like a one-off, and the bonds will normalize back higher and yields will come off, maybe you get a little bit of a wiggling around in gold, assuming it cares, may not, and that gives you an opportunity to get long. I'm looking for a long. Maybe I'll lay something on tomorrow, depending on what this price action does. But I think we're looking back at 2,800-ish, essentially, the high from October as the next step.
So then talk to me, where do we go, like euro, yen, yen in particular? I'm curious about that story as well. Talk me through that, and then we'll get into actual Chinese, deval and the Politburo discussion that happened not long ago.
Yeah, sure. So the situation in currencies is bifurcated, as it were. The dollar has had a different experience against the major currencies over the past several weeks. Obviously, there was a great big dollar narrative, as we've already touched on, from about, let's call it middle of September, when the Fed issues its big 50 basis point cut, and up until about the middle of November, where the markets seem to say, okay, everything about this story in the wake of the latest Fed policy announcement, the November Fed policy announcement, everything about the story is in the price now. So you get in that span a massive rise in yields and a massive rally in the dollar. The euro against that backdrop loses almost 8%. Great move. I was short, lovely. So I look at this now and say, all right, that narrative is done. The market told you that narrative is done with that spike low down to 103 or so, because nothing that's happened in Europe has been good in the interim. Things are only getting hairier. And so that the euro is holding up here is probably more of a credit to the dollar pulling back than anything happening domestically in Europe, at least until we get the ECB policy announcement later today, which we can touch on as well. What's interesting is that the dollar has been doing worse against European currencies that have held up reasonably well, be it the pound, the euro, the franc, than it's done against, and this is the big segue here, the currencies that you might look at as a proxy for China. We don't have the Kiwi dollar here, but certainly the Aussie. The Aussie has been shellacked this week, and it's tempting to say that this is because just the RBA was this week and they were a hair more dovish. But if you were to look at copper, say, you can see it's not just that. It's also the markets digesting this China stimulus news. And as for the yen is, as ever, a creature of yields. The sort of carry dynamic there, where the yen is inverse of global borrowing costs because credit still costs next to nothing in Japan, rate hikes notwithstanding, at least relative to the rest of the world. And so when interest rates go up the world over, the carry trade incentive is to be short yen and long anything that yields more, because that extracts a yield differential. You see that here as yields have gone up in recent days. So if we look at 6J, we can see that it looks very much like the bonds. So it's come in as yields have come up. So it's a story of many strands if you wanted to look at quote unquote the dollar. It almost makes more sense to look at the individual currencies and the dollar as a kind of benchmark, unifying sort of yardstick to compare them, because that's how you compare the value of currencies in terms of other currencies. Ha ha ha. That's a underlying bar about the not dilution of the dollar and its loss of purchasing power after 15 years of rallying. So you're looking at, I think, a Fed outlook that's cemented at least until the middle of next week, and now all of the action happening individually. So the Aussie is doing its own thing, the yen is doing its own thing, European currencies are doing something else.
All right, let's do this. Explain to me, my friend, is the Politburo, is the money cannon, are they going to fire it here or what? We said during the middle of the year that when they started talking about the potential for when they started talking about the potential for easing, that in and of itself, the Politburo, when they meet, they don't normally talk about their economic plans so early in the year. So the fact that they were talking about it at all was sort of a signal that it was of a concern, and that they were effectively signaling to the market that they would be responsive in some way, shape, or form.
Yeah.
But we also said that normally they wouldn't say anything until November, December, and I think you made the point that because of the U.S. election, the likelihood is that they wouldn't say anything or give additional plans until after the election, likely in the early or the first part of December.
Mm-hmm.
First part of December comes, and we get exactly that. Some discussions around how they plan to support the Chinese economy. Was this the Mario Draghi will do whatever it takes moment for China?
No, absolutely not. And here's the difference. The markets believed Mario Draghi when he said it. They have every reason to be suspect of the Politburo when they say it, because we heard it already. That big rally that you see there in FXI, that was when they said it in September. Because the markets already see, well, markets thought they said it. We should clarify. Who's to say what the Politburo meant? They are more cryptic than the Alan Greenspan Fed. But when you look at what the markets see, they can clearly see that monetary easing doesn't work. And monetary easing doesn't work for the reason that monetary easing always sort of has issues when it has them. Sometimes it works really, really well. When it doesn't, it is because the people don't want to use the cheap money. Monetary easing makes money cheaper with the idea that you will induce people to take the money and take greater risk with the money, be readier to spend it because it's cheaper to borrow. If you lose it, it's cheaper to get back. If you want to finance something, it's cheaper to do it. So if you're going to start a business, maybe the cheaper money induces you to take that shot. If you want to grow your business, maybe the cheaper money encourages you to do that. If you want to consume more, the credit to finance that is cheaper. So the idea is to give people cheap money and say, now you go out there and you buy some stuff. But if people then don't go buy stuff, the stimulus doesn't work. As distinct from fiscal stimulus, at least in the kind of way that, for example, we experienced in the US and in Western Europe during COVID, where governments said, right, everything is on lockdown. We are going to literally create demand. We're going to take our money and we're going to spend it on things. And spending it on things will create activity. It will create a level of demand, not the incentive for activity. We are going to force economic activity through this system. We're the buyer. And that's what China has not done. And every time that everybody gets a little nugget from the leadership in China, which at this point is, I mean, technically it's a 24-person committee, but in reality, after all the purging recently, over the past, let's call it 10 years, it's really a leadership of one. Xi Jinping has completely consolidated his control over the party, the Politburo, the whole thing. And he is an incredibly prolific disseminator of ideas. There's books upon books ostensibly authored by Xi Jinping that proclaim the quote-unquote Xi Jinping thought. And a big strand in Xi Jinping thought, whether you believe he actually wrote it or he's got a ghostwriter or he's dictating to somebody, whatever. The thread in Xi Jinping thought is we don't want to give people money. We don't want to have the government create demand. This is going to be low quality growth. What we want is high quality growth. That is growth from innovation, from productivity, from all of those longer term good things. We don't want to just dump a bunch of financing from the government onto the economy, even if that's needed.
Tell that to the Keynesians.
Well, so Xi Jinping is trying to tell it to the Keynesians, and his economy has had 6 consecutive quarters of economy-wide deflation because he won't do it, and the markets are hanging on every single tiny syllable of a hint in the direction of fiscal expansion and rallying on it. So in September, the Politburo came out and said, maybe. And we had a massive rally. It then gave back more than half because all the opportunities for them to actually do it came and went. Nothing happened. It didn't happen at the party Congress. It didn't happen in that Ministry of Finance big tectonic update that everybody was sitting around waiting for, like, oh, they're going to do it now. No. They met again this week, and the soundbite, if you want one, is they wanted, or at least they said they would pursue a, quote, more proactive fiscal policy. Yeah, they promised a whole bunch more monetary easing, but who cares? That hasn't worked for 2.5 years. And it's because people don't want to spend the money. The PBOC's own data says Chinese bank deposits are at a record high. A survey by the PBOC itself that asked people in China, if you got a bunch of extra money, would you save it, invest it, or spend it? 68% of respondents save it. They don't want to spend. There is no demand. This is how you have 6 quarters of deflation. So, and by the way, that's not consumer price deflation. CPI is not negative currently. It's economy-wide deflation. Real GDP is actually moving faster than nominal GDP. And if nominal is nominal minus inflation is real, and real is higher, that means inflation's negative. And it's negative to the tune of about a percentage point of GDP, which is huge. So this is the world's second largest economy. So when you look at the situation in China, it is dire. And everybody's sitting there waiting, saying, oh, here we go. Beijing's going to really do it now. Let's wait and let's see. Because we've heard these kinds of vague, oh, we're going to do something any day now, for a few months. No head change yet. Now, this does not mean that the regime is impervious to head change. Xi Jinping was also really bought into the zero COVID policy until there were literally protests in the streets. And rather than take out the tanks, like Deng Xiaoping did, they caved. and said, fine, we're getting rid of these lockdowns. That's it. So maybe they've had a head change finally, but we're going to have to see it.
Where can you be wrong? Where is the, in poker terms, like where's the out? What's the out that makes the hand for China? That gets them out of this situation, even if you don't have the specific solution, just the concept. Where can you be wrong here? And I say wrong meaning it seems like you're bearish on the Chinese economy and to a certain extent Chinese assets as well.
Yeah.
Where could you be wrong in your thinking?
Well, obviously, if they do decide to do fiscal stimulus and they roll out, as they sometimes do in the middle of the night on a Saturday, something along the lines of, we're going to spend XYZ money to build this, or we're just going to literally rain money on consumers.
Mm-hmm.
We're going to do stimmy checks, but in China.
Or they use their digital yuan and say, hey, here's the stimulus, but it expires. It's the first social experiment to say, hey, here's some money and it expires in 90 days, which forces consumption in the economy. Some crazy thing like this.
Why not? Right? But they push through something that is the government going, here is demand. We are going to force demand through the economy. That makes it a different thing. And I'm not saying they're not going to do that.
If that's their only out, why doesn't this only end there?
Say more about end there.
In other words, because I think about the world through incentives. So I'm asking you, what is the good outcome? How does China get to a good outcome? And you're telling me the concept of the good outcome leads through this path. And I'm saying to you, why wouldn't a communist China who has that power, who has consolidated all that power through one person, if you're telling me the incentive structure is to get through this one path, I'm asking you, whether it's today or 3 months or a year from now, if that's the out that makes the hand that creates the good outcome, why is that not the inevitability that I should be thinking about as a trader investor? And if that's the inevitability, then I should be taking advantage of cheap valuations.
Because first of all, the valuations are not cheap.
They're not as cheap as they were. I'll give you that.
But more importantly, this is now the boy who cried wolf. Show me the wolf. If you show me the wolf, I'm with it. At this point, this is not the first time that China has said, we're going to do something fiscal, and then magically forgot about it. So, and we do know that there's volumes upon volumes of Xi Jinping talking, of Xi Jinping, quote unquote, writing. Just no human can write that much and also run the world's second largest economy basically solo. Somebody's helping him with this. Otherwise, he is the most prolific writer in the history of life. But all of what is sort of core Xi Jinping thinking that's in all of this published stuff, all of it says we don't like fiscal policy-driven growth. And by the way, China is also in the midst of a huge debt crisis. So that doesn't help. It's possible that what's going on here is a sort of slow working through that by drips and drabs. But at this point, you have to see it to believe it. There's been the big rally around the idea that this is coming. It has since anchored because it hasn't come yet. So either it will or it won't. But from China's perspective, you're getting into the kind of trap they might be less than attentive to, which is the sentiment bit. This is something we're very used to in the West over recent years, because obviously these are democratic societies for the most part, or at least societies that go to polls and vote. So the taking of the temperature of the electorate and of the masses is a regular sort of thing. We're used to following sentiment. When policymakers look and they say, well, there's a general discontent with the U.S. relationship with China. And so you get both sides of the political aisle competing for who can be the China hawk. Why? Because there is the median voter's will. It simply doesn't work to run against sentiment and get elected. That kind of thing doesn't exist in China in the same way. You have one party. It has consolidated a tremendous amount of control, and now that control has been consolidated basically in one person. These kinds of systems routinely fail and usually fail because one person can't foresee everything. You have to listen to the market, including the market of ideas and of sentiment. And sentiment is telling you, we don't believe you. Do something. So you need to do fiscal stimulus, in my mind, in China, not because it's going to solve all your issues. It might kickstart the engine, and then you have to do all manner of other things, structural things, to get back to something like lasting growth, and then start thinking even bigger ideas because your population is shrinking and the kind of middle of the supply chain labor-intensive model of growth that you've been running basically since the 90s is eluding you increasingly. So you have to go think big ideas. But episodically, now, sort of within a 45-day DTE cycle, if you want to break the rot, kickstart the engine with something. Let people hold something.
There's so many things that you're saying that I just there's sort of beautiful what's the word I'm looking for? Like when you talk about how Xi Jinping doesn't want to put basically a bunch of dead money into the economy, it's sort of ironic in that we're kind of doing that. You probably disagree, but I think we're kind of doing that.
I don't disagree necessarily. I think it depends what dead money is and where you're putting
just
it.
Zombie, like we've got a bunch of cheap money. We've got zombie companies. We have a bunch of inefficiencies in our government and in our economy, in our workforce. And we sort of refuse to let the creative destruction happen, which then creates a bigger, stronger economy.
You can get this wrong on both sides of
that's where I'm going. That's where I'm going. That
you can get this wrong. I mean, it's all about the balance and the time it takes.
The principles you're speaking to, I think, aren't being utilized. Like Argentina is maybe one of the only ones who got to the point where
Malay is he's an interesting character because there's a narrative out there that tries to lump him in to the sort of nationalist right move that you might see in a Marine Le Pen, in a Donald Trump, in a Viktor Orban, in the sort of harder Brexiteers, in what's been happening in Austria, in Geert Wilders, in the Netherlands. Malay is not anything like that. Mm-mm. If anything, he's a Thatcherite kind of a character. Mm-hmm. Mm-hmm. And yeah, he's a character.
He's eccentric.
He certainly puts on a show.
He's got hair.
He's got hair and the leather jacket, and he talks about having infinite contempt for the government while reading it. It's all very cute. It's all very fun to watch. But when you look at what he's actually talking about, he's kind of a Thatcher Reagan sort of character. Mm-hmm. And it'll be really interesting to see if his stuff works, because some of it is a little wacky and extreme, but you have to almost kind of say some wacky and extreme things when you're in that kind of morass, so that you
Desperate
can then
times
negotiate
call for
down
desperate
to
measures.
something that's not wacky and extreme. You have to stake your claim somewhere. It'll be really interesting to see how the Malay experiment in Argentina works out, let's say 5-10 years from now.
I agree. Just real quick, South Korea.
Yeah.
The option market.
The coup that wasn't.
I know. How wild. The only reason I'm bringing this up, one, is just if anyone hasn't been watching, I haven't asked you this question. I'd love to get your take.
Sure.
But then also because there's such a deep discount that's being priced into the South Korea ETF, which is EWY, not the most liquid instrument in the world. Dog, you know what, options market, not a great options market. But for anybody that is sort of prone to taking direct equity risk, this could look interesting. I'm curious, what the hell happened in South Korea? And given what happened in South Korea from your perspective, would you be interested in a short-term trade buying this I'm going to call it a discount. If you zoom out, it's not that much of a discount. But would South Korea equity risk be interesting to Elias Bivek at this point? So what happened, and then would you buy the dip?
So I'm bullish on South Korea, really, for how this worked out. I don't know if this is the kind of allocation I would make in a 45 DTE sort of way, essentially. I think it's a tempting macro idea, certainly, and you'd have to think about how you want to express it. Maybe you want to just take some money and say, you know what, I'm just going to outright buy some EWY here, and we'll call it that. Maybe what you want to do is look at the South Korean won and take the play into currencies. That might actually be a little bit more advantageous in the sense that there's certainly not futures on it that are available, but there is spot. So you might look at something like that and say, I get 24-hour liquidity, I get tighter spreads, and what that means for me also, I get a flexibility of contract size that's greater. I can have smaller exposure. So if I wanted to take a flyer on this, I could structure something small, risk defined. I'd have to manage it manually in spot, obviously. But I could very clearly say, this is not going to run away on me, and here's where I would get out if this didn't go my way. But I think what we just saw in South Korea is one of the most encouraging triumphs of democracy that has been seen in a while, where the president basically tries to usurp power. He is deeply unpopular. He took a shellacking in his party, took a shellacking in parliamentary elections, lost their majority. He basically then was unable to find any kind of common ground with the opposition to sort of come up with some sort of a compromise agenda and pass things. He didn't listen to the median voter, as we've just talked about, and instead attempted to force things through. Let's not forget, South Korea is not that old of a democracy. It was a military dictatorship until not that long ago. And so what happened was he tried to declare martial law and make it into a military dictatorship with himself at the head again. And the response from the people of Korea was absolutely hilarious. They looked at him and were like, no, man, that's not what we're doing, and you can't make us. And they came out and basically pushed guns out of their faces and were like, what are you, out of your mind? No. And then everybody, the opposition parties, his own party, turned around and said, wait, absolutely not. And overturned his martial law edict and reinstated democracy. He's still there nominally, but they're already sharpening their knives to impeach him. And it was a great, great victory for the rule of law, a great, great victory for the kind of thing that markets like to see, which is predictable governance that works.
Mm. When I saw the report that he was declaring martial law.
Yeah.
I was like, what the hell's going on? Because I hadn't seen anything. And then I saw some local posts of people like videoing on the street. There was like nothing was happening of any real substance. And for that story to play itself out over the next couple of days was absolutely fascinating. And sometimes I see what's happening across the world, and I just can't believe it's 2025. I can't believe
it's the revenge of history.
Yeah, I can't believe these types of things are happening in 2025. But after that shock sort of wore off, I go, you know what? I should buy
Francis Fukuyama.
I go, I should buy this. And this is the first thing I did was try to find out how to get U.S. listed South Korean exposure. And EWY is not super liquid, as I mentioned before, not a ton of assets under management, but it is the largest. I mean, the next one is probably like a fifth or sixth of its size. So I have a little bit of a flyer in on this one. I also recently went in and I bought EWW, which I can't remember if you said you were long or you were short or thinking about getting long.
I like Mexico here. I think the story that we're going to be talking about is how everybody thought that the Trump administration was going to be terrible for Mexico, and what's turned out is not that.
I agree. I think they are already seeing some benefits of onshoring, nearshoring, friendshoring.
I think Scheinbaum and Trump are going to get along just fine.
Maybe not. Maybe not in public.
They'll be able to do business, just like Trump was able to do business with AMLO, her mentor. I think they'll be able to do the same kind of business here. These are not your grandfather's socialists, as it were. These are, Ho Chi Minh. This is not.
Okay, so I'm a little long EWW, and I want to turn the conversation into this line that I read. I read BlackRock. I have to read all these. I don't have to. Nobody tells me to, but I'm sort of. They say curiosity killed the cat. So when all these end of the year reports come out, the 2025 outlooks come out, I have to read them. And so BlackRock's 2025 outlook came out, and I was like, I read the first line. And my jaw dropped open. I think I did a spit take. And so I want to pivot the conversation. The setup is I've been looking for investments outside of the U.S. because I think the spread in value between U.S. in particular U.S. tech stocks and the rest of the world
it's huge.
It's gigantic.
U.S. markets are now, I think I read in The Economist just this week, something like 63% of global market cap, which is bananas.
Crazy. So that doesn't have to revert tomorrow. It doesn't have to revert ever. But given where I like to be and position myself in terms of risk reward, I've seen some of that, and I'm like, you know what? I'm going to go play where nobody else is playing and hope that they want to come over in my sandbox at one point in time.
Sure.
But I read this first line in the BlackRock outlook. We have argued since 2020 that we are not in a business cycle. Historical trends are being permanently broken in real time as mega forces like the rise of artificial intelligence transform economies. The ongoing outsized response of long-term assets to short-term news shows how unusual this environment is. We stay risk-on as we look for transformation beneficiaries and go further overweight U.S. stocks as the AI theme broadens out. We have more conviction inflation and interest rates will stay above pre-pandemic levels. So this is
I agree with parts of that and not others.
Give you two ideas to play with at the same time. Idea number one, the U.S. has never been more expensive relative to the rest of the world. Idea number two is the validation of that. that we are no longer in the business cycle, according to BlackRock. We're in some post-business cycle world where AI is transformative, and you should continue to be overweight U.S. stocks. Wrestle with those two opposing ideas, Ilya, and tell me where you net out.
It is never the end of history. And every pronouncement calling for the end of history has been wrong every single time. Because humans are humans, and human psychology is what it is. It is never the end of history. Somewhere in the world, probably not too far from me in Berkeley, California, Francis Fukuyama spit out his coffee when he read that BlackRock bit, because he said, well, you guys will see. I've recently, and only recently, wiped the egg off my face when I said it was the end of history after the fall of the Soviet Union, and now the U.S. would forever dominate a rules-based order where happiness, free trade, and democracy will reign forever, and he probably called the top. So what we're witnessing now is not that. And of course, this is not the end of the business cycle. That's ridiculous. What we're looking at, though, is, of course, the kind of transformative thing that telecoms were at the dawn of the internet, that railroads were when the Industrial Revolution at the turn of the 20th century really got going. Of course, these are game-changing things. I mean, AI will be a game-changing thing. And quantum computing will be a game-changing thing. Railroads were a game-changing thing. The discovery of the New World by European powers and the wealth therein and the many speculative bubbles around related assets that followed, game-changing. But that does not preclude the business cycle from happening. Again, if you really want to understand how these things really work, the book to read is Mastering the Market Cycle by Howard Marks, because he explains, I think, in the most eloquent and efficient way, that what history is not a two-dimensional cycle. It does have a trend. Obviously, with every downturn in the business cycle, we don't go back to the dark ages. We build. So imagine a corkscrew or a wine key, but imagine it's sloped up. So there is a trend. It is up, but around it, there's oscillations up, there's oscillations down. Some of them are big oscillations. Some of them are shorter oscillations. Little business cycles, big business cycles. Big credit cycles, little credit cycles. But of course, we haven't gotten rid of cycles. That's insane. I do agree that we are heading into a world where inflation is higher and rates are higher to fight that inflation because labor markets are changing. There's been a loss of appetite for globalization. Things have moved the other way. If globalization and greater openness to commerce across borders lowers the price of stuff, then going the other way increases the price of stuff. And so we are going into a place where the world is becoming scarcer of labor because populations are aging, especially in the really labor-intensive areas like Asia, and because at least one big pocket of the consuming world, Western Europe, is also aging into a place where they're going to be past their point of peak consumption, as Japan already is before very much longer. So yes, inflation. Yes, higher rates. No, we have not transitioned into a world without business cycles. That's insane.
I agree, but I feel like I'm the only one looking around going, this is, you guys this isn't working, right? Like, you guys don't believe this shit, right? But
and by the way, the U.S. is the
seems,
best positioned. It should be receiving a ton of capital, but not all in a straight line.
Think about who's saying it, though. Think about who's saying it, man. This isn't coming from like Morgan Stanley, and no disrespect to Morgan Stanley. Like what I'm saying is, this isn't coming from. That's not really a good example. I should have used a different firm, but this isn't coming from some chop shop analyst. You know,
Sure.
This is coming from BlackRock. This is the point of view that's coming out of the largest asset manager on the planet. And they're telling you that post 2020, that we are no longer
well, an asset manager
in a business cycle.
Let's define what
I'm not
this
saying
means,
the right. I'm not saying the right. I'm saying the implications of the largest asset manager telling the whole world that we're in a post-business cycle world. That you got to understand how big those implications are. You know what I mean? And that the whole world is going, oh, well, they're going to give it credibility. It's not like this is coming from Victor Jones on his evening stream that he thinks we're no longer in a business cycle. Okay, who the hell cares? This is coming from BlackRock, and it's being taken as serious. So who's the crazy one? Is it the one who's going, that's not true? Or is it anyone, that guy who doesn't get on board and just buy all risk, every train smoking? Is he the crazy one? Or is the person saying it the crazy one?
I think the person saying it is saying something that the people who then run money and actually run the management of assets at BlackRock, I think those people might say it differently. Because you could look at the statement like this and say, okay, what this person is trying to say, and they're being too bombastic about it, is they're trying to say that AI is not the same old thing. It's transformational and it's big, and what we're seeing is not a boom that's a short-term boom, but a structural thing with legs that's going to be here for a long time. This is a level change. I don't think that's wrong. Does that mean that the business cycle that doesn't exist? Of course it doesn't mean that. Go tell people losing their shirt, losing their money, getting kicked out of jobs in 2007, 8, 9, that the internet is a paradigm shift. It is a paradigm shift. Does that mean that we no longer have recessions and credit crises? Stop it. So we're in a place where, okay, maybe the person writing is being bombastic for effect, but the people who actually run iShares and manage the exposure inside those ETFs, which is how this is the biggest asset manager, those people, they're looking at this and saying, we're going to manage to what the market gives us. Our job is to produce ETFs that accurately track the underlying assets that we're selling. And where we really make money is in the transaction of selling and in the management fees from people holding. That doesn't necessarily have to make you biased, bullish, or bearish. You could be issuing inverse ETFs. So it is what it is. But you do want to keep people engaged. And this reads like whoever wrote this thing was trying to be engaging.
All right, let's do this. I wanted to stop at about 6:15, so we went 6 minutes over, and that's my fault. To give us about 15 minutes to have part 3 of this conversation we've been having over the last couple of the last 3 Wednesdays, the last 2 Wednesdays. This is the third one. What we've been arguing over, you have a view that the purchasing power of the dollar since going off of the gold standard, the consensus view.
Not since going off the gold standard.
That's where it started. That's where this whole conversation started. Where I said I think it was 1972?
1972, I want to say. Yeah.
Yes, we argued over what the
current
date was.
fiat
We didn't argue over it. I got it
system
wrong.
as we know it.
Right. So we said that was the initial discussion, whether purchasing powers increase or decrease from that point.
Mm-hmm.
And I think there are Fed graphs that show the purchasing power of the dollar's decreased 90-something over percent.
Yes.
My argument.
I take issue with that definition. Yes.
Right. And my view is the same. There are some things, some goods and services that have been that technology has created more affordability, right? There's downward price pressure on TVs and stuff like that. But generally speaking, the purchasing power of the dollar is going down, which is why the price of assets goes up, the price of your house is going up. It's not why. It is one of the reasons why the price of assets are going up so significantly. That's my view.
Yes.
And you've had sort of this, I want to call it contrarian take.
I don't think it's a contrarian take. I think what my ultimate contention with your assessment is that to use the metric that you're looking at,
which is what?
To say that what it tells you is the dollar is being devalued, is the incorrect assessment. The Fed.
That's your argument?
Yes, because I don't think that's what that metric shows.
Okay, but you do agree or disagree that the purchasing power of the dollar is in fact falling over time?
I disagree
has fallen.
Wholeheartedly.
Okay.
Moreover, I think the way you measure the purchasing power of a currency is not the metric that you're looking at. So the evidence that you present in looking at that gauge, I think is not valid, because I don't think that's what that metric shows. And by the way, we've kind of circled around the whole host of kind of corollary topics around this, including the disparity between different economic schools of thought. One of them famously the Austrian school, the other the Keynesian school, and of course there's others.